Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Let's take you through the top headlines this morning. Sebi issues rules for market infrastructure institutions, including calling for flat fee structure, potentially reducing costs for investors and traders. Gross GST collections in June seen at 1.74 lakh crore rupees, according to sources. The Finance Ministry is yet to publish the official data. Tata Steel manages to avert a strike at its Port Talbot facility in the UK after workers' union agrees to more discussions. The Nifty 50 notches another closing high, with strength displayed in the broader markets as well. US factory activity contracts slightly for the third straight month in June. The US Supreme Court rules that Donald Trump enjoys some immunity from prosecution as a former president. And Wall Street sees gains at the start of the week led by tech stocks, and meanwhile it's a muted start to trade in the Asia-Pacific region. Now, US stocks gained at the start of the trading week led by tech stocks. The Dow and the S&P 500 gained very narrowly, about 0.1 and 0.3% respectively, while the Nasdaq Composite ended higher by as much as 0.8% to end at a record high. And in news on the US economy, factory activity contracted slightly for a third straight month in June, while a measure of prices fell by the most in more than a year. The Institute for Supply Management's manufacturing gauge was little changed at 48.5 compared with 48.7 a month earlier. That is based on data that was released yesterday. Remember, a reading above 50 indicates an expansion and below 50 indicates a contraction. Meanwhile, the group's measure of prices paid for materials fell 4.9 points, which is the most since May 2023. But at 52.1, the index also shows the slowest growth in costs this year. In other international news, the US Supreme Court has ruled on Monday, that is yesterday, that Donald Trump enjoys some immunity from prosecution as a former president. It's a ruling that will likely delay his trial for conspiring to overturn the 2020 election. The 6-3 decision that was split along ideological lines comes just 4 months ahead of the presidential election in the US. All right, now let's turn to the Indian equity markets. Gains across the board for Dalal Street yesterday. 0.5% gains for the Nifty 50 took it to record highs on closing, but the broader markets displayed quite a bit of strength as well. Agam is standing by to tell you about the latest cues from the F&O space. Agam, comfortably above 24,000. Does that look like it'll stay there?
So the positive here is, Alex, that the base which is being formed, 24,000, has strengthened to a certain extent yesterday, considering we closed well above that mark. The question really is that at the moment, there's one pocket of markets which are actually expecting correction, but it may not necessarily be a price correction, could more likely be a time one, and that means consolidation is on the cards. We are continuing to see the Nifty hover around 24,000. In fact, I'll talk about the options data in a little more detail in just a bit. Coming down to the Bank Nifty futures again, we're holding on to gains, holding on to the mark of 52,000. That becomes again a little bit of an important level to watch out for. And again, about 2.5% added in open interest there as well. I'm going to talk about the options market now, because when it comes to that, while we have seen a lot of traction across a lot of strikes as far as the option markets go on the Nifty 50, if you consider the overall open interest distribution, let's pull that up. And now we have 24,000. And as I was mentioning, we have more and more put writing around 24,000 as a little bit more of a strengthened base around there. Now, remember that some analysts were suggesting that there's a maximum pain at 24,000 as well. So should we lose out on that level, and it's going to be a little bit of tough support to take out, should we lose out on that level, there could be further weakness, because there'll be a lot of covering of those longs coming through. And of course, on the higher end, continuing to keep an eye on 24,500, but the OI there is not as much as what we've seen as far as 24,000 is concerned. Let's move on and talk about the stocks, and it was a day where we still did see more advances as compared to declines. MGL, Oracle Financial Services, Syngene, Deepak Nitrite, Hero MotoCorp, all of them advancing. Of course, Hero MotoCorp will react to the June sales today. And among stocks which are unwinding, let's pull that list up as well. We had short covering for Indus Tower, PVR Inox, Coforge, and UBL. PVR Inox, keep an eye on that one, because now that short covering is over, we may well perhaps see a little bit of long play coming through as well. In general, overall, it was a good day of trade, Alex, and I reckon that the bias remains positive for now.
Much, Agam, for getting us those details. Now, speak about some of the key contributors in trade yesterday. The IT pack was doing quite well for itself. As a whole, the Nifty IT ended with gains of about 2%. The top gain, of course, was Nifty Media on the back of the gain in PVR Inox. Auto as a pack was middling, to say the very least. It gained only about 0.5% or thereabouts. And this is amidst the release of auto sales data that you've seen all through the day yesterday. And you'll see some of the companies report numbers today as well. Let's get you an update on that. Puneet is joining in to tell you more. Puneet, what are you picking up? Morning.
Good morning, Alex. So we're discussing the numbers which came post-market hours yesterday, and one of the most surprising as well as positively surprising numbers were of Hero MotoCorp. The sales have come in 15% higher compared to the same time last year. TVS reported a 5% growth, while expectation was roughly 9 to 10%, slightly disappointing there, although in line with its peer Bajaj, which also had 5% growth in this particular month. Eicher Motors continues its degrowth, which is a very surprising trend. At the start of the year, they had mentioned that they will want to grow around the 10% per month range, but it's coming at a 5% fall. The other one is Tata Motors, both in the passenger vehicle as well as the commercial vehicle space. They have shown degrowth in this particular month. Tata Motors PV has degrown by roughly 8%. There were reports that they have lowered their discounts in this particular month compared to Maruti, which has actually increased discounts, while the commercial vehicle businesses has also degrown by 7%, a trend similar to what Ashok Leyland had reported yesterday. When you look at the three key big winners from in sales in this particular month, it has to be Mahindra & Mahindra as the first one, grown by roughly 22%. When you look at the other two, which are Maruti Suzuki, showing very positive uptrend of 12%, as well as Hero MotoCorp showing 15% growth in this particular month. So clearly something on the rural side has gone right for both these companies, as well as VECV, which was the only company to show growth in this particular month for the commercial vehicle space, growing at 10%, while the three key biggest losers were, of course, Tata Motors, the passenger vehicle space, as well as the commercial vehicle space, as well as Eicher Motors, as we just discussed. So overall, a decent month, but certain select outperformers as well as certain big losers in this particular month as well.
I just want to clarify those numbers. It's 8% of degrowth, correct?
Yeah.
All right. So watch out on the screen. What you're seeing is 8% of degrowth for PV, 6.8% of degrowth for CV, and Eicher Motors sales down 5%. All right. Now, in an important update from the market regulator, the Sebi has now introduced guidelines for exchanges, or rather also for brokers to ensure fair and transparent fee structures. This may potentially reduce costs for both investors as well as traders. Charu is joining in to talk about this in more detail. Charu, this has to do with slab or volume-based or slab-based charging of fees, and it's going to move to a flat fee as I understand it. What can you tell us?
Good morning, Alex. So as you said, yes, a slab-based fee structure is being discouraged. So what the Sebi upon examination found is that the members of the market infrastructure institutions are charging a fees on the end clients, which has some discrepancies and is different from the one that they are paying on a monthly basis to the regulator itself, and that is why it has come up with a new system. Now, under this system, certain new principles are to be followed by the members and the market infrastructure institutions. True to label is the first principle. That means that no hidden or extra charges will be applicable on the end clients. Secondly, that a fair way of charging the clients is going to be implemented. That is, it is not going to depend upon the volume or the activity undertaken by the members or the stockbrokers. And thirdly, the current unit-based system is also going to be taken into account, which is going to lead to less amount of payment on the end clients, which are the investors and the traders. And finally, the institutions have to make sure that they have the correct infrastructure and amended rules to accommodate the system, and have to tell Sebi that they are ready for the implementation or have implemented the same.
Got it. All right, Charu, thanks so much for getting us those details. Now, the August review of the MSCI Standard Index could attract inflows of about $1.18 billion, and this is through the inclusion of 6 companies. The official announcement will be on the 13th of August, with the adjustment taking place on the 30th of August. What else is the brokerage expecting? Rucha is joining in to tell you about all of the details here. Rucha, what are you picking up? Morning.
Thanks, Alex. Good morning. So as you rightly mentioned, Nuvama has come out with a report wherein it mentions 6 stocks which have made the cut for its inclusion in the MSCI Global Standard Index and might be possibly included in the August review for the index. Now, these stocks are number 1, Vodafone Idea, Prestige Estates, Oberoi Realty, Dixon Technologies, Uno Minda and Scheffler India. Now, these stocks could lead to a cumulative inflow of around $1.18 billion in the index, with the highest inflows coming from Vodafone Idea and Dixon Technologies. Now, the official announcement, as you rightly mentioned, is expected to be on 13th August, with the adjustments taking place on the 30th August. Now, one thing to watch out for is the HDFC Bank's FII holdings, which is expected to come around 5th of July. Now, if the shareholding data favors a weight increase, the stock could see a further 10 to 15% jump until the official announcement takes place in August. That's what the brokerage house expects. And in case of an unfavorable outcome, the bank could settle at around 1600 per share, and this could see a good interest from the domestic fund houses, is what the brokerage house believes.
Interesting. So one to watch out for, HDFC Bank. Thanks so much for getting us those details, Rucha. We have to slip into a very quick break. We'll be back on the other side with stock-specific action, so do stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Welcome back. This is all you need to know, of course, and we're now looking at stocks that will likely be in focus in trade today. Let's first start with those that have announced their first quarter business updates, and there are quite a few of them. Anushi is joining in with the list. Anushi, morning. What are you picking up this morning?
Hey, morning, Alex. So, as you mentioned, some key business updates that will remain in focus, and this is pertaining to the metal and the banking space. So I'll start off with the metal space first, wherein NMDC has come out with its update, wherein they've reported a production volume of about 3.37 million tons, which is down about 3.2% for the month of June, while its sales volume for the month of June was down about 9% to 3.73 million ton. However, if you look at the cumulative production for the whole quarter of FY20 first quarter, so the cumulative production was down about 14%, so even a bigger dip that we are seeing, while the cumulative sales were down about 9.7%. But other than that, also the company remained in focus. And yesterday, we also confirmed that they have cut their iron ore lump and fine prices by about rupees 500 per ton for July 24. So the lump ore prices are now at about 5,959 per ton, while the fine prices have been set at rupees 5,100 per ton. Now, moving on to JTL Industries, they have on the other side, we are seeing some good updates coming from JTL Industries, wherein they've seen about a 10.8% growth in their sales volumes, which was driven mainly by the structural steel tubes and the pipes division, as we see. If you are looking at the overall, what has led to this kind of jump, export volume supported this growth. They were up about 31.4% to 5,917 metric tons, while the value-added products also sales stood at about 21,261 million metric tons, which comprised about 25% of the total sales. Now, in other updates, also the company said that they have completed the first phase of commercialization of their Nabha steel and tubes, and they have achieved an overall sales of about 10,726 metric tons in over there. So again, that remains in focus as well. Now, moving on to the banking space, first one on the list is South Indian Bank, wherein they've come out with their Q1 FY25 business updates as well. They've seen about a 11.4% growth in their gross advances at 82,510 crore, while the deposits saw about a 8.4% of an uptick in this quarter. CASA ratio, though, did narrow down by about 77 basis points to 31.87% as compared to 32.64% last year. So this is on South Indian Bank. And the last one on the list is CSB Bank, wherein they've seen their gross advances going up about 17.8% at 25,099 crore, while the deposits saw about a 22.2% of a growth at 29,920 lakh crore. So these are some of the key updates that are in focus today.
All right, thanks so much for getting us those details, Anushi. Now let's talk about Patanjali Foods. The board has approved the acquisition of Patanjali Ayurved's home and personal care business, and we've got Sesha joining in to tell you about why that is significant to watch. Sesha, morning. NCLT approval just coming through. What does this mean for the company?
Right. So the board of Patanjali Foods has approved the proposal to buy the home and personal care business of Patanjali Ayurved. Now, the acquisition will add to Patanjali Foods' product portfolio, which at present largely consists of edible oil. Now, Patanjali Ayurved's HPC, that is the home and personal care business, covers hair care, dental care, skin care, and home care. Now, the deal will be completed by way of slump sale, and the payment will be made in in 5 tranches. Now, the first tranche of 220 crore will be made within 10 days of receiving the Competition Commission of India and shareholder approvals, as well as lender approval from the State Bank of India. Now, according to the company, pursuant to the approval from the Patanjali, from the board, Patanjali Food will now have to take necessary steps to execute the definitive agreements in connection with the acquisition. Further, the acquisition will also bring along with it multiple key synergies in terms of brand equity, product innovations, cost optimizations, infrastructure and operational efficiency, as well as a positive impact on the revenue and market share. Separately, a 20-year licensing agreement for a 3% turnover-based fee, along with other conditions, have also been agreed upon by the two companies. Now, this permits Patanjali Foods to use the trademarks and associated intellectual property rights owned by its promoter, Patanjali Ayurved. So we need to wait and watch and see how soon the company clears the deal and gets all the necessary regulatory approvals.
Right. Thanks so much for getting us those details, Sesha. I was mistaken about NCLT approval. This is the board approval. Remember, I thought that it was. I guess that's something to look forward to. Stocks to watch in trade today. Let's continue with the list. Rucha is joining in to wrap up what you should watch out for in trade today. Among them, DCX Systems as well as Gandhar Oil to talk about. Rucha, what are you picking up?
Thanks, Alex. Good morning again. Few stocks on my list are: number one is DCX Systems. Now, the company has received order worth 1,250 crore rupees from L&T for the manufacture and supply of electronic modules. Now, this contract is for a period of 3 years. And just one thing to note here is, in January, the company came out with a QIB wherein it raised around 500 crore rupees, which was at a discount of around 5% to the floor price. Next is Gandhar Oil Refinery. Now, the company's unit received contract from Abu Dhabi National Oil Company. The contract value is around 400 crore rupees for a period of 3 years. Now, the average annual volume for the order is forecasted at around 30 million liters. And the company also mentions that this contract would strengthen its position in the Middle East part. Now, next is Carlsil. Now, the company opens QIB and sets its floor price at around 340 per share, which indicates around 0.2% premium to the previous close. Now, the company may also offer up to 5% discount to the offer price. Also, the company aims to reach 100 crore revenue in FY25 is what the management had also mentioned. Lastly on my list, I have Sakuma Exports. Now, pretty much of news over here. Number one, the company has approved bonus issue in the ratio of 4:1. The company has also approved raising 500 crore via a QIP. And lastly, it also approved investment of around 600 crore in its subsidiary. So this is what I have on my list today.
All right, thanks so much, Rucha, for getting us those details. Now, that's the action in the secondary market, but the primary market is heating up yet again. It's 3 IPOs this week and as many as 11 listings, quite a few of them on the SME boards that we have to talk about. And Mahima is joining in to tell you about the key details here. Mahima, what stands out?
Right, Alex. So 3 new issues and 11 new listings are supposed to hit the markets this week at the primary markets per se. Now, in terms of the main board IPOs, there are 2 offerings. The first one is Emcure Pharmaceuticals, where they open for subscription on 3rd of July, that is tomorrow. The price band is set at 960 to 1,008 per share. They seek to raise around 1952 crores and the fresh issue is of 800 crores. The second one is Bansal Wire. Well, it is also open for subscription from 3rd of July, that is tomorrow. It's a fresh issue of 745 crores and the price band is set at 243 to 256 a piece. Now, there is one more SME IP offering this week, which is Ambe Laboratories, which is set to open on 4th of July. The issue price is between 65 to 68 and issue size is around 44.68 crores. Now, we have 2 companies that are debuting on the bourses this week from the main board IPO. The first one is Vraj Iron and Steel, which will debut on 3rd of July, which is tomorrow. And there is Allied Blenders and Distilleries, which is debuting on the markets today. In terms of Allied Blenders and Distilleries, it was subscribed for 23.55 times and they are set to raise 1,500 crores. And for Vraj Iron and Steel, it was subscribed for 119 times. In terms of SME IPOs, there are a lot of SME IPOs. In total, there are 11 SME IPOs that are going to hit the markets this week. Well, on 1st of July, we have Shivalik Power, Savlan Plywood and Mason Infratech. On 2nd, we have Akiko Global, Divine Power. And on 3rd, we have Dinson Tech, and 5th we have Nefrocare India. So all of these IPOs will be hitting the markets this week.
All right, thanks so much, Mahima, for getting us those details. Now, that brings us more or less to the end of this edition of All You Need to Know. We've hopefully wrapped you up or set you up for the day ahead. And before we end, though, take a look at this conversation that my colleague Rishabh Bhatnagar had with Toyota Kirloskar's Vikram Gulati about the company's EV path going forward and the policy tweaks that he expects from the budget.
I was talking about the projection by IEA done recently, which says that the pace at which we are growing as a country and the motorization that is taking place, the energy requirement from cars itself would be 4x. And this is reflective of the fact that, both as an economy we are growing, number one. Number two, the passenger vehicle segment itself will continue to grow. So it's about the number of vehicles that would be on road and hence the amount of energy that will be needed to drive them.
Mr. Gulati, my second question would be on what exactly can the government do, both on the supply side and the demand side, given that the budget is on our heels. What are some sort of policy changes you're expecting?
Look, I'll address the issue about 4x growth first. Basically, if you look at it, right now, the government is doing tremendous amount of effort in terms of shifting towards greener technologies, whether it is towards electrification, the policies it has towards EVs and hybrids, etc., as also towards alternate fuels. These are all going to be, exceptionally required going forward, simply because of the fact that, if we don't do shift towards sustainable mobility now, it will not be enough to buckle the trend that we are being told would be the case going ahead. Hence, the government, we believe, is doing the right step in terms of supporting all the technologies. Just to give you one statistics, E20 by next year is going to take off the table 20% of petrol straight away. That's 50,000 crore rupees worth of fossil fuel substituted by indigenous fuel, money going to the farmers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, What are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
All right, good morning and welcome to India Market Open. I'm Neeraj Shah, and it's an interesting day of trade simply because our markets seem to be shrugging off any kind of weakness from global markets or from macro cues that might be building out, which might be slightly sluggish as well or skittish for our markets. Because keep in mind that the global developments, nothing alarming as yet, but at the margin, starting to look a bit uncomfortable. Now, why do I say this? Let's first take stock of the global news flow in the session today. US markets were okay. In fact, the S&P 500 and the NASDAQ actually rose in trade, which is a positive. But there are two things that have happened. One, crude prices have risen more than 2% and have topped $83 a barrel. And Brent is actually above $86 a barrel. So that's the first point. The second point being that treasuries have fallen and yields are now about 4.45. So in some sense, there are at the margin some worries developing for sure. With the valuations and the run-up that we've had, should we just be a bit careful? Maybe so. Other developments, it's a free run now for Donald Trump to the elections because the court verdict yesterday effectively grants him immunity from any kind of measures or cases until the election is over. So therefore, we know that Donald Trump is going to the elections for sure. Other news, South Korean inflation has cooled more than expected towards the target. And the reason why this is important is because while the US inflation stays doggedly higher, I think a clutch of other markets are seeing inflation numbers turning a bit benign, and that might also be construed a bit positively. There is other development, of course, from an Indian perspective. GST collections are very likely in June at about 1.74 lakh crores. So that piece looks okay too from a market's perspective. So what did the US markets do? Like I said, the S&P 500 and the NASDAQ rose, but the Dow futures were a bit muted the last time we checked them. Yep, about 0.1% in the red. So the US markets did okay, but Dow futures quiet. Asia largely is doing okay, which is actually a very good sign as well, because most of the markets or indices that I saw were in the positive. And the GIFT Nifty or the implied open seems to suggest that we might have a start which is in the positive, about 43 odd points. So slightly above 2200 or 24,200 or knocking on the doors of 24,200. Now this is interesting. And why is this interesting? Because I think the trade setup, if you look at the trade setup, you will get to know why. One, of course, you seeing the long short ratio being substantially higher than what has been in the recent past. So we are above 83% on the long short side, which is the highest in a very long time. And that's been building out for a while now. So the FI positioning is clearly on the long side on the futures. But even when you look at the very near term triggers, yesterday, for example, the option writing at 24,200 was very, very hectic. And in fact, call writers stood out and they had a very large call writing position being done versus the put writers at 24,200. Now, why is this important? Because if we go above 24,200 and convincingly stay there, then the call writers might have to come in to cover their positions aggressively, because it's frankly become very difficult to call out tops in the market. At 24,000, a few people tried calling out a top, went up to 24,100. Now tops are being written at 24,200. What if the markets continue to way higher in the run up to the budget, in the run up to the first set of results that come in as well? So therefore, this becomes a very important thing. Not in terms of fresh OI written, 24,200 yesterday was a key strike from an option writer's perspective, and therefore something that you should keep an eye out for. Sectorally, while banks and IT did well, I think most people are saying that telecom is probably the most predictable index, and at all dips will get bought into. In fact, if you look at brokerage notes across the board, they are constructive on telecom. You speak to any buy-side fund manager, very constructive on telecom, and therefore what we're seeing right now in a Vodafone or the tepid moves in Bharti after the run-up that we've already seen is a bit of profit booking that is coming in. I think this will get absorbed at some point of time, and you'll probably see some further buying emanating in telecom as well. Vodafone was down yesterday. Airtel started off positively yesterday. Can we just pull up yesterday's chart of Airtel? But ended very muted. So the point is right now they are seeing some muted activity. The question is, will it last this way, or will they see some buying emanating very soon? My guess is the latter, but let's wait and watch. The other aspect is auto sales numbers, and they're a bit all over the place. The reason I say this is because it was expected, for example, Ashok Leyland will do very well. CV numbers are not looking good though. If you look at the CV numbers as they came out yesterday as well, there seems to be a bit of a prolonged weakness of sorts in truck volumes. It doesn't augur well for any of the CV players. Tata Motors, again all over the place, not that great. And by the way, when you speak of auto volumes, the surprise came in from two-wheelers. I mean, Bajaj Auto was okay, Hero MotoCorp was out of the park. I'll come to that in a moment. So that's where that autos are throwing up a bit of a surprise. It'll be interesting to see what some of these stocks do in the session today. So I will keenly watch out for what a Hero MotoCorp does in the session today, what a Tata Motors and what an Ashok Leyland do in the session today. Ashok Leyland was duly punished yesterday when at about 240 or 250 the numbers came out. Thank you for pulling this graph. Let's just stick with this for a moment before we get to stocks. Look at the expectations thereof. Or these are the actual delivery. Okay, this is the actual delivery that came in. Hero MotoCorp up 15%, TVS Motors up 5%, but look at Tata Motors CV, 6.8% lower. Ashok Leyland yesterday had a downtick too on the CV business. So therefore, CV volumes are not coming out well, but two-wheeler volumes are coming out well. So that's the interesting piece that is happening in autos. But when I talk out stocks or sectors to watch, I can't not start with what could happen to broking stocks in the session today. Now we're going to spend some time here, viewers. What's happened in terms of stocks in news today? Sebi's asked exchanges and market infra institutions, which is MIIs, to charge members uniformly. Now, what used to happen is that some of these were getting discounts based on the trading volumes. Let's move this graphic. They were getting some discounts on trading volumes or activity, and now apparently MIs have been asked not to offer these discounts based on trading volumes or activity. The alert that I have for you when it comes to this topic is that it's possible that exchanges charge low fees to discount brokers on the volumes that were generated. Now this is important, viewers, and I'll tell you what. Angel Broking, for example, earned 400 crores from this activity in FY24. In FY24, 140 crore orders, increase of brokerage rate by 3 rupees. Was not done. So there was no brokerage rates that were increased, and they earned 400 crores from this. Now, I'll simplify this for you. If brokerages earn 100 rupees from their clients, based on volumes that they met, if they had to officially pay 90 rupees, by virtue of some discounts that came in, they had to pay only 85 or 80 or 75 as the case may be. So they used to earn 5, 10, 15 rupees as a discount, and that used to get added to the top line. Now, Sebi said, boss, nothing doing, this has to stop. And therefore, this is a hit. Like I said, one of the sales note that I've received, this is not official information, but one of the sales note that I've received says that Angel One earned about 400 crores from this particular aspect in FY24. Now, this is a big number because if you think of this, if 400 crores goes out from Angel One's top line in FY24, then what remains? I mean, yes, of course, it's still a large number, but for FY 2024, their sales on a consolidated basis were 4,272 crores. If they earn 400 crores, that's about 10% of their income, and that goes out. And therefore, I suspect that today, the likes of Angel One, the likes of 5 Paisa, maybe even IFL Sec or Motilal Oswal might all come under pressure. Remember, these stocks were under a bit of a cloud in yesterday's session too. Motilal Oswal was amongst the top losers on the BSE 500 in trade yesterday. Amongst the top losers, I mean. I think was down about 4% or 5% if I'm not wrong. 3.5%. Was down even more, forget the 12-month chart, but yesterday's session, it was down significantly in trade, 3.75%. I wonder if 5 Paisa also was down. So, these stocks were under a bit of a cloud yesterday. I reckon that they could be in a bit of cloud today. So the same sales note that I've received also says that how can brokerages offset this? For example, Angel One, 140 crore order, and they say that if an increase by brokerage by 3 rupees can take care of the same, that an Angel One in the past had highlighted that they will not be hit if such a move comes. Can they go up and increase the brokerage rate by 3 rupees when they are competing versus some of the others? Remains to be seen. But I think that independent of what moves they take today, the stocks will start off lower. So that's the first set of stocks on my radar. Watch out for some of the broking stocks. Then Hero MotoCorp. I won't be surprised if Hero MotoCorp is not amongst the key gainers in the session today. What's happened is that Hero MotoCorp, the total sales are up 15% at 5.03 lakh units YOY. The domestic sales are up 16% at 4.91 lakh units YOY. This is a big surprise because yesterday, if you remember the table that I'd put up on the trade setup, it spoke about how the volumes from Hero MotoCorp are expected to see a decline both YOY and MOM. And I think that because they have not done that, this stock will probably see some smart moves on the upside in the session today. So watch out for Hero MotoCorp in trade as well. The third stock on my radar is NMDC. NMDC June production volume was down 3.2%. Sales volume was down 9%. Remember, yesterday, the company had cut product prices as well. So very likely that NMDC could actually see a bit of a downtick in the session today. That's the third stock on my radar. Some smaller stocks that you need to keep an eye out for. JTL Industries, Q1 sales volume was up about 10.8%. Kandhar Oil Refinery received a 3-year contract worth 375 crores from ADNOC. DCX Systems received orders worth 1,250 crores from Larsen & Toubro. So these are names that you got to watch out for in the session today as well. May see some positive reactions, all of these. South Indian Bank was okay. Gross advances were up about 11.4% and deposits were up about 8.4%. CASA ratio muted, maybe not that great, but CSB Bank, I thought the numbers were good. Gross advances were up 17.8% at 25,000 crores. Deposits were up 22%. Looked okay. CSB Bank could well react positively today. So watch out for this one. Then some brokerage notes. Citi's come out with a note on IGL. They've raised the target price to 610 from 550. They said the target price has been raised primarily on reduction in the cost of capital assumptions because of a lower risk-free rate. The underlying operation and financial assumptions remain the same. So no changes in business, but because the cost of capital assumptions are lower, as a result of which the target price automatically moves at higher. Essentially, the discounting rate is lower. So the target price raised to 610 viewers from 550. The current price, 524. Watch out for IGL. Watch out for industrial stocks as well. UBS has come out with a note. They say they prefer CG Power and BEL over Larsen & Toubro. BEL won a large order yesterday, remember viewers? Or day before yesterday actually. But they reiterate the buy on Larsen & Toubro. The SOTP based target price is 4180. They say the near-term catalysts are limited for Larsen, but so are the expectations. And margins and execution are looking better for FY25 and 26 for Larsen. So watch out for this one. Watch out for V. Remember I was telling you about telcos being bought across by people and how people are constructive. Now Citi has been the most conservative on Vodafone or V. But they have come out and they have upgraded the stock from a neutral to a buy. The target price is now 23 rupees versus 15 rupees. Now why do they say this? They say they're enthused by the shift in stance by the market leader Jio towards monetization and peak competitive intensity behind. They say that the recent tariff hikes at the higher end of consensus estimates enthuse them. They believe the positive developments of the AGR case could actually lead to a bull case of 28 rupees for V. So therefore, that's the other one that you might want to watch out for in this session today. What else have I missed out? Moschip Semiconductors or Moschip. CDAC has partnered with Moschip and Socionext, so watch out for that stock as well. Government may raise windfall tax, so ONGC Reliance might come under a bit of news today. Anantraj Industries, DAM Capital has initiated a buy with a target price of 620, so I'll watch out for that as well. And Raymond, the 11th July demerger date is the record date, so that's the other one to keep an eye out for as well. So these are a few stocks that I certainly keep on my radar in the session today. Okay, I hope you found this useful. Remember, if you are interested in IT and tire stocks, both of which are active, at 9:45 we have a conversation with Manav Chopra on Nuvama, who's gone constructive on all of these as well. But for now, let me cut across to an exclusive chat that my colleague Samina is having with Jahangir Aziz of JP Morgan.
Most of the inflation dynamics in the US right now remains, because goods inflation is basically flatlining at zero, is going to remain sticky and most likely for a prolonged period of time. So we are not looking for a very, very large, enthusiastic, deep, early rate cutting cycle. We are looking at a shallow rate cutting cycle that gets prolonged well into 2026.
Jahangir, just moving away very quickly from the US to what we've already seen in Europe, because that seems to be another bloc that's going through its own problems. ECB defied the US and moved with the rate cut in its last meet. What are your thoughts on that, and what do you think are the major risk factors for central banks globally?
So I think, our ECB basically had telegraphed that they were going to cut rates for 3 months back, right? So they had to cut rates. We expect one more rate cut in the remainder of the year. If you look at other central banks in Europe, the Swiss National Bank has cut rates. We are expecting the Bank of England to start rate cutting in August. But I think if you look at other developed market banks, I'm not talking about Bank of Japan, where the next move is going to be a rate hike, but all of them are pointing to this very shallow rate cutting cycle. This is not, even the Europeans are not enthusiastically cutting rates. The only people who had enthusiastically cut rates were the emerging markets in Latin America and in Central Europe, who had taken rates to astronomical highs back in 21 and in 22. But beyond them, almost all the rate cuts that we are looking at in terms of central banks are essentially much more shallow and prolonged rate cutting cycle, because the same dynamics holds, which is that goods inflation has come down, has brought down inflation from its high, but service inflation remains sticky, and it remains sticky almost in all of developed market world. In terms of the risks, I think the real risk is that this very, very sticky inflation is going to make the rate cutting cycle very shallow. I don't think the benchmark for rate hikes is high in any of these developed market central banks. But I think that, for them to be able to cut rates deep enough, I think they really need to see, the service inflation, particularly, to be less sticky. And that, unfortunately, is, driven by very tight labor markets almost everywhere, and that seems to be the challenge at this point in time.
Right. Jahangir, let's move focus to Asia and emerging markets. With China's economy slowing, most people believe that India could be the fastest growing Asian economy. For good reason, right? Investments as a share of GDP in India is starting to rise. It seems like all stars are aligned for private capex also to start igniting. Do you feel like we're in a relatively better spot as compared to our peers?
So we are in a relatively better spot compared to our peers. The question is, what peers are you talking about? If you're comparing to Brazil and others, obviously you're in a much better spot, right? Look, China is clearly going through its troubles, and those troubles are pretty much China-made, much more than, driven by global factors, etc. But if you turn to India, I mean, look, we keep talking about private sector investment picking up. Private sector investment, gapped down back in 2000 and just after the GFC in 2012 to around 12% of GDP. It's gone up and it's gone down a bit every year, but it's just very minor volatility. It almost remains stagnant at 12% of GDP. So at this point in time, I think we need to sort of step back from looking at cyclical reason as to why private sector investment has essentially remained at 12% of GDP. It has gone through bad banking sector crisis, and then good banking sector situations after the cleanup in the banking sector. So that is also doesn't seem to be the reason as to why private sector investment has remained stuck at 12%. We really need to step back and ask ourselves, is this driven by structural factors? And rather than keep looking for cyclical reasons as to, well, tomorrow it's going to go up or it's gone down this quarter because of this and reason. We've gone through this for 12 straight years, 15 straight years. And I think the time has come for us to step back and say, is it structurally, what is structurally going on with the Indian private sector, that it just doesn't seem to be able to break that 12% of GDP barrier?
Right, Jahangir, and I want to take a cue from that because you do see the government very actively trying to boost exports, and a large chunk of it would, you'd imagine, come from the private sector and hence boost private capex. We aspire to be a global manufacturing powerhouse, but India's contribution to global merchandise exports still only stands at 2%. So from the sound of it, we may continue to play catch up for the next couple of years, if not longer, right? Do you feel like that takeoff in manufacturing is still in very early stages, and we may be looking at a significant growth in capex only maybe 3 to 5 years out?
So again, these predictions and forecasts are very hard to make, right? But even if you look at foreign direct investment, right? So if you take foreign direct investment and you break it down into services and manufacturing, then manufacturing-related foreign direct investment never really exceeded beyond $12 billion a year, even when overall FDI investment had reached, I think, about 75, if I remember correctly, in 2021. That was a high point. It was services-related. So I think this idea that FDI or that kind of using India as a manufacturing hub is going to break. It might happen. I'm not saying it won't happen. But so far, the evidence suggests that we've had a very steady, manufacturing FDI for a long period of time. That has, again, withstood all the cyclical volatility of the global economy, etc. Services FDI is the one that really soared, prior to 2021 and 2022, and since then it has actually fallen. So if you look at overall FDI, that also has fallen. Now, the thing is that, FDI across the world has fallen. It isn't that it is only India or China. And it's very hard to make the argument that you're going to get FDI-related manufacturing or services investment when cash is still paying you 5% back in the US. So I think that, for India to break that mold, I think you need the financial conditions globally to normalize. Back to more normal state of interest rates and the cost of funding. And it's only then we will be able to say whether or not we are going to get the kind of investments that we need to get India out of, boost manufacturing and whether it's exports of services or exports of goods. But right now, I think across the world, investment is being held back by the fact that cash is paying you 5%.
Well, that's, of course, the investment piece of it. How concerned, Jahangir, are you with consumption? It's another space that we're not seeing a significant pickup in. We've also looked at some numbers, and while household savings seems to be coming off, interestingly, while you'd imagine India is doing so well and the economy is booming and stock markets are raging, but that's not reflecting in actual cash and consumption in that sense. Is that something you're worried about at this stage? Do you feel like we should be talking about this a little bit more than just focusing on the good picture?
So you can, I don't know how much, you should worry about it. But I don't think there is any puzzle as to why consumption hasn't broken 4% growth rate. I mean, that's really what seems to be everybody's sort of puzzle, quote unquote, that, well, growth is doing at 8%, why is consumption at 4%? Actually, if you look at nominal GDP in India, that grew at 9.5%. CPI, this is last year, CPI grew at 5.5%. So real incomes grew at 4%. Why would you expect consumption to be anything more than 4%? If you go back to the year previous to that, consumption grew exactly at the rate of real incomes. The year before that, exactly the same rate. So I think this is this disconnect between using real GDP as a sign of real incomes rather than actually calculating what the real income in India has been. So nominal GDP is nominal income that grew at 9.5%. CPI inflation last year was 5.5%. I know I'm repeating myself like a broken record. 9.5%. So real income grew at 4%. Consumption grew at 4%. I don't see any puzzle there. The concern should be, why did real incomes grow only by 4%? But that's not where people are focusing.
So, Jahangir, help us understand that if real GDP and real income is only growing at 4%, what do you think needs to be done in order to push the anvil of that?
No, 1 second. Real GDP by CSO is growing at 8%.
Right.
CSO also publishes nominal GDP, which is growing at 9.5%. The government also publishes inflation numbers, which is 5.5%. So if I'm earning 9.5%, if my nominal income has grown by 9.5% as per CSO, the price of goods have gone up by 5.5%, then the real purchasing power has just gone up by 4%. The question that needs to be asked is, how can an economy whose nominal growth rate is 9.5% and whose CPI or domestic inflation is 5.5%, if I gave you those numbers, you wouldn't jump to the conclusion that real growth is 8%, would you? You.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The first investment you should make is something that is not at all discovered.
Well, back with India Market Open right here on NDTV Profit. Just bring up the implied open for a moment to just show our viewers what is it that we are likely to see today. Maybe 40 or points. In fact, cooled off a little bit from the highs that it was at. So watch out for this. Watch out for banks and IT. Certainly pockets to monitor. But what is the derivative setup looking like? Agam joins in with that. Morning, Agam.
Morning, Neeraj. Well, at the moment, things are looking certainly much better. Given the fact that Nifty yesterday once again closed at a new life high, of course, on a closing basis. And with that, we've seen more addition in open interest as well towards what looks like long. So an advance for about 0.5% for the underlying, about 3% added in open interest. The Bank Nifty as well continued to move upwards, holding on about the mark of 52,500. And of course, another 2.5% added in open interest there as well. Now, as far as the option market is concerned, we've seen a lot of traction in puts and more traction in puts as compared to calls yesterday, perhaps also on expected lines given the fact that the Nifty moved higher. And based on that, we are looking at more and more writing around the 24,000 put. This also means that perhaps, at least in the near term, traders are betting against the Nifty closing below that mark, at least as far as this week is concerned. And of course, on the higher end, we're now seeing a little bit more traction around 24,500. It's a roughly 500-point range that we're potentially expecting the Nifty to move within through the course of the next few days. But you never know how things can, in fact, change. Well, we move on and talk about the Fin Nifty as well, because that's where we have the weekly option expiry. Just take a look at where we have seen a little bit more put open interest, and that's around strikes of 23,500 and 23,600, and on the higher end 23,800 and thereabouts are a little more active. So that's a rough range that you can work with. But remember that Fin Nifty option premiums are usually very contracted, and hence selling becomes extremely challenging under those circumstances. That said, we're going to also keep an eye on a whole bunch of stocks. So we have longs in MGL, Oracle Financial Services, Deepak Nitrite. All of them have moved sharply. Of course, Hero MotoCorp will also react to its June volumes, which came after market hours. And among other stocks which saw unwinding, about a short covering for Indus Tower, PVR, Inox, Coforge, along with UBL. So a lot of stocks out there to keep an eye on. But, with all the data that we have, the question really is what do you do and how do you perhaps use options in such markets? Well, we have Amit Goel of Amit Ventures who's joining us on the show this morning. Amit, good morning. Thanks so much for joining in. Let's start off with your view on the benchmarks. I believe you also specifically have an option structure for the Bank Nifty. Can you take us through this?
Yeah. Good morning, Agam, and thank you for having me on your show. And very good morning to all your viewers. Talking about the benchmarks, we have been in a tearaway bull run now from the lows of what we had punched on the election day results. We have, in fact, broken out of a channel in which the Nifty and the Bank Nifty have been trading for a fair bit of time, for the last 6 months, in fact. And now we are trying to build a new trajectory. So given this backdrop and the positive news flows on all accounts, including the GST collections, and the PMI data and everything, I would suspect that I don't see any sharp correction in the near term. Along with the options data, as you've rightly mentioned, that 24,000 happens to be a very strong support. I would rather look at buying on dips, and if Nifty does correct and some of the early entrants take a little bit of profit booking, and Nifty corrects at around 23,000, 23,900 or 24,000, we could look at building fresh longs for the next week. Having said that, I do have a specific structure for Bank Nifty. If you tell me, I can take you through that.
Please go on, Amit. Tell us about what you are doing with the Bank Nifty at the moment.
Yeah. So the view remains the same as with Nifty. I'm still bullish on Bank Nifty as well, though the structure in Bank Nifty is not all that strong as Nifty is, because Bank Nifty punched its all-time high 3 sessions back, whereas Nifty did that yesterday. Having said that, the overall bias still remains on the upside, and the structure that I want to suggest our traders, short-term traders, is this. We look at constructing a Bank Nifty bull collar ladder, which essentially entails a 3-leg strategy. The entry range and time for entering this trade would be post 9:30, so that we allow the markets to settle down a bit. And when the spot is within 52,450 to 52,650, if the spot ranges between these two numbers after 9:30 a.m. Today, we could look at entering a bull call ladder for tomorrow's expiry, wherein we buy the 52,500 call 1 lot, we sell the 53,000 call 1 lot, and we sell the 53,500 call 1 lot again. What this does is this minimizes the risk on the downside. So if there is any sharp profit booking between today and tomorrow, we limit our risk to about 2,000 rupees on this trade. Though this trade also exposes us to unlimited risk on the upside beyond 53,800, sorry. So what we could look to do is we could have a rupee stop loss and a rupee target, wherein if we anytime during the day or today or tomorrow, we end up making a 2,000 rupee profit, we could exit the trade, and on a lakh rupee margin, this gives us a cool 2% yield in 2 days time, with about we'll keep our stop loss also at about 2,000 rupees on the downside.
Right. Okay. So just want to revise the conditions under which you actually enter this trade. Firstly, well, as Amit has mentioned, you're looking at a spot price of anywhere between 52,450 to 52,650, and under those circumstances, what you are actually looking to do, and remember, this is for tomorrow's weekly options expiry. What you're looking to do is you are buying the 52,500 call, and against that, you're also selling the 53,000 call, along with that, the 53,500 call as well. And as, pardon me, Amit has put it, you're looking at a target of around 2,000, pardon me, and your rupee stop loss in this case is also 2,000, and your risk to reward, naturally, that this means that it's 1:1. However, if you do stand to make 2,000 at this point in time, considering a margin of around 1 lakh rupees, you're making about 2% over the course of today and tomorrow. Amit, is there anything additional that you may like to add, or is this largely covers it up?
This largely covers it up, you've rightly said.
Okay, Amit, so let's move on and talk about L&T. I believe that one is also on your radar this morning.
Yeah, the structure in L&T happens to be that of non-directional. It's trading in a broad range, barring the the extreme movements during the election results and the exit poll days. We've seen L&T move in a very broad range of about 3,400 and 3,700 levels, and it is currently at around the 3,500, 550 levels. It seems to be in the middle of that range. If you look at the other technical factors like ADX, like RSI, on a higher time frame basis, most of them are fairly neutral. Given the neutral stance on L&T and not much of news flow, barring that order announcement yesterday, there is not much action happening. And if you also notice that the result for L&T is around 23rd of July. So I don't see a lot of action happening in this counter during the next couple of weeks. So in order to take advantage of this, what we could do is we could set up a slightly aggressive short strangle in this counter, wherein we look to sell the 3,700 call. Along with that, we also sell the 3,400 put, 1 lot each of the monthly July monthly expiry. The rupee stop loss here we will maintain at 3,000 rupees, and we will also target about 3,000 rupees on this trade. Considering that this is a non-directional and an unlimited risk, any beginner traders who are not well versed with this kind of trades can stay away from it, and anybody who is well versed with it could look at entering this. There are some entry range and timings. I will obviously suggest to enter post 9:30, allowing the overall markets to settle down a bit from the opening levels. And if the spot ranges between 3,500 and 3,550, which is the midpoint of this range, we could look at entering this trade.
Okay, so well, a straightforward short strangle as far as L&T is concerned, and the strikes that which Amit has also mentioned at the moment, a little bit more aggressive. That's because well, you know, the strikes are a tad bit closer to the spot. But Amit, I do have a follow-up question, and I want to revisit the Bank Nifty you know, strategy that you've taken us through. You know, when it comes to your sell legs, both of them are at different strikes. That is the 53,000 call and the 53,500 call. You know, one may perhaps question, why is it that you are not going ahead and selling the same strikes? Why is it that you're not selling 2 lots of the 53,000 call, or for that matter, 2 lots of the 53,500 call? And why are you actually distributing it across 2 strikes?
So since we know that Bank Nifty is slightly a little more aggressive counter, and it can move sharply, especially on expiry days, I want to be a little more comfortable with the range of the trade in which I am profitable. So instead of selling it with 2:1 kind of a trade, wherein we buy the 52,500 and sell 2 lots of 53 or 53,500, which basically is a ratio spread, I am looking at spreading out the range in which we are likely to collect some profits. That's one of the main reasons why I wanted to spread out the range in which I'm profitable and keep a little more buffer on the upside.
So, you know, that's the reason why, of course, you actually are spreading it across 2 strikes and not necessarily keeping at 1 strike. Amit, on that note, taking a moment to thank you for joining us and taking us through these relatively complex and sophisticated structures, also simplifying them for our viewers, and, of course, helping us with that strategy on L&T as well. Well, with that, it's over to you, Neeraj.
Thanks, Agam. Well, important option strategies for you to take benefits from. Now, speaking of options, and brokers have benefited from this in a while, but I think upon an update from the market regulator, not on options really, but Sebi's introduced guidelines for exchanges to ensure fair and transparent fee structures, which may potentially, well, reduce costs for end clients such as investors and traders, but hit brokerages in a big way. Charu Singh Johnson for more on this. Charu, what is the latest update there?
So the Security and Exchange Board of India, upon examination, found that some of the exchanges, some of the members of these exchanges use a volume-based slab structure where the fees that they are charging the end clients, which are the investors and the traders, daily is much higher than what they are paying back to their market infrastructure institutions, that is the exchanges, on a monthly basis. That is why new fairness and equity-based guidelines have been introduced that are to be followed. Now, these can be seen majorly in 3 ways. Number one, that to ensure fairness, what is going to happen is that they have to ensure that volume-based system is going to be discredited and only a flat fee structure is going to be taken up, after which that volume and the size and the activity of the member is not going to be considered. It is going to be equal for all members. Then true to label is the second criteria, according to which the fees that is going to be charged by the exchanges is going to be the only fees that is charged on the traders and the investors by the members, no hidden or extra charges. And lastly, the current existing system of per unit charges is going to be considered so that a fair charge is, being levied on the end clients, which are the traders and investors, and they will also have to, potentially pay a lower fees. And finally, the market infrastructure institutions have to amend their rules and see if they have the infrastructure and the means of implementing it, and then report to the market regulator that they have implemented the same.
Yeah, this is important because it will possibly hit some of the discount brokerages for sure in a big way from a market listed perspective. But yes, Charu is right, brings down the cost presumably for end clients. Or maybe, Charu, just one quick follow-up, right? What may happen is essentially not that the brokerages may charge customers less. If anything, Angel Broking about 6-9 months ago had said that they will not get impacted because they can hike brokerage fees by 2-3 rupees in order to offset this loss of income. So it may not actually be a profit to the end client, but for now just a loss to the brokerage.
In a way, yes, it can be looked at in a way that it is a loss to the brokerage, and for the end clients, it is just another thing which ensures that only a fair fees is charged on them.
Yeah, okay. Okay, Charu, thanks for putting that into perspective. Now, Nirav Asher, Head of Equity Research at Latin Manarlal Securities with us. Before we talk about everything else under the sun, Nirav, you represent a brokerage. You're probably not a discount broker, therefore you don't get impacted as much by this, by volume targets, etc. But tell us, how does this work? Did you benefit out? I mean, your brokerage also met some volume targets and therefore were you charged less? And is this therefore a hit? Because there are various estimates that I've read this morning which say that Angel Broking for Angel 1, for example, earned maybe 400 crores out of the 4,200 crore top line in FY24 from this piece alone, and that is at risk now.
Yeah, good morning and thank you for having me on your show. One thing I think, first things first, we are not a discount broker. So we offer a whole host of services and we charge the normal rates, that is point one. And regarding this this Sebi directive, which is applicable from October 1st, that market infrastructure institutions are supposed to charge a flat fee or uniform charges, which was benefiting certain discount brokers. Now, I think these new age discount brokers, they have a very aggressive strategy for growth. And to push the growth, I think they have been going in aggressively for volumes. And thus they've been availing of these discounts, which if discontinued, I think is likely to be passed on to the clients. Because we know that finally it is the end client who has to bear the brunt of this. And to our mind, this can potentially impact the volumes going forward. Because I think we've seen this surge in volumes, as you rightly pointed out regarding Angel. We've seen this surge in volumes. It's on the back of wafer-thin margins, basically. So I would be tempted to believe that this will be passed on to the final clients. And in a way, this could potentially impact volumes going forward.
Okay, but so one is volumes, but could this reduce the YOY incremental incomes? Because if they don't get this money for 9 months now, presumably, then is that effectively killing growth on the revenue front for some of the discount brokers, Nirav? Because their valuations are tied squarely to the kind of growth that they are showing in clients and in business. So therefore, is it a hit that an Angel 1 or a 5 Paisa might take today? Would you use that hit to buy into those stocks or are you staying away right now?
You'd like to stay away from the stocks, at least at this point of time, because we need to study the potential impacts of this. But definitely it affects everyone across the chain, because when you are charging uniform charges, a flat fee structure, the volumes are going to be hit. So in that way, from that perspective, the business is going to be impacted. And as far as the end clients are concerned, for them also the cost structure tends to go up. So they would be definitely less aggressive as far as the trading, etc. is concerned. So I think it could potentially disrupt the industry in a few ways.
Right. We also have Rajat Bose with us for a word on the technicals of the market. Rajat, it's been going great for us for the last couple of days. The benchmark has been doing well. There's very obvious sector rotation. Leadership is coming in from the large cap space. As we gear up this morning, how likely is it that these gains will continue to roll in? Would you still be brave enough to advise fresh longs at these levels on the Nifty?
Good morning, Samya. I would say that the kind of movement that we were seeing in the index, it is day before there was some kind of, last Friday there was a bit of a fall, and after that yesterday it recouped and closed above 24,140. Now I would say that since money is coming in, whatever be it, SIP or say pension fund money, well, but technically speaking, the uptrend continues and the next resistance is at around 24,500. Once 24,500 is taken out, then we would have to get to the drawing board and project further upside, and that could be even 1,000 points from thereafter. Because otherwise valuations and everything may be pretty high, but a relentless buying continues, and so you should not stand on in front of that shorting this market, because it is going one way up, and the 9-day exponential moving average, which is currently around say 23,807, it is suggesting that there would be further upside. Regarding the bank Nifty, the next target will be say something like 52,960 to about 78. That is the kind of level I'm getting. Bank Nifty is also showing good going, and Nifty mid cap, Nifty Fin Nifty, all are showing bullishness. So chances are you will see this kind of move continues. Whether I say parabolic, some stocks, okay, those effects will come, but at the moment it is heady momentum that is playing in. And I have actually chosen two stocks from the large cap or high. Even if you classify them in mid cap, they are pretty good. I've chosen two paint stocks. And among the paint stocks, I've chosen the leader, that is, it is Asian Paints. Asian Paints, I would put a stop loss below 28.95 on closing price basis. Asian Paints is showing a lot of traction last 3 days. There had been good movement on the upside. 29.57, 29.80, and 3,020. This is a short-term buy call. Short-term, when I say a short-term, it is at least, say, 3 weeks to 1 month, if not more. And the second stock is the second in position, that is Berger Paints in the paints industry. 493 is the stop loss, 514, 521, and 537. These are the three targets for Berger Paints, and the stop loss should be placed below 493 on closing price basis. I expect paint industry stocks might do well. Grasim has already moved up. Grasim may take a bit of a breather, but these two are showing a lot of traction.
There was a bunch of recommendations and the outlook on Nifty and Bank Nifty from Rajat Bose, but the focus has been auto sales, even though the stocks haven't done very much in trade yesterday, and the play has largely been auto ancillary. It's still important to highlight how the month has been for auto majors. Puneet has been tracking this and is standing by. Puneet, we reported on a few numbers before markets closed yesterday, but I believe there were a few more that came after market closing. You want to walk us through how the month has been for the auto majors?
Yeah, that's right, definitely. So a lot of interesting trends that have come up out of this month, which was expected to be largely subdued and quiet. So one of the major things is Hero MotoCorp, which came out after the market close. It reported a 15% sales growth versus expectation of a fall in this particular month. So that's been a very positive surprise. The other one is, of course, it came slightly at the end was Tata Motors, another one which was very disappointing. The numbers, the passenger vehicle sales were down 8%, while for commercial vehicles the sales have been down roughly 7-odd%. A similar trend has been seen in Ashok Leyland as well, which came in during market hours. Another key surprise here was also VECV, which is the commercial vehicle arm of Eicher Motors. It reported a positive 10% sales growth, the only one in the commercial vehicle space to actually show some growth in this particular month. Also TVS, which has been, coming at roughly 5% growth in sales. Now this is slightly lower than the 9 to 10% expected, and potentially, they have lost some share in the premium motorcycle segment, and that's possibly because of Honda, where the supply chain issues has been resolved. We saw a similar impact of Honda supply chain issues getting resolved on Bajaj Auto as well, specifically in the 125cc segment, that they could have seen some particular pressure. When you look at the top three winners of this particular month, it has to be Mahindra and Mahindra, definitely outperforming by 22% growth, highest across segments. The second one is, of course, Hero we spoke about, and Maruti as well, showing roughly 12% sales growth in this particular month. What's interesting is this rural theme play of Hero and Maruti has shown some, interesting trend in this month. We'll definitely deep dive. This is the last month before the Q1 earnings. So a lot more detail into what led to this particular. It could be the elections, could be the freebies. We never know, but the exact reason, while we will deep dive into it, will be interesting. The three biggest losers in this particular month has to be Tata Motors, passenger vehicle as well as commercial vehicle, down 8 and 6%, and Eicher Motors was down 5% in this particular month. So overall, rural theme playing, Mahindra continuing its outperformance, and a few select outperformers such as Maruti, Hero, as well as Eicher Motors CV. Back to you.
Right, that's the auto stocks that have been quite the talking point yesterday, even though the stocks have been largely muted in terms of a reaction, apart from the likes of an Atul that actually gained 20% in trade. Just before we go into discussing how it looks in terms of fundamental news flow and get a view from the fundamental point of view, but technically, Rajat, any of those auto stocks that you're constructive on, and I'm going to throw in tire companies, and ancillary, auto ancillary as whole actually, battery, and maybe even the likes of a Castrol that did quite well yesterday. Rajat, what is your take on auto companies and auto ancillary names? So tire stocks included and battery companies also included.
Yeah, may I talk about Castrol? You also asked.
Yes,
Castrol,
you may, please. It was the top gainer yesterday.
Castrol looks pretty good. I think the new thing that is coming in for Castrol is cooling liquid that it would produce for data centers. So that has given a fillip to Castrol. Castrol looks pretty good, although it has moved up considerably over the last few months. But still, it looks pretty interesting in the sense that there is a possible breakout that might happen once Castrol goes beyond, say, 230. And chances are, if this move that happened yesterday, it continues, it will see 230 and above levels. So Castrol is pretty good. Auto ancillaries, which one do you want me to talk about?
Rajat, I'll come in there. I have two names that I would want you to check for me. One of them is a tire company, JK Tire. The other one is a small company called Epigral, E-P-I-G-R-A-L.
Again, spell it again.
Epigral. Never mind, just give me the tire stocks, Rajat.
Okay. JK Tire, what I find is that JK Tire has actually given a breakout from a range-bound activity. 375 to about 425 had been the range so far, but now it is moving up. It has crossed all the moving averages. And once it sustains above 445, then it is headed for 500 to about 525. That being that, say, even Apollo is one stock that also might show better movement if it manages to cross 550 to about 560.
Well, that's the call coming in on tire stocks and Castrol, implied Nifty indicating to a positive start this morning. In a few minutes, we'll take a break. We'll come back, track pre-open and go you up for trade, so stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call.
All right, back with India Market Open right here on NDTV Profit in conversation with Rajat Bose as well as Nirav Ashar. We've spoken about the charts for the autos, but a minute to the pre-open left, and while the implied open suggests the start, which is in the green, the question, Nirav, is the surprise that some of the companies have thrown up, both positive and negative. Ashok Leyland, Tata Motors are expected to give good CV numbers. They haven't. So is there a problem with the CV cycle, part one? And two, Hero MotoCorp, the 15% uptick in sales was a blowout number, completely unexpected. So do you go out and invest in a Hero MotoCorp? Conversely, if you were invested in a Ashok Leyland, would you get out of that investment?
Starting off with the CV cycle as well as the passenger vehicle space also, I think we would continue to stay invested in these stocks. And most of these companies had indicated earlier that we expect a slowdown on account of the election, elections period, and as well as the heat wave. So I think a couple of these factors, they impacted the footfalls at the retail level. So it will be a wait and watch situation. Most of these companies have indicated that the inquiry pipeline continues to be quite strong. And on the basis of this, they are expecting a revival in sales going forward from August as the festival season starts. Of course, there could be an uptick in the infrastructure activity too once the monsoons are over. So I think it will be a wait and watch for this point of time as far as both the CV space and the passenger vehicle space is concerned. As far as the two-wheelers are concerned, I think all the three companies, whether it is Bajaj Auto or TVS or Hero MotoCorp, if you see the performance during the last 1 year, the stock prices have nearly doubled. So I think a very strong performance which was expected from all these companies, and most of these companies have delivered too. So I think yesterday's performance, Hero MotoCorp should give a further fillip to the stock. We have recommended this stock already at nearly 3,800 levels. So it's a good time to see what kind of re-rating takes place going forward into the stock.
You've got your whole brokerage pack that will be in focus. We've, of course, Neeraj just talked to Nirav about it, but technically as well, we'll get a view on the likes of 5paisa, Motilal, that will see some pressure in today, Angel One in today's day of trade. But this, of course, could be market moving and could probably justify why you saw such a big move on Dixon in yesterday's day of trade. We believe the August review of the MSCI Standard Index could attract about $1.8 billion of inflows in the country through inclusion of 6 companies, Nuvama says. Richa is standing by with more on this. Richa, firstly tell us, what does Nuvama believe in terms of the quantity of funds that are expected and which companies are going to be beneficiaries of this? I believe the likes of a Dixon and Vodafone could gain quite significantly on back of this.
House expects a cumulative of $1.18 billion inflows for the MSCI index in the August review, and the highest inflows can come from Dixon and Vodafone Idea. Now, let me list down the 6 stocks which the brokerage house believes have made the cut and can be possibly included in the index in the August review. Now, number 1 is Vodafone Idea, which is followed by Prestige Estates, Oberoi Realty, Schaeffler India, Dixon Technologies, and Uno Minda. And the official announcement will likely take place on 13th of August, and this adjustments will take place on the 30th of August. Now, the brokerage house interestingly also mentions HDFC Bank. Now, the FY holding for the company will come out just about in this week, and the brokerage house says that if the shareholding favors a weight increase in the MSCI index, then the stock could see a further 10 to 15% upside from here. But if the holding suggests an unfavorable outcome, if the stock is not likely to be included in the index, then the HDFC Bank stock would likely settle at 1600 level. So this is what Nuvama broadly believes about the MSCI index inclusion.
Okay. Thanks for that, Rucha. Watch out for some of those stocks as well. Just get that list up yet again. Of course, if can HDFC Bank indeed cool off, and what are the possible inclusions? Prestige, Oberoi, and Dixon, Uno Minda, and Schaeffler. Now, I want to pick up Vodafone here, simply because it's got some brokerage calls going as well for itself. Rajat, after having a stellar run, profit booking for the last couple of days for Vodafone, will it or can it see buying? Would you be a buyer in V?
Look, if you look at the Vodafone weekly chart, this is one stock that is giving the bullish signal in the sense that Vodafone is consolidating, and now the weekly moving averages are also been crossed and it is moving up. So I have a feeling that you might see once it crosses 20, it will gain more traction. 23.5 to about 24 would be the next target, but eventual target could be something like 32. So this is about a year and a half kind of target that I'm giving. But Vodafone on any dip may be bought. This stock doesn't move that strongly because this has got very large equity and operator activity is pretty much limited. That's why the move is very slow.
That's why the move is slow. Nirav, for everybody who cried foul about the prospects of a Vodafone at 12 rupees when the funding came in from GQG and others and said it's a risky stock, it's given 50% returns. So there is merit in not rubbishing the notes given by people which are citing targets of 23 or 28 or more as well, right? But is there a case to buy a Vodafone, or would you rather buy a Bharti, for example?
Definitely, there is a case for buying Vodafone because all the hard work in terms of reviving the company has been done. Now we also have the tariff hike which has been announced. Having said that, a lot of work needs to be done further. But there is positivity. So I think the target price, what is being talked about, 24, 25 levels, looks achievable, definitely.
Okay. The other, Nirav, the other stock of yesterday, actually 2 stocks which stood out in trade yesterday, right? One of them was Atul Auto, just splendid sales month after month after month for 6 months in a row, another 3% up today, and which was up 20% yesterday. Walk Hard was up 20% yesterday, looks like starting off well again today. Now my question is, have you looked at fundamentally both of these? Both of these have fundamental announcements to themselves which led to the up move. Do you track them?
Starting off with Walk Hard, I think they are on the verge of doing a clinical 3 trial for the cancer drug. And I think if it receives approval, then I think we could see further upside in this stock. The stock has come out of a lull, and I think now if everything hinges on this development, if the clinical 3 trials are successful, then again we could see a big move in Wockhardt. And as far as Atul Auto is concerned, this is a small company, but the sales figures have been phenomenal. There's been a marked improvement in the sales, and I think that is driving the growth for this company.
So are you a buyer at these prices in any of either of them?
No, because
Really?
we've missed the opportunity as far as Atul Auto is concerned, and Wockhardt we were not looking at. We were not tracking it actively.
Okay. Rajat, Wockhardt has had a splendid move. Can it do more?
See, Wockhardt, the move has been pretty fast, and it's really a good move. Similarly, the stock that you discussed a little earlier, that is Atul Auto, these stocks have actually jumped the way it has. Wockhardt has actually completed a saucer pattern. That saucer pattern had been there for several years. So this is a bullish pattern, and once the saucer pattern has been breached decisively, you can expect that again getting into those levels from where these huge moves have started. For the last couple of weeks, Wockhardt is showing this kind of traction. It isn't going to fall immediately, so any dip should be used to buy, and at the moment it is at 832. Going forward, it can go up to say 870, 875. After that, we would have to make a new projection.
Okay, we will watch out for some of these stocks. Now, to some key brokerage notes, and Mihika joins in with a Jefferies note on ICICI Lombard. Mihika, interesting you've chosen this. Good morning. Why so?
Good morning. So what they've done is they've hiked the target price from previously the target price was at 1,950, and now they've hiked it to 2,090 rupees, which offers a 16% upside to the previous close. And this is and they've maintained their buy rating, and this is mainly due to ICICI Lombard's new retail health insurance product called Elevate, which will kind of help it ramp up its retail health segment presence, which currently it has only a 3% market share. Now Jefferies believe that the new product has many industry firsts, and it could get a positive response from customers as well as agents. Now, retail health insurance is a space that ICICI Lombard has in the past avoided due to concerns over claims and vintage claims. However, with pricing improvement and competitive resetting, the new product could kind of elevate. The new product Elevate could help push the presence for ICICI Lombard, and what Jefferies expects, it could help the CAGR growth in the retail health segment at 25% CAGR over FY24 and 27. It could also help 17% growth in the overall premiums of the company. Moreover, what Jefferies is saying is the company is also benefiting from the healthy industry growth as well as improving competitive intensity. Over FY24 and FY27, the premiums will grow at a 17% CAGR according to Jefferies, and they've also kind of they've raised their earnings estimates a bit to factor in the stronger growth in health insurance as well as the shift to IFRS.
Okay. Thanks, Mihika, for that. Interesting. Would you find any favor, Neera, with a general insurance firm like ICICI Lombard? Jefferies seems to be liking it for the reasons that Mihika just enumerated.
So it's related to the new product launch. So everything will depend on how the product performs. But we've not been looking at this space at this point of time.
That's ICICI Lombard. For usually insurance stocks is where the play is quite boring. The movements are rather intermittent and don't, of course, see very sharp upticks one way or the other. Rajat, you want to comment on this one? Insurance stocks, anything here that you like? An ICICI Pru, ICICI Lombard, HDFC, LIC. Take your pick.
Most of them are gaining fresh traction, and the stock in question, that is ICICI Lombard, it is, once it crosses 1850, it will have more strength, but immediately There could be some resistance around 1850, but its uptrend is pretty strong and it has cleared the resistance around 1700 to about 1725 decisively. So that way it looks pretty good. Other insurance company stocks, even LIC or say HDFC Life, SBI Life, you can cherry pick among them. I would say SBI Life would be a very good bet.
Right, that's the call coming in on SBI Life and Patanjali. I'll just quickly check Walker. I don't know whether Neeraj just checked in pre-open. Yeah, it has, of course. Okay, so quiet, and I don't think this is going to be quiet for too long. It's going to start seeing buying pretty much at the get-go in trade. IT, Nirav, how do you feel about IT? I know there has been a little bit of a run-up in the last few days on IT stocks, but preempting a rate cut from the Fed in November, do you feel like this could be a good strategy to load up on IT between now and the next few weeks, and of course, then sit tight?
Yeah, so we began to see some moves in IT prior to the Q1 results, and I think as we had suggested that we are recommending stocks like Infosys and TCS to our clients, and we began to see some movement over there. Yesterday, we've seen a double upgrade for Wipro also, and mid-cap stocks have also started moving. Persistent, we saw some good movement. So yes, but we are going cautious on IT at this point of time. We are recommending Infosys and TCS for the time being.
Nothing on the mid-cap space, huh, Nirav?
Nothing on the mid-cap space as of now.
Right. Rajat, what about you? Any IT stocks on your buy list at the current market price for the near term?
Well, earlier in your show, I have already talked about LTI Mindtree. Apart from that, today, if you ask me, I would opt for Coforge. Coforge looks pretty good. If it crosses 5,600, then there is every possibility that it would go up to something like 58, 75 kind of levels. And it's moving averages, the way things have panned out, moving averages are giving a signal that a long-term, medium to long-term up move might be gaining traction in Coforge. So Coforge is a good buy at current levels.
Okay, and Rajat, I have 30 seconds before the market starts. The one stock that you would bet on this morning, one top call for the morning.
Oh, that will be HDFC Bank. HDFC Bank needs to take out 1720. If it manages to get past 1720 and stay above that with a lot of good buying, then this time it is going to post a new high. That will obviously happen, but it might cross 1800 to about 1825 as well. HDFC Bank looks pretty positive. It has given a flag formation, and that flag formation breakout is on the cards.
Okay, confident Rajat Bose on HDFC Bank. Let's see how it starts off. Here are the first trades this Tuesday morning. We are starting off about 60 points, just about what the pre-open was, implied open was indicating, just around 24,200. Remember, this has been the point of key resistance, and a lot of calls written at this level. So watch out for this. Bring up the Bank Nifty and the Nifty IT, because those two have been the key indices. Banks mildly underperforming. IT, let's see if it's carrying on. Oh my God, IT is another 0.5% higher. Some really strong moves for IT for the last few days, must say. 0.6% higher now. Bring up the mid-cap and the small caps very quickly before we get to the heat map. About 0.29% for the mid-cap index. The small caps maybe a bit better, 0.33%. Not bad going. Let's get the heat map up on the screen and let's see what's moving and what's not. IT stocks should be right up there maybe. Wipro, Tech Mahindra, HCL Tech. Amongst the top 4 gainers, iShares is the top gainer. There's strength in ONGC, higher crude prices presumably. Airtel adds on to some more gains. HDFC Bank 0.5% higher. Rajat Bose's top call this morning. He said 1720. We'll bring up that price as well. But on the losers, Bajaj Auto down. Interestingly, I don't see Hero MotoCorp as amongst the top performers, and that's a big surprise to me because I thought the numbers were stellar. Let's wait and watch if this changes. Just before Samina takes over, just get the HDFC Bank stock price on the chart. He mentioned 1720. A CLSA note had spoken about 1734 as a key breakout level. currently HDFC Bank at 17.15. Let's see if it does more. Watch out for HDFC Bank in the session today. Samina, what are you spotting?
Well, you watch out for HDFC and I'll watch out for IT because that seems to be in quite a sweet spot this morning. I guess all that excitement and anticipation of a rate cut from the US is what's keeping those IT stocks up and about in trade. And remember, they've been underdogs. They've not seen too much of a catch-up in terms of stock play recently. Well, one space that is sulking this morning is brokerages, and that comes in after Sebi has asked brokerages to charge their clients uniformly, which means that discount brokers cannot or shouldn't be providing discounts in terms of large volume trades. On back of which, you're seeing a big cut on Angel One, 5 Paisa, Anand Rathi, even the likes of Nuvama, JM Financial are seeing weakness across the board. 5 Paisa is down 4%, Angel One is down 7%. Take a look at how Anand JM is trading flat, how Anand Rathi is doing, because in pre-open trade that stock was also seeing some selling pressure. It's off the day's low point, but remember they also have a fairly large book in terms of brokerage, but the stock not doing too badly. Motilal Oswal, if I've got that on, it'd be helpful to pull that up, but if not, it just gives you a sense of what brokerages are doing this morning. There is pressure. Angel One is leading the pack in terms of losses, down about 7%. A few other names that I want to quickly track before we move on and talk about the broader market performance as whole. Patanjali is having a pleasant morning. It was one of the top gainers in trade. It's up 3% as it looks to demerge its non-food business. So that is a stock of the morning. No runaway rally, but nevertheless a positive bias is what we are seeing. CSB Bank and NMDC, there were a few numbers that came in terms of updates, business updates. So you had CSB where gross advances are up 18% and deposits are also up 22%, on back of which the stock is up 6.5%. NMDC, on the other hand, saw its June production volumes actually down quite significantly, 3.2% YOY, and sales volumes were down 9%. They had also cut product prices yesterday. NMDC will see some weakness, open with a downside bias, but further losses cannot be ruled out at this stage. That's pretty much the market sentiment. CSB, remember, is up 6%. Early last week, they had a pretty large a pretty large block deal, and despite that, we didn't see the stock correcting too much. Those numbers can explain to you why it's actually holding up, and of course, the weekly and monthly update, quarterly update looking pretty good. So all in all, Neeraj, it's not too euphoric this morning, but pockets of interest and pockets of losses that we are seeing.
Yeah, I mean the stocks in the broking side most certainly looking at wobbly. Wockhardt, by the way, is up another 6%. Samina was right. It won't stay quiet for too long, and it's not staying quiet. 7.5% higher for Wockhardt now. A big 8% now. Yet again, you look at this week's chart or 7 days chart for Wockhardt, and it tells you a story of a stock which is on steroids maybe, but fabulous move there on Wockhardt for the last few days. I wonder if Atul Auto is perking up as well. This is Wockhardt, of course, in a week about 50% or over that. Atul Auto should come up on your screen, and let's see if that one is seeing a little bit of an uptick. You know, hiring has looked weak, and that is showing on Info Edge, and some collateral damage on PB Fintech as well in the session today. So 3% lower for PB Fintech, but Info Edge about 2.5% lower in trade. So that's the other one. The Naukri Job Speak Index has not looked very good. CSB Bank, very strong advances and deposits, and that stock is up 5.5%. And much like ONGC, Oil India too, is up about 5% yet again with crude prices spiking up. I wonder if the tire stocks, paint stocks are in the red as a result of collateral damage because of a crude price uptick. Yes, some bit of a shave off into some of the tire names as well. But oil upstream looks solid. Rajat Bose, come in first up on Oil India and ONGC, both of them revving up in trade.
Yeah, ONGC I track on a regular basis. So I will talk about ONGC.
Sure.
ONGC, current move is very encouraging. It is going up, but then the eventual target that I have chalked out is about 313 on the upside. But if you are a short-term player, fine, but do not buy for medium to long-term because there is going to be a substantial correction. The recent lows notwithstanding. So ONGC for the day is definitely good, but it requires it will get into a big correction over the next few months. It will pan out.
Well, it's another morning of Garden Reach doing well after a big up move yesterday. The stock continues to build on those gains. 5.5% higher is what we have on defense. Nirav, do you feel like there's still money to be made in this sector? Because every now and then you'll have an order win. Some counters react, some don't. So, case in point, you had Cochin Shipyard, BEL and Garden Reach all report significant order wins. It's only Garden Reach that's gained 10% in the lot. Is an opportunity still persist here? Because first it was buy any defense and you'd make money. That I believe is now changing.
We'll definitely be buyers as far as GRSE is concerned and Cochin Shipyard is concerned. And in the other category, we have BEL. We continue to remain very bullish on BEL also and HAL also. So these are buys at any point of time, at least as far as the situation is concerned now.
Okay. So, sorry, Nirav, did you say that you would buy selectively, and if so, which are these? Sorry, I didn't quite hear you.
Yeah, selectively, of course. So we would be buyers in GRSE, Cochin Shipyard, BEL and HAL.
Okay, so BEL and HAL and BEL, remember, won that large order as well. So that's one stock that you certainly want to keep on your mind. By the way, Oil India is up, it was up 7% at the point of time. Just come off a little bit, still up about 6%. We asked Rajat about oil upstream. Nirav Ashar, would you be a buyer into these PSUs? Oil India, ONGC?
Yeah, we like Oil India, and we also would like to look at city gas distribution companies, particularly Indraprastha Gas and Mahanagar Gas.
Okay, and they've been on a bit of a roll, Nirav. The valuations no longer as they used to be. You still like them?
Yes, because we feel that the outlook for the gas-based players is going to improve going forward.
Rajat, I don't know whether you're big on shorting stocks, but would you consider going short on some of these brokerage counters right now?
Brokerage counter, which one?
Angel One, Motilal, PSC as well, which is of course the platform, but it's under some weakness. And yeah, I think that's it. Angel One, Motilal, Anand Rathi maybe.
See, all these brokerage stocks led by, say, Motilal Oswal. These stocks have actually moved up considerably over the last, say, 1 year or so. Say, like Motilal Oswal, this moved up from, say, something like 150. And the current level is about 600. So again, allow me to say something about the parabolic pattern and why there are parabolic patterns even here. Those people are, in fact, because I talk about this on your channel, a lot of your viewers have given or written to me that why are you talking about this and what is so great about it? The thing is that I would say go to IEX chart and go to IRCTC monthly chart. You will understand why I'm cautioning people about this parabolic patterns. And one more thing, Samya, Nirav, Niraj, and people like me together, we would have to see a market that will become range bound, very painful kind of thing, because we are discounting too much going into the future. Every stock is going parabolic and ballistic. This doesn't continue for a long time. And once the problem starts happening, there would be problems, there would be big issues. So I would suggest part profit booking in this kind of stocks that have moved up 3 times, 4 times. Look at Garden Reach. You were discussing a little earlier. It has moved up, I think, 4 times in 1 year. This kind of moves are not sustainable. I have checked this parabolic pattern all over the world. They actually give the same thing. So that is the reason why I'm pretty wary of these stocks going ballistic and vertical, or if you like parabolic, whatever terminology you use is that is fine, but then there is every risk out there. On the other hand, you will see a very good move after, say, about 9 year hiatus. Okhard has started moving. There, IEX is another stock that will also see a lot of good movement. These are the stocks, there is much less risk comparative to all these ballistic movers already done.
And in fact, we've seen that in funds as well. I mean, you look at, just case in point, a UTI Momentum, a stock that plays momentum, stock that does swing trading or plays strength, has seen significant outperformance even on individual investor portfolios. Nina, we want to comment on that because this is something that, we don't talk about often, but the fact is that investors who have invested in a momentum strategy have done far better than maybe a large cap, mid cap, or any sort of active portfolios.
So I'll just like to point out about the shipbuilding companies which we just discussed. We've not seen such kind of order book before. We've not seen this kind of agenda, which is the indigenization agenda. We've not seen this kind of order inflows. We've never seen a situation where we are targeting about 90% of ships being built indigenously, complete reduction in dependence on the foreign suppliers. So I think this is something new. If one were to take into account railway stocks, there's a complete overhaul of the wagons. So 3 lakh wagons are going to be replaced, modernized. There's modernization across the board. This kind of investments have not happened before. So I think that is what justifies what is going ahead. The order books are full. The execution, there's a lot of pressure on execution. There are very few players who are there in the market. So I think they are the first movers and they are getting advantage in terms of valuation. So I would put it that way. But of course, the market has to take the final call.
It's looking a little unsure, and it wouldn't surprise me if today is a day that we actually go home in the red. Bank Nifty slightly trading flat to slightly lower. Remember, since Wednesday last week, it's been pretty much a one-way journey, apart from on Friday, where the last 20 minutes of trade saw the markets consolidate a little bit on the downside. But the last 5 days have been very, very strong for the benchmark. Today could be a morning when you will see some profits potentially getting off or being taken off the table. The Nifty is flat as a pancake, as we see it. Well, the breadth of the market's also not very convincing, and there may not be too many triggers in that sense for the markets to take them higher in today's day of trade. Well, a few counters that are still looking bad is in Angel One. Chola Finance Holding, which has had a good run over the last few days, is seeing a cut of 3% this morning. PB Fintech, that was a top gainer in trade yesterday, is seeing profits off the table. InfoEdge, BSC, Marico, Raymond, HDFC Asset Management are some of your top losers. A quick check on Walkhard. This has been a star trade between Friday and yesterday, and it's moderated a little bit of its gains. So it's still up and about, but not that 8% rally that Neeraj had highlighted. It's seen some profit taking at high levels, closer to levels of 900 in trade right now. On the gaining side, you've got Garden Reach, that's your stop trade. Solar Industries, after having it pretty volatile in the last 4 to 5 weeks, you're seeing a significant up move on solar. Chalet Hotels, All India, CSB Bank, JM. Archean is up 3.5%. There are reports, of course, that on Archean, which could be potentially the reason why you're seeing a big up move on the stock. Neera, we want to come in on Archean Chemicals for me. It's been a preferred, expensive, nevertheless, counter in the specialty chemical space. Last week, you had Bain Piramal do a little bit of the block deal to get out of the company. Goldman, of course, notched it up. How do you feel about Archean?
So the specialty chemical space has been on a recovery space, and we are seeing destocking which has happened in the industry, and we are seeing demand making a comeback. So I think from that perspective, the prospects look good in the near term.
And we'll leave it at that. Thanks so much, both of you, for joining in today and giving us your perspectives. Really appreciate your time. Take a quick break. Up next, we'll be joined by Rishi Sanghvi of Sanghvi Movers. They won a new order, and time to talk about what could happen in the year as well. P. Johnson on the other side. Stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Sangvi Movers is a stock in focus after clocking in a very healthy FY24, wherein their margins improved significantly and the bottom line numbers moved up well. They seem to have started off Q1 on a decent footing. At least one of the order wins that has come in recently, 180 crores, is not a bad thing. But interestingly, it's two orders, one from an IPP and the second one from an EPC player. Let's get in Rishi Sangvi, MD of Sangvi Movers, to talk about these orders and the outlook for FY25 ahead. Rishi, great having you. Thanks for taking the time out. I hope all is well. I'd love to talk about a few things, Rishi. Firstly, congratulations on these orders. Can you fill us in on whether the order inflows in Q1 thus far have been at par with what you'd have anticipated, or have things been slow because of the election period?
Good morning, Neeraj, and thanks for having me. The order book is actually looking very healthy. We are very bullish on this year, notwithstanding an election and monsoon period. We foresee that we will outpace our top line for last year.
Okay. So this 180 crores order win, one is from an IPP, I believe, which is largely in line with what your recent orders or past orders or business line largely is, and correct me if I'm wrong here. But interestingly, there is an EPC order too out there. I thought power was a buzz and your hands would be full. Why get into EPC, which is maybe a newer line, maybe lower margins than power per se? Why do that, Rishi? Why this diversification?
So the order comes from an hydrocarbon sector, and it's a new business segment for us. The primary reason for us to enter into construction services for both refineries and the renewable wind energy sector is that there is a tremendous opportunity and a lot of demand from our customers. They are pulling us in, looking for a well-established, well-run company And while the margins on the construction side of the business are lower, we believe that there will be significant volume play and a large number of demand that should make the space very interesting for us.
Rishi, hi, it's also Samina joining in. So Rishi, we understand then the EPC business is largely a volume play, which will make good the margins they may be slightly lower than your traditional business. How much does EPC currently contribute to your top line, and where do you see that over the next 2 to 3 years?
Hi, Samina. Good morning. So, this year we believe that the crane business, which is our core, where the margins are around 60% EBITDA, will land around 600 crores. And the EPC business will add another 400 crores to the top line. So we believe we'll end this year anywhere between 950 to 1,000 crores.
That is top line across the board, about 1,000 odd crores. Rishi, is that a fair expectation? And is that the kind of growth rate you'll be working with over the next 2 to 3 years as well?
Well, we definitely see that this year. And going forward, we hope to build up on that momentum. We have been growing around 25 to 30% the top line for the last 3 years.
Rishi, I mean, your margins in your business are phenomenal, to say the least, and I guess that's what explains why you're in it and why we are talking to you and why investors are also very pleased. At margins at about 63% versus 59% that we've seen, how sustainable is this, especially given that the weightage or contribution from EPC is expected to go up in the next couple of years? What is the margin range that you would be comfortable with?
So on the crane business, which is our core and I believe will constitute anywhere between 60 to 65% of our top line for this financial year, we are confident of maintaining last year's margins. On the EPC side, of course, it's a volume business with lower margins. So we expect to end up anywhere between 10 to 15% on the EPC side.
So what would consol margins be like, Rishi, based on the growth that you anticipate for each of these segments?
It would be anywhere between 35 to 40%, because again, it's 400 crores in EPC at 10% and about 60% on 600 crores on the crane business.
Right.
Sorry, Rishi, just so that I don't get this wrong, okay, I'm just trying to reiterate this. When I looked at your numbers, your consol numbers for FY24, right, or TTM, the operating margins consol were about 63%, if I'm not wrong, for FY24.
That's right.
Now you are saying that your margins will go down to 40% from the 63% because of the change in mix.
Yes, but yes, you are right. But the base itself is much larger. We're going from 620 to 1,000 crores.
Yeah, agree. But
so
because
we'll do about 360 on the crane business and about 40 to 50 crores on the EPC business. So on a consolidated blended, we would be around 400 on 1,000 crore base.
So Rishi, why the focus so much more on top line as opposed to bottom line? I mean, that's a huge cut on margins, even though we completely get that your focus remains on growing revenue.
It's not only on growing revenue. This is where the sector is headed. For example, in the renewable wind energy space, there is a severe shortage of well-established construction players who can service the independent power producers. OEMs have stopped putting up projects, and very few OEMs, Suzlon to a large extent, maybe Inox, are putting up turnkey services in the wind industry. And the independent power producers do not have the capacity or ability and the bandwidth to undertake the construction space. So there's a massive white opportunity there. For example, in the renewable space, we have a 10 gigawatt inquiry pipeline as of today. And we're extremely bullish on how the sector is going to shape up, not only in this financial year, but going forward. We have started adding value-added services in and around our crane business. So we undertake the complete mechanical, civil, electrical, surface logistics, which is the complete balance of plant activities for the renewable wind space. So on a 10 gigawatt order inquiry pipeline, and with the way the renewable energy sector has positioned itself and will continue to grow over the next few years, we believe that this is a very exciting space for us. will add a lot of value to the company, and we believe that we can create a lot of value for our customers.
Rishi, sorry, I'm just digressing a bit because what you're saying gives us lead indications into what other businesses might also do. Sorry, did I hear you say that except for Suzlon and Inox, there aren't enough players putting up capacities? And is there a bit of a red mark because the targets are very lofty? The con calls from both Inox and Suzlon seem to be very constructive about the capacities that they will come up with and the execution that they will do. You are saying beyond that there isn't much happening, but within this itself, sorry, please.
Yes, because the other OEMs are more interested in product supply rather than project execution.
Okay.
So, the international OEMs are not too focused on delivering turnkey EPC projects to their IPPs.
Got it.
So there is a massive white space in this space. There are a lot of IPPs which are fund-backed, sovereign funds, pension funds, private equity funds, and they don't have the bandwidth to execute turnkey projects.
Got it.
So there's a great opportunity for a player like ourselves to deliver the complete balance of plant scope to renewable players. And that's the exciting space that we are focused on capitalizing on going forward.
Okay. Rishi, just a follow-up to the other question that you therefore then. So let's assume you're tapping this white space. I heard you say that that's where the industry is moving. So you'll probably settle down at 40% margins, but you'll get top line growth. I just did a back of the envelope calculation. On a 600 crore top line, if you did 60% margin, you ended squarely about 370, 380 crores of EBITDA. On a 1,000 crore top line, you do 40% margin, you end up squarely around those levels. So for FY25, you will show top line growth, not EBITDA growth, but that will set the base for the next year. Do you expect another year of very high top line growth in FY26 as well?
So primarily what we are trying to do is we are consolidating services for the IPPs. And going forward, we will be bringing in some of the services that we offer our customers in-house. So it will be a year of, because this is a new business, it has a gestation period, our operating margins will not be as high as they would traditionally. But going forward, we will reach a certain scale, we will be able to bring in capabilities in-house, and that will drive down our costs and build up our margins going forward.
Rishi, just taking a cue from those numbers, I believe currently utilization stands close to 83-84%. If you're looking to significantly scale your top line, as we understand from this conversation, I'm assuming there'll be aggressive expansion plans on the cards. You want to walk us through what is lined up in the next, by the end of this calendar year and maybe in the next year as well, and how do you plan to fund those expansions? Because I believe you're still sitting on some debt on your books.
Absolutely. So, in the last 4 years, we have done about approximately 950 crores of CapEx. And we are only at a net debt of almost 250 to 280 crores. So we have been able to manage our expansion primarily through debt funding, with 30% of the margin being funded through internal accruals. We are also sitting on a significant cash surplus on our balance sheet, which is to the tune of about 150 to 170 crores. So in this year, the board has approved for FY24-25 a capex plan of about 150 to 200 crores. But looking at the demand that there is in the market, our inquiry pipeline, and the way that the economy is performing, I do believe that we may have to go back to the board for further approval of capex.
Right. And when do we expect these fundraising plans? When do you plan to go back to the board and discuss these fundraising plans?
It would be subject to how things pan out in the third quarter.
Okay. Rishi, I have one final question. I don't know, I don't have a handle on what the follow-ups were to this proposal, I believe, that was laid out after the results of increasing the directors' compensation. But I do know that there was a to and fro and a feedback that you had received and you had asked for from investors about the proposal. Where are we there, and is there a rationale for whatever decision you've arrived at? Because it was a fairly stiff increase, I believe, in directors' compensation.
Right. So Neeraj, I am the promoter of the company, and it would not be right for me to speak on this topic because I am the interested party. But the increase in the compensation for the managing director was approved by the Nomination and Remuneration Committee and approved by the Board of Directors. The proposal will now be put up in the annual general meeting where all the shareholders will vote on it. But the rationale that the board and the Nomination and Remuneration Committee had was that this was a phenomenal and historical year, FY24, and the company has delivered significant and historical numbers. And they thought it prudent to compensate the management for the performance that the company has delivered. So the proposal has moved through the appropriate channels and will be put up towards the shareholders in their annual general meeting.
Very lastly, Rishi, while we've of course had a very extensive conversation, very lastly, on your order book, which is at about 426 crores, what is the timeline for execution and closure of that order book? And what is the quantum of orders that you're currently bidding for? When can we expect some order wins from your stable?
Right. So actually our order book today stands around 600 to 650 crores. And the way we disclose our order book is that the entirety of it is to be executed in this financial year. So we believe that we are on track to surpass last year's numbers, as I have already indicated. And we believe that we have a very healthy inquiry pipeline, which will translate to significant orders within this financial year.
Thank you. Thank you very much, Rishi. It was such a pleasure to talk to you, get an understanding of what's happening in the industry, what's happening in Sanghvi Motors. Good luck. It looks promising. I hope things play out as expected, and we will talk to you once you report earnings in the quarter. But until then, good luck and see you soon. That was Sanghvi Movers talking about how business is doing. They've backed 2 significant orders, gunning for a top line of about 1,000 odd crores. That would come at a cost of margins in the near term, which should be compromised. But of course, it's going to be FY26 that would then see margins and top line growing significantly. Fundraising plans in order to go up to that sort of revenue, they are looking to expand extensively and would approve fundraising plans in the third quarter of the financial year. But moving on from the company to Manav Chopra, Director Technical Analyst of Nuvama Institutional Equities, joining in to talk to us about how he views the markets from where we stand right now. Manav, hi, thanks a ton for joining in. You've put out a bunch of reports and we'll talk about those because stocks in the IT pack seems to have taken a cue from that report and have ran up quite sharply, actually.
Yes, Samina, I wanted to give credit because it was 10 or 15 days ago, if I'm not wrong. Manav might have the exact date, wherein he put out that buy call on IT. Nobody quite thought the IT stocks will rally, and they've had a fabulous run.
So you've had a bunch of very happy clients, Manav.
Yes,
and a promotion due.
Very kind to us.
But just before we go into IT, a quick word on how comfortable are you with where the Nifty stands right now? New record highs, the 5 days markets have seemed very stable. The VIX is controlled. It's been gradual, the up move. The breadth may not be very supportive, but we've seen sector rotation, large cap assuming leadership. I mean, it's all working for us. Do you feel like further upside in the near term is a given?
Yes, very much. So, I just want to phrase it in a simple two parts. If we look into the markets pre-election, we did witness a lot of laggards coming from the frontline space, let it be the private banks or the IT, Reliance. The heavy lifters were actually being the underperformers of the market. But what has happened post-election, the significant breadth of the market has improved drastically. We have seen the market movers actually take the leadership, starting from the private banks, and now what we are witnessing in IT, Reliance is near its all-time highs. Larsen is also basing out along with some frontline infra names. So the participation post-election results on the heavyweight Nifty 50 names have been very, very strong, which wasn't the case prior to the election. It was more or less like a polarized kind of a rally, and the market breadth was actually deteriorating from the frontline space. But currently, when we look into the picture, it's far more broad-based, which give us a very strong confidence that the current rally is likely to resume from the current levels too. Our base case for the Nifty on the upside should be close to 25,000 to 25,500. And I think the larger participation for the upside in the markets would be seen from the IT space. That's when we published our report on the IT. But going forward, I think we will be seeing a sector rotation. I think that has largely been the case for any bull market in general. But within the large cap space, the leadership which was missing in the IT since past few months, we would be seeing that coming back, and off late that we have seen the witness. For a very short-term perspective, my sense is that 23,000, 23,500 will remain very strong supports for the markets. And going forward, I don't expect any meaningful correction coming in. So one very important data that I don't see any exhaustion or a short-term topping out for the market. Also, when we look at the global market charts, everything seems to be going into a scenario where the momentum and the rally continues towards 25,000 and 25,500 levels.
Got it. Okay, Manav, but great call on the Nifty 3-4 months back, great call on IT a few days back. Now, I'd love to understand, are you still constructive? Because we are not talking when you release the report, but a few days after. So there's a bit of a rally that has happened. Are you still constructive?
Very much. If you look at our long-term perspective on IT, our base call is that, we'll be expecting new highs coming into the IT index. That is our first base case, which is roughly at 39,000 for the IT index. And the next higher upside target is close to 42,000. So we are looking quite constructive for the IT index for next 6 months and more than that. If we look into the long-term perspective of IT, it has been in a larger uptrend. The last few months, after the IT index topped out in the month of Feb, we witnessed 3 months of intermediate correction. This correction phase was nothing but a short-term pullback in a larger uptrend, and the kind of a reversal that we have seen in the month, post the election in the month of June. That revalidated and reconfirmed the last long-term thesis for the IT for the sector in general. The IT index took 3 months to decline from 39,000 to 32,000 levels, but it took one single month in the month of June. It exceeded previous 2 months highs. So, largely these are some qualification criteria where a sector is in a larger uptrend. The declining path is more slow, more grinding, but when the recovery happens, it happens actually much ahead of the time and very, very quick in span. Obviously, there were a lot of short squeeze that played out, but the larger theme still looks very much intact. Within this space, we have also witnessed early leadership coming into the names like Tech Mahindra. This was the first large cap stock which have also exceeded its giant highs. And going forward, my base case for a stock like Tech Mahindra, we're expecting targets of close to 1,800, 1,900 levels. So my top pecking order within the large cap is going to be Infosys and Tech Mahindra. Infosys also has formed a very strong structural bottom, and on a long-term model charts, the stock indicates a near-term target of close to 1,800, which is close to its Feb highs, and thereafter we head towards its all-time highs. So the structural intact for the IT is very much positive, and I think going forward, next 6 months will definitely belong to the IT space. Within the mid caps in IT, we like Persistent System and Naukri.
Persistent and Naukri. So, Manav, fair assumption that if people are just listening to you right now and have not read that report, Naukri at the current market price, Persistent at the current market price, Infi and Tech Mahindra should be bought for the next 6 months?
Absolutely. I think that is our medium-term perspective. We are looking at for a horizon of at least 6 months, and even from the current levels, within the large cap space, we see an upside of 15-20%. But for the mid cap Persistent System, when we're looking at the larger picture charts, I think the breakout that it has recently played out, it seems quite visible. The Persistent System is headed towards 5,500 to 6,000 levels. So there's a reasonable upside that can be witnessed, and particularly in last 4 sessions, the kind of move that most of these names have witnessed, it definitely indicates that there is some strong buying that has witnessed into it. And largely, the other part, one of the data sets that we were looking into, majority of the FMs, the mutual funds are kind of underweight IT. And imagine if an index which is coming close to the all-time highs and coming near the result season, if any positive tailwind that comes through, and that could actually propel the markets to much higher when we see some upgrades coming in. But largely speaking, yes, there is a reasonable amount of scope for the IT, even the mid-cap IT, we see an upside of 20 to 30% from the current zone.
Manav, we'd have loved to have a longer chat with you, but we're completely out of time. But I cannot not ask you about two other notes that you put out. One was on tire and fertilizer. Your top sector picks here between tire and fertilizer, and the timeline that an investor, a medium-term investor, should be looking at to holding these stocks.
Great. So I'll start with the tire as a space. The auto index in past 1.5 to 2 years, have seen one of the best rallies of last 5 years. And this within this space, we have seen sub-sectors within the autos, being in a league of its own. Auto, and we haven't seen even a 50-day test in auto index post October 2023. So it has been last 1.5 years of a very strong rally with mild correction. In fact, tire as a sector, has witnessed an intermediate zone of corrections where the stocks decline over 15% and comes near a 100-day average. There is an accumulation pattern and then resumes its uptrend with a larger upswing, which not only exceeds its previous highs, but usually we see a rally of 40% coming from the 100-day average. So this has been the test and the formations of tire stocks. And lately, we've seen how CIAT and Apollo tires, which are our top bets, formed a strong base around 100-day average and have started to witness an early signal of breakout. So from here, my upside for CIAT is close to the levels of 3,700, which is still 30% from the current levels. And Apollo tires, my upside target is close to 720. So, in general, when the markets are at 24,000 levels, it's very difficult to look for the ideations coming for a very high risk reward. And tire definitely suits that space very well. The other part is on the fertilizer space, which we had already initiated at early stage. But largely, that is a theme that I'm looking for next 6 to 12 months again, where we've given an upside of at least 50 to 100% long on the fertilizer space largely. Pre-election, post-election, very strong accumulation results, accumulation patterns, and the fact that early breakout on the monthly charts, basing out largely is indicating that there is limited downside. And now, we have witnessed a small brief correction, and the fertilizer as a space has started to base out for the next leg up. So, these are two sectors from the mid caps which are providing a very high risk reward entry. And within the fertilizer space, my top picks is RCF, NFL, and Chambal Fertilizers.
Got it. Manav, so good talking to you and great calling really on IT, on the Nifty, and we'll watch out for the tire stocks as well. But thanks so much for talking to us today.
Thank you.
That's the view from Manav Chopra of Nuvama. Constructive IT even now, 30% upsides on some of the stocks. But Allied Distillers and heady listing in sight because the subscription was good and the listing discovery price is positive.
It is, and I think also important to note is that not too many listed players in the space, and hence the opportunities are relatively limited, on back of which the response has also been pretty phenomenal for this one. Now, whether or not it gets a big gap up because the broader sentiment on the street is a little quiet this morning is anybody's guess, but yeah, it's 3 seconds to go, and excited listing is what the promoters would have liked. And a check on it. Oh, and it's a 13% up move, largely on expected lines. 12 odd percent, 315 is where the counter has listed. Neeraj?
Yep, steady as she goes. Let's see if it perks up during the course of the day or no. But pretty steady listing for this one for sure. Okay, on that note, with the view that while Allied has listed off in the positive, the markets are just about holding out, and some pain at the broader end maybe because the Nifty is quiet and flattish and off the highs of the day. But the mid-cap index, actually mid-caps too are doing that. Select pockets might be down, otherwise largely the indices are flattish, in fact off the lows of the day as well for some of them. We call it a day on this leg of India Market Open. Hope you like the show. And stay tuned because special conversation up next on Talking Point. Kenneth Andrade of Old Bridge joins in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your...
Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today, Kenneth Andrade, founder and CIO, Old Bridge Mutual Fund. Kenneth, such a pleasure talking to you as always. Thanks for taking the time out.
Thanks for having me on the show, Neeraj.
The pleasure is entirely mine, as you know it. Kenneth, let me start off by checking with you. How do you feel about the investing landscape currently, considering the fact that we're not cheap, but we are probably one of the few games in town, in addition to maybe South Korea and a few others, which are showing that promise of growth, and the macros don't look all that bad.
So the environment's fairly robust still, right? And we are at a point in time where corporate utilization or capacity utilization is now very close to 90%, right? So the profitability growth of the broader market should be fairly healthy for this financial year also. So there are two parts of the market, two parts of the conversation. One is the economic condition and the corporate profitability. No arguments that we're probably having a Goldilocks period. The second is how do we participate it, because finding pockets of value in this marketplace, they don't exist. So if you're looking for value in this marketplace, my simple recommendation is don't, because it doesn't exist. So it's a market where you'll have to align with businesses where you think growth is there. And it's fairly obvious over the last into this 1 year where it will be. So I don't think you're going to have too much of disappointments coming up in this year. The problem remains is how valuations are and how they trade. So I'm fairly bullish as far as the economic conditions are concerned, and as far as where profitability is. I might be a little circumspect, on the other hand, on how to generate returns from this buoyant economy that's there.
Okay. Well, I have two or three follow-ups to that to that first answer itself, Kenneth. For the longest time, we've spoken, you've told me about how one of the facets of investing would be to look at companies which survive an adverse cycle, are leaders of the pack, and buy them at the bottom of that cycle turning around. Now, I heard you say that if one wants to look for value, don't. So my question is, for new money that might be coming into the schemes right now, how difficult is it for you to put that money to work? Where is it, or how is it that you are therefore zeroing down upon where to invest?
So let's put it this way, it's very hard to find an industry which is struggling. Everyone is profitable, everyone is generating cash flows. Some of these industries may not be at the peak of their entire cycle, but they're still generating a certain amount of cash flows. And I think any industry that is going through a corrective in this entire space, we are looking at them. I mean, to be frank, in the portfolio today, over the last couple of quarters, we haven't had a new inclusion into the portfolio for quite some time. So we stay with what you have because this is what you know. There will be some businesses that are outside your portfolios which are doing well, and where you could put them on the radar. But I think you will get opportunities maybe this year or maybe the next year sometime to buy them at a fairly comfortable valuation. So in terms of executing what we have today, very few spots where there is trouble. But wherever there is, it necessarily needs to be on the radar, because again, even those places are fairly well priced. They're not cheap. And wait for an opportunity. I mean, we've all seen multiple cycles, and there's never going to be a case where this market will not give you an opportunity to allocate fresh capital.
So that opportunity, Kenneth, comes in via a time correction or a price correction, or could be either, or would it come via an uptick in earnings that we might see in FY25? Because I also heard you say that the earnings cycle looks to be good for FY25.
FY25, we shouldn't have a problem. Like I said, most corporates that we engage with or have a conversation with, everyone's running at full steam, despite, so there is no challenge. And when you're having capacity utilization run at this level, profitability growth will start. And then you have the next capital creation cycle that will start, or CapEx cycle that will start. So the narrative is extremely strong.
Got it.
So there I don't doubt it at all.
Okay. So then where is the telltale sign and evidence of industries and captains of their industry or companies in that industry comfortable enough with the prospects to put up new capacities, Kenneth? We hear private capex in fits and droves, not across the board, but in select pockets. But what has impressed you the most in terms of companies which are putting up this capex based on the cycle view that you have of that particular sector?
I think everyone's doing it. Infrastructure is on a roll. In any industry which is linked to that business is doing reasonably well. We've got a very large exposure to pharmaceuticals, and that's businesses that are facing the international market. So basically manufacturing pharmaceuticals. And they have a very robust pipeline that is there. Plus profitability is also at its all-time high. And you've seen the back of CapEx out there. So that's the second place that we've seen. The chemical space, I think a lot of CapEx is already going on the ground. And in some cases, utilization levels have fallen off. And they've fallen off because new capacity is coming on. So I think over the course of the next maybe the next 3 years, they could rebound with a fairly strong cycle that is there. The automotive cycle, I think they're more from the ancillary part rather than OEMs. You could get a select few that will break out into the international space and do reasonably well with a reasonably large workflow. So I think these are isolated cases that are there, but but the one that's got the maximum amount of momentum in terms of headline numbers or sales numbers continues to remain infrastructure, which is a very domestic business and very linked to government spends. I think that's probably the biggest sweet spot that the market has at this point in time.
Okay. Kenneth, the others we'll talk about on the other side of the break, but I'd love to dwell a bit on infrastructure since you kind of brought it up. I haven't usually seen you that constructive on infrastructure or that constructive on businesses which derive a large portion of the revenues from government contracts or where the ultimate paymaster is only the government. I mean, defense is that point, maybe infrastructure may not exactly be that, but be that as it may. How tell us a bit about this. How do you view this infrastructure cycle? Why is it that you have that view? And what facets within this infrastructure could be the first amongst equals? Because there are many which feed into infrastructure and pure infrastructure creators as well. How do you play this cycle therefore?
If you cut across the value chain, there's the developer at the top end, and then there's a commodity basket at the bottom end, right? And companies are seeing profitability right through that entire value chain. So developers are bidding for larger projects, contractors are getting bigger pipelines of orders, and it's translating into a lot of commodity demand that's happening at the other extreme. And this is the workflow that is there at this point in time. So you will have to pick and choose where the sweet spot is to participate with this marketplace. So we've got a commodity basket, which we've spoken a couple of times in the last 1 year. We've got a few contractors, and the reason why we've got the contractors is basically they're now peaking at their margins, which are at their historical high. So we've come from distress about 2-3 years back to now peaking margins, which is at its all-time high, but the workflow is still there. So as long as you participate with the narrative, it's fine. I don't. I mean, if you ask me, am I putting a new position into play in the contracting business? No. In the commodity cycle, I think it still has probably some legs to go because you've got volume growths that are still fairly robust out there. And then the last part of it all is that the government in this cycle has been an extremely good client customer. Okay, compared to the previous cycle, the working capital cycles ballooned. This time around, it is much more manageable. The risk that is also there on most of these companies earlier was very centric on state governments. Now, most of the companies have been able to distribute their risk across multiple projects, multiple governments, and the size of these opportunities are significantly larger. So that's the context as you laid it down. Obviously, the power market is extremely robust. That's where the developers are, and that's where all the capacity creation that is happening, which is also linked to infrastructure. So power capex is one of the largest legs of infrastructure. Is the largest piece of infrastructure creation on the ground. But when I put all of this in play, I basically isolated two places that are there. One is the contractors, and second is the commodity market, where we feel there's an element of safety as far as the valuations are concerned. But the other part of the market, which is capital goods to a very large extent, seem to be pricing something that I would not be able to quantify or justify by aligning with some of these businesses out there. They trade like they are consumer non-cyclical businesses.
Yeah, they do, and the valuations are hefty. You reckon, Kenneth, before we take that break, you reckon that there is a case for? I mean, one of the reasons that was thrown around was that their moat around the technologies that they give and niche capex would have led to a lot of business there. I mean, those are one of the many reasons. You reckon there is a case for a correction in the valuation multiples of some of these?
So as long as the narrative remains strong, I don't think the valuations will correct.
Okay. Fair call. Kenneth, stay on. We need to slip into a quick commercial break. We come back and try and talk about some of the other aspects that Kenneth Andrade highlighted. Pharmaceuticals and globally exposed pharmaceuticals, we talk about that. Chemicals, and we've seen that run coming in there. So try and probe a little bit about that. And a few others which are in news recently, maybe technology. Stay tuned, we'll be right back.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Back with Talking Point in conversation with Kenneth Andrade, founder and CIO, Old Bridge Mutual Fund. Kenneth, something that the market seems to have gotten a little bit excited about is a return of IT prospects. And while the market ignored what Accenture did in the quarter, maybe it focused on the generative AI deals that it clocked in. And since then, since that point, I think Indian IT too has been rewarded. I would love to understand, how do you think about IT, because the concerns apparently are still there. So is the market bottom fishing? Is the market preempting something else? And how are you thinking about it?
Okay, I try and be a little specific here because when I look at our individual portfolio, which has got an element of IT in it, right? And these are large IT companies that are there. So when I break up the portfolio and look at businesses that are over tilting towards the large cap part of the entire segment, and then there's obviously a mid cap and a small cap part of the segment. A lot of IT businesses trade significantly, large IT businesses trade significantly lower than most of the other mid caps and large caps. So you've got a very solid business out there, which has got visibility, mature visibility out there, trading lower than the marketplace itself. So that's one element of why I think this sector trend has re-emerged. Because if I have to put incremental amount of money that's coming into the system, and I mean I as in the industry has to put incremental amount of money into the system, they will look at opportunities which have not done very well, have an element of valuation comfort on a relative scale to the marketplace, and then look for the element of growth. Now, if you go back a couple of years till today, and if you look at all IT services businesses, they've all been talking about and they've all been building up a robust pipeline of order book, which has not resulted in the element of execution that everyone was waiting for. So that is around the corner. Whether it was to come last year, whether it will come this year, some part of it will come this year, or 2025-26, definitely it will come through. That gives the element of growth, and that's where I think we a majority of all the ideation is converging around that. So valuations first, and it's a large cap allocation which is there, fairly steady in terms of performance, and could get an element of growth because they've already booked a significant amount of orders. That is a pipeline that is already out there, and I think that's what's playing through in the sector having a revival just now.
Noted. Okay. So buying the valuation, just in the same argument, since we are talking about export-oriented themes, this clarion call that the pain in the chemical space might ease at some point of time started coming in about 6 months ago. We're now starting to see select companies talk about prospects possibly looking better in the second half of the current financial. Agro, the argument is still out there in the open. I would love to understand again, how do you think about chemicals, considering that the Chinese situation probably still is not completely clear about whether they will dump, whether they won't, and what is the kind of growth that will come in there. So how does one approach chemicals?
So I don't have a crystal ball into the sector, but everyone loves to bottom fish at this point in time, and that's what or bottom fish in troubled waters at this point in time. And I think I mean, we are also got a couple of businesses on the radar. But I'm not too sure that we are anywhere at the bottom of the cycle yet. And it probably take another 1 year before things become significantly clear, especially in the agrochemical space. There is reportedly some plant closures coming up in a couple of countries that are there, which is aiding this this conversation around the segment of the market bottoming and volumes will emerge. If that happens, yes, it will. But will they demonstrate returns like we've had in the previous cycle? Very unlikely. At best, they will just participate with the rest of the market. And that's my sense. So there is no significant valuation comfort despite this industry not doing very well. Volumes and capacity, I think both of them will exist for this industry. What it may not have, at least in the near term, is any real pricing power. Or I'm not very sure that prices are going to bounce back compared to where we left them off about 2 years back. So I think that's where it is. I mean, you will get moderated returns, but nothing significantly close to what we got in the previous cycle.
So you investing in this purely from a perspective that the downsides might be limited, Kenneth, or is your choice of stocks differentiated chemical businesses which might do well even if the larger bucket doesn't?
So we're at a juncture in the marketplace where everything is fairly discovered and everything is fairly priced. Right? We're just looking at opportunities which have not done well till now or have moved sideways and probably finishing either a time correction or a price correction. And then the fundamentals of the business. Like I said, the time correction and the price correction is happening in a number of sectors, but the fundamentals are not really improving, or like I said, it would improve in 6 months, in 1 year, or in 2 years, in probably 2 years. But this may just be a place where you could allocate some capital to and watch it and continue to increase your exposure over the next couple of quarters or a year or two.
I want to wrap up with talking about a sector where you were amongst the early identifiers, and that is real estate. a lot of conversation about whether we are in the midst of the cycle or towards the end of the cycle, so on and so forth. You were investor, I don't know if you still are, but what's the argument around real estate?
I think it's already done quite a bit. And the way companies have access to capital today, which is basically raising a lot of equity, completely changes the fundamentals of the business right now. Because whenever businesses like this get incremental amount of capital, there is usually capital deployment into creating a land bank. Okay, so we're in the very early stages of an industry cycle actually topping out. I said it's a very early stage of an industry cycle actually topping out. Because if the industry, I think, has already raised about 15,000 odd crores or some such number that is there. A very large part of this number is now going to buy new land banks that are there, which was not the business model that has brought the industry to this level or to this to this juncture. So this is a flipping point wherein when you have new inventory coming in, the new inventory at new land bank prices, there is a price rise in real estate that will come through. That price rise will temper sales for a while. Okay, so volume will give way to price. In short, I think we're in the early stages of this industry topping out. While companies are getting capital today, the leverage cycle in some of these companies will start maybe in a year's time, which means more capital comes into play, and then we'll have to take it from there. But the best, I think, is behind us.
Best is behind us. Okay, point well noted, Kenneth. As always, lovely talking to you. Out of time completely here, but great having some of your thoughts here, and look forward to talk to you more often.
Okay.
That's the view from Kenneth Andrade of Old Bridge Capital, and with that, it's a wrap on this edition of The Talking Point. Thanks so much for tuning in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
Markets trade flat after opening at record highs. The Nifty trades about 24,100, while the Sensex holds on to 79,500. Sectoral indices trade mixed, dragged by financials and FMCG, meanwhile real estate and IT continue to gain today. In brokerages stock, Motilal, 5 Paisa, Angel One trade lower as Sebi issues rules for market infrastructure institutions, including calling for a flat fee structure, potentially reducing costs for investors and traders. And it's a strong debut on the exchanges for allied blenders and distilleries. The stock listed a 13% premium to its issue price. Welcome to the F&O show. The next 30 minutes will take you through all the action in the markets on the F&O side of things. While the benchmark looks quiet, it's been 7 straight days of a positive bias on the index, and we are comfortably holding on to 24,000. Sector rotations at play, and I think traders are happy.
Yes, traders are happy, and at the moment we were looking at a decline in the India Volatility Index as well, Samina. So that always bodes well, especially given the fact that we've seen the consolidation, but with consolidation we've also seen the spike in volatility, and to a certain extent, if that does come off, and if the markets continue to glide higher and not see sharp surges, in those circumstances it's always going to be something which is going to be a bit of a positive. Of course, in today's day of trade specifically, the Nifty is absolutely flat, but if it does manage to stay where it is currently, and perhaps over the course of the next few days and weeks we could continue to see the gradual up move, well, you never know where things can go. In fact, at the moment, well, truth be told, while 25,000 is not on the horizon yet, 24,500 is, and that's something that we're going to all keep an eye on and watch out for as we move into over the next few days. But as far as the Bank Nifty is concerned, today we're looking at a little bit of weakness coming through, 0.5% cut for the key index here, and of course it is also the weekly options expiry for the Fin Nifty, which means that a lot of these private sector banks like HDFC Bank, ICICI Bank, Axis Bank, along with, of course, Bajaj Finance will be in focus. Bajaj Finance is also under pressure. Remember, of late, we've had cues from a lot of analysts on two essentially large financial companies, and that one of them being HDFC Bank, where we've had plenty of conversation around. The other one is Bajaj Finance, where there's an expectation that we likely could see more strength in both these counters, which have in fact consolidated over the course of the last few weeks and months. So that's something that we're going to keep an eye on. But overall, we're looking at a reasonably quiet day of trade as far as the benchmarks are concerned, and it's just something that we're gonna have to keep in mind. Very quickly, the broader markets again are showing some amount of traction. Okay, maybe not as much now. We've seen a little bit of given up of those gains, and now they're off days highs. Both the small cap and the mid cap indices. The small cap index just a tad bit higher, but with that, let's move on and talk about a new debut. We have a stellar Dalal Street debut for allied blenders and distillers. The stock is listed at a 13% premium to its issue price. We spoke to the management on the road ahead for FY25, as well as the use of IPO proceeds. Listen in.
As you know, the object of the issue is to pay off our current debt and retain the balance for general corpus, which I largely put as growth capital. How we see the future, the focus is on premiumization, looking beyond our current portfolio to get into the premium and luxury segment. We are looking at augmenting our E&A capacity, try and go 100% captive over the next couple of years, and that gives us both an edge in terms of backward integration and also in terms of the product portfolio that we have in mind.
Right. Mr. Ramaswamy, my next question is to you. In terms of new products, any new products that you're planning to launch in FY25? And if yes, how will this aid your revenue?
We have a product launch every quarter. That's what we have planned. And the first launch was in the earlier quarter, which was Zoya Gin. And we have more launches going forward, and all the new products will contribute to our premium segment in a big way on the future date.
And so if you can explain me as to, how much of your revenue contribution comes from the premium category right now, and how much is it from non-premium side, and if you can tell me going forward in FY25 and from a longer term perspective as well, how will this mix change?
Yeah, I think the industry normally refers it to as P&A. So our share of P&A historically was at about 25% in terms of volume, and every year we've been changing it, and it sits almost 50-50 as we speak today. And going forward, we expect the share of P&A to continuously improve. And over the next couple of years, we are hoping that there's a significant change from current levels of 50% to maybe 70-80% revenue coming from the P&A segment.
Got it. And what has your volume growth been like in FY24 from both the P&A and non-P&A segment? And FY25, what kind of volumes plus LFL growth are you expecting?
So if you look at any industry report, the CAGR is sort of projected at about 9%. But if you were to slice that growth, you will clearly see that this growth is coming from P&A growth is significantly higher, maybe in double digits, versus the non-P&A segment, which is mass premium. The way we are looking at this trend is across flavors, premiumization is happening. It's not just anymore in whiskey. Our future outlook is to continue to consolidate our position in mass premium and grow double digit in the P&A segment.
And your margins have taken a hit since FY22. So going forward in FY25, are you seeing any kind of margin expansion, considering that you're going big on the premium side of things? And if yes, how much of a margin expansion are you expecting? If you can quantify that, and what will be the levers?
Sure. So the margins have certainly taken a hit, and it is for the entire industry, largely because of increase in glass bottle prices and ENA. The good news is that the prices have been stable now for almost 2.5 quarters, and we do not expect any change in the prices. On back of that, we see a margin expansion. We first of all see the COGS to be stable. On back of our P&A shift and on back of other cost initiative, we are looking at a significant expansion of gross margin between 200 to 300 basis point.
Right, that's the management of Allied Brewers. But let's move on, and we'll shift focus back to what the show is about, and that's futures and options. Well, on that note, we bring in our experts for today. We have Bhavin Mehta of Daulat Capital and Sneha Seth of Angel One, who's joining us on the show. Good morning to both of you. Thanks for joining in. Bhavin, start with you on your view on how you seeing trade pan out for the Nifty. Is consolidation on the cards?
Yeah, hi, good morning. So what we have observed over past couple of trading sessions is that Nifty continues to hold about 24,000 kind of mark. We have also seen volatility index cooling off. However, something to note here is that India volatility index currently remains tad higher than what we are looking at US volatility index. So this is kind of a concern. We are also looking at some bit of call writing in trade today, close to about 24,200 strike. So it is very important that we see an unwind around this particular strike. And same in a similar fashion, we are also looking at some amount of call writing on Bank Nifty front. So something to watch out in trade today. We need to see unwind at out of money strike call for this up move to continue for the next leg of rally.
Right. Sneha, how are you feeling about the Nifty and Bank Nifty as well at this levels? Fresh longs could be or should be initiated?
Very good morning. I would really refrain from adding any long position at this point in time, because if you see the long short ratio from FI's front, it has jumped up to 83, which is extremely overbought. And this point in time, I don't expect any sharp move. If we see any strength also, the move won't be that smooth. So I would rather stay out of this, and would prefer trading into individual counters. I believe looking at the writing in call options today, 42,200 should be acting as a resistance. And on the lower side, any correction below 24,000, 24,050 would be interesting to watch out, and which can give further profit booking chances. So I would say that if someone is holding any long position, they should look to book their profits, and someone who wants to take a fresh bet, I would say wait for now.
Okay, well, that's your view on the Nifty at the moment. Let's also talk about the Bank Nifty. Bhavin, back to you on what you think about that. Do you think there's going to be a little bit more of a divergence here, or do you think that could move in tandem with the benchmark?
Yeah, so over last couple of trading session, we have seen a very strong move coming up for HDFC Bank that has led to good amount of outperformance from Bank Nifty. However, at this point of time, we are also looking at some strong performance from IT as a sector. And historically, if you look back, usually what we have seen is that when IT starts to perform, there is likelihood that Bank Nifty takes a back seat. At the same time, we are looking at good amount of call writing, as I've just mentioned couple of minutes back, that we are looking at good amount of call writing at 52,500. There is clear cut underperformance coming from Bank Nifty that in fact is also dragging Nifty. So my sense is that watch out for unwind on the call strike before you are going to get aggressive on the long side. Upside could be kept for the time being. This particular level of 52,500 on Bank Nifty remains a crucial resistance at this point.
Right. Sneha, I want to talk. You want to come in on something, Bhavin?
No, actually,
sorry, Agam.
Actually, we just wanted to take Sneha's view on the Bank Nifty as well, because it's been such a divergent move. Sneha, this one is for you.
If you look at the banking index, Nagam, we have seen it consolidating. On the higher side, I believe 53,000 is an resistance zone. On the lower side, it is trading near the support zone of 52,000, 52,200. I believe if we see a profit booking, it will be banking space which will be contributing much. So individual counters also here, we are seeing some short addition. So I am not very optimistic in banking index. I believe if anyone is again holding any longs or expecting an up move, they should be booking or exiting their long positions for now. I'm looking at the overall long short ratio. I'm really sensing that some profit taking will be there soon. So I would recommend, if someone wants to go ahead and trade individual counters, they can go ahead and take a short trade into banking stocks as well. And banking index also, if someone wants to go ahead and take a fresh sell side position, they can go ahead and buy a put option as well.
Right. Bhavin, I want to talk about one space that we've sort of focused on in the last few days, because we saw a big move on Friday on tire companies. Monday, of course, was relatively quiet. This morning is okay. There have been some very aggressive reports as well coming on in Apollo or CIAT for that matter. How do these look on the charts? Do you feel like today's flat to slightly lower trade could be a good opportunity for near-term traders to jump in?
The move in tire sector, what we have seen is a very strong uptick post that consolidation coming up for a couple of names. There are three companies primarily that we are looking at: Apollo Tyres, CIAT, and Balkrishna. MRF usually do not behave much in line with the derivatives data point. So if you look at the setup for something like Apollo, we are looking at good amount of supply in the range of 540 to 560. That also is your the peak level that the stock touched in the month of February. My sense is that if this level is taken out, there was already a kind of short position in this particular counter. We have already seen first leg of rally on back of short coverage. Now, if this takes out level of 560 on upside, the move could be equivalently sharp on upside, because the stock has just consolidated since start of the year in the range of 450 to 550 band. So then up move based on technical pattern should ideally be closer to 100 rupees on upside post that breakout. So we are watching out for that particular setup. However, if you prefer to go long at this particular point, Balkrishna will be a clear long idea. This stock has broken out of its consolidation band after a long time. The stock is currently holding around level of 3100. So my sense is that up move towards level of 3800 on a longer term charts looks very much likely. One could accumulate in the range of 3000 to 3100 for a strong move on upside.
All right, well, that's your view on the tire companies. Of course, they've been buzzing off late, but let's shift focus to stocks then. Very quickly, taking a look at all those which are actually seeing attraction towards open interest. And, you know, when it comes to the stocks, let's pull that up have that on your screen. In terms of stocks which are actually looking at. Okay, so longs building in MGL, Deepak Nitrite and Gujarat Gas, and Info Edge and Kotak Mahindra Bank looking at declines coming through. Well, we do have traction in a whole host of agrochemical stocks. And among stocks which are seeing unwinding, let's pull that list up as well. So we do have short covering for Ramco Cement, Petronet LNG, as well as Tata Chemicals. An interesting list. But Sneha, coming to you, stocks that are looking interesting to you, anything on your radar today?
So in individual counters, I have a buy and sell both. The first one is Coforge. This counter has, managed to surpass the 200-day simple moving average on the daily chart, which was, placed around 5,600 or so. And I believe looking at the overall chart structure, this counter, had been consolidating wherein 5,550, 5,600 was acting as a very good resistance zone. And finally, we are seeing this counter surpassing this zone. So I would recommend buying this counter with a strict stop loss of around 5522, and the target expected will be around 5,870. Apart from this, I have a sell on ICICI Bank. If you look at this counter, we have seen it showing decent strength of late. But from last couple of sessions, some profit taking is seen. We are also seeing some unwinding in out of the money put options. So I would recommend buying a put option here. We would recommend buying 1180 put options in the range of 18 to 20, and the target expected will be around 34. The stop loss can be maintained around 10.4.
Right. Bhavin, what about you? What are your top trades? You highlighted what you like in the tire pack, but that was, of course, what sector that we picked. But what is it that you're constructive on, either in the long or short side in the option space?
Yeah, I have two recommendations, one on the buy and one on the sell side. The first one is what we have been recommending for a long time now. We have a sell recommendation on Titan. So if you look at this particular stock, it is quoting below crucial averages. Stock has a very strong resistance on the upside. Development clearly on the derivatives front remains on the short side. So we are recommending short in the range of 3420 to 3450 with the stop loss of 3500 for a possible move towards 3250. The buy idea is on Coal India. If you look at this stock, we have seen a very strong base support around level of 474 this counter. Even if you look at 50-day exponential moving average, we have not seen this stock breaking below that particular level, and that also coincides with the support level of 470.71. So recommending buy here for a possible price objective of 515 to 520. Development remains on the long side. Stop loss should be dead below 470 for this thing.
One stock that's not in the F&O space but stands out for me is Archean Chemicals. What a sharp up move today after a little bit of weakness that we saw on back of Bain and Piramal doing a block deal on the stock on Friday. It's pulled back really well. So that's just a quick mention on Archean. The markets as well, which were trading slightly low at the start of the show, have also turned positive. So that's, of course, good news coming in for the street. The Nifty is trading flat with a 7-point uptick. Atul Auto, after a 20% uptick yesterday, is up another 7% in trade as we see it. But Bhavin, a couple of other names that I want to talk to you about, and I feel like after that tariff price hike, telecom stocks were selling off. It was probably buy the rumor, sell the news that played out. But I do feel like this may be an opportunity for traders to get into a Bharti maybe. Do you agree with me? Does Bharti look good on the charts?
Yes, definitely. To us, Bharti remains a clear buy. Probably a drop towards 1430, 1420 range is not ruled out, but that should be a level where one should, probably get into the stock and not, exit. The stop loss for the same remains at 1360. My sense is ideally stock should not break even level of 1400 on the downside. At the same time, on upside, anything beyond 1500 on a closing basis ideally should witness a very strong move on upside. So definitely remain long on the stock even from current levels.
No. Bhavin, do you feel the same about Vodafone, even though it's not in the F&O space? Pardon me, it is in the F&O space.
Yeah, okay. So with regards to idea, what we are looking at is basically the range between 18 to 19. Even earlier, there was a very strong supply zone in this particular range. So my sense is that, yes, the overall short-term pattern remains positive. There is likelihood that this stock will break above that particular level. But till the time that do not happen, I do not rule out a slightly lower level from current levels. So my sense is that wait for some time. If it breaks above that level, if you are not getting into the stock right now, if you have missed this entire rally, then wait for some time, let it sustain that range of 18 to 19 on upside, and then probably get into the stock rather than, getting it into the stock right now.
Okay, there you have it. Well, your view on the telecom sector. On that note, taking a moment to thank both our experts, Bhavin and Sneha, for joining us and taking us through their views on the markets. We also slip into a short break, and on the other side of this break, we get you all the action from the commodities sector. Back in just a bit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back to the F&O show. Well, we put the spotlight on the commodity space, and we now have Vandana Bharti of SMC Global Securities who's joining us on the show. Vandana, good morning. Thank you so much for joining in. Well, let's start with crude because this one is the one which is seeing a little bit more traction today. I believe you have a buy call here. Can you tell us why and what are the levels that you're working with?
Yeah, hi Adam, good morning. So a few weeks back, we were talking about that the supply will exceed demand and we were continuously still on crude oil. So something happened on Saudi front and they have announced another round of production cut in September. So altogether, it will be around 5 to 6% of total crude demand of 2024. So it is going to give positive impact on the crude oil prices. Actually, they need more money to spend on their economy. Another thing is that, okay, hurricane season is already here and Hezbollah is more active. So these factors are superseding all like weaker than expected PMI data, factory orders data, industrial output data from European and US zone. Recently, we got it yesterday only. So I'm buy in crude oil. If we talk about the WTI crude, I'm expecting that WTI crude can see the level of $84 to $86 in short term. If we see the MCX level as per this $84, I'm expecting that this commodity should touch the level of 70-100 on MCX. So for today trading session or tomorrow trading session, I'm buy in crude oil, and the level is like this, that go for buy in crude oil near the level of 69.75 for the target of 7040, which is current resistance here for crude oil, with a stop loss of 69.50, and positionally one should see the level of 7200 in crude oil on MCX.
Vandana, while the global tension is what's supporting crude prices, why is it that you have a sell on gold? You'd imagine that'd be the same trigger to actually buy gold, but you have a bearish call on gold.
Yeah, very interesting, Sabina, because we have seen a continuous run up in dollar index, and again it is moving up. We're expecting that it should reach a level of 106.5 to 106.65, and we have a negative correlation between gold and dollar index. And in the month of May, China stopped almost the central buying declined in the month of May as well as in June. So it is going to give impact on gold prices, and some hedge funds, they are moving out their money from gold. So yes, we have seen a resistance in rally. We have seen a pause in the rally from the higher side, and of course $22.80 is a very good support for this commodity. So I am right now sell on gold for a very limited downside, because the overall trend is still very bullish. So for the today trading session, we should go for sell near the level of 71,600 for the target of 71,300 with the stop loss of 71,750. And we are expecting a limited fall in gold.
Okay, well, there you have it. That's the view on your two of the most traded commodities, that's gold as well as crude. Well, but we are out of time on the show, so Vandana, I'm going to take a moment to thank you for joining us and taking us through your views on these two most traded commodities. With that, it's also a wrap on the F&O show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
watching NDTV Profit. Well, one company that is in focus today is Senco Gold, and to talk about the company's future outlook, we are joined by Mr. Suvankar Sen, the MD and CEO of Senco Gold. Sir, welcome to the show. My first question to you is that, gold is seeing a lot of volatility when it comes to pricing. Now, recent week also, the gold prices did see a lot of plunging. So I want to understand that, how has volatility in gold prices affected your overall business?
So Mahima, we are now seeing the end of Q1, which is April, May, June that is ending, and the prices have been, comparatively the way it was in the month of April. And if you look at June, the prices has been on a kind of a downward trend. But this volatility and this increase in prices that we have seen over the last, I would say, 4-5 months is driven by the uncertainties and the gold buying that is happening by the central banks. So as a strategy for de-dollarization, as a strategy to reduce the dependency on the US and the dollars, countries such as China, Russia, they have been buying a lot of gold. You have also seen that our country, India, has brought in gold back from the vaults that were lying in the Western countries. So it's basically a whole process of buying gold by the central banks to make their assets stronger. So that is the reason we have seen this increase in gold prices. If we look at the consumer demand perspective, there has not been much of consumer demand because consumers' budget is only growing to that extent, not to the extent that the gold prices have increased by 20 to 25%. The budget can increase by 5-10%. So therefore, we are seeing more from the uncertainty, the war situation, the Israel-Hamas war, Ukraine-Russia war. And it is impacting business. Volumes are going to get hit because of the price rise. Value-wise, you might not be able to understand because people end up buying as per the budget, or more consumers are shifting from the unorganized to organized sector. And that is where you might not understand in value terms, but volume terms, yes, there will be a dip.
Right. Okay. Okay. That's about how the prices have been so far. But going forward, do you also expect similar kind of volatility in gold prices, or do you expect some kind of relief in FY25?
So if you look at, so we had our Indian election. We are seeing that there is, elections happening in many countries of the world. In November, you have the US election. You have elections happening in UK, in France. So there is this change. There is this, so many ways in terms of policies, in terms of thinking that is happening across the world. And this volatility will continue to remain. We were all very hopeful that, the war that is happening in the many places of the world will, kind of slow down and, we will move more towards peace. But seeing the current situation, it is not looking like that. And rather there is there's a risk of escalation and increase. So as a result, I do not see the volatility going down till we end up with by the end of the year. So we have weddings coming in the Q2. There are a few weddings, but most of the weddings are in Q3. And already, if we look at our purchases that are happening right now, consumers are worried, and they are starting to start their purchases for the weddings that are there in Q3 and Q4. So that is how we are seeing at the market.
Right. My next question to you, Mr. Sen, is that, the B2C market overall in India is quite nascent when it comes to, focus on exclusivity of natural diamonds. I mean, the big players are not at all focusing on the lab-grown diamonds, but you have 3 stores now when it comes to the lab-grown diamonds. So I want to understand what is the progress there, and what kind of markets are you tapping, because lab-grown diamonds is a big market to tap into.
Correct. So we have started off with 3 stores in the lab-grown diamond under the brand name of Cines. And we need to understand that, the other branded players, I'm quite confident that over a period of time, this category shall be considered by them, not because of any other reason. While precious diamonds are very critical, it is like an asset, it is like a gold, it is natural, it is, with a lot of effort and investments are going on to extract those diamonds from the Mother Earth. But at the same time, there will be this, 5 years down the line, 7 years down the line, we need to look into the future, and we need to see that There could be one which is in terms of affordability. It could be one which is in terms of adding stones to your jewelry to make it look more beautiful. It could be one that you cannot with a much lower budget you can fulfill your desire to own a bigger size diamond. It could be one that the large middle class aspirational young generation middle class consumers that might want to own any form of diamond. And lastly, 5 years 7 years down the line, this is a substitute in terms of how you can take care of your ESG needs when the environment is damaged lesser comparatively. So therefore, I think that it is important that you start somewhere. It is not that you're a part of the jewelry industry. You are selling diamond, gold, platinum, silver, fashion jewelry. So why not also have a sub brand and start off for fulfilling the need of the customer? So I think this is how we are looking at it, and we are trying to build on that brand.
Right. You talked about the organized and the unorganized sector. We're seeing that the jewelry industry as a whole is seeing a shift from the unorganized to the organized sector. As we speak, the organized sector accounts for almost 40% of the total jewelry segment. But going forward, from a longer term perspective, where do you see these trends going? From this 40%, where will the organized sector go, and how will this benefit your company?
So see, if you look at the trend that has happened over the last, say, 10 to 15 years, at that point of time, organized was about 20-25% and unorganized was about 70-75%. So from 20-25%, currently organized is about 40 and the unorganized is 60. Now, with the onset of GST, with the onset of the various initiatives taken by the government, the digitalization, it is helping even the unorganized players to become organized. So it is not only that the larger players, the organized players who are capturing the market share, but it is also the unorganized smaller players across the country, even in the smaller towns and cities of the country. They are also getting more formalized. They are also adopting systems, processes. So this 40%, I think, in the coming 5 years should move towards 60%, and unorganized will be 30-40%. It is changing in a very fast manner, and this 20% is not only going to be the larger organized players who will be growing, but it will also be the smaller unorganized coming and becoming more organized.
Right. My next question is from the business side of things. You have guided for a number of stores of expansion around 20 to 22. And I want to understand how much of these will be owned by you and how much of these will be franchisees.
So we would, as a strategy, want to ideally have a 50-50 kind of a ratio where, we have about plans of 18 to 20 stores, out of which about 8 to 10 will be company-owned, company-operated, and 8 to 10 will be franchisees. But franchisees are something that is not really where you have to invest your capital. We're looking for franchisee partners who can invest the capital, and that can always increase. But I think that out of the 18-20 that we intend to open this financial year, we want to do it in a 50-50 ratio.
Right. In your con call, you have guided for margin improvement back to 8%. Now, I want to understand that what will be the levers for the same, and do you think that there is an upside more than 8% margins going forward in FY25 or maybe FY26?
So see, the EBITDA margins that we're talking about, where we're saying that currently we are about 7.123, and we, the endeavor will be to take it towards 8. The simple lever of increasing it to the 8% margin is the stud ratio that you try to increase, which is through lab-grown diamonds, through natural diamonds, through gemstones. And currently our stud ratio is only at about 11%. So with the increase in gold price, consumers are also, for their daily wear and everyday wear use, is looking to buy small diamond jewelry, which is in 14 karat or 18 karat. So there is a high possibility of increase in stud ratio from 11%, which we want to gradually take it towards 15%. That will be a major lever. Plus the store that we are opening, we have opened in the last 2 years, and also the ones which we are going to open over a period of time. Once they move towards the maturity level and achieve their full potential, that way the cost will not increase to the extent that the stores will grow. And that will be another lever for which we hope to move towards the 8% EBITDA levels that we are.
Right. So as you rightly mentioned that, you are focusing on your studded jewelry segment. I just want to understand what is the kind of revenue breakup at present when it comes to studded jewelry, diamonds, gold, silver, platinum, and going forward, how do you see the change in that mix?
So diamond jewelry is 11%, your gold is about 85%, and your platinum is about 2.5%, and silver is about 1.5%. So this is the broad breakup of the categories we are selling.
Okay, Mr. Sen, lastly, one quick question on the international expansion. You are tapping into the global markets and, over the 5 to 6 years, international market expansion is what you're aiming at. So I want to understand that how will this aid your top line and bottom line going forward?
So if you look at it, many of our, jewelry players from our industry have already started the journey of taking Indian brands and Indian products in the jewelry category to all over the world, either catering to the Indian diaspora or the other population. So India is a hub for jewelry manufacturing. India, if you look at their exports, jewelry plays a very important role. Most of the diamonds are cut and polished in India. Even a large chunk, they are the top 2 or top 3 jewelry exporters in the world. So it is time for Make in India products to go global. And while we sitting from our manufacturing hub of Calcutta, which is famous for its gold handcrafted jewelry and also diamond jewelry manufacturing, we want to cater to markets in the Middle East, the Indian, the subcontinental diaspora, where culturally there's a lot more alignment. And diamond jewelry is more global, but there are already so many players catering to the diamond jewelry segment. You can see the jewelry fashion designers of India, they are also making names all across the world. So I think that it is time that with the growth of the country and the respect that the country is getting across the global world, it is many such brands from India that should take certain steps to make their presence felt across the world and cater to the market with their products of good quality. So that is how we want to move forward.
Okay, well, Mr. Sen, lovely chatting with you. Thank you for giving us those wonderful insights on the jewelry sector as a whole. But with that, we're completely out of time on the show. Stay tuned to NDTV Profit for more such updates.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
and welcome to NDTV Profit. Today's focus remains on office-based solutions after the company came out with its Q4 results after its listing in May. To discuss more, we have the Managing Director and the Chairman, Mr. Amit Ramani, with us. Hello and welcome to the show, Mr. Ramani.
Thank you for having me over. It's my pleasure.
So a good listing for you a month back. You've come out with your Q4 results, strong numbers, 45% of revenue growth. You've also reported a net profit of about 1.4 crore this time as compared to a loss in the corresponding quarter of last year. Talk to us about this. How do we see the profitability growth going forward? Do we expect the company to report a profit figure for FY25?
So actually, clearly, if you look at our growth journey, as you mentioned, almost 50% plus growth in our revenue. Our EBITDA has been consistent. 30% is what we've been able to achieve over the last couple of years. Consistently, we have projected for the market almost about a 30% growth on our revenue number for FY25. We're looking at about a 1.5% growth in our EBITDA number, and clearly, without commenting on specific numbers on profitability, we have worked hard to make sure that our profitability, which went from a negative almost 47 crores for FY23 to about negative 17 odd crores for FY24, with, as you mentioned, 1.5 odd crores of profit in the Q4 of FY24. So I think that directionally we are obviously headed in the right direction. I won't comment on specifics, but our EBITDA margin is going to improve by 1.5%. Our growth is about 30 odd %. We are also looking to add about 40,000 additional seats in FY25. So I think we are clearly on that path, but specifics I will leave it for the future.
Mr. Ramani, you mentioned about 1.5% of EBITDA improvement. That's what you're looking at. Can you expand more on this, where we are looking at value unlocking over here in terms of operational efficiency? Also the 30% growth, where is this coming in from?
Sure. So clearly, if you look at our size and scale, today we are across 180 plus centers, which translates about roughly about 100,000 odd seats across, today 16 cities, 62 plus micro markets. So I think that is a scale that we have built. And I think today, as you see, the scale is going to start giving us both operating leverage and operating efficiency, right? I mean, it took us a while to build that large network, one of the largest in the country by far in the co-working space. And to that end, I think, that journey took us a bit. Now, I think as we have achieved that scale, and this year we'll probably add 3 more cities, in addition to the ones that we are already operational in. But I think the base of the addition is much larger. So the operating efficiency and leverage is happening. And that's the reason that we'll have about a 1.5% positive uptick in our EBITDA margin. The growth that I mentioned, is a direct correlation to the number of centers and the seats that we have. So if you look at our business today, we are currently, we ended FY24 about 95,000 seats operational for us, right? And today, if I look at our projection for 40,000 seats, out of that, roughly 32,000 seats we have full clarity on, right? 15,500 seats across 21 centers are where the current fit outs are going on. And then there's another 16,500 seats where we have the LOI signed, letter of intent signed with our landlords, and another 10 odd thousand seats where we are in advanced stages of negotiation with our landlords. So we have full clarity on 32,000 seats and, projected clarity on another 10 odd thousand. So the 40,000 seat clarity is there. If you looked at our exit for FY24, we are at about blended of 71% occupancy with about 12 months on older centers at about 85% occupancy, right? So clearly, as we expand our network, as we expand our demand ecosystem where we are servicing our customers, that's where, 30% of the growth is going to come from. Of the total growth of 40,000 seats, about 85% is going to be in tier 1 cities, and about 15% is going to come from tier 2 cities. So that's kind of where we look at our growth. Also, if you were to look at our design and build business, if I was to look at the FY24 split between our co-working business and our design and build business called Office Transform, the split is roughly about 75-25. That split will continue, and the growth across both those businesses will translate into 30% growth for overall for the business.
Yes, Mr. Ramani, absolutely. That's some strong growth trajectory and a nice breakup of all the businesses going forward. But again, I want to focus more on your asset-light business model now, the managed aggregation model. So currently 66% of a mix coming in from here. This versus the straight lease model, I want to understand the kind of capex requirements, the payback period, as well as the margins. How do they differ between these two?
Yeah. So I will start with a straight lease model. In a straight lease model, about 40% of the revenue goes towards the rent, which is fixed in nature during a 5 or 6 year lease period. Then about 20% odd is what we will call is the operating expense, and about 5 odd % is common area maintenance for the building. So if you were to look at a straight lease model, typically you would essentially make your first penny when you reach about anywhere between 60 to 65% occupancy, 40% of rent, which is fixed, and 20 to 25% of operating expense and common area maintenance. Some of it has variability, and that's why I say at 60 to 65%, you are going to make the first rupee. Now, average, you would reach about 95% occupancy in this scenario. So you would end up making about 30% plus kind of a margin at a center level. Now, when you come to our managed aggregation model, assuming that we are in partnership with the landlord and we have a profit share as the core model, then the operating expense and the common area maintenance remains the same, so 25%. Now, what becomes variable is the 40% fixed rent, which is not fixed, because what we are offering the landlord is a minimum guarantee, which is typically 50% of the market rental. And in majority of our centers, almost 46% of our centers, we do not even have a minimum guarantee. So you start making your first rupee once you cover 25% occupancy, right? Which is basically operating expense and common area maintenance. Beyond that, if you do have a minimum guarantee, then you will end up basically, that's, as I said, it's 50% of the market rental. So it adds about 20% additional. So in that situation, at 45%, you will start making your first rupee. And clearly, then we are in a structure where typically it's 65% / 70% to the landlord, or 35% or 30% to essentially office. So in that model, what ends up happening is there's, let's say, a 70-30 split in profit sharing. The landlord would make about 52% of the overall revenue, and we will keep the rest. So in this model, our margin will go down to about, let's say, 22 to 23%, right? Instead of a 30-32% in case of a straight lease. Now, the difference is that the risk in a straight lease is 100% carried by us. 100% of the capital investment is done by us. 100% of any upside or downside is carried by us. In the second model, the managed aggregation model, the landlord is my partner. So he shares in the upside. Hence, the 40% could become as high as 50%. But he also shares in the downside if there was to be an unfortunate challenge there. Now, the very fundamental difference between the two, the return on capital employed in case of a straight lease would be somewhere around 30 to 35%. In case of a managed aggregation, it could be anywhere between 70 to 150% for us. So I think that's the dynamic, and obviously it's managed aggregation is capital light because my landlord is investing the majority of the capital. Also it's risk mitigated because they are carrying the upside as well as the downside risk.
Yes, that was quite descriptive on how the model differs and how the margins and the capex and everything differs over here. But now I want to move on to the kind of capacity addition that you're making, 40,000, that's the plan. So again, if I want to look forward to FY25, what is the kind of capex that we are aiming for? Is it on the similar lines of FY24 or are we looking at a higher number?
So last year we invested about 140 odd crores, right, towards our capital investment. And today we last year added about 28,000 odd seats. Now, clearly, as we go forward, I think the mix of what our capital light model, which is managed aggregation and straight lease, will remain similar in the percentages that we have demonstrated for FY24. We believe that the capital investment would be in the similar range, might be a bit higher because the number of seats that we're adding is a bit higher, but it would be in a similar range as what we had for FY24.
All right, so the capex remains at a similar level for FY25 as well. Well, that was the last question. Thank you so much, Mr. Ramani, for joining in. We look forward to more interactions going forward. Thank you once again for joining in to NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
The good part of growth assets is that the more you have, the better your choices are, right? So nothing like money in the bank to sleep well at night, whether it's a medical emergency or that cruise you want to take. I think gone are the days where we think about a simple life in, a rural community. People want vibrant.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Like the name suggests, this show is geared towards getting you answers to all of your stock-related questions, and to that end, you can send them to us on that number that you see on the screen, or in fact on any one of our social media platforms. Let's quickly take you through how the markets are faring today. And it was a positive handover from the US markets, but the Asian markets were a little under the weather. And to be fair, the Indian equity markets were due for some consolidation, and that seems to be what is playing out today, at least on the benchmark index. In fact, on the broader markets as well. The Nifty 50 trading above comfortably the 24,000 mark. The mid-cap index trading completely flat, and the small-cap index continuing to gain ground. It was the outperformer in trade yesterday as well. Let's quickly take you through the market breadth just to see if it's more or less even Stevens or how that's panning out. And the advanced decline ratio should actually give you that perspective. But beyond that, let's talk about, in fact, the sectoral perspective as well, while we wait for that to come up on the screen. And you have the realty index that is gaining ground 1.6%. Media is up as much as 1.5%. IT is outperforming. It was one of the top performers in trade yesterday as well. On the losing end, you have the PSU banking pack that was also underperforming yesterday. It continues to do that today, but no big losers to that extent. Let's talk about the advanced decline ratio that I was mentioning earlier. And as you can see, more or less, it's not too much of a gap. The advances are in fact ahead, but just by a little bit. It's not as stark as you've seen in the recent past. In terms of the contributors on the benchmark Nifty 50, you have HDFC Bank, which is leading gains and is the top contributor in trade today, and it's followed by Infi. But there is a pack of stocks that is not doing too well, and that is the brokers, and that's on account of a regulation change that could be on the cards that is suggested by the Security and Exchange Board of India. And we're trying to understand the significance of this, Smriti, but seemingly it's going to be a hit on the revenues of these companies.
Definitely. Good morning, Alex.
Morning.
You rightly mentioned Sebi came out with these new rules which says market infrastructure intermediaries, MIIs, or even stockbrokers, they're going to get hit by this regulation. So essentially, they have now asked these brokers to not charge their customers, you and me, based on the volumes. Now there needs to be a flat fee. While that's good news for people like you and me, not so much for the stockbrokers. And you're seeing that impact on these stocks as well. You look at Angel One down about 7.5%, while we were just discussing right before the show started, Alex, that they largely have they've
transitioned to the flat fee model. Yes.
But look at how the market is reacting to that. 7.5% down. You have IFL Securities down about 4.5%. Motilal down over 3% in trade as well. 5 Paisa down about 1% right now. So all of this market is taking cues from this regulation. While it's important to understand, we do not know the magnitude of the hit, but it is definitely going to have an impact on the incomes of these brokers. And to get more perspective on that, let me introduce you to the guests
in a bit.
for today.
So, but we're still waiting for them to join.
We do have Samir.
Oh, we do.
We
Okay,
do have
cool.
Samir Dalal of Natural Lal and Sons joining us. Samir, you've heard of these regulations, and we're seeing that impact on the stocks today. How are you thinking about it? What's the what kind of, for somebody who's holding these counters, what should that person do?
Honestly, not worry too much, if you ask me. So I don't think there's going to be, when news comes out that they have to charge a level playing field, it's not like the MIs want to lose out on certain income. What they will probably do is up the costing a little bit and figure out some other way to compensate the brokers who are giving in the larger volumes through some other means or some other method. So, at the moment, I would not worry. Yes, some impact would be there, but I think there are very few listed companies, and I don't think their bulk of their profitability or revenue comes from that part of the revenue stream. So it's not really going to change. And as long as volumes keep increasing on the exchanges, turnovers, and new client additions keep happening, this is it's like a platform-based company, right? So once you have your systems in place, the more turnover, the more revenue you generate, bulk of it transfers down into the PAT. So as over time, the markets keep growing in India, which is happening,
these large broking houses will continue to grow. However, the big fear factor for, I think, a lot of these players is not this, but the fact that Reliance Jio, not Reliance Jio, but Jio Financial Services wants to enter the broking business as a low-cost business, and they might be stealing market share for them, which could be a problem. That could be the bigger problem and not this that is happening.
Okay, fair point. Just to follow up to that, Samir, we were talking about specifically Angel One, and it has made significant strides in terms of the number of clients that it is catering to. It has also gained quite significantly on the price front. I'm talking about the stock, but it's moved to a fee-based model, right, through its super app. So why is it getting hit so badly in trade today?
So a rising tide raises all ships, and when the tide goes down, all ships go down, right? So right now, because of this negative news flow, I think people are just a little bit worried. And also the stock had run up quite significantly. Now, there's also a second news that is doing the rounds in the market is that the Sebi and the finance ministry is very worried about the fact that there is a lot of high volumes that is there in the options market. And they want to come up with a way to reduce the turnover and the volumes from retail investors in the options market, especially on the expiry date. So if something of that news comes about, if some regulation for that comes about, then the volumes get hit. And like I told you, these are platform-based companies. Cost is in place. Now, if volumes were to fall, it would have an exact reverse opposite of when volumes increase. The cost is fixed. So if I was 100 rupees of revenue and my cost was 50, and if I went to 150 rupees revenue, I would do from my PBIT would go from 50 to 100. Inversely, when it comes down from 100 to 75, my PBIT would come down from 50 to 25 because the cost structure does not change significantly. So because of that, I think there is a bit of correction that's happening across the board in the market. It's not only to do with this news that's coming.
All right, that's a fair point. We're also joined this morning by Swati Hotkar. Swati, thanks so much for taking the time. It's time to jump into the queries, and there are quite a few that have already piled in. The first one I will take is on AU Small Finance Bank. And Kanya is asking about whether or not it can be held at this point. The stock is currently trading with gains of about 0.4%. It's at 676. On the fundamentals though, Samir, is this a buy or would you prefer another in the BFSI space?
So in the BFSI space, I've discussed this last week also when I spoke. IDFC First Bank remains our topic. AU Small Finance Bank is also growing quite well. They follow a similar business model where they're able to garner higher deposits because they're giving monthly interest. They are giving a higher rate of interest also. So getting fresh deposits and getting large deposits for them has also been easy. So it would definitely be one stock that one can invest in. But for me, the top pick remains IDFC First Bank.
All right, fair point. Next question is from Ashok, who's writing in from Bangalore. Swati, now they want to buy Cipla futures. Would you suggest doing that at this juncture? And what are the key levels that you would watch out for?
Yes, good morning. First of all, the view on the Cipla is a little bit cautious. The pharma sector is not really doing very well. This particular counter is facing a very strong resistance of 20 days moving average, which comes to at around 1520. So unless and until stock doesn't give the breakout of 1520, one should not go for a long position, just hold for a time being. I believe we might see some correction towards 1440 levels. So view is a little bit cautious. I will suggest not to create any long positions in future as well.
Moil Limited is what we're talking about next. It's had a stellar run in 2024 so far, 58% gains in the year-to-date period. The stock is currently trading at 494, but we've got Marvin, who's writing in from Baroda, and he's bought at slightly elevated levels. Swati, he's bought at levels of 565, he says. What are the short-term and the long-term targets, and can he recover his buy price?
Yes, definitely. Moil is one of the good counter. We have seen a very good rally in this year, but no wonder after such kind of a rally, profit booking cannot be denied at the higher level. And coincidentally, or say unfortunately, he has bought at the higher levels. But definitely, I believe that this counter might find the support nearby 460 to 450 levels, and thereafter again we can see some uptick rally towards to 540 to 550. So definitely his buying position will come, but he need to hold on for a few more period or few more trading session. It's a hold from my end as long as the stock takes the supports of 470 levels. So you can hold on this particular counter.
All right. The next counter is Indus Towers. Now, Swati, this question is coming in from Jayakrishnan from Kozhikode, and the question is, should you enter this counter? Now, we've seen a rally in this counter in the last 6 months, 1 year it has doubled. Would you suggest buying at these levels, or should you wait for a little bit of correction to happen?
This particular counter is really strong on the fundamental as well as on the derivative parts. We have seen a very good rally once the stock managed to give a breakout of a 350. It was showing an inverse head and pattern formations and gave the breakout, and almost it had achieved the target of that particular pattern. So I believe that one should not go for a long position at the current market price because risk reward ratio is not favorable. If you're getting any dips towards to 360, 370 levels, definitely one can go for a long position. For a shorter term duration, I believe the stock has a potential to reach up to 440 to 450 levels. So definitely it will be a buy call, but buy on dips towards to 370 to 360 levels.
All right, Siemens and Gokuldas Exports are the two counters that we're looking at next. And Swati, this one's for you. We've got Satish asking whether or not to buy these two counters, and he's got a relatively long-term time frame, as much as 3 to 5 years. Would you suggest both of these stocks, or one of the two, or none of the above?
The Siemens is personally one of my favorite counter. Definitely one can for a Siemens at any point of time if you're looking for a portfolio portfolio management services, such kind of a, definitely one can go for SIPs into the Siemens, but not at the current momentum. We already have seen a very good rally in this particular stock. I will suggest to hold on. If the stock corrects up to 75 to 7300 levels, definitely one can go for a long positions. But just hold on. This counter is purely for the portfolio purpose thing. I believe very soon we can see up to at least 5-digit numbers in this particular stocks. So it's a definitely buy on any dips. But Gokuldas Export, I will suggest to wait. You can go for a Siemens, but not for the Gokuldas Export as such.
All right. The next question is from Sanjeev, who's writing in. Okay, we don't know where he's writing in from, but the counter that they're talking about is Josh Engineering. They bought at a price of 2,360 rupees, slightly elevated levels. Seems to be in a downtrend for the past week. Samir, do you have coverage on this counter?
No, I'm sorry, I don't have coverage on this one.
All right, Swati, what are the key levels you should watch out for, and what should somebody do who has been holding from such elevated levels of 2,360?
Yes, the technical setup is a little bit cautious because on the chart we are witnessing a negative divergence in this particular stock. So that's why we are witnessing some sort of a selling or say the profit booking. We might see a downwards towards at least 1800 levels. So I will suggest if you're getting any pullback rally up to or any rise up to 2300 or 2200, one should exit the long positions. The longer term horizon is little bit cautious. Selling pressure might likely to be intensified once the stocks gives the breakdown of 2000 levels, which might take a counter towards to 1800 and so. So if you're getting any rise towards to 2200, 2250, one should exit the long position.
Okay, relatively recent listing is what we're talking about next. Exicom Telesystem is the counter that we're asking about, and Sumida is asking about this. It's had a pretty stellar run since its IPO and since its listing earlier in 2024. It's a doubler. Do you have a view on this one? Samir, do you have a view on this one?
So I've studied the company. I know what they do. We don't have active coverage, but I can tell you that what they're doing about setting up the infrastructure for the electric charging. I think that is a growth industry, and that is going to continue to grow. So there's great opportunity over the longer term. The problem again is the listed at premium valuations, and the valuations have got stretched. Like you said, it's rightfully doubled after the listing. So the valuation has moved up even further. And that is where I have a bit of a hiccup. I don't deny the fact that this is an industry that could probably have 20 years of growth going forward. So valuations can remain at a premium. But we would like to see how competition emerges in the space. We would also like to see how the opportunity to generate returns is for these charging stations. It's still not totally clear. So I would rather wait for the time being. As an investor, like I said, we don't have active coverage, but I am not buying at this point. I'm advised to buy it.
All right, that's the view on Exicom Tele. We have to slip into a quick break, but we've got news to talk about, and this is the Sebi show cause notice to Hindenburg, and we've got a lot of details to tell you about. We will tell you after this very quick break, so do stay tuned. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your...
Welcome back. You're watching NDTV Profit. Now, there's a lot of water that's gone under the bridge with regard to the Adani Hindenburg case, but seemingly the Sebi is not done prying into some of those details. In fact, there is a show cause notice that has been sent to Hindenburg and other entities related to that Adani Hindenburg case, and there are several details that have emerged. Sajith is standing by to break down some of those details. Sajith, what are you picking up?
That's right. Market Regulator, Securities and Exchange Board of India has issued a show cause notice to Hindenburg Research, which is the US-based short seller, and some of the foreign portfolio investors like Kingdom and his entities, which are based out of Mauritius. The basic thing of which investigation comes in from the fact that the short selling activity observed in Adani shares started prior to the publishing of the report, which was January 24th, 2023. What the investigation says very clearly is that though the Adani stock started falling after the report was published on Jan 24th, the short sell began as early as Jan 10th, and it was done by a FPI by the name of K India Opportunities Fund Class F, which is owned and controlled by Mark Kingdon, who is a sole beneficiary of this and ultimate beneficial owner of this fund, and other entities which are based out of Mauritius. The sole purpose of this fund was to trade in Adani Enterprises futures in NSE. Remember, Adani Group's only one stock was in F&O Adani Enterprises, and that was the only proxy to trade against the Hindenburg report, which was released in early Jan at the time when Adani Enterprise was in the middle of FPO, and it was almost on the verge of completing the FPO when the report was launched there. This fund made a total profit of nearly 183.24 crores. The fund also had a profit sharing agreement with Hindenburg. The profit sharing, as per the research agreement that it signed, was around 30%, but it was reduced to 25% subsequently because of the kind of time the fund took to set up in India and the regulations that it had to meet. But the entire structure of this was done by Kotak Mahindra Investment Limited, which is an arm of Kotak Mahindra Bank, and the entire FPI account was created, the trading account was created, and the approvals for trading in single stock derivatives was both on the long and the short side was undertaken, and approvals were brought in by Kotak's arm. M. Kingdon Offshore Master Fund was registered in Cayman Islands, and it was the ultimate beneficiary of that. And Mark Kingdon colluded with Hindenburg to make gains that was not part of the public information. The Sebi investigation very clearly states that as early as November of 2022, a draft report was shared with Mark Kingdon, based on which an agreement was signed. And subsequently, Mark Kingdon set up a trading account in India in January of 2023, just days before the report was to be made public. The entire process of the of the trading account was done in a very hurry, and where there was an urgency to do it so that short positions could be created. Roughly 8.5 lakh shares of Adani Enterprises were short in January, between Jan 10th to Jan 20th, and then on Jan 20th, a few days before the report was to be made public, it was rolled over to the February positions. Remember, the Hindenburg report was released on Jan 24th. That was almost the expiry, close to expiry day of January, and so the impact would have rolled over to the February month, and that's when the entire gains were made, when the Adani Enterprise shares went down by as much as 59%. Mark Kingdon and his funds basically squared off the positions between February 1 and February 22nd, in the process making nearly 183 odd crores in profits, of which 25% was shared as profit with Hindenburg, which is there. If you look at the modus operandi of this, I think the draft report was shared between Hindenburg and Mark Kingdon. He was the sole beneficiary of that report, and this report was not shared with anyone else until the time it was made public to all the people on Jan 24th. So he went ahead and did an advance short sale before the report could be made public. The second thing was that he waited for the entire trading account to be created in India. It took some time because there are processes to create an FPI trading account, and Kotak was managing that, and it took few days for Kotak to do that. But the communication between Kotak and Kingdon shows that there was an urgency to start the trading account at the earliest, which was there. The research agreement between Hindenburg and Mark Kingdon mentions about a profit share of 30%, which was eventually reduced to 25% and agreed by Hindenburg because of the time it took them to create the account there. And Hindenburg, which claimed that there was no association with the Indian securities market, indirectly had a relationship, because Kingdon was sharing profits from the short sale which he was doing in the Indian market with Hindenburg there. The India Fund was created solely for the purpose of trading in Adani Enterprise shares. That's what the Sebi investigation reveals, and there's nothing, no other trading that took place in that that account or the trading account which was created there. Now, what kind of profits was made in the entire process? Hindenburg traded in the bonds of Adani Group, which between November 22nd, 2022 and March 2023. In the bonds trading, it got a net loss of nearly $5,000 odd. But what it did was it got nearly $5 odd million as an agreement between Kingdon Group. And what it did also was that it traded in the ETFs and MSCI India index, as a result of which it got a profit of nearly $9.2 million, which was there. So net position or net profit that Hindenburg earned from the entire transaction was roughly around $14.5 million, which includes profit share from Kingdon Group and $9.2 million, which it traded itself in markets outside India as a result of the ETFs and the MSCI India index exposure that it took.
Okay, so quite significant. All right, Sajid, thanks so much for giving us all of the details there. By the way, you were seeing on the screen a reaction in the stock price of Kotak Mahindra Bank, which has very clearly been named as the facilitator of these transactions and the creator of the account that facilitated the Kingdon transactions in the Adani stock. The stock is in fact at the low point of the day, down as much as 2.7%. We will get you more details on this story over the course of the day, and in case you would like to take a look at the story on the website ndtvprofit.com, this elucidates everything that Sajid has just laid out before you and provides a little more context in case you would be interested in reading it. In the meanwhile, let's very quickly take you through what's happening with the markets. We're looking at pretty much a flat trade for the Nifty 50. We're trading at yesterday's close more or less, but holding above the 24,000 mark. As I was pointing out at the start of this half an hour, the consolidation seems to be on the cards, and in fact it is playing out. The mid-cap index is now trading in the red to the extent of 0.2%, but the small cap index continues to trade in the green. If anything, I would think that the advance decline ratio would have tilted a little further. I wouldn't be surprised if it has. At the start of the show, of course, the advances were ahead of the declines, and it is in fact narrowing. There you go. So very close to even Stevens on the advance and decline ratio, and it is likely that you will continue to see consolidation through the day. Having said that, there are a few sectors that are doing particularly well in trade today, and one of those is the IT pack that is the top gainer in trade today. It was one of the top gainers in trade yesterday as well, up as much as 1.7%. Now, that brings us to the end of this particular edition of the I'm saying all you need to know, but Ask Profit. I mixed up my shows. But we've at the end of Ask Profit from Sriti and myself and the team that put the show together. Thank you so much for watching. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade or have been the flavor of the season. But before that, a quick look at the markets, and at the moment we are looking at a quiet day of trade. It does seem like we're looking at some gains as far as the indices are concerned, but largely it's flat. The Nifty currently at around 24,150. The Bank Nifty as well is actually in fact looking at a little bit of weakness, a little bit of a dip coming through, and it's the same for the CNX Fin Nifty as well. So those are a handful of indices that we need to keep an eye on. And of course the Bank Nifty is also lost out on the, or rather it is trying to defend 50 to 200 mark at the moment. But you know, in general overall we are seeing a little bit of weakness seeping through, and perhaps also unexpected lines, because you've just seen the benchmarks move from strength to strength. Now let's move on and talk about the constituents of the Nifty and see how things are panning out there. Where there is a pull and push coming through, we do have HDFC Bank along with Infosys and L&T providing a bulk of the gains on the advance. And on the other hand, ICICI Bank, Kotak Mahindra Bank and Bajaj Finance are weighing down on the indices. In fact, that's also the reason why you have the Fin Nifty, which is under pressure right now, because it's not just the private sector banks, it's also Bajaj Finance, which is weighing on the banks. And the Fin Nifty does seem like it's lost out on the level of 23,500 at the moment. The question is, how are the broader markets doing right now? The broader markets are actually, well, also mixed. So we have a 0.2% cut for the mid-cap index, but the small-cap index also, well, just about marginally in the green right now. And even in terms of the advanced decline ratio, it's a fairly mixed picture, because depending on the index that you're taking, we'll have just about a little bit of an edge when it comes to advances as against the declines. Largely fairly evenly poised between those which are moving up and those which are in fact taking a knock in today's day of trade. So on the whole, it's a mixed day of trade for the broader markets, and in general for the indices, a quiet day. With that, let's take a look at all the stocks and themes in fact that we're going to talk about in today's session. Starting off with broking stocks which are under pressure. We are also going to consider tire and auto companies. Of course, metals will also be in focus. Patanjali Foods and the FMCG sector as a whole, and the telecom sector as well. And to take us through his views on the several stocks and themes that we are going to take up today, we have Avinash Gorakshakar, the Director of Research at Profitmart Securities, who's joining us on the show. Avinash, good morning, and thank you so much for joining in. Avinash, before I come to you, let me take up all the auto sales that came through post-market hours. We have Puneet who's joining us to give us an update on that one. Puneet, over to you.
So a lot of interesting trends that have come up out of this month, which was expected to be largely subdued and quiet. So one of the major things is Hero MotoCorp, which came out after the market close. It reported a 15% sales growth versus expectation of a fall in this particular month. So that's been a very positive surprise. The other one is, of course, it came slightly at the end was Tata Motors. Another one which was very disappointing. The numbers, the passenger vehicle sales were down 8%, while for commercial vehicles the sales have been down roughly 7% odd. A similar trend has been seen in Ashok Leyland as well, which came in during market hours. Another key surprise here was also VECV, which is the commercial vehicle arm of Eicher Motors. It reported a positive 10% sales growth, the only one in the commercial vehicle space to actually show some growth in this particular month. Also TVS, which has been coming at roughly 5% growth in sales. Now this is slightly lower than the 9 to 10% expected, and potentially they have lost some share in the premium motorcycle segment, and that's possibly because of Honda, where the supply chain issues has been resolved. We saw a similar impact of Honda supply chain issues getting resolved on Bajaj Auto as well, specifically in the 125cc segment, that they could have seen some particular pressure. When you look at the top three winners of this particular month, it has to be Mahindra and Mahindra, definitely outperforming by 22% growth, the highest across segments. The second one is, of course, Hero we spoke about, and Maruti as well, showing roughly 12% sales growth in this particular month. What's interesting is this rural theme play of Hero and Maruti has shown some interesting trend in this month. We'll definitely deep dive, as this is the last month before the Q1 earnings. So a lot more detail into what led to this particular. It could be the elections, could be the freebies, we never know, but the exact reason, while we will deep dive into it, will be interesting. The three biggest losers in this particular month has to be Tata Motors, passenger vehicle as well as commercial vehicle, down 8 and 6%, and Eicher Motors was down 5% in this particular month. So overall, rural theme playing, Mahindra continuing its outperformance, and a few select outperformers such as Maruti, Hero, as well as Eicher Motors CV. Back to you.
Right, Puneet, thank you so much for getting us those updates. Avinash, welcome to the show. How are you making and what are you making of the auto sales for the month gone by? Any trends that you can glean from, and, well, stocks that you like from the sector?
Yeah, good afternoon, Agam. I think auto numbers have been in line with expectations. I think within the two-wheeler pack, I think Hero Motor has shown a very strong performance of almost 15% in the month of June. See, my sense is two-wheelers definitely have been picking up, and I think the rural market seems to be picking up pace. Maruti has also shown a very strong growth of about 12%. So I think whichever companies have got a very large rural market exposure are definitely poised to do well. I think you can look at even Mahindra and Mahindra, which reported a very strong volume growth number. On the other hand, Tata Motors, I think clearly the first quarter is always going to be a slow quarter. Sales normally pick up, from July onwards, and obviously get into a more aggressive mode, in the second half of any financial year. So we are not really concerned about such kind of negative numbers on a month-on-month basis. We believe that Tata Motors would definitely catch up both in the passenger car and the commercial vehicle segment in the quarters going forward. But overall, I think it's going to be a very solid performance from Mahindra and Mahindra, specifically from the utility and the tractor market side, and most importantly, from the two-wheeler pack. After a very long time, Hero MotoCorp has started, delivering on the numbers. We could see better kind of financials post the Q1 numbers, which are expected very soon. So net, I think the markets have already discounted this. We'll have to wait for the first quarter numbers and the commentaries from the managements going forward.
Okay, there you have it. That's the view coming in as far as the auto sector is concerned. But I'm going to stay with the auto sector, actually talk about an ancillary here, and tire stock specifically. Today, we have some amount of weakness in something like a Seat. Apollo Tyres as well, under a tad bit of pressure right now, marginally in the red, and something like a JK Tyre, Balkrishna Industries, of course. But over the past, maybe 1 week, over the past 1 month, we've actually seen positive traction as far as some of these auto tire companies go. The question really is rather, is that whether or not there is a little bit of recovery which is on the anvil at the moment for the entire sector. If you take names like Apollo Tyres specifically and see how it's done in the last 7 odd days, you will see a sharp up move there. Even something like a JK Tyre, if you consider the last 7 odd days, you will see a sharp up move there as well. Now, over the last 1 week, we've actually started seeing some positive traction. And the question really is that, are we looking at an improvement here? That's Apollo Tyres chart, advanced by as much as 17% in 1 month, and as has been the case for CIT as well. It's also been a little bit of a laggard with respect to the other auto ancillary subsegments. So I reckon that maybe at this point investors are trying to play that particular theme as well, notwithstanding the kind of volatility that we've seen in crude, because that clearly does have a little bit of an impact when it comes to your input costs going ahead. But if you keep that on the side, we are looking at an expectation of improving volumes going ahead, and to a certain extent your expectation on your passenger vehicles and your commercial vehicles will also have a part to play in it. Avinash, what's your view on this particular sector and anything that looks interesting to you in this area?
I think, Agam, you pointed out rightly that the volume growth expectation in current year, specifically from the passenger car and the two-wheeler segments, is quite strong. Companies which are largely into the two-wheeler and passenger car segment, specifically if you talk about Apollo, CIAT, JK Tyres, I think these are all companies which have got a large presence in the passenger car segment as well as the two-wheeler segment. I think within these companies, I think we continue to like Apollo, we continue to like CIAT and JK Tyres. Our sense is that raw material prices have obviously hardened because of ongoing inflation, and plus, as you rightly mentioned, crude prices have started inching again upward. So that could possibly play a little spoil sport as far as the margins are concerned, but volume growth continues to be very solid. I think the OEM numbers which came recently clearly depict that passenger car and two-wheeler segments are going to grow pretty well. The commercial vehicle segments could underperform in the very near term. But I think clearly, I think these two companies, Apollo and JK Tyres, as well as CIAT, could possibly outperform over the next, say, 6 to 12 months. And I think as long as raw material prices continue to remain under control, the volume growth from the OEM companies continue to be healthy in double digits, you could see a kind of a good rub-off for these companies continuing ahead, despite the fact that base levels for most of these stocks have now significantly gone up. So I think the incremental upside would be a little limited. But yes, definitely, I think one could expect a decent risk reward in the next, say, 6 to 12 months.
Okay, that's the view coming in as far as the tire sector is concerned. And from there on, we move on to another important story of the day, and that's Sebi, which has in fact asked market institutional and infra institutions to hold their slab-wise charges. We have Charu who's joining us to give us more details on this one. Charu.
Hi, so the Security and Exchange Board of India yesterday came out with some fresh guidelines for the exchanges to follow regarding the fees that is levied by its members on the end clients, which are the investors and the traders. So what happened was that upon examination, Sebi came to know that some of the market infrastructure institutions see a discrepancy between the fees that is paid to them by the members and the fees that they charge from the end clients, and to reduce this discrepancy and to reduce the difference between the fees charged from the end clients per day and fees paid by the members to the institutions per month, these new guidelines have come into place. Now there are 3 important guidelines that have come. Number 1 is true to label. So only the fees that is charged by the market institutions, which is the exchanges, will be levied on the end clients. That is the only fees that the members are going to be able to take from the end clients. Any other hidden or additional charges or costs will not be applicable. Apart from that, uniformity, fairness and equity in the charges will be present. That means that no volume-based slab structure will be there. That means it will not depend on activity or size of the work that is being done by the members. It is going to depend on a flat fee structure from now on. And thirdly, the currently applicable per unit charge system is also going to be considered so as to provide a fair value and a reduced value to the end client, that is the investor and the trader. And finally, the market infrastructure institutions have been asked to amend their rules and to put in the amount of work required to implement these new guidelines, and also tell Sebi once they have implemented the same.
All right, Charu, thank you so much for getting us all those updates with respect to the latest with respect to Sebi. But on the basis of that, we've had a handful of stocks which are actually under pressure right now. I'll start by taking a look at the broking houses. So you have Angel One, something like a Motilal Oswal, Anand Rathi, are looking at, Angel One is down by as much as 8% now. Motilal Oswal is down around 3.6%. We have Anand Rathi's, which is down 1%. Even if we can take up something like 5 paisa, that's down 2%. Now, this is just the broking houses. Have we had any impact on exchanges? Let's pull up BSE. BSE, I believe, is also down around 2.5%, if I'm not mistaken. It is down around 2.7% to be precise. But it may not have had a substantial impact on something like a CDSL, which is, of course, the depository. Doesn't have too much. And I reckon this weakness is not necessarily because, of this particular update, but because it had moved up substantially after it had announced a bonus. Avinash, can you come in on this aspect? What do you think it would mean for broking houses? Because clearly they are the ones which are the biggest, perhaps seeing an impact here. What's the way forward here?
So I think, Agam, this rule actually, is negative for broking companies which generate a lot of volumes. And I think, earlier the incentive structure was based on the volume generated. But now with the new rule, I think it's going to be one, kind of slab applicable for all the participants. So I think in a way it's going to be, hurtful for most of the discount brokerage houses, for the large brokerage houses which were generating huge volumes and were getting incentives. So now I think obviously that is going to hurt their profitability quite significantly. Because as per reports, what I've been understood is that almost 40 to 50,000 crores of business was generated by the discount brokerage houses, and that now is not going to entitle them to any incentive or the structure which was available in the past. I think what Sebi has done is right. I think they have ensured that it's a fair play for all the brokers. The smaller brokers would obviously benefit, but bigger names like Angel One, 5 paisa, or for that reason, other broking houses like Motilal Oswal could get impacted, because obviously the volume incentive is now no longer going to be there, because it's going to be one, stable structure and one, rate which is going to be applicable to them. So I think in the very near term, you could see some selling pressure, and I think the impact of this could really be felt, in the second quarter of financial year FY25, because now I think with the volume structure going out, I think incentive structure obviously reduces. That is obviously going to eat into the margins. So short term, it's a negative for these companies. For the exchanges, I don't think it's going to be negative, because exchanges will not have that kind of impact. And as far as CDSL is concerned, you rightly mentioned, Agam, it's a depository, so I don't think it's going to have any impact on their business or any on their profitability at all. So I think CDSL definitely has gone down purely on market sentiment. And in fact, today the company is having its board meeting for the bonus issue, which I think the market is keenly awaiting.
Right, fair enough. On that note, Avinash, stay with us. We slip into a short break, and on the other side, we continue to give you all the market action. Back in just a bit. Stay tuned in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back to Hot Money. Aluminium, copper and zinc prices are on the rise in FY24. My colleague Mihika joins us with more stocks which are set to benefit from this price rise. Mihika, take it over.
Yes. So the metal stocks, more so the non-ferrous metal stocks are in focus today, and this is in on the back of aluminium, zinc and copper prices that have risen in FY25 so far. So according to an ICRA report, aluminium, zinc and copper prices have surged around 12 to 15% in FY25 so far. And what this does is higher prices could lead to better realizations for the company. And as per ICRA, it expects around 8 to 9% higher realizations for domestic entities in FY25. So let's find out how and which stocks that do benefit. Now this includes counters like Hindalco Industries, NALCO, which is the National Aluminium Company, Vedanta and Hindustan Copper as well as Hindustan Zinc. Now first up, let's talk about aluminium prices. Now according to the London Metal Exchange prices, aluminium prices are up 12% year on year during the April to June 2024 period, and this uptick is on the back of positive global cues. And when you talk about who benefits, well, up first we have Hindalco Industries as well as National Aluminium Company that could see higher revenues due to the uptick of prices. Vedanta could also see these gains, but it is key to note that alumina, which is a key component of the aluminium prices for Vedanta, are currently higher than the typical historical ratio, which could kind of negate some of the gains. Up next, we have copper prices. The copper prices are up 13% on a year-on-year basis as of June 2024, and these higher prices are firstly positive for Hindustan Copper, and we also have Vedanta and Hindalco that could see revenue gains from the uptick in prices. And when you talk about the market share of these three companies in the copper industry, kind of to give you a gauge on who benefits on a more higher basis, we have Hindustan Copper, which has 66 over 50% of market share in the industry in India. We have Vedanta, who has 23% market share, and Hindalco Industries, who has a 10% market share in the Indian copper industry, as per ICRA research. And lastly, we have the zinc prices. Now, zinc prices are up 20% annually as of June 2024, and the sole beneficiary in the Indian listed space is Hindustan Zinc, which is a pure play zinc producer.
All right, there you have it. That's the latest update from the metal sector. Avinash, based on these details and the kind of price action that we've seen in the commodity space, how are you placed on the metal sector, and what is your view here?
So I think, metal prices rising is definitely good news for most of the Indian companies, specifically, companies like Hindalco, National Aluminium and Hindustan Zinc. In fact, Hindustan Zinc should benefit significantly because it's a monopoly player in the space. And I think possibly, not only the June quarter, but for the entire financial year, we could see a strong spike in EBITDA margins as well as the overall profitability levels. So I think we need to understand that whether these prices are sustainable, Agam, because markets are volatile. We have been seeing that markets always give more premium to stability and continuity. And I think the cycle is now turning around. End user segments are also doing pretty well. So I think aluminum and zinc, these could be good bets. Of course, on the copper side, we have been hearing reports that there have been some selling also. Hindustan Copper was under significant selling pressure because copper prices were hitting new lows almost every day. So here possibly the uptrend could take a little bit longer. But I think Hindustan Zinc and Hindalco, I think these could be very good choices for investors who want to take a bet over the next, say, 6 to 12 months going forward.
All right. Well, fair enough, Avinash. But with that, we shift focus to the FMCG space. And we now have Mahima, who's joining us to give us an update on Patanjali Food. Mahima, over to you.
Right, Agam. So Patanjali Foods has agreed to, the company has approved the buying of the non-food segment of Patanjali Ayurveda. Now the cost of acquisition is set at 1100 crores. This signifies that the cost of acquisition is almost 2.2 times the EBITDA of the HPC segment of Patanjali Ayurveda. The entire amount will be transferred in 5 tranches, and the acquisition will be of hair care, skin care, dental care and home care business. The license agreement stipulates a 3% fee based on the turnover, and as of 31st of March, Patanjali Ayurveda owned 32.4% of stake in Patanjali Foods. Now what this means for Patanjali Foods overall, well, the financials of the HPC business which Patanjali Foods is acquiring, where revenue was around 2,770 crores, which will probably add 10% to overall Patanjali Foods top line, and EBITDA was at 496 crores. In terms of valuations, well, the net worth of Patanjali Ayurveda stood at around 7,800 crores, and the enterprise value overall is at 10,980 crores. So overall, EV to EBITDA multiple stands at 22.14 crores. Now, this compared to its peers, which are somewhat into the Ayurvedic business, include Dabur and Imami. Dabur has an overall EBITDA, EV to EBITDA of 48.6, and Imami has 44.7, and Imami has 32 EV to EBITDA valuation. But it is noteworthy here that both of these valuations are based on the whole company's valuation and not just the Ayurveda business. Now, in terms of revenue, well, the HPC business of Patanjali Ayurveda was around 2,700 crores. Dabur was at 2,200 crores when it comes to the consumer care segment, and Imami had a revenue of around 3,500. And lastly, in terms of profits, Patanjali's HPC business had an EBITDA of 496 crores, and Dabur's profit from the consumer care business was around 450 crores, and Imami's net profit stood at around 724 crores. So this is the overall view of how Patanjali is going to acquire the non-food business and what this means for the company.
Right. Well, thank you so much for all those updates and insights, Mahima. Avinash, what's your stance on a handful of these names? Of course, I'm not sure Patanjali Foods is on your radar. It's under your coverage. If you do have coverage on it, how are you viewing that? And in comparison, how do names like Imami and Dabur look to you?
No, I think, Agam, this deal is definitely value accretive for the shareholders of Patanjali. I think they get the non-food business at a reasonably good level at 2 times, EBITDA, and almost, I think 2,800 crores of top line gets added to the balance sheet, on an annual basis. And I think the most important part is that growing segments like dental care, skin care, health, hair care, all these segments are growing segments. So I think in a way, the promoter has actually given a decent valuation and has offered a kind of a growth quotient to Patanjali Foods. This impact of all these acquisitions, once they get accounted in the numbers, would obviously be felt in FY25. But I think today the stock has corrected largely because of the market sentiment. But otherwise, the deal is pretty good. Investors who want to take a 12 to 18-month call could definitely look at this company, because I think in terms of the revenue scalability, in terms of the product, popularity and the margins have been, in fact, in some cases better than Dabur and Imami. And I think overall, the company is also going to make a conscious effort to improve these margins. In fact, the company will be having a conference call and analyst meet today at 4 o'clock. So I think, markets will be very keen to know how the profitability levels are going to be scaled up going ahead. So I think net, it's a good deal. I think investors should obviously accumulate the stock with a long-term horizon.
Okay, there you have it. That's your review on the FMCG space. And well, on that note, we are out of time on this show. So taking a moment to thank Avinash for joining us and taking us through his views on the several themes that we wanted to address today. That is all that we have on this edition of Hot Money, but lots more lined up on the other side. Keep watching NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
Welcome to an exclusive conversation with Jahangir Aziz, MD and Head Emerging Market Economics Research at JP Morgan. Good evening, Mr. Aziz. Thank you very much for staying up for us on a sunny New York evening, but of course talking economics. To begin with, Jahangir, near perfect inflation data from the US. Soft growth, start of a new quarter, which will also see a lot of political activity take place in the West. We started the year with talking about 3 rate cuts. I think that has been expected and moderated down to maybe 2. Do you even think a single rate cut is possible over the next 6 months from the Federal Reserve?
So our baseline is that we have 1 rate cut this year, which is in November, but I think the data, particularly in the core inflation that you talked about in the last 2 prints, that has softened and is heading in the right direction in the sense that it is building confidence with the Fed that the disinflation will take them to their inflation target of 2% in the future. Clearly not now, but in the future. So I think they are getting more confident. At the same time, if you look at the labor market, which is their dual mandate, which is to keep full employment, that is doing remarkably well in the sense that you have the best of all worlds. You have very strong employment growth. We are expecting this Friday another 200,000 for the last month. But it's happening with the rising participation rate, helped a lot by immigration, which has kept unemployment rate at that 4% level and wage growth around that 0.2, 0.3 level. So I think the boxes that the Fed require to start the rate cutting cycle, I think are being ticked. The market now is looking at a September rate cut. I think if the data flows in that direction, that could well be a probability. But our baseline is that we are going to have 1 rate cut in November this year, and then 4 in 2025, another 4 in 2026.
Jahangir, do you feel like that 1 rate cut would at best be a token rate cut, or will it have a material impact in the way the Fed on the economy and, of course, flows are impacted? Because I still remember December last year, we were so optimistic and it was almost a given that the Fed would move with 3 rate cuts, and none of that's happened. And I feel like the same verbatim is once again playing out.
So I think, last time when we had these, in fact, the market was actually looking at even 5 rate cuts for 2024. I think there was a lot of enthusiasm given there was a very steep disinflation that was taking place. If you recall, we had about 3 quarters in with growth surprised you on the upside and inflation basically fell very sharply. And I think the first 3 months of this year was a rude shock in the sense that you did not get that disinflation. And I think that's when the market changed its views. But I think that, the same drivers more or less remain in the sense that goods inflation is the one that drove the disinflation back in the second half of 23, based on which we all got overexcited about, rate cuts. I think that goods disinflation part has ended. It was a reflection of the normalization from the post-pandemic disruptions. That more or less has come to an end. But services inflation, even back then, was sticky and remains sticky. There's very little that has happened to service inflation. So I think that, your concerns that are we getting into the place where, we are going to get excited about another rate cut, et cetera, not happen. Look, that well could happen. In fact, our view is that you will get rate cuts, but it's going to be a very shallow and prolonged rate cutting cycle in the sense that you are not going to get the kind of disinflation that you saw in the second half of last year. You're going to get very sticky disinflation going through, and that's because services inflation, which is where most of the inflation dynamics in the US right now remains, because goods inflation is basically flatlining at zero, is going to remain sticky and most likely for a prolonged period of time. So we are not looking for a very, very large, enthusiastic, deep, early rate cutting cycle. We are looking at a shallow rate cutting cycle that's get prolonged well into 2026.
Jahangir, just moving away very quickly from the US to what we've already seen in Europe, because that seems to be another bloc that's going through its own problems. ECB defied the US and moved with the rate cut in its last meet. What are your thoughts on that, and what do you think are the major risk factors for central banks globally?
So I think, our ECB basically had telegraphed that they were going to cut rates for 3 months back, right? So they had to cut rates. We expect one more rate cut in the remainder of the year. If you look at other central banks in Europe, the Swiss National Bank has cut rates. We are expecting the Bank of England to start rate cutting in August. But I think if you look at other developed market banks, I'm not talking about Bank of Japan, where the next move is going to be a rate hike. But all of them are pointing to this very shallow rate cutting cycle. This is not, even the Europeans are not enthusiastically cutting rates. The only people who had enthusiastically cut rates were the emerging markets in Latin America and in Central Europe, who had taken rates to astronomical highs back in 21 and in 22. But beyond them, almost all the rate cuts that we are looking at in terms of central banks are essentially much more shallow and prolonged rate cutting cycle, because the same dynamics holds, which is that goods inflation has come down, has brought down inflation from its high, but service inflation remains sticky, and it remains sticky almost in all of developed market world. In terms of the risks, I think the real risk is that, this very, very sticky inflation is going to make the rate cutting cycle very shallow. I don't think the benchmark for rate hikes is high in any of these developed market central banks. But I think that, for them to be able to cut rates deep enough, I think they really need to see, the service inflation, particularly, to be less sticky. And that, unfortunately, is, driven by very tight labor markets almost everywhere, and that seems to be the challenge at this point in time.
Right. Jahangir, let's move focus to Asia and emerging markets. With China's economy slowing, most people believe that India could be the fastest growing Asian economy. For good reason, right? Investments as a share of GDP in India is starting to rise. It seems like all stars are aligned for private capex also to start igniting. Do you feel like we are in a relatively better spot as compared to our peers?
So we are in a relatively better spot compared to our peers. The question is, what peers are you talking about? If you're comparing to Brazil and others, obviously we're in a much better spot, right? Look, China is clearly going through its troubles, and those are troubles are pretty much China-made, much more than, driven by global factors, etc. But if you turn to India, I mean, look, we keep talking about private sector investment picking up. Private sector investment, gapped down back in 2000 and just after the GFC in 2012 to around 12% of GDP. It's gone up and it's gone down a bit every year, but it's just very minor volatility. It almost remains stagnant at 12% of GDP. So at this point in time, I think we need to sort of step back from looking at cyclical reason as to why private sector investment has essentially remained at 12% of GDP. It has gone through bad banking sector crisis, and then good banking sector situations after the cleanup in the banking sector. So that is also doesn't seem to be the reason as to why private sector investment has remained stuck at 12%. We really need to step back and ask ourselves, is this driven by structural factors? And rather than keep looking for cyclical reasons as to, well, tomorrow it's going to go up or it's gone down this quarter because of this and reason. We've gone through this for 12 straight years, 15 straight years. And I think the time has come for us to step back and say, is it structurally, what is structurally going on with the Indian private sector that it just doesn't seem to be able to break that 12% of GDP barrier?
Right, Jahangir, and I want to take a cue from that because you do see the government very actively trying to boost exports, and a large chunk of it you'd imagine come from the private sector and hence boost private capex. We aspire to be a global manufacturing powerhouse, but India's contribution to global merchandise exports still only stands at 2%. So from the sound of it, we may continue to play catch up for the next couple of years, if not longer, right? Do you feel like that takeoff in manufacturing is still in very early stages, and we may be looking at a significant growth in capex only maybe 3 to 5 years out?
So again, these predictions and forecasts are very hard to make, right? But even if you look at foreign direct investment, right? So if you take foreign direct investment and you break it down into services and manufacturing, then manufacturing-related foreign direct investment never really exceeded beyond $12 billion a year, even when overall FDI investment had reached, I think, about 75, if I remember correctly, in 2021. That was a high point. It was services-related. So I think this idea that FDI or that kind of using India as a manufacturing hub is going to break. It might happen. I'm not saying it won't happen. But so far, the evidence suggests that we've had a very steady, manufacturing FDI for a long period of time. That has, again, withstood all the cyclical volatility of the global economy, etc. Services FDI is the one that really soared, prior to 2021 and 2022, and since then it has actually fallen. So if you look at overall FDI, that also has fallen. Now, the thing is that, FDI across the world has fallen. It isn't that it is only India or China. And it's very hard to make the argument that you're going to get FDI-related manufacturing or services investment when cash is still paying you 5% back in the US. So I think that, for India to break that mold, I think you need the financial conditions globally to normalize. Back to more normal state of interest rates and the cost of funding. And it's only then we will be able to say whether or not we are going to get the kind of investments that we need to get India out of, boost manufacturing and whether it's exports of services or exports of goods. But right now, I think across the world, investment is being held back by the fact that cash is paying you 5%.
Well, that's, of course, the investment piece of it. How concerned, Jahangir, are you with consumption? It's another space that we're not seeing a significant pickup in. We've also looked at some numbers, and while household savings seems to be coming off, interestingly, while you'd imagine India is doing so well and the economy is booming and stock markets are raging, but that's not reflecting in actual cash and consumption in that sense. Is that something you're worried about at this stage? Do you feel like we should be talking about this a little bit more than just focusing on the good picture?
So you can, I don't know how much, you should worry about it. But I don't think there is any puzzle as to why consumption hasn't broken 4% growth rate. I mean, that's really what seems to be everybody's sort of puzzle, quote unquote, that, well, growth is doing at 8%, why is consumption at 4%. Actually, if you look at nominal GDP in India, that grew at 9.5%. CPI, this is last year, CPI grew at 5.5%. So real incomes grew at 4%. Why would you expect consumption to be anything more than 4%? If you go back to the year previous to that, consumption grew exactly at the rate of real incomes. The year before that, exactly the same rate. So I think this is this disconnect between using real GDP as a sign of real incomes rather than actually calculating what the real income in India has been. So nominal GDP is nominal income that grew at 9.5%. CPI inflation last year was 5.5%. I know I'm repeating myself like a broken record. 9.5%. So real income grew at 4%. Consumption grew at 4%. I don't see any puzzle there. The concern should be, why did real incomes grow only by 4%? But that's not where people are focusing.
So, Jahangir, help us understand that if real GDP and real income is only growing at 4%, what do you think needs to be done in order to push the envelope of that?
No, 1 second. Real GDP by CSO is growing at 8%.
Right.
CSO also publishes nominal GDP, which is growing at 9.5%. The government also publishes inflation numbers, which is 5.5%. So if I'm earning if my nominal income has grown by 9.5% as per CSO, the price of goods have gone up by 5.5%, then the real purchasing power has just gone up by 4%. The question that needs to be asked is, how can an economy whose nominal growth rate is 9.5% and whose CPI or domestic inflation is 5.5%, if I gave you those numbers, you wouldn't jump to the conclusion that real growth is 8%, would you? You would say something different. And this is because of the way in which CSO calculates GDP. It deflates nominal GDP to arrive at real GDP. And it uses wholesale price index. The wholesale price index contains no service elements. It is almost entirely dominated by global commodity prices. So when global commodity prices in the year 23-24 fell, compared to 22-23 when the Ukraine war had pushed up commodity prices, you saw this massive increase in real GDP taking place because of CSO's methodology. And then we come with this strange puzzles that we ourselves create by saying, okay, listen, why is this growing why is real growth at 8% or 8.5% and consumption is at 4%?
Right, and we'll talk about that right after this break with the onset of budget in a few weeks. There's so much more in terms of expectations. Stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The first investment you should make is something that is not at all discussed and is not at all sexy. It's not mutual funds, it's not stocks. First investment that you should absolutely make is get a private health insurance.
Interesting.
Because most people, when they start off working, they have a corporate health plan, which they feel is sufficient, which in many cases it is. But at the same time,
Welcome back. We're in an exclusive conversation with none other than Jahangir Aziz, discussing everything economics. Thank you, Jahangir, for standing by and waiting for us to come back from that break. Jahangir, it's all eyes on the budget, and we've seen what happened in terms of the outcome of the election. Do you feel like the government could continue on its path of fiscal consolidation in the upcoming budget, given that there are expectations of higher spending on account of a coalition governance?
Look, I think these expectations are always going to be there, right? I think that you might see some spending going up in some social-related areas, but I think given this North Bloc and the team that has been doing the budget for the last 2-3 years, I think this is a team that actually believes in fiscal conservatism. So I'm not really that worried about the budget, being used for boosting growth or pushing the envelope on social spending too much. I think there will be some of it, but given the size of RBI's generosity, I think you will still be able to get India on a consolidation path. So maybe it won't be 5.1, it'll be 5.2 or 5.3. I think that's the kind of arithmetic I would expect the budget to deliver. But I think the consolidation path will more or less be met. Again, if you get that kind of spending power coming out of the RBI, you have a lot of leeway.
So fair to assume that you're not fiscally concerned in that sense then, despite these packages going out?
No. I mean, look, it's one thing to put out numbers and say, I'm going to spend this much and that much. There's also state capacity. You just can't say, I'm going to spend, another 5% of GDP on anything, I don't think very many people would want to believe this. But spending itself is difficult if you don't have state capacity to spend that money.
A quick word on what do you think of large land reforms? Do you think that's going to be challenging given the current government setup?
Look, I mean, if you look at not just India, right? If you look at most countries in the world, most of the big reforms are forced upon the country, or the countries use crises to use it as a way of pushing these reforms. Clearly, we're not in a crisis state. Therefore, all reforms are political choices. Now, whether it's a coalition or it's not a coalition, but a large majority, I don't think that really matters. We've seen governments in the past with coalition governments who have pushed through reforms, albeit it was done during crisis periods, but they have pushed through reforms. So my sense is that, beyond saying that these are political choices, I don't really have very much insightful things to say about that. But I don't really think the fact that it's a coalition or not a coalition matters as much as whether or not the government is willing to put its political capital behind certain reforms or not put its political capital behind certain reforms.
Jahangir, also we can't not talk to you about your expectation on rate cuts. Of course, we've talked about the Fed, we've talked about the ECB, the rate differential for India has to be maintained. So even if our data looks amazing and well placed, we mean very unlikely the RBI would move ahead of the Fed. Do you feel like one rate cut from the RBI is a given this year?
So I would say that they would more or less follow the Fed, and if the Fed obliges us with 25 or 50, I think the RBI probably has space to do 1 or 2 rate cuts. But the concern that I have about RBI is that if you look at core inflation in India, right? So you're looking at inflation less food, less excluding food, excluding fuel, and excluding transportation. This core inflation, which is sort of a measure of true inflation, so to speak, that has fallen for 9 straight months, and it is right now at its lowest it's ever been since the index in the first place was started back in 2012. So we are at 12-year low. Typically, when you have core inflation falling and continuing to fall and go to its lowest, that is usually a telltale sign that there is not only excess capacity in the economy, but that the excess capacity is widening. And this is something that is not reflected in any of RBI's policy reviews. That the RBI is looking at core inflation, it is looking at falling core inflation, it is looking at core inflation that has gone to its lowest, and it is not commenting on it. And that to me is disconcerting, because then the policy choices of whether to cut rates and not cut rates don't seem to be governed by the usual rules of monetary policy. And that's where my concern is.
Oh, thank you, Jahangir. We have loved to chat with you longer, but I think we've already overshot in terms of this conversation. But thank you so much. It's always such a pleasure to talk to you. We'll hopefully catch you post the budget.
Of course.
Well, you have a good evening, and we'll see you soon. Thank you very much. That was Jahangir Aziz in an exclusive conversation with NDTV Profit, highlighting the economy, the US, Europe, and of course, what lies ahead for India, and all eyes on that big budget that we're expecting shortly. With that, completely out of time. Thanks for watching.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
The good part of growth assets is that the more you have, the better your choices are, right? So nothing like money in the bank to sleep well at night, whether it's a medical emergency or that cruise you want to take. I think gone are the days where we think about a simple life in, a rural community. People want vibrant post-retirement lives with travel, with socializing with friends. Maybe you eat out a few times less, but should you see the Eiffel Tower while you can? I think you should. Asset allocation will change as you age, but certainly you need growth assets in your portfolio. You have a great year, you withdraw it, you go for a cruise on the Riviera. I mean, that's life, right? Most parents would like to leave something for their children, but I think that should just be a byproduct of what's left after you've done everything that you choose to do.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Benchmarks trade flat as banks ICICI Bank and Kotak Bank drag the index. Nifty trades above 24,100 while Sensex trades at 79,500 levels. Broader markets underperform. Sectoral indices trade mixed, dragged by financials and FMCG. Meanwhile, realty and IT emerge as top gainers. Brokerage stocks Motilal Oswal, 5 Paisa and Angel One trade lower as Sebi issues rules for market infrastructure institutions, including calling for flat fee structure, potentially reducing costs for investors and traders. Stellar debut on the bourses for allied blenders and distilleries. Stock lists at 13% premium to its issue price. Hello and welcome. You're watching Market IQ on NDTV Profit. I'm Smriti Chaudhary. Let's take a quick check of where the markets are currently at. You have the Nifty 50 trading very close to the low point of the day, down about 0.3%. On the other hand, you have the broader market indices also now in the red. You have the mid-cap index down about 0.7%, while small cap down also about 0.7% or thereabouts. So started off on a record high, but have now slipped into red. Let's pull up the sectors as well and see what's doing well and what's not. You have the Nifty, that's the Nifty IT, media and realty in green. Nifty IT trading above 1%. On the other hand, PSU a drag today, down about 2% in trade, followed by auto and banks. Even if you pull up the Nifty contributors, it's the heavyweights like ICICI Bank, Kotak Mahindra Bank, SBI, all the banks that's dragging the index down at this juncture, while HDFC continues to do well, contributing about 40 points or thereabouts. On the other hand, you have the IT names like Infosys doing well in trade, sector-wise as well. It's one of those sectors that's trading above 1% in trade. Let's pull up the advanced decline ratio. Now should be firmly in the favor of the bears now. Started off on a high, as I mentioned, and have now slipped into red. But some of the names that are buzzing today are the brokerage names like Motilal Oswal down in trade, Angel One down in trade. This comes on the back of a Sebi regulation that came in last night, asking these institutions and brokers to have a flat fee structure. And we'll talk about that in detail in just about a bit. But before that, the latest in Adani Hindenburg matter, Sebi has now alleged that Hindenburg colluded with Kingdon Capital to short sell Adani Enterprises and has issued a show cause notice to the short seller. My colleague Sajit Mangat joins in to give us those details. Sajit, what are you picking up?
That's right. The market regulator, Securities and Exchange Board of India, has sent a show cause notice to Hindenburg and to Kingdon Capital or Mark Kingdon and his entities, which is a foreign investor based out of Mauritius, for alleged violations in the securities laws with respect to shorts created in Adani Enterprises. The regulator in his investigation found that short selling began much before the Hindenburg report was made public by the US-based short seller. It also said that as part of the entire setup, there was an Indian entity, Kotak Mahindra Bank, whose arm created and structured the entire fund so that money can be channelized from Mauritius to India and into the Indian markets so that it can be short. Adani stocks can be short in the Indian market there. Adani Enterprise was the only stock in the derivatives market, and so the shorts were done in Adani Enterprises, which began in almost at the beginning of January of 2023. The account was set up by Kotak in between Jan 5th to Jan 10th, and on Jan 10th the first shorts came in from Kingdon Capital or the K Fund as it's called, which is the vehicle through which Mark Kingdon's entire entities invested into the Indian markets. As per the agreements which have been found by Sebi between Kingdon and the Hindenburg, the entire thing began as November of 2022, when the draft report of Adani was shared with Kingdon, and based on that there was an agreement which was agreed that there will be a profit sharing of nearly 30% based on the shorts gains from the shorts that will be shared between Hindenburg to Hindenburg by Kingdon. What followed was that the entire setting up of the account or the fund by Kotak was delayed. There was a cost involved to it, as a result of which this profit share from 30% reduced to 25%. But it did continue, the profit share did continue after that. Hindenburg came out with a report on Jan 24th. As per the investigation undertaken by Securities and Exchange Board of India or Sebi market regulator, the short began on Jan 10th. Kingdon entities began shorting on Adani Enterprises. They took a position of nearly 8.5 lakh shares. These shares continued for the month of January till Jan 28th, and thereafter it was rolled over to the next contract, which was a February contract. Kingdon knew about the fact that there could be a report coming out soon, and so that's the reason why the entire shorts were rolled over to the next month. And on Jan 24th, when the entire public report was made public, there was a decline in Adani Enterprise shares, which fell as much as 59% from Jan 24th to February. And that's when the profits were taken by Kingdon. Kingdon started squaring off the shares in early February onwards, between February 1st and February 22nd, in thereby getting a return of or profit of nearly 183 crores from the short sales which they gained, and of that 25% was shared with Hindenburg. Further, what has happened is that the entire entity or the vehicle through which it was done, it was undertaken by Kotak Mahindra Investment Limited, which is KMIL. Hindenburg has gone on record to say that the Sebi investigation report does not take any action or mention of Kotak vehicle, which was used to structure the entire investment, but it has been Hindenburg and Kingdon has been targeted as part of this show cause notice there. So if you look at the modus operandi of how it has gone through, the draft report was shared by Hindenburg with Mark Kingdon in as early as November of 2022. Hindenburg waited for Kingdon to set up an account with the help of Kotak. This trading account came up between Jan 5th and Jan 10th of 2023. Hindenburg and Kingdon then agreed to share profits in the ratio of 25%. It was earlier 30%, then got reduced to 25% due to cost and time overruns. And then the report was pre-planned to coincide with the follow-on public offer of Adani Enterprises, which was underway at the time of the report release. Adani Enterprises completed the FPO, but then had to withdraw the FPO and give the money back to the investor because to safeguard the investors there. And the best part is that Hindenburg claimed that it had no association with any Indian securities market, but the investigation by Sebi revealed very clearly that despite this disclaimer, there was a profit share agreement between Kingdon and Hindenburg for the profit that it would earn from the Indian market after shorting Adani Enterprises there. So India Fund was created especially for trading in Adani Enterprise script by Kingdon. That fund did not have any other investment except for Adani futures shorts which were created through that. Also, the fact is that if you look at the kind of profits which have been garnered by these entities, Hindenburg traded in the bonds of Adani in the overseas market, which is outside India. They got a net loss of that, and this trading which happened was between November 2022 and March of 2023. Bonds traded were in Adani Electricity, Mumbai, Adani Green Energy, Adani Ports and SEZ. These three bonds, but for trading in bonds, they had a loss of nearly $5,000 odd, which is there. But where it gained was trading, taking positions in the ETF, which is exchange traded funds, and the MSCI India Index, where it went short from January 24th onwards till the end of February, and in the process Hindenburg got a profit of nearly $9.2 million. So if you look at the total positions which were created, it was more than $43 million of positions which were created. But and gains were roughly around $22 million, which was there, of which 25% was shared with Hindenburg. So Hindenburg got a profit of nearly $14.5–15 million from this entire transaction, and Kingdon Capital, which is a foreign Mauritius-based FPI, got the remaining profits.
Right. Thank you so much, Sajit, for those comprehensive details, and we'll bring you more details through the day. But let's circle back to non-lending financial services companies like Angel One, Motilal Oswal that are taking a hit today. Now, this comes after an important update, like we talked about, how Sebi came out, has introduced new guidelines for the exchanges to ensure fair and transparent fee structures. Now, this may potentially reduce costs for end clients such as investors and traders. My colleague Charu joins in to talk more about this and tell us about the impact of these regulations.
So, the Security and Exchange Board of India, upon examination, found that some of the exchanges, some of the members of these exchanges use a volume-based slab structure where the fees that they are charging the end clients, which are the investors and the traders, daily is much higher than what they are paying back to their market infrastructure institutions, that is the exchanges, on a monthly basis. That is why new fairness and equity-based guidelines have been introduced that are to be followed. Now, these can be seen majorly in three ways. Number one, that to ensure fairness, what is going to happen is that they have to ensure that volume-based system is going to be discredited and only a flat fee structure is going to be taken up, after which that volume and the size and the activity of the member is not going to be considered. It is going to be equal for all members. Then true to label is the second criteria, according to which the fees that is going to be charged by the exchanges is going to be the only fees that is charged on the traders and the investors by the members, no hidden or extra charges. And lastly, the current existing system of per unit charges is going to be considered so that a fair charge is being levied on the end clients, which are the traders and investors, and they will also have to potentially pay a lower fees. And finally, the market infrastructure institutions have to amend their rules and see if they have the infrastructure and the means of implementing it, and then report to the market regulator that they have implemented the same.
Thank you so much, Charu, for those details. While the magnitude of the hit that these brokers will take is still a bit unclear, but the market is not forgiving. You look at Angel One, down about 8.5%, IFL Securities down 5%, and Motilal Oswal also down about 4% in trade. But let's shift focus to the auto space. Now, Puneet joins in with a roundup of auto sale numbers for the month of June that were released last evening. Now, Puneet will tell us who did better and who did worse. Puneet, take it away.
So a lot of interesting trends that have come up out of this month, which was expected to be largely subdued and quiet. So one of the major things is Hero MotoCorp, which came out after the market close. It reported a 15% sales growth versus expectation of a fall in this particular month. So that's been a very positive surprise. The other one is, of course, it came slightly at the end was Tata Motors, another one which was very disappointing. The numbers, the passenger vehicle sales were down 8%, while for commercial vehicles the sales have been down roughly 7%. A similar trend has been seen in Ashok Leyland as well, which came in during market hours. Another key surprise here was also VECV, which is the commercial vehicle arm of Eicher Motors. It reported a positive 10% sales growth, the only one in the commercial vehicle space to actually show some growth in this particular month. Also TVS, which has been coming at roughly 5% growth in sales. Now this is slightly lower than the 9 to 10% expected, and potentially they have lost some share in the premium motorcycle segment, and that's possibly because of Honda, where the supply chain issues has been resolved. We saw a similar impact of Honda supply chain issues getting resolved on Bajaj Auto as well, specifically in the 125cc segment, that they could have seen some particular pressure. When you look at the top three winners of this particular month, it has to be Mahindra and Mahindra, definitely outperforming by 22% growth, highest across segments. The second one is, of course, Hero we spoke about, and Maruti as well, showing roughly 12% sales growth in this particular month. What's interesting is this rural theme play of Hero and Maruti has shown some interesting trend in this month. We'll definitely deep dive, as this is the last month before the Q1 earnings. So a lot more detail into what led to this particular. It could be the elections, could be the freebies, we never know, but the exact reason, while we will deep dive into it, will be interesting. The three biggest losers in this particular month has to be Tata Motors, passenger vehicle as well as commercial vehicle, down 8 and 6%, and Eicher Motors was down 5% in this particular month. So overall, rural theme playing, Mahindra continuing its outperformance, and a few select outperformers such as Maruti, Hero as well as Eicher Motors CV. Back to you.
Thank you so much, Puneet, for those details. While Mahindra and Mahindra is now off the high point, and so is Hero MotoCorp, both in red. But let's move to the metal space now. Aluminium, copper and zinc prices are on the rise in FY25. My colleague Mihika joins us with which stocks are set to benefit from this price rise. Mihika, take it away.
So the non-ferrous metal stocks are in focus today, and this is on the back of aluminium, zinc and copper prices that have risen in FY25 so far. So according to an ICRA report, aluminium, zinc and copper prices have surged around 12 to 15% in FY25 so far. And what this does is higher prices could lead to better realizations for the company. And as per ICRA, it expects around 8 to 9% higher realizations for domestic entities in FY25. So let's find out how and which stocks that do benefit. Now this includes counters like Hindalco Industries, NALCO, which is the National Aluminium Company, Vedanta and Hindustan Copper as well as Hindustan Zinc. Now first up, let's talk about aluminium prices. Now according to the London Metal Exchange prices, aluminium prices are up 12% year on year during the April to June 2024 period, and this uptick is on the back of positive global cues. And when you talk about who benefits, well, up first we have Hindalco Industries as well as National Aluminium Company that could see higher revenues due to the uptick of prices. Vedanta could also see these gains, but it is key to note that alumina, which is a key component of the aluminium prices for Vedanta, are currently higher than the typical historical ratio, which could kind of negate some of the gains. Up next, we have copper prices. The copper prices are up 13% on a year-on-year basis as of June 2024, and these higher prices are firstly positive for Hindustan Copper, and we also have Vedanta and Hindalco that could see revenue gains from the uptick in prices. And when you talk about the market share of these three companies in the copper industry, kind of to give you a gauge on who benefits on a more higher basis, we have Hindustan Copper, which has 66 over 50% of market share in the industry in India. We have Vedanta, who has 23% market share, and Hindalco Industries, who has a 10% market share in the Indian copper industry, as per ICRA research. And lastly, we have the zinc prices. Now, zinc prices are up 20% annually as of June 2024, and this sole beneficiary in the Indian listed space is Hindustan Zinc, which is a pure play zinc producer.
Thank you so much, Mihika, for those details. Now, another stock that is buzzing today is Patanjali Foods. Stock is in red. If you can pull up the chart, down about 4% in trade. Now, the board approved acquisition of Patanjali Ayurved's home and personal care business for 1,100 crore rupees. The amount will be paid in 5 tranches. Remember, Patanjali Ayurved owned 32.4% stake in Patanjali Foods. In fact, my colleague Sesha spoke to Sanjeev Asthana of Patanjali Foods and began by asking about the funding plans and when the company expects to conclude the deal. Here's a slice of that conversation.
The deal will be entirely funded through the internal, sort of from the balance sheet itself. And we've got adequate cash on the books. We've got a lot of very good free cash flows to fund this acquisition. And in terms of the timelines for the approval, we require certain regulatory approvals and the shareholders' approval. So that process we will immediately begin hereafter. And I'm expecting that the deal should get consummated hopefully within 4 to 6 weeks' time, subject to, of course, all the regulatory and shareholder approval.
All right. As per the press release, there are several key synergies that has been spoken about, be it cost optimization, product innovation, and even on the revenue and market share. Could you quantify what would be the direct impact on the revenues and also about the market share? What is the plan? How much market share do you wish to capture post the acquisition?
So the plan is very clear that on the revenue side, our stated target is very well defined, that we've said that we're going to grow at 15% year on year. And our past track record of the 2 acquisitions that we did on the biscuits and the food side, which have grown by 60 and 50% respectively over 2 years, we are targeting a 15% aggregated blended growth of the entire FMCG portfolio. On the side of what the synergies are going to have an impact, so our stated intent and the target which we have set internally, we should be able to add 200 basis points to the net income, both by way of cost optimization that we do in terms of the rationalization at the ground level through the sales force optimization that we're going to work on, supply chain efficiencies that we're going to bring in, and as well as the overall benefit of scale that tends to give the benefit. So on the acquired business of the HPC that we are going for right now, we believe that we should be able to add 200 basis points to the income over next 18 months.
Well, let's slip into a short break now, but don't go anywhere. We have lots more lined up for you on the other side. Stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Welcome back. You're watching Market IQ on NDTV Profit. Prime Minister Narendra Modi today addressed NDA MPs for the first time since he took over in a parliamentary meet. The meeting was attended by the top BJP brass. Amid other discussions, one key takeaway was PM's proposition to other MPs. He asked them to maintain the decorum of the Lok Sabha. This comes after the massive ruckus over the NEET paper leak scam, among other issues. NDTV's Sunil Prabhu joins in with what transpired at the meeting.
Well, as you rightly pointed out, it is an occasion for the Prime Minister to actually meet first time the NDA parliamentary party meet MPs. Earlier it used to be the BJP parliamentary party. It's now been replaced by the NDA parliamentary party because they, unlike the 16th and the 17th Lok Sabha, where they had an absolute majority, now they are dependent on allies like Nitish as well as Chandrababu Naidu, and their parties were also present along with the NCP and others, Ajit Pawar's camp. So the Prime Minister once again trying to say that parliamentary democracy must be kept. As you rightly pointed out, yesterday was a stormy session. It had started off with the debut speech of Rahul Gandhi, who took on and made a frontal attack on the Narendra Modi government. They have not been used to a leader of opposition in the 16th and the 17th Lok Sabha. And in the same breath, there was a counter attack from the Prime Minister to the Home Minister to the Defense Minister to the Environment Minister to the Parliamentary Affairs Minister to the Agriculture Minister to respond to various points that were raised by Rahul Gandhi. I think in that sense, the Prime Minister telling members of Parliament to ensure that parliamentary procedure is kept in mind. Today, the Leader of Opposition has written to the Speaker for why his remarks have been removed and expunged, and pointing out that on the other side, Anurag Thakur, who made a number of allegations, not one remark of his, only one word has been expunged.
Right. Thank you so much, Sunil, for those details. Now, monsoon continues to wreak havoc and Delhi is no exception. In the latest on the airport roof that collapsed in New Delhi, NDTV has reported that the Aviation Ministry has asked IIT Delhi to ascertain the cause and submit the report in 1 month. The government even asked for a third-party structural audit of all Airport Authority of India airports to be concluded. The unfortunate incident that happened on June 28 caused the death of 1 person and injured 6 people. In fact, reports say that the airport's main domestic terminal will likely remain closed for a few weeks. And that's all that we have on this edition of Market IQ. Don't go anywhere. We have lots more lined up for you on the other side. Stay tuned to NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The good part of growth assets is that the more you have, the better your choices are, right? So nothing like money in the bank to sleep well at night, whether it's a medical emergency or that cruise you want to take. I think gone are the days where we think about a simple life in, a rural community. People want vibrant post-retirement lives with travel, with socializing with friends. Maybe you eat out a few times less.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. Like the name suggests, this show gets you actionable insight so that you can make your investments into mutual funds with confidence. Now, there's something of it's a statement that is made quite often about large cap actively managed funds. And in case you're not familiar with the distinction between active and passive funds, it's essentially an active fund is where there is a fund manager that decides on the portfolio of stocks that a scheme invests in. Whereas a passive strategy would simply mirror a benchmark, something like a Nifty 50 index fund. Now, the statement that I was referring to is that actively managed large cap fund managers don't manage to beat the benchmark very often. And it doesn't make sense to go whole hog and invest in these schemes. Instead, a lot of people say, a lot of advisors say that you're better off investing in passive funds because the cost involved is significantly lower. But the thing about it is that over the last 12 months or so, most actively managed large cap funds have managed to beat the benchmark and by quite a large margin. What are the factors that contributed to this? And does this mean that you should change the approach that you might have been following where you are investing in passive large cap mutual funds? Joining me to talk about this in more detail, I've got Santosh Joseph, the founder of Germinate Investor Services, and Nikhil Kothari, Director of Etica Wealth. Thank you so much to the both of you for taking the time. It's quite an interesting subject because I would think that a lot of these fund managers would have felt quite hard done by with the kind of criticism that they've had to face over the past several years. But it's been a great 12 months for them. Santosh, first to you, what are the factors, according to you, that have led to the outperformance and quite a degree of outperformance at that?
To begin with, I think it's a huge relief for the people who believed in the active managed large cap space. And it's an interesting time right now to look back and say, they were not wrong. And for many of us who were thinking that passive was the only way to look at large cap, I think it's proven that good active managed funds, have come back and have come back really well. Now, I think there are more reasons than just one that has led to this. One is that in the last 2 to 3 years, the large cap as a space was getting reasonably, and from a valuation perspective, more reasonable. it became a point where investors found a lot of value there. Second is that I think fund managers over the last 2 to 3 years understood that, the skew that was present in the index was slowly reducing. And therefore, there was an option for them to really, prove how active large cap funds could perform. Now, not to forget that large caps are a lot more stable, and therefore you have a lot more legroom to do some good work there. And the mean reversion between the market caps also helped. A combination of all these factors has brought the whole active large cap space back in action. And it's a great time for large cap investing, both from a valuation perspective, both from even the way one wants to take a call today on the market. It's a great opportunity.
And just to point out the degree of outperformance, we're talking about 20 plus out of the 30, 21 out of the 30 actively managed large cap schemes that have outperformed over the last 12 months. And on top of the list, if we can pull up that, in fact, let's talk about which schemes have outperformed. GM large cap to the extent of 14.3% outperformance, percentage points, I should say. Quant large cap fund as much as 12.5 percentage points. Bank of India blue chip fund, Baroda BNP Paribas large cap fund, and Nippon India, something of a common name in that top 5. It has more or less been in that ranking for quite a while. But Nikhil, you want to add to what Santosh has already talked about? Usually when we're talking about the degree of outperformance in large cap actively managed schemes, they're not to the extent of 14 plus percentage points, right?
There's a couple of factors what lead to outperformance. So whenever you have what are the index large cap heavyweights? You have Reliance, you have HDFC Bank, you have TCS. Now, if you look at last 1 year performance, TCS has been underperformance to the Nifty. HDFC Bank has rather it's a negative return over the last 1 year. So whenever there is an index heavyweight, okay, underperforms and when the narrow index heavyweight underperforms the large cap index itself, the fund manager has a liberty to buy stocks across the band. And whenever there's not a narrow rally, when it's a broad-based rally, the active managed fund will be able to outperform the index. Okay, so the reason primarily was that a lot of the heavyweights underperform the index, and fund managers were able to outperform because they have a broad-based. They're not limited to few stocks. They have a broad-based rally. Second thing is that in last 1 year, mid cap and small cap has outperformed substantially as compared to large cap. So when you're talking about few of the funds when they have outperformed substantially, the reason is that in a large cap fund manager is supposed to have at minimum 80% large cap, and he has some leeway to get in some mid cap and small cap stocks also. So whereas some fund managers have able to take some part of, like not a substantial part, but even if a small part of the exposure in mid cap names or beyond not Nifty top 100, then the outperformance, the alpha generated by that particular stock lead to overall outperformance. So considering that this will be a normal norm, I won't agree to that, because whenever the rally is a broad base, active managed fund would be able to outperform. But whenever the rally is narrow based, like if you look at last 1 month, okay, most of the active managed funds have underperformed the index, because in last 1 month, Reliance, HDFC Bank, both have, and TCS all have given a better return than the index. So if you look at last 1 month, active managed fund will underperform the large cap. So this story will keep on changing every now and then, but predominantly the last 1 year has been broad-based rally. Mid cap and small cap have outperformed the large cap, and that's why you see substantial outperformance over the index.
Okay, just an add-on to that, and maybe, gentlemen, we can speak about the stocks that these individual funds have bought and sold as well, and bought in particular, because my colleague has done a very interesting piece. It's available on the website, and the headline is, and I'm reading this out, these stocks led large cap funds outperformance last year. And we've looked at the 5 top performing large cap schemes, and we looked at the commonalities in the portfolios, right? So you have HDFC Bank, which is held by all 5 of those top performing, and I read out that list of schemes, right? You have ICICI Bank that is also held by all 5, and NTPC, which is held by all 5. Incidentally, the 1 year return of ICICI Bank is 29.5%. NTPC has returned nearly 95%. It's a doubler. So all of these schemes holding NTPC have benefited quite significantly. And then you have the likes of State Bank of India, which has gained about 47%, which is held by 4 of those schemes. You have Larsen & Toubro, which is up about 42%. And you also have Reliance Industries, which, by the way, has gained about 35% in the last 1 year. So
What about the churn? Because out of the 5 schemes that we're talking about, Santosh, Quant is the only one that historically churns quite a bit and has churned. But something like a Nippon India has the lowest churn, but it has managed an outperformance still. So it's not really about the churn.
So Alex, it's a good point that you just mentioned now about the performance of the stocks in itself. So that leads us to 2 very important categories. Number 1, active deselection. Now, if you actively from the index deselected a particular stock that was a part of the index but not a part of large cap, your chance to do well. Second was active weight management. Now, this is where we'll answer your question over here, whether it's Quant or Nippon, whether there's churn or no churn, the weights really mattered. For that matter, if you reduce the weight of the stock from the index to the fund, thereby increasing the weight of the other stocks which are less on the index but high on your fund, straight away you had scope for performance coming into the portfolio. So I think Quant has taken the approach of active churn, whereas Nippon has taken the concept of active weight management by deselection of the stock. A classic example, ICICI Bank versus HDFC Bank. Both are large private sector bank. ICICI, as your numbers showed, was 0.02. Sorry, HDFC was 0.02. ICICI was in a good double-digit return. So having ICICI over HDFC was straight away giving you an edge to outperform. Likewise, NTPC and Axis Bank, the numbers are showing on your screen. It was an easy call if you just chose the right stock within the large cap index.
Point. All right. So why don't you take that forward, Nikhil? Do you have something to say about the underlying? Because PSUs as a theme has played out quite significantly. NTPC, I was mentioning, 95% return, and the top 5 all hold it.
Yeah, so see, as Santosh rightly said, so now from the fund manager perspective, they need to keep on actively managing the weight across the stocks and the sectors. Now, PSU has rallied quite a lot, and so in that way, fund manager has, I'm saying from a valuation perspective, they're slightly expensive as compared to the historical averages. So fund manager need to moderate the exposure incrementally and then start looking at stocks which is not perform. So if you look at, as I discussed in last 1 month, HDFC Bank, TCS, Infosys, all has given very good return as compared to the broader index. So that's again, to continue the outperformance, fund manager would have changed the allocation from the good performing stocks in the last 1 year to now the stock which is not performed, and they've changed the weight allocation accordingly. If they've done that, then the outperformance will continue over a period of time.
Okay. Okay, I was going to come to that question, Nikhil, and I'm glad that you pointed that out, if they do this. But Santosh, in the past, if we look at, particularly if we look at the rolling returns over the long period of time, then what we've seen over the last year, that argument kind of evaporates, right? It's not something that we've seen consistently. So therefore, is this outperformance likely to continue based on what you're seeing right now?
So Alex, you're right. When you look at a 10-year base of returns, of rolling returns, and even a 10-year point-to-point return, the large cap funds are still very closer to the index, and therefore the argument of passive, low cost all comes into play. But let's, for a moment, stop and pause and say, why are we doing large caps? We do large caps because we want stability in the portfolio. We want to access that bit of the market. Even though sometimes the performance may be weak, you cannot miss or escape the largest companies in the stock market. The third part is, if you are someone who's going to be in large cap for a long period of time, then there are better ways to manage the whole large cap through, let's say, a flexi-cap or multi-cap than a standalone large cap. That is, if you're going to be a really, really long-term investor. The numbers actually for the last 1 or 2 years are in favor of large cap active funds, which I think there's reason to believe that it could even be extrapolated for a few more years to come. But the answer lies in what is your requirement of being in large cap funds. Don't mix the outperformance that we are seeing right now with the need to be in large cap funds. I think large caps are integral to any portfolio. They add stability. They add a lot of purpose to investing in these large cap funds. So I still believe that active large caps, whether you do it through a large cap fund alone or a multi-cap stroke flexi-cap fund, it's an integral part. You can't miss it out. This short-term outperformances are something that you enjoy over the course of time, but you don't miss out the large cap performance. In fact, if you look at flexi-cap, on average, most flexi-cap funds are 60 to 75% large cap, and even there the performance has been brilliant.
In fact, I was going to come to that question. Why don't I ask Nikhil what he thinks about this? Because a lot of people buy Flexi-Cap because of the, no restriction on 80%. That threshold is not there. But it still tends to be more large cap, as Santosh has pointed out. So why don't you hold that? And I would hazard a guess and say, I haven't looked at the numbers, but I'm quite sure that quite a lot of Flexi Caps have beaten even what the large caps have had to offer, right? So why not buy Flexi Cap?
Yeah, so from a individual investor's perspective, I think Flexi-Cap makes better sense than a pure large cap fund, because the fund will have a liberty to add some mid cap and small cap in the overall portfolio, but still there still be biased towards large cap. So from a recommendation perspective, I'll say Flexi-Cap and multi-cap funds make a better sense as compared to buying pure large cap. But if someone wants to buy pure large cap, then I'll say he should have a combination of passive as well as the active funds. So you can have a core part of your pure large cap in passive and one active funds in the portfolio. But otherwise, from a retail investor's perspective, they should either opt for Flexi-Cap or a multi-cap, because they will have exposure across large cap, mid cap, and small cap.
Okay, that's a fair point, because again, that was going to be a question that I was going to ask, which is the passive strategy. That doesn't change, right? So, Santosh, would you still prefer going, in the ordinary, and I'm not talking about what individual investors should do, everybody takes their own call. But if you were to advise somebody and somebody comes and says, Santosh, look, there's been a significant outperformance for actively managed, should I change the strategy that I've had, which is to invest in low cost, large cap passive funds? Should I do that? And second, if you are advising somebody about a passive strategy, would you say go for Nifty 50, which is what most people do? But is that enough? Because ultimately, if you study the benchmark that most of these actively managed funds operate on, it's not the Nifty 50, it's the NSE 100. It's the benchmark that has 100 stocks.
The Nifty 100. So you're right, Alex, it's a very good question. For people, this becomes the most easiest part to solve, because you want large cap exposure. We just spoke that large cap exposure also can be achieved through Flexi-Cap. Now, for the people who are in active versus passive, I think you have a great case going here to have both a combination of passive and a combination of active large cap exposure. It's not one or the other. It's not that I'll just shift right now because there is a case of outperformance. But I think the minute you know that you want to have a good bedrock of a large cap into your portfolio, a combination together will work even better. Let's take a classic example. Just the last 1 year or 2 years, if you had a combination of both the active and the passive, you got the best of both worlds. Why do you have to just choose and then worry about should I move from active to passive? And you can have both in that space and benefit from both. So taking an example over here, between the index and the large cap, the combination would have given you maybe 5 to 10% absolute better return than just going on any one strategy.
Yeah, that's a fair point. All right, gentlemen, we have to slip into a very quick break, but there are a few viewer queries that have come through. And by the way, I would like to pull that up on the screen if we can, the WhatsApp number that we've got, so that you can send your questions there. There you go, it's flashing on your screen. If you've got questions related to mutual funds, then I would invite you to send them to us on that number and we'll take them up. If not today, then over the course of this show, which is live every market day apart from Friday at 1:30. Do stay tuned, we'll be back after this very quick break.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Welcome back. You're watching the Mutual Fund Show, and we've had quite an engaging conversation about the outperformance of actively managed large cap schemes over the course of the last 12 months. We've spoken about the reasons why that took place, and we've also spoken about what your strategy should ideally be. Now, we have invited you to send us your queries, and some of you have, in fact, sent your queries. And I'm going to take the first one from Pragyan. Pragyan is 45 years old. And incidentally, he's speaking about the topic that we discussed today. He's asking what are some of the best large cap funds that can work well in the long run. And I hope that Pragyan has watched the rest of this show, where both our experts have said that if you are venturing into the large cap space, the best approach would likely be to have a combination of active and passive. So to that end, Nikhil, what should the approach be here?
It will be a combination of passive as well as active. So I'll say from a passive fund, you can look at Nifty 100 as a one index, or you can look at Nifty large cap momentum index also. And with that, you can add one active fund, which maybe I say DSP top 100. So combination of a large cap active managed fund as well as the index fund should make a good sense on the long term perspective.
And just to follow up, and this is my own question, I wanted to ask this earlier, but it slipped my mind. Santosh, so we have spoken specifically about the category of large cap, but then if we talk about outperformance of the broader markets and therefore the outperformance of mid cap and small cap, and if somebody has seen their portfolio skew, based on what you've seen tactically, would you shift some out of the broader market funds into large caps? Because that's ultimately what I think a few fund managers have also started talking about and have done over the last few months.
So the part is how much do you want to move out? Because even though it's a large cap fund, and Nikhil had alluded to this a little earlier, you do have that 15-20% leeway to be in the broader market. But if your portfolios got a completely different mix in the last year or so, right now I think is a great time to readjust that and rebalance it. And see, another merit that we have whenever the markets keep moving like this and creating a dispersion in terms of return is always use the opportunities that the market presents to readjust your portfolio, rebalance your portfolio. So therefore, if you're too much into the mid cap and the small cap and you'd like to get this auto course correction, it's a great time right now to do it. And therefore, the most important aspect of this rebalance that you will do is to keep your portfolio in good shape, even as the markets keep dynamically moving.
Speaking of opportunities, we have two funds which have opportunities in them. Asta has got this question. She's 25 years old and she's looking at two thematic funds, SBI Automotive Opportunities Fund and SBI Consumption Opportunities Fund. As the name suggests, one relates to the automotive sector, and the scheme ultimately is trying to benefit from the prospects of the automotive sector in India, which, as you know, is a growing market. And the Consumption Opportunities Fund, as the name suggests, is looking at utilizing the theme that has been playing out in India. Of course, in the recent past, consumption has not done too well, but it is talking about per capita growing, etc., etc. What should you do if you're talking about this? I believe this is Asta's query. That is right. So, Santosh, what's the view here?
So, Asta, considering your age and your obvious choice to pick up the most flavored thematic fund of the period, which is SBI Automotive and even the SBI Consumption Fund, please remember that if you're going to invest in this fund, you're getting into a thematic exposure, and therefore you have to have really a long-term perspective. Now, in some case that you want to begin with these funds, you might as well could go ahead, but please remember, avoid only thematic or sectoral funds, because though these may do very well in the medium to short term, there will be cycles that these funds will go through. It's always better to build a diversified, a multi-cap to flexi-cap strategy to build your portfolio, especially since you're starting young. There's nothing wrong with this, but remember, a diversified portfolio will help you navigate the market cycles way better than just a flavor of the season or the most opportunistic fund for the given moment.
Okay, that's a fair point. Would you say, so there are some people that have said that you can stretch your thematic allocation, not sectoral, thematic allocation to up to 20% of equity. Is that too much according to you, or do you think it's fine if you're well diversified?
So that's fine, because today it's not sectoral but thematic, and each team has got multiple sectors playing in that. Today we've realized that every theme that the fund is representing has actually got a 200, 250, sometimes even 300 stocks in the universe. So it's not a skew. But also remember, it's still a theme. So if you add 5, 6 good dominant themes, maybe you're as good as a diversified fund. But the fact is, your opportunities play better in a diversified fund than in a thematic.
That's a fair point. The next question is from Reema Singh, who is aged 30. Wants to invest a bulk amount or lump sum of 1 lakh rupees and was considering the Quant Small Cap Fund direct plan, not looking to diversify and targeting return of 30% over a year. I mean, there's a lot that can be said about this, Nikhil, but what advice would you give?
See, my only concern in this whole query is the return expectation, and which is 30%. So your return expectation is completely biased towards what has happened in last 1.5 years, right? So people should be very aware of it, that markets goes through cycle. In the last 1.5 years has been amazing for Indian equity market. You may have a consolidation phase also. You may have a periods when there would be no return for next 2-3 years also. So what investors should be aware that over a long period of time, what you can expect from market is 12 to 15% year on year, and 30% is too high expectation from the market, right? The small cap funds have done reasonably well in last 2 years, but right now their valuations are slightly stretched. So investing lump sum money in the small cap, you have to have a minimum horizon of 5 years, and your return expectation has to tone down to 12 to 15% and not 30%. If you are fine with 5-year horizon and return expectation of 15%, then you can well go ahead and invest in this fund. But if your return expectation is 30%, I'll say you may get 30%, or you may make negative return also. Be aware of that.
Yeah, broaden your time horizon. The last question is a very interesting one, purely because of the quantum that is involved. And this one's for you, Santosh. We got Brijesh Patel at the young age of 33. He's got 5 crore to invest over the next 5 years. And he's expecting 24 to 26% returns over that period. I'm assuming this is not point to point. He's talking about annual returns. And he's asking what the best course of action is. Should he invest in mutual funds or stocks or both?
So, Mr. Brijesh, this is it almost looks like a WhatsApp forward where people promise you high returns. And so my advice to you is please have a realistic expectation. Markets have been very rewarding to investors, and these kind of returns have been made. But to go into an investment with a medium to small term time frame like yours, which is 5 years, and with a large capital like 5 crores, I would advise caution. Please be careful. Both 5 years and 24 to 26% is not practical, especially for equities. Equities are an asset class for a really long time. There have been instances in the past where in 2 to 5 years you have made this kind of money, but that's not going to be always sustainable. So please be realistic, tone down your expectations, increase your investment horizon. Your investment amount seems good. So therefore, if you are able to be realistic, increase your time horizon and also drop your return expectation, you might as well enjoy these returns if it comes, but don't go for just that as a target.
Yeah, that's a fair point. By the way, 24%, you would double your money in 3 years' time. And that's something that most people would be happy with. Santosh, Nikhil, thank you so much.
We wish it would be that way.
Thank you so much for taking the time, and pleasure speaking with you as always. This was the Mutual Fund Show. Thank you so much for tuning in, and do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying.
Hello and welcome back to NDTV Profit. You're watching Large Trades, the show where we talk about all kinds of bulk and block deals, large trades and every kind of volume buzzer. I'm your host Mihika Barve, and with me is Agam Vakil. But before we go on and talk about the stocks that we do have in focus for you today, Agam, how are markets looking like right now?
Well, for now, Mihika, what we're seeing is a quiet day of trade for the benchmarks. The Nifty is actually now marginally in the red. And we are looking at flattish movements. You know, this is something which is perhaps on expected lines, because over the past few days we've seen consolidation. That's exactly what's come through in today's day of trade as well. With the Nifty, there has been a little bit more weakness on the Bank Nifty. So the Bank Nifty is in fact taking a cut of around 0.7%. It's still holding on to 52,200, as you can see on your screen there. But all in all, a day of weakness for the Bank Nifty all the same, and the Fin Nifty as well is down by as much as 0.5%. The reason why the Fin Nifty assumes importance today is that's because the weekly options expiry here coming through. And naturally, on account of this is largely because there are a handful of names from the financial space which are in fact weighing down on not just the Fin Nifty but also on the Nifty. So if you consider the constituents of the Nifty right now, we have weakness in ICICI Bank, Axis Bank, Kotak Mahindra Bank, of course, along with something like a Bajaj Finance, which is actually contributing to a drop around 135 points. And on the other hand, it's HDFC Bank which is actually providing some amount of support. Remember, it's one of the heavier weighted stocks on the indices. And along with that, something like an L&T and Infosys as well up and about and advancing. Besides that, let's talk about the broader markets. Now, this is where we're actually looking at positive traction okay, so no longer. In fact, we're now seeing the mid-cap index building under pressure. It's down around 0.6%. Is that the case for small cap index? No, it isn't, but it is marginally in the red. So it's turning out to be a mixture of trade with more losers than gainers. Let's take a look at the advanced decline ratio for these markets as well to see whether or not things have changed. So in fact, over the past couple of hours, things have remained largely steady between advances and declines. The only takeaway here is that it's 1:1. One stock advancing for one stock declining. That's how things have panned out. And again, in terms of the broader markets, we have a lot more coming through. Even if you consider the mid-cap gainers and the mid-cap losers in today's day of trade, you will find plenty of stocks which are actually losing out by quite a bit on an intraday basis. So that's your mid-cap gainer list. You do have Godrej Properties, Coforge, along with Astral advancing in trade. What about those which are actually declining? Let's pull that list up as well. So you have about 4.5% cut for Max Healthcare, NMDC down around 3%, IDFC First also down around 2.6, 2.7% as well. You have Vodafone Idea, which is under pressure, and remember, this is after we've seen the company take price hikes coming through. Indian Hotels is down around 2%. It's been another one of those trader favorites, and of course Tube Investments is also down as much as 2%. So all in all, it's not looking like the best market, something that we've been used to of late, but a little bit of correction is also perhaps just on the cards. But largely, that is what we have in terms of how markets are faring at the moment, Mihika.
Yes, thank you. So thank you, Agam, for that. So when you talk about the stocks we do have in focus today, we have counters like an EPL, we have counters like Angel One, we have counters like Solar Industries, as well as Hathway Cable and Datacom and DCX Systems. And when you talk about DCX Systems, we'll be catching up with management, but that'll be on the later half of the show. But up first, we have EPL, which is in focus today. And stock has seen significant movement today. And in terms of volumes too, it is buzzing on the back of higher volumes, and we have Mahima joining us to give us more outlook on the same.
Right, Mihika, so the stock is buzzing in trade, as you rightly mentioned. It touched an intraday high of almost 9.4%, and volumes are almost 9 times its 30-day average. Now, just a brief about the company. Well, the company is the largest tube manufacturer, commanding almost 20% market share. The company enjoys 10% market share in global beauty and cosmetics, pharma, also 35% market in oral care, and 8% market in global food, home, and industrial category. Now, there was a systematic notes recently on EPL, which is rated it buy with a target price of 264. What it's saying is that the global tubes market is pegged at 42 billion in 2023, and they see an upside from here. And they're saying that the company has surpassed its target of doubling sustainable volumes in FY24, and this trend will continue. Key risks include global recession could peak the demand, keep the demand subdued, and a hike in commodity prices could affect the overall margins. However, the company is targeting a 1.4x revenue growth and 1.7x EBITDA growth over FY24 to 27 estimates, and this is on the back of multiple reasons, like aggressively targeting personal care category, then launching new innovative products, passing the inflation and non-community raw material prices to the customers, and increasing automation. Now, Systematic has said that they see a negative pricing environment receding. However, they expect price to stabilize in Q2 of FY25. The estimated revenue is at 12%, EBITDA at 18%, and PAT at 42% over FY24 to 27 estimates, and they're confident that the company will deliver a 20% EBITDA margin. Lastly, management expectations are that 75 to 80% of the industry to move to PCR tubes over the next 1 to 2 years, which will benefit the company, and they're reiterating the double-digit revenue growth guidance, and they're confident of clocking 20% EBITDA margin in FY25. Management's long-term focus is to deliver profitable growth based on accelerated growth in beauty and cosmetics and pharma, and overall multi-year projects will harness and fuel growth for the company. So this is the overall view of the company and why it's buzzing in trade today.
Okay, Mahima, thank you so much for getting us that update on SL Propack. It's of course it's one of those ancillaries when it comes to the consumption sector. So another one to keep an eye on, an important one as well, up as much as 9%. But the other stock which is in focus and which is under pressure today is Angel One. We have an update with respect to Sebi, And it's been a little bit of collateral damage when it comes to Angel One here. But Mika, what's going on here?
Yes, Angel One is down 8.5% right now, and it is the top loser on the Nifty small cap 250 right now. Now volumes are over 9 times its 30-day average. Total traded volumes of 42.82 lakhs, which is a total traded value of over 1,000 crores in the stock today. Now it's hit an intraday low of 10.32%, and even when you talk about the year-to-date performance, the stock has been under great pressure. It's down 34%. Now the latest news flow was regarding Sebi, which revised certain market intermediary charge mechanisms. What Sebi has done is it has barred volume-based fees to brokers. Now it has introduced new guidelines to ensure fair and transparent fee structures in the market, and the new rules suggest that the market infrastructure intermediaries like exchanges and depositories will receive exact amount of charges charged by the brokers to the end clients. Now, why the new guidelines? So now market intermediaries like exchanges and depositories levy transaction charges and depository fees on brokers using a slab-wise systems, and brokers in turn charge their customers using a similar slab-wise structure. But the timing of the charges differs, as brokers generally recover the charges from their end clients on a daily basis, but the market intermediaries receive these charges on an aggregate basis on a monthly basis. Now what this does is the total collected charges by the brokers tend to be higher than the charges actually paid to the MIIs at the end of the month due to the slab benefit. And now what the new market regulations kind of do is they could have a hit on the discount brokers' revenues, and that's what Motilal Oswal believes. Now it is key to know that brokers do earn significant revenue share from these charges to their end clients. To note, Angel One, for example, their FY24 revenue from these charges was to the tune of 400 crores, which is a pretty significant number. But however, a certain what Motilal Oswal believes that the brokerages could limit this impact to a certain extent by charging higher brokerage rates, but in the end, for the end client, which are the investors, this could be a negative for the end investors. So that's what we had on Angel One. Agam.
Right. Well, there you have it. Of course, along with Angel One, Motilal Oswal, there are a handful of other brokers who are also under pressure. But from there on, we move on to another company which is actually doing quite well in the broader markets. That's Solar Industries. Let's get in Puneet to tell us more about this one. Puneet, over to you.
Yeah, thanks for that. So stock is buzzing on really strong volumes, roughly 4 times. It also hit an intraday high of roughly 10% in the session today. The stock has been, on a tear over the past year. It has given, a lot of returns as well for its particular investors. And when you look at the financial year 2024, we see that, the revenues were down by roughly 12% in this particular quarter. They have mentioned that, the revenues were to the tune of 900 crores, which is approximately the fall from last year, is due to, currency fluctuations as well as hyperinflation in some of their particular markets. They have highlighted that Turkey as well as Nigeria are these two markets which have seen a lot of fluctuations in currencies. For Turkey especially, they have a depreciation of 62% in the last year, while in Nigeria, their currency has seen 100% depreciation, which has affected the revenue by the similar number of roughly 900 crores. But on an EBITDA and a profitability basis, the company did show a lot of growth. Margins came in at roughly 23%, which were up by roughly 400 basis points compared to last year at roughly 19%, while profitability has been strong to come in at roughly 875 crores, which is the highest ever annual profit for the company. When you look at the segments that the company operates in, exports is a very big revenue contributor. Roughly 40% is contributed from the exports, while housing and infra, as well as the revenue from Coal India, especially because it's very big in explosives for the mining sector, contribute roughly 18, 17, and 15%, as you can see on your screen. When you look at the key highlights, why you should track the company, over the past year, it has reduced its net debt to roughly 637 crores from 910 crores previously. Net debt to EBITDA ratio has also improved to 0.45 times, which is very manageable for a company of size of Solar Industries. Capex has also increased in the past year, and going forward, they have guided for a similar level as well over the next couple of years to come in at 668 crores, while the current order book stands up upwards of 5,000 crores. So they have a whole year of revenue already in the particular order book. and they have said that they will be executing this over the next 6 to 9 months. Out of this defense order book is roughly 2,600 crores. They have roughly 1/3 of this order book in revenue from defense, and are expecting a lot of this order book to be executed in this particular year. For defense specifically, they had revenues of roughly 500 to 800 crores in this particular year, and they're expecting it to triple in the next financial year. Brokerages have also been positive on the company. They have 4 buy calls as well as 2 hold calls. Currently, ICICI Securities has a very high target price of roughly 10,609. Which is, and one of the other key commentaries that the company has also mentioned is that for next year, they're expecting a lot of defense order books to come in, which will help, incremental revenue going forward as well. So overall, the picture looks really strong on solar industries. Stock is up today 8% over the past year. It's given returns of upwards of 150%. But that's the story on solar industries. Back to you.
Yes, thank you so much, Bunny, for giving us those details. Up next, we have Hathway Cable and Datacom, which is in focus today. The stock is up 7% right now, and we have Rucha joining us to give us more on the company. Rucha.
Thanks, Mihika. So I'll start with the volumes. The volumes are at around 4.5 times its 30-day average, while the stock hit an intraday high of around 12%. Now let me talk about the stock first. Now the company is a part of Reliance Group, and it provides internet and cable television services via its 100% subsidiary Hathway Digital Limited. Now it also owns around 40% in associate GTPL Hathway Limited, through which it provides again cable services. Now talking about the FY24 consolidated performance, revenue was up around 7%, while there was an EBIT loss of around 31 crore versus 41 crore in the last year. Now the other income was 37% up, which resulted in net profit sparking up to 51% to around 100 crore versus 65 crore in the last year. Now let me talk to you about the segmental revenue. The company owns highest revenue from cable business of around 68%, and it also reported a new segment called as dealing in securities. Now this segment is a new segment introduced in the 4th quarter, and it just has about 0.4% of revenue coming from this segment. Talking about the segment results, the cable business is in the loss. So essentially the company is getting the highest share of revenue from cable business, which ideally is in loss. So this is a kind of a thing which can upset the investors over here. While the broadband services reported a dip in profits by 15%. Though the segmental outlook doesn't look very strong, but talking about the stock performance, the stock has given almost 2%, a very negligible return in 5 years, but has given more than 60% return in just about 1 year. So this is what we have on the company today.
Okay, Rucha, thank you so much for joining us and taking us through what's been buzzing behind Hathway. But on that note, it's time to slip into a short break. But up next, we are joined by the management of DCX Systems, talking about the new order win from L&T and more. So do stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The first investment you should make is something that is not at all discussed and is not at all sexy. It's not mutual funds, it's
Hello and welcome back to NDTV Profit. One company that needs to be focused on today is definitely DCX System. The stock has surged more than 15% in trade today. Well, now this is on the back of an order win that the company has come out with L&T, or 1,250 crore, an order that we are looking at. So to discuss more about this order and more, we are joined in by the chairman and the managing director, Mr. H.S. Raghavendra Rao. Hello and welcome to the show, Mr. Rao.
Namaste, Anushi.
So, Mr. Rao, talk to us about this order win that we are looking at from L&T. Quite a sizable order considering the order book that you've come out with in FY24, 1,250 crore. Talk to us about this, the execution period and more.
Firstly, thanks for inviting me on this show. And what we received, this order is 1,250 crore. And we need to complete this within 3 years of the time. And we just received, we are working the modality to execute this program as quick as possible. Of course, this is one of the prestigious order which we received from the L&T. It is a first PO we received from the L&T till now, what we are started a company, and we start working with L&T from last 6-7 months. We got this PO recently on this. And this is one of the prestigious program for DCX, and we are have a proper execution plan. And just we received the order, we are working towards the execution plan and the perfect line to match the customer delivery time. This is, of course, is Make in India program, and it is a very big movement for DCX. And till now, from last 13-14 years. The single largest PO which DCX received is maximum is earlier days was a foreign customer about 900 crore. And this is the first biggest PO for DCX for the single PO of 1,250. And we are very happy to announce this on in this moment.
Sure, Mr. Rao. I'll stick to the order book now. So over the quarters, there has been a considerable reduction that we are seeing, 1,500 crore at the end of Q1 of last fiscal to about 800 crore at the end of FY24. Can you describe what is leading to this reduction? And now considering this large order size that we have recorded here, what is the target order book that we are targeting for FY25?
See, as you know, we are an aerospace and defense company. Normally, we will not expect a PO to add every month or quarterly. Okay, this all in the, now you see the single PO, largest PO, which is received is at one shot is 1,250 crore. And last year, what we have order book and we are executed in the March, we completed. Then we had about 800 crore backlog of March 31st. Then there's a cable order has come about 32 crores. And now we added, currently our order book about nearly 2,000 crore. And this is the scenario of defense. We get maximally, when we get a big order, we'll get and keep on working that. And also the pipeline, what we are expecting is the very good pipeline, which we are almost closing in the couple of weeks or couple of months. We expect a very good, healthy pipeline order. And our POs comes in the large value. okay, and especially on the system integration, the electronic module, and those things. And it is not like every month we are adding a PO with this thing. In the defense sector, it is very a normal case where the defense company get a PO in the every day or every month. We'll get a PO in the big POs in the about 4 to 5 times in the year. So the company is focused to increase order book. I'm not seeing any challenges because we improved our customer base. And now we are added last year, 2 years, 3 years back, we added Bharat Electronics in the domestic area, and now we added L&T. Now in the international level, we added Lockheed Martin. Now, apart from the many Israeli clients like Rafael, Elbit, Delta, IA, the whole group, and we have a good customer base now. We expected to get more pipeline order, which we are already working. It's a matter of time. We expect a big pipeline order. It's a very healthy order. And that also is in a good size of the business we are expecting the POs.
Sure, Mr. Rao, that was informative to get a sense of how the order pipeline is going to look further. But now also what I'm looking at the financial parameters. So you've seen a significant surge in your revenues in the last couple of years. But if I look at the margin side, the margins have remained in the 5 to 6%. In fact, in FY24, we also saw some dip in the margins. I want to understand here what's leading to this moderation in margins that we are seeing. And also now, can we expect it on a better stance with the backward integration with Raniel on cards now?
Okay. See, margin improvement, of course, we started in the last 5 years in the single digit margin, and majority depend on the one or two big customer. That's the reason once we enhanced our customer base, the margin get definitely improve. And also the rightly said, Renil Advanced System or only whole 100% own subsidiary. Now let us assume I buy the raw material like a PCB assembly outside. Now we have our own integration. That is whole plan is to improve our margin and adding more customer into kitty and domestic or international level. The project based and the work what we deliver, that all definitely going to improve our margin. That is our major motto, to improve our bottom line. And also in that action, we have taken three steps here. One is to add more customer. Second is to add our own backward integration, do in-house PCB assembly, captive business. And third is we are going to increase the major, the double-digit margin on the cable and wire harness business. We are improving we have a lot of opportunity in cable and wire harness on the data cable. Along with that, we are going to add optic facility, which is already on. In that, definitely company is working towards to improve bottom line, to improve the margins and take a different step in the upcoming days. Apart from that, we are entering to the railway business on the railway security, which we are just last 6-7 months, we signed the joint venture with Delta, where we are concentrating on the global technology for railway security, keeping all these companies very focused on the become a product company on the railway with the Delta JV, what we have. And looking at this scenario, definitely there is a big margin growth we are expecting. Also, the revenue portion will get improved. This is what company is fully focused, and we are getting result also in that. And we are working towards on that to improve our margin on the top line and as well as the bottom line.
Sure, Mr. Rao. You mentioned about the railway security. Now you also formed a JV with NIAT over here. I want to understand what's the status on the orders that we are looking from this segment, and what is the kind of opportunity and scale that we are looking ahead in next 2-3 years.
See, this technology, what we signed is a global technology. And of course, last 4-5 years before I joined for the JV, and Elta worked on the technology demo, on the field trials, and taken many things. They got a couple of PO on the small prototype PO for to prove the program, which is already done. Now we are waiting for the big tender to be happen. Not only for India, we are expecting there is a big RFQ will be expected shortly. where I'm seeing good to go in this business, including India. India is very concentrating to upgrade the safety system. There are 38,000 crore has been upgraded technology, our railway minister announced, and it has been very intact. And this system is a very standalone system, is a global technology. Presently, this technology is available only with us in global level. So we expect huge business coming out. As on today, we are working towards the RFQ and the give a demo. We are already proven many demonstration in the international market, Indian market. It is going well as per the plan. And we expected to participate in the upcoming tenders in the international level.
Sure, Mr. Rao. Thank you so much once again for joining in and giving us such a detailed perspective on the company, on its outlook going forward. But with that, we are completely out of time on this segment. Do stay tuned to NDTV Profit and watch the India Market Close, which is coming up next.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The good part of growth assets is that the more you have, the better your choices are, right? So nothing like money in the bank to sleep well at night, whether it's a medical emergency or that cruise you want to take. I think gone are the days where we think about a simple life in, a rural community. People want vibrant post-retirement lives with travel, with socializing with friends. Maybe you eat out a few times less, but should you see the Eiffel Tower while you can? I think you should. Asset allocation will change as you age, but certainly you need.
Hello and welcome to India Market Close right here on NDTV Profit, and a day of a pullback, if you will, not of a of a ginormous proportion, but we are bobbing we are in the red and bobbing between different degrees of red or different degrees of correction in the session today. So it looks a very flat market, but it's been anything but flat, because look at the banks, for example, 0.8% lower in trade. Bring up the Nifty IT and you will see the moves there, because the Nifty IT was actually trading very well in trade, and that is the one that is actually helping the market stay afloat while the banks correcting the way they are. Bring up the top Nifty 50 top gainers and losers. That's a T chart that we have, which will give you an indication of what's happening there. Remember, just 0.8% lower, so you will not see very large losses on the banking names, but there are enough and more stocks which are correcting. Okay, let's start with the winners first, and you will see L&T, some IT names like Wipro, Infi trading in the green. So it's a good day for IT yet again. And its momentum continued for some of those. Let's swap the names as well. The losers include Shriram Finance, Kotak Bank, off the lows of the day, but certainly in the red. And Airtel has actually had a sharp pullback as well in the session today. That's about 2 percentage points lower. IndusInd Bank, Tata Motors complete the list of losers. Net banks correcting, IT holding out, but HDFC Bank still being the top point contributor on the gaining side. What are the broader markets, Samina? Good afternoon.
Good afternoon. Quiet. It's the breadth is almost at 1:1. The bias is on the downside, but nothing major to worry about, I'd say. This is more or less on expected lines. We had expected it to consolidate, and that's exactly how it's playing out. After 5 straight days of gains, the markets are seeing a little bit of a breather in today's day of trade. No trend that's emerging just yet. So if you look at the gainers across the Nifty 500, they're all over the place. So there's no trend in terms of a sector or sectorial gain that we're seeing, except on the losing side. Brokerages are seeing some pressure this afternoon. That was pretty much the get-go this morning. So your Angel One, Motilal are deeply in the red on back of Sebi's recommendations on uniformity of brokerage charges. Angel One on back of that is down 9%. Motilal as well taking that not too well, trading with a 4% cut. Anand Rathi is probably better off than the rest. It's down about 1%. BSE is also having a bit of a knock in trade this afternoon. Apart from that, the rest of that space doesn't look too bad, to say the least. On the other few names that I want to quickly mention is tire companies that are seeing some profit taking after Friday's up move. Yesterday was quiet. Today is no different. Maybe just a bit of a break before they resume the upward journey, and that's what most technical analysts believe too. Well, one stock that I want to highlight, I don't know what's going on, is JK Paper. 19% up move on the stock. Volumes are also looking very healthy. I will try and seek out what's happening on that counter, but for now, it is your top gainer on the Nifty 500. Archean Chemicals as well. Now, this is one that we've talked about quite extensively in the last few weeks. After, of course, it's been in the news. It's an expensive stock, but there's so much that is going on, right? We do believe that there are articles during the rounds, they could be now looking in the semiconductor space, and that could be the big trigger on Archean Chemical. Last week at Bain Piramal actually exiting the counter after the loan that they lent to the company was made good. Supply was of course spurred up and picked up by the likes of a Goldman. Apart from that, media is not doing too badly. Solar Industries is looking good. Deepak Fertilizers, so fertilizers are doing fine. Godrej Properties had a little bit of a land acquisition yesterday. Stock did nothing on back of that, but of course this afternoon rather, is having a pleasant day. Pull up Allied Distilleries. It was a new listing on the street. Did quite well in opening, was up, got a debut on the street, was about 13-14%, holding on to that. So 317 is what it opened at, 316 odd is what the stock is holding steady at. Banks are looking a little weak. Wipro from the tech pack is leading out today as well after the double upgrade that came in from CLSA. But Aditya Agarwal and Dharmesh Kant will join in now with their view in the markets. Aditya, today's flat trade is an opportunity to go long.
Afternoon, Samina. Thanks for the show. I would weigh it out. I think there'll be more consolidation that we will see both on the Nifty and the Bank Nifty. I don't see a runaway rally in the markets just yet. Markets are sitting slightly at overbought levels on shorter term time frame charts. So I believe there could be some more cool off not expecting a major sell-off, but yes, there could be a 150 point cool-off on the Nifty, and a similar kind of cool-off that we witness in Bank Nifty today could be more of a sideways consolidation phase. So if I talk of levels on the Nifty, definitely 24,000 is acting as a major support for the Nifty. Till the time 24,000 is broken, I'm not going fresh short on this on the index until the time this resistance of 24,200 is taken out decisively. I'm not looking to go aggressive long on the index as well. So overall, it's a 200 point range at the moment, which the market is playing, and I believe this will continue to do so. We will have bouts of volatility within that range. We witnessed that in the morning today. Talking of Bank Nifty, on the downside, 52,000 is a major support area for the Bank Nifty. If that is broken, then maybe there could be shorting opportunities for another 500 point drop on the Bank Nifty. However, on the flip side, if 52,000 is held, I think so between this 53,000 and 52,000, Bank Nifty will also continue to oscillate. And we could see some outperformance from large cap private banks, as Neeraj had also pointed out. HDFC Bank is something which is standing out, and I believe it's time for HDFC Bank to show that strength and continue to head higher from here on.
Oh, that's HDFC Bank. Large cap, in fact, has assumed leadership in the recent past at least, and banks have ended on 7 weeks of straight gains. Aditya, does that also mean that you'd go long then on Bank Nifty at these levels?
I wouldn't shy away, Samina, from going long on Bank Nifty. After that correction in trade today, actually took support at that key support level of 52,000. And I believe with the stop loss just around 52,000, I wouldn't mind going long on Bank Nifty for a target of 53,000. Again, because it's still range bound, I would look to just play that range. So 52,000 will be my stop loss, or maybe just below 52,000, and 53,000 will be my target. I won't mind going long on Bank Nifty at current levels, yes.
Okay, just before I get to Dharmesh, though, Aditya, sorry, did you give out your specific stock recommendations for the afternoon?
Yes, Neeraj, I've got a couple of buy recommendations, and one is from the pharma space. Sun Pharma is looking interesting to me. Again, sticking to large cap names because I believe large caps will continue to outperform. So Sun Pharma is looking interesting to me at current levels, offers a good risk to reward as well. On the upside, I think stock can test levels of 1640 with a stop loss at 1480 on the downside. I look to go long on Sun Pharma. And Balrampur Chini, sugar is again bouncing back, and I believe just before the budgets, sugar will remain in focus, just like fertilizers. And Balrampur Chini is looking interesting on the charts as well. So I'll go long on Balrampur Chini for a target of 460, 470 on the upside with a stop loss at 423 on the downside.
Wow. Well, it's an interesting day. Banks are quiet, IT is doing well, but Chini or sugar or paper, a clutch of those names are coming into the fray today. Dharmesh, great having you. Thanks for joining in. We've been talking about how IT's done so well in the recent past. Today too, on a sluggish day, IT is still marching ahead. Are you a buyer here? And if so, are you preferring the mid-sized names over the large cap names, or is it the other way around? What is it that you like here?
Yeah, good afternoon, Neeraj. I mean, it's the story same. If you look at the last quarter, before the earnings commenced, there was a huge buying which happened in IT space, and the thought process at that point of time was the guidance will be much better and the worst is behind as far as discretionary spend for the IT segment is concerned. I think same is the thesis which is being built on now, having regard to the Cognizant earnings where they revised their downward guidance upward. So the other way of looking at it is that the bottom is already in place. Nothing bad can happen from there. And if that is the place, then it does merit trading buy kind of environment. Having said that, we are not biased in IT at all. I mean, none of our recommendations for the past 2-3 months have gone into IT space. We are looking at from the sidelines because if the trade materializes, then it would be really a long-term trade. But as long as the guidance downward trajectory and there's some actual good body language coming from the management other than the guidance part, we are on a wait and watch mode as of now. So IT as a trade, momentum trade is going on. One can play it out. But fundamentally, I think let's wait for 2 weeks. The earnings will be there, and then it will be more clearer whether it's a long-term bet or it was just a trading pop as happened in the last 2-3 quarters.
Right, Dharmesh, what's happening on, I don't know whether you've noticed, but have you seen what's happening on JK Papers? I mean, it seems like a sector that was dead and gone, but with schools reopening after summer holidays, maybe that could be a trigger. Any idea what's happening on JK Paper?
It's just a trade, Sabina. I mean, if you look at the texture of the market right now, I mean, Neeraj just mentioned Chini and paper and all these stocks, flaring up. So where the attention is least, people are, getting into there, and then some frenzy will happen, some more retail participation will come in there. And that would be a time when profit booking will start happening, at least in these sectors. So they are not a secular trending kind of a structural bet on a sector. So please be mindful of the facts if you are entering into a sugar stock or a paper stock and similar aligned stocks, to name a few. Even the fertilizer falls into the same basket. So I don't see any reason why. I mean, there's a shift, and we are going paperless anyways. So more and more paperless kind of a schooling and everything is happening. And in that, paper trade can be a packaging kind of a form, nothing more than that. So valuation wise, yes, they were comfortable. If you look at just the PE multiples and all, and compared to the other in the middle small cap or micro cap basket. So I think it's just a catch up trade which is happening out there.
Aditya, what's happening in tire stocks? Friday was a strong day for tire companies, and Monday they took a break, and today as well they're looking a little somber. What are the charts of JK, Apollo and CIAT looking like, and if you've got a preference for a long trade on either of them?
Sabina, I think it's just a cool off phase after that sharp up move. And what is interesting is if I take a look at all these stocks, the 2 days of correction that we are seeing, it's on back of shallow volumes. So that is a good and a healthy sign for all these stocks. Which tells me that sooner or later these stocks will resume their uptrend. And I'm still gung-ho on these stocks, be it a Polo Tire, a CIAT or a JK Paper or JK Tire. Name them, and I still believe there is upside. If I have to pick one, maybe just purely based on the chart setup, JK Tire is something which is looking very interesting to me still. Volumes are very interesting in the stock in the up move, and it's a slow starter, I would say, where most of the tire stocks are trading at all-time high. JK Tire is something which has just resumed its uptrend. So I believe the cushion is here more. The risk to reward is in favor of going long in JK Tire at current levels for a target of 530 on the upside with a stop loss at 450 on the downside, or maybe 440 on the downside. I will look to go long. The second in my list will be an Apollo Tire. That is something which is also looking very interesting to me, I think. So 560 will be the target here. With a stop loss at 520 on the downside, I'll look to go long.
Right. Another one that I want to quickly talk to Dharmesh about before we go into a break is the listing today. Allied Distillers. There was some capital requirement problems, but from what we understand, it is a fairly strong brand. They've struggled in the last few years because of working capital challenges. I know it all depends on execution now. But what did you make of today's listing, Dharmesh? Allied Blenders, is it looking like a good stock to buy?
I mean, Sabina, the company is good, business-wise performance are good, but as a group, like there's a call at alcohol or beverage company, so that's the reason why we have not come out with a note on this company.
Okay. Well, we'll take a break, but before we take that break, hear out what the management of Allied Blenders had to say. The stock listed with a 13% premium, and we caught up with the management on the road ahead for FY25 and the use of IPO proceeds. Listen in.
As you know, the object of the issue is to pay off our current debt and retain the balance for general corpus, which I largely put as growth capital. How we see the future, the focus is on premiumization, looking beyond our current portfolio to get into the premium and luxury segment. We are looking at augmenting our E&A capacity, try and go 100% captive over the next couple of years. And that gives us both an edge in terms of backward integration and also in terms of the product portfolio that we have in mind.
Right. Mr. Ramaswamy, my next question is to you. In terms of new products, any new products that you're planning to launch in FY25? And if yes, how will this aid your revenue?
We have a product launch every quarter. That's what we have planned. And the first launch was in the earlier quarter, which was Zoya Gin. And we have more launches going forward, and all the new products will contribute to our premium segment in a big way on the future date.
Headlines you start your day with. What matters worldwide is is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The first investment you should make is
Welcome back. We also have with us Rahul Sharma, our Director and Head of Research of JM Financial, joining in. Rahul, hi, it's Amina. Thanks for joining in. Rahul, we've had a very good run actually. The first half of this year, the Nifty is up 11% for the month of June. It's done about 6-7% returns despite that big volatile trade that we saw on election day. There is talk about an impending correction, an impending weakness, which still hasn't happened. From where we stand right now, do you feel like there are signs of tiredness, the market's being overbought, which could then mean that a weakness is around the corner and going short on the Nifty could be a good trade?
Yeah, hi, very good afternoon. So, basically the market is extremely polarized as we speak. We have record high positions by FIs in index futures, record short positions by retail in the same. We have FIs which have been pumping into the cash segment for 3 consecutive weeks now. This week also seems like it's going to end up positive. So, essentially what is happening is all the market is firing from all ways. So, something like a Reliance, which was an underperformer, has started participating. And whenever markets get into that kind of a zone, I become fearful. And, we've been advising our clients to take profits, especially from those stocks which have done like massively well. So, if we look at some of the capital goods names, they are as overbought as they have been the highest in the last 10, 15, in fact, 20 years as well. So something like a Siemens, ABB, I mean, these stocks have done extremely well. So, these are the pockets where we feel profit booking can be done. And there are about 3 sectors which are sort of re-emerging from, a long period of underperformance. So we have IT, around 3 years of underperformance. We have chemicals, around 4 years of bear market. And, we are seeing a bit of a turnaround happening in the pharma space as well after the recent consolidation. So these are the areas of the markets where we feel money can be moved. So sector rotation is the call for the day. we're not expecting like a big bang correction in the market, but yes, a periodic correction of around 500-600 points on the Nifty, which is hardly about 2%, 2-3% kind of a correction, is something that will be a welcome correction. Even if it doesn't happen, we are actually sticking our head out and saying that the markets could get into 2 months of time correction. So which means a broad range in the Nifty consolidates, sector rotation happens, stock specific action can be paramount.
Rahul, do you feel the same about Bank Nifty as well? Some may believe that there could be outperformance. I mean, it has logged in 7 straight weeks of gains. What's the view and the trade on Bank Nifty?
Yeah, so the view is private banks have done exceedingly well in this run-up, and a lot of those FI flows have gone into these blue-eyed boys like HDFC Bank, ICICI Bank, Axis Bank. Our suggestion is private banks take some profits off the table. Probably you can switch to PSU banks, and Bank Nifty as a whole is sort of gone into that correction even before the Nifty. So we feel that a dip up to around 51,000 on the downside would be an ideal re-entry level. So at this point in time, we are advising clients to take profits and sit on the sidelines. Sometimes no trade is also a good trade. So that is our stance on the banking index as well, which is in line with what is also happening in the Nifty, especially after we've crossed the 24,000 mark. Somewhere we've lost momentum. The way we have been moving in the last few sessions. It seems like definitely there is a change of hands happening.
Okay. So Rahul, I understand there is a note that you have come out with which speaks about a large list of stocks that can be bought and sold. We obviously can't discuss all 50 of them, I believe 25 each side. But let's try and talk about maybe the top 3, if there is a pecking order in the list of gainers as well as the losers, or the potential gainers and losers.
Like, the 3 sectors where we feel the maximum alpha could be generated, say 6 to 12 months down the line from here, could be, one is the IT space. So from the IT space, there are 2 stocks which are part of this list. One is Wipro and the another one is Tech Mahindra. We've seen these stocks doing well over the last few sessions, but we feel this is just the beginning. So, we are seeing upside of more than 20 to 25% in these stocks, and these are sizable IT plays. Then on the pharma space, we like DV slabs and granules, which is where we feel this sector already has been doing well, but after the recent consolidation, we feel the time is right for them to see a follow-up move coming into going into the next couple of quarters. And thirdly, chemicals. Now, chemicals is something which has been in a proper bear market. It hasn't participated at all. The biggest name in that list is Deepak Nitrate. We feel there is a big upside to be had. It has been, a very, very flat. If you see the monthly chart, the stock has gone nowhere in the last 3.5 years, and feel now the time is right for the stock to change orbits. In the same sector, we also have something like a Fine Organics, which is, slightly smaller market cap, but we feel can be a high beta play. And, we also have a dark horse in this entire list, which we feel, could be a multi-bagger as well. So Walchand Nagar Industries, we've included as a dark horse. The stock has been hitting upper circuit since last 2 odd sessions, but we feel the kind of headroom that the stock exhibits technically, it can be a massive wealth creator. So it's a dark horse. So, it's high beta, high risk, high return kind of a stock. But essentially these 25 stocks are where we feel there is, the biggest opportunity can be had going into the next 6 months.
Walchand Nagar Industries up on 5% yet again. But interesting that pharma and chemicals feature in that list. Again, a sector that both sectors haven't gone anywhere. Rahul, what about the losers? I heard you say that cap goods look very, very ripe. Is that a part of the top list of shorts?
Yeah, so we're not essentially recommending to short, but the call is to book profits.
Sure,
so
okay.
Just to give you the idea, so for example, Bharti Airtel is having the time of its life, 4-year cycles. It has been in a 4-year bull cycle. Seems like, it is very close to maturity. On the capital goods space, we have the likes of ABB Siemens, which have done very well. On the auto space, we have Mahindra, and we have, Bajaj Auto, which have been in the pink of health. So essentially what we've done is, the last time these stocks were overbought compared to how overbought they are at this point in time. So it is essentially being overbought in a 5 to 10 year time frame. So, we are, the best thing to do is book profits from these stocks and move it back to, some of the names that we've discussed. So, we're not only giving you stocks to buy, but also, somewhere you can raise capital in case you're holding them in your portfolio. This is a good time to, take some money off the table.
Rahul, another sector that is catching attention in the last couple of days is tire stocks. Some of them are the record highs. Are they on your buy list, either on the sell side or the buy side? And if yes, what are the picks there?
Yeah, so from the tire space, we've gone with the, one of the giants, Balkrishna Industries. We feel, the stock, the sector is doing very well, and technically speaking, the stock is ready for, a gear shift. We feel that at least 20-25% upside can be had even in this counter. It's a big stock for sure, but, given the way the tire stocks are placed, be it Apollo Tires, be it Balkrishna Industries, we feel that, the sector should do well going into the next few months. So Balkrishna remains our top pick in this space.
Well, thank you, Rahul. We'd have loved to chat with you longer, but I guess you are out of time. We'll hopefully see you soon again. In the meantime, keeping the focus with tire companies, we caught up with Manav Chopra of Nuvama earlier in the day. He got the call on IT quite right only a few days ago, and we've seen a breakout of sorts across IT stocks. He, in fact, is extremely constructive on tire companies, his top picks being Apollo and Seat. Hear out what he has to say on the tire space.
Lately, we've seen how Seat and Apollo tires, which are our top bets, formed a strong base around 100-day average and have started to witness an early signal of breakout. So from here, my upside for Seat is close to the levels of 3,700, which is still 30% from the current levels. And Apollo tires, my upside target is close to 720. So, in general, when the markets are at 24,000 levels, it's very difficult to look for the ideations coming for a very high risk reward. And, tire definitely suits that space very well.
It's interesting what these tire stocks are doing. What we'll do is ask Dharmesh Kant on the fundamentals of these tire stocks on the other side of this quick break, but we need to slip into one. So let's do that, come back, talk more about tires and some others. Stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is
All right, back with India market close and quickly go across to Agam to break down the derivative cues for us today. Agam, good afternoon.
Good afternoon, Neeraj. Well, today is a day where there was a little bit of quiet as far as markets are concerned, perhaps a wanted one, because at the moment, of course, the Nifty is currently flattish. We've seen a little bit of weakness in your banking and BFSI indices today. So the bank index is down by around 0.7%, but we're still holding on to 52,000, and that is the big positive. Sure enough, there has been a little bit of selling over the past couple of sessions, today including, but we haven't too much to worry about. In terms of the options market at the moment, considering the fact that the Nifties are hanging on to 24,100 and thereabout, we've seen a little bit more writing around 24,000. Remember, since the morning, we've been talking about traders trying to defend 24,000 on the lower end, and well, we have more writing around there. Until yesterday, we had or rather day before, we had a considerably higher amount of open interest distribution around 24,500, and now it just so happens that we're starting to see a little bit stronger base formation around 24,000 moving in. At the moment, it does seem like it's going to be a tough support to take away on the Nifty. Fin Nifty, of course, 23,500 was what was in focus, and it does seem like we're going to be closing around there. That's where we're going to see this particular weekly options expiry to come through, as indicated by puts and calls in terms of OI. Finally, coming down to stocks, it's been a mixed year of trade for 1:1 in the broader markets, one gainer to one loser. Deepak Nitrite and MGL are actually looking at a good amount of traction in increase in open interest. There's some shorts in Shriram Finance and SRF as well. And among stocks which are seeing unwinding, we have about a short covering for Dr. Reddy's and Muthoot Finance. And on the other hand, longs unwinding for Federal Bank, ICICI Bank and Coromandel International. As I've been mentioning, it's been a mixed market. And today is one of those first few days since that sharp rally that we've seen, is where we're starting to see just a little bit of fatigue flowing in. The question really is, can we expect consolidation? That's something that we're going to keep an eye on.
Indeed, Agam, it's going to be a little bit about consolidation, the look of how, or what at least what analysts seem to believe on the street. Dharmesh, we didn't talk to you about tire stocks. You want to give us your view on tire and, of course, other ancillary as well. So maybe lithium battery guys, Exide, Amara Raja in the auto ancillary play.
Yes, I mean, as far as tires are concerned, I think it has more to do with the cool-off in the international prices of rubber. It has gone up significantly for this year. It was up 14-15% few days back, almost around 185 USD cents per kg. It has cooled down to 165 USD cents per kg. So that cool-off leaves around 3.5% kind of a year-till-date gain on the rubber prices. So that trade was on the tire companies. And here, I think, seeing the automobile numbers for the month gone by, it's around hardly any double-digit kind of a growth. 6 to 8% is where most of the players are expecting on the OEM manufacturer side, be it two-wheelers, three-wheelers, passenger vehicle, and MSME or CV segment. So all of farm equipment inclusive, all of this thing heat out there. So I think JK Tire among the tire pack looks very attractive because it's not a pure OEM player in supplying the tires. It's also into the replacement market. It's a fair mix of both. At the same time, the return ratios are very high, around 20% plus kind of an ROE and a CAGR of 30% for last 5-7 years as far as PAT is concerned. So that play looks strong. On auto ancillary side, I think as far as battery plays are concerned, a large part of it has been done through. Now it will go for a time consolidation before actual rollout of EV batteries happen and then the trade begins. But there are interesting plays like JBM Auto, Uno Minda, Craftsman Automation, Rolex Ring, which is again into the auto ancillary space catering to both the segments. So those look pretty attractive. I won't be able to argue on the valuation front because they are expensive, but that is how the entire scene is as of now.
Okay. Yeah, and some of those themes have done really well for themselves. Dharmesh is right, but just the kind of moves that we've seen in an Uno Minda or a Craftsman Auto or an Atul Auto today as well, 7% higher by the way, 6 straight months on a trot. It's delivered 100% growth. That's quite something for an Atul Auto. Actually, Aditya, come in on Atul Auto because, there were two stocks which were up on a 20% upper circuit yesterday that we had marked, Wokhard and Atul Auto. Wokhard has given up some of the gains. Atul Auto has only built on from there, up another 7%. Can it do more?
I think so, Neeraj. Provided you already own the stock, I would not recommend going fresh long at current levels. If you already own the stock, yes, continue to hold. 830, 860 are my two targets on Atul Auto. Just a disclaimer here, this is one stock which has been recommended to our clients and they still hold in the portfolio. But having said that, yes, massive volume. And this was on cards, Neeraj, because we had a long consolidation from October 2023 till the breakout that we saw a couple of days back. So this long consolidation had to give way and it broke out on good volumes, and today also we are seeing good volume as well. So I think this is a follow-up move which will continue, and at least 830, 860 should be seen on the stock very soon.
Aditya, how do you feel about Vodafone and Bharti right now?
Samina, surprisingly, I would look at an Idea Cellular at this point of time, Vodafone Idea, because this is one stock which is now showing some kind of a breakout and a pull throwback. So we did see a breakout last week, and now it's showing a pullback again. But I think stock is poised to again break out above those levels of 19, and once it does so, I think stock can test levels of 25 to about 27 on the upside. So if I have to pick one between Bharti Airtel and Vodafone Idea, I would go for Vodafone Idea, because Bharti Airtel, I think, has done its bit for some time, and you could see some kind of a price correction in Bharti Airtel, at least in levels of 1350, 1300 on the downside. On the flip side, Idea Cellular is gearing up for a breakout again from that resistance of 19 and can test levels of 25, 27 on the upside.
That's the word on Vodafone. Dharmesh, fundamentally want to come on Vodafone Bharti. After the price tariff hike, these stocks have been almost exhibiting the buy the rumor, sell the news kind of trade.
I mean, in the short term, it does look like that if you are looking just from trading perspective. But look at Bharti for the last 6 months or 1 year time frame. The stock has consistently given you positive return, and it's been the higher end of the basket. At the same time, I do believe the guidance given by the management of ARPUs reaching 300, and that would be the case in point for all the companies who are into this play, because the data usage is the future, and the ARPUs will definitely rise. So return ratios and everything will fall into place to justify the valuation multiple. So short term, I mean, selling is there, but I mean, that's a punt, and I am again going with Aditya on this. If I have to buy one telecommunications stock at the present juncture and keep it in the portfolio for next 3 years, it has to be Vodafone Idea, because the type of bidding they did for the spectrum auction, I did not expect that kind of an aggression coming from the management. And such aggressions are not aggressions. I mean, they are backed by a good planning and strategy in place for the next 2-3 years. And management sounded very positive on the 5G rollout and the coming back into the system. So I think slowly the pain and worries will go away. Most of the debt will be converted into equity. And then once this pain is out, it will have an entirely different relook and re-rating as far as valuation is concerned. So we are expecting almost a doubler from here for Vodafone Idea, but that's a time horizon of 3 years. And as of now, it's more of a punt than a pure, calculated valuation play.
Okay, thanks a lot for that, Dharmesh. And let's shift our focus to IT, and Rucha joins in to talk about some key excerpts of a JP Morgan note which highlight, Rucha, some very interesting trends about what end clients are spending and how not all IT companies will benefit out of those spends.
You're right, Neeraj. So I'll first start with the budget expectations that JP Morgan has come out when it surveyed 166 CIOs. So the budget is expected to accelerate to 4.1% in CY24 from around 2.5% levels, but again come down to 3.5% levels in CY25. So this is what they are looking out on the budget by the clients. So a likely uptick in the calendar year 24, but again come down in the calendar year 25. Now looking at the spending actions, while majority of them expect no change in the current pace of IT spending, only 25% of them are looking forward to accelerate the investment in the IT budget, while 33% still talk about deferring and delaying, which is what we saw in the other Indian IT companies as well. Now this deferment was largely because of uncertain macro environment, And US elections is also what the CIOs pointed out to the brokerage house, while the acceleration was largely led by catch-up in the technology, which as we saw is just 25% of the overall pool. Moving on to generative AI. Now, this has been the talk of the town. So the brokerage house expects that from the current 5% levels, like 5% of the total budget is what the clients are currently spending on generative AI, and this is expected to move up to 14.5% level. So this is what generally clients are looking at, and still 33% of them moving on, 33% of them are shifting funds from the legacy system to to upgrade themselves to generative AI. So again, 1/3 of them are looking forward to spending on generative AI, while more than 60% of them are still just waiting and looking how the macroeconomic environment turns out for them and not reprioritizing their spends with respect to generative AI. Now moving on, around 8% of the total clients which currently use TCS as their vendors are looking forward to increase their spend with their vendors. So for example, if 100 clients are using TCS as their vendor, only 8% of them are looking forward to increase their spend with TCS. This number is 11% for Cognizant and 10% for Capgemini. But interestingly, 9% of Accenture's clients are looking forward to reduce their spending with Accenture. So this is what stands out, and this can give us a perspective on how the macroeconomic environment is pertaining for the clients over here. Moving on to what JP Morgan expects and what are their preference of the stock. It prefers defensive stocks with high dividend support such as TCS and Infosys, but they also prefer high growth stocks such as Persistent, Coforge and LTTS. So this is what we have on the entire CIO's survey that JP Morgan has come out with.
Interesting. That's thanks for that, Richard. That gives you a sense of where budgets are skewed towards, and what, of course, when JP Morgan spoke to the CEOs, or where they really feel the business is going to be sitting in the IT pack. So while budgets are going to increase for calendar year 25, it seems like they will ease off in the following year. Well, I don't know whether we've asked you, Aditya, but you've got any tech favorites that you're currently trading on?
Absolutely, Samina. In fact, I think tech is the place to be, definitely. I've got a couple of favorites. I would say rather than entire mid-cap and the large-cap IT space should definitely do well. If I have to pick a couple of stocks, maybe from the mid-cap space, Persistent Systems will stand out. What a recovery it has been for the stock from those levels of 3,200 to make an all-time high in trade yesterday. I think it's just the starting point for the stock again. It's resumed its uptrend, can easily test levels of 5,200 on the upside. From the large cap space, couple of stocks definitely stand out. TCS is something which is looking very interesting to me. I think it's yet to break out of that resistance mark of 4,200 decisively and trade above that. Once it does that, I think it's getting up for a level of 5,000 again on the upside. And apart from that, Infosys is also something which is looking very interesting to me. So overall, the IT space is looking very interesting. Three top bets within this space are Infosys, TCS, and Persistent Systems for me.
Yep. Okay, that's as far as IT goes. But what else is moving? I think if you just look at the list of names from banking, for example, HDFC Bank has done well, but the others have not. So that is as far as the banking update goes, and that stock is still at 1732. Apparently now having a multi-year breakout as well. So keep an eye out for that one. Stocks, Allied Blenders keeps on featuring in this list. By the way, have you spoken about the IPO? Yeah. Dharmesh, okay, Dharmesh has spoken about Allied Blenders, so I'll avoid that question. Dharmesh, any mid-cap name that you've recommended recently to clients?
Yeah, I mean, that was DCX system. We had an initiating coverage on that way back at 284 kind of a price. And the theme was that it's into EMS segment with backward integration for manufacturing of PCBs as well. And they had already a tie-up with Delta of Israel. It's a defense company, 95% of them, of the revenue comes from that. And they had tied up with Lockheed Martin, Rafale Advanced System. And recently, a day back, they got an order from L&T. So that opens a new chapter for them. The management sounded aggressive about the order book inflow. So last quarter, it was 1,600 for the March quarter gone by. This quarter, they are almost done around 1,350 odd crores kind of a fresh order book. And they're expecting 3,500 to 4,000 going forward into the calendar year. Our own sense is that they did a 70 crores kind of a PAT, so it's likely to be 123 crores based on FY26 earning. So there's the valuation comfort is there if you play it out as a defense company. So, and that's basically into the entire EMS is into the defense space. So based on that, our target price was 379. We have not revised that as of now. It's a hold rating on the stock, but we soon after this quarter earnings are through, we would be revising them. One important aspect out here is the new orders which they are getting is better margin accretive from the ones which they were getting earlier. So there's a shift in the entire business play or the product play they would be offering into. So it's due for multiple re-rating, but one step at a time. As of now, we have a hold rating on that.
Ramesh, in fact, we caught up with the SCX systems earlier. The stock is trading with a 13% gain. They've bagged a pretty large order from L&T as well. Hear out what the management had to say about the order book, the execution, the kind of top line they're targeting in the near to medium term.
We will not expect PO to add every month or quarterly. Okay, this all in the, now you see the single PO, largest PO which is received is at one shot is 1,250 crore. And last year what we have order book and we are executed in the March, we completed. Then we had about 800 crore backlog of March 31st. Then there's a cable order has come about 32 crores. And now we added currently our order book about nearly 2,000 crore. And this is the scenario of defense. We get maximally, when we get a big order, we'll get and keep on working that. And also the pipeline, what we are expecting is the very good pipeline, which we are almost closing in the couple of weeks or couple of months. We expect a very good, healthy pipeline order. And our POs comes in the large value. Okay, and especially on the system integration, the electronic module and those things. And it is not like every month we are adding a PO with this thing. In the defense sector, it is very, very normal case where the defense company get a PO in the every day or every month. We'll get a PO in the big POs in the about 4 to 5 times in the year. So the company is focused to increase order book. I'm not seeing any challenges because we improved our customer base. And now we are added last year, 3 years back, we added Bharat Electronics in the domestic area. And now we added L&T. Now in the international level, we added Lockheed Martin. Now, apart from the many Israeli clients like Rafael, Elbit, Delta, IA, the whole group. And we have a good customer base now. We expected to get more pipeline order, which we are already working. It's a matter of time. We expect a big pipeline order. It's a very healthy order. And that also is in a good size of the business we are expecting the POs.
So Dharmesh, if he gets all of these orders, etc., is it now a bad buy at DCX with all that he's saying, even though he's up about 13-15% today?
No. I don't think so. It's a bad buy. Why we have not, upgraded is just because we wanted to see a quality earnings, which would be due in some days. Post that we would upgrade it. But just doing a back of the envelope kind of a calculation and giving it a P multiple of 50, around 550, 560 should be the valuation target based on the trajectory which they have done. They have never got such a big order of 50 crores to be spread over a period of 3 years, definitely. But this is the beginning, and the management spoke about that. Plus, they have a NIAT system. It's a object detection system for the railways, which they have developed, and the product has been tested and things are in place. Only after the budget, the allocation is likely to come. And this was on the request of Government of India, they have done that. So some order flow from there is also likely to be on the cards out there. So once all this comes through, we will be better placed to have a valuation multiple and whether we go for re-rating. But as of now, it does look like, and the rough calculation does suggest 550, 560 should be the valuation target based on 2 years earning. With a good trajectory they have been backed on. So not a bad buy even at current levels.
Got it. Okay. The question is solar industry is a good buy at these record highs? It's touch a market capitalization of 1 lakh crore. Puneet, what's happening? I mean, they've disclosed a new explosive formulation as well, certified by the Indian Navy. What's happening to keep Solar so excited?
Well, we have looked at, solar and what has it done in the past year as well. And the stock as well as the financial performance has been very strong. Today it's buzzing on volumes of 4 times its 30-day average, stock at an intraday high of almost 11% as well. But when you look at the financial year of 2024, the revenues were down 12% in this particular year, coming at roughly 6,000 odd crores. And the management highlighted that the 2 key geographies that they cater to, which is Turkey as well as Nigeria, they both were affected due to currency devaluation. Turkey has seen currency devaluation of roughly 62%. Nigeria has depreciated roughly 100%. But this was just a one-time impact of roughly 900 crores. They are saying for next year it is positive outlook. What could potentially be driving the stock is the defense part of the business. It's currently a very small part of the total revenue of 6,000 crores because explosives is one of the main caters and the main revenue drivers for the company. Apart from that, we have seen that it's also explosive is very strong margin business as well. So for the financial year of 2024, they reported 23%, which is up by 400 basis points. Within the segmental revenue as well, currently roughly 40% of the total revenue is coming from exports, 15% comes from directly from Coal India, and apart from that, other verticals such as housing and infra are also one of the key contributors. But going back to what the company has said, they have reduced debt in this particular year as well, while increasing capex to 668 crores. And order book currently stands at roughly 5,100 crores. And here's the interesting part: out of this, half of it is roughly coming from the defense bit, which is around 2,600 odd crores. In this particular year, revenue from defense was just around 500 to 800 crores. So management has guided that this will increase to 3x in financial year of 2025. And most brokerages is also positive, with 4 of them having a buy call. Do know that the stock has run up a lot in the past year. It's up 195% in just the past year and 62% in the year to date. But the defense piece is what's driving the news, as well as guidance on the next year is very strong. Back to you.
Right, that's why solar industry seems to be catching attention in trade today. 9% gains on the stock. Aditya, that was a fundamental reason that, of course, Puneet highlighted for us and what's happening on solar. But technically, how does solar industries look at these levels? Would you play into the strength?
I would. I mean, it's a very strong looking chart setup, and time and again, every mild correction gets bought into. I think a matter of time before stock touches 12,000 odd levels. So if you get a dip, maybe closer to about 10,600, 10,700 on the downside, you can buy some at current levels. If you're looking to add more on declines, maybe 10,750, 700, 800 is a good level to add further, and look for a target of 12,000 at least on the upside. A very strong looking chart setup, and I was hearing volumes are also there in the stock, so definitely it's a buy list. It ticks the buy list.
Well, what's as we wrap up, Aditya, what is your top closing strategy for the day?
Neeraj, I was looking at the chart of IREDA. It looks very interesting to me. Having said that, I think markets will remain flat, as I mentioned at the start of the show. I don't see any trade in the Nifty or the Bank Nifty as such. Bank Nifty may be a long trade, but stock specific, I think IREDA is something which is looking very strong. It's breaking out of that consolidation. Rather, it just broke out as we speak on good volumes. So I think 230 on the upside is a potential target for the stock, with a stop loss at 200 on the downside. It looks like a good trade to take. Maybe a BTST also can be done, yeah.
That's IREDA. That looks good. 6.5% gains. Those numbers that they posted yesterday in terms of quarterly update were actually quite good, and you're seeing a move on back of that. Very quickly, Aditya, I don't know if I asked you about this, but you've given us a BTST. What about an STBT? We are seeing a lot of pressure on these brokerage names today. Do you feel like the weakness would continue into tomorrow? And if yes, then maybe a short trade cannot be ruled out. So an Angel One, an Anand Rathi, Motilal are all under pressure.
Samina, none of them are in the F&O space, so you can't short and go. Unfortunately, maybe you have to look for a fresh short in trade tomorrow. But just looking at the chart setup for these stocks, there was the stocks did correct on good volumes. But I don't see too much of a decline in any of these stocks. I think it's a 1 or 2 day of correction, and rather, if anything, you getting an opportunity to go long on these stocks. If you were waiting to go long on these names, given the fact that the number of users are going up, number of activity on the stock markets are going up. So these are the plays that you would play out actually. So I think Angel One is something on declines. It's a good stock to latch onto. I think rather than going short, you should look to buy the stock on declines.
Okay, so buy the stock on declines. Dharmesh, before we wrap up, are you buying into any of the brokerage names, the top losers today?
No. As a rule, we don't, recommend.
Oh, okay, you can't. Okay, fine. Then let me ask you a counter question on a positive pocket today. Real estate was very active. Godrej Properties and some of the others. Anything out here which is a favorite?
Yeah, I mean, the space, three stocks looks very attractive. Even the valuations are stretched, but the things are happening quite fast. One is Godrej Properties, other is Oberoi Realty, and the third is the Phoenix Mills.
Phoenix Mills, Oberoi Realty, and Godrej Properties. Interesting. Phoenix Mills too, 3578. Great mall play as opposed to just being a pure real estate play. So bear that in mind. Last question before we start wrapping up the markets, and stocks which have been the best performers per se, or the worst performer if you will. The worst performer list of course includes names like Angel One, Max Health and Motilal Oswal, which is also corrected 4% in trade, and some of the holding companies too have come off by the way. But JK Paper, EPL, so EPL has a brokerage node and that stock is up 9%. As we wrap up, the erstwhile SL Propack and currently EPL at 219. Aditya, what do the charts say?
Neeraj, a good point out, a good stock actually. This was on my radar. I did not track the stock in trade today, and it's up on 9% on good volumes. It's broken out from that downward sloping trend line. So I would be a buyer definitely in this stock, and more of a positional trade I would say. One should definitely buy at current levels. Look for a target of 280 to about 300 on the stock. That's the kind of target that I'm getting here with a stop loss at 200. You should definitely look at adding this in your portfolio at current levels, or either if it declines by 1% or 2% in trade tomorrow, you should definitely look at adding this stock, and don't exit so quickly. Maybe around 280, 300 should be your ideal target.
Right. Well, the market's wrapping up. It's not been too bad a day of trade. There was an expectation of consolidation, and it's consolidated with a very small cut in today's trade. Dharmesh and Aditya, thank you for joining us. But in the meantime, we'll wrap up the last 2 minutes of trade. The Nifty goes home, respects 24,100 quite well, 30 point lower on the Nifty. The Sensex going in with a similar sort of cut. I mean, it's hardly a cut, so it wouldn't be fair to call it that. The Nifty and the Sensex go home flat. Bank Nifty sees some selling pressure, 0.8% lower is what we got across other sectors. If we can pull up tech, which has been a big gainer in today's trade, supporting the markets. Nifty IT was up about 1% in trade. Real estate as well had it quite well in today's session. The breadth of the market was not too bad. There was a slight bias in the first few hours of trade to the downside, but then finally the advanced decline ratio reached a comfortable spot of 1:1. So no major concerns on that either. Across the Nifty 50, your top gainers was L&T. Wipro on back of the double upgrade by CLSA gained yesterday and gained today as well. TCS was up 1.5%. Infosys, HCL Tech all went home with marginal gains. You had Tata Steel that did all right. You had Grasim Cement Industries as well going home with a marginal gain. On the broader market space, I guess the action was a lot more. You had the mid-cap and the small-cap index outperforming the benchmark just a little bit in today's day of trade. So a tad bit higher, or pardon me, a tad bit lower on the mid-cap and the small-cap index. The mid-cap going home with a cut of 0.5%. You had brokerages that were under pressure. So Angel One, Motilal did quite badly. Chola Finance Holding, which has had its 20% gain over the last 2 days, saw profit taking today. BSE also saw a cut of 3 to 3.5% each. Apart from that, you had Info Edge, IDFC, CIAT that saw some cuts in trade, mixed trade for fertilizers as well. On the winning side, Archean stood out for me. There's talks that they are looking to get in the semiconductor space, which could be a big move for Archean, and the stock gain about 7% today. JK Paper has had a good run, 18%. Not sure why paper companies are doing well, but nevertheless, it's a big move in terms of trade. All in all, it was a quiet day. I guess a little bit of calm after the recent up move that we've seen. But with that, we're completely out of time. All eyes will remain on how Europe trades, and of course, Wall Street opens up, and we'll bring you a lot more on the other side. So stay with the channel, and that's thank you from Neeraj and me. We'll see you tomorrow morning.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. Our guest today, Kenneth Andrade, founder and CIO, Old Bridge Mutual Fund. Kenneth, such a pleasure talking to you as always. Thanks for taking the time out.
Thanks for having me on the show, Neeraj.
The pleasure is entirely mine, as you know it. Kenneth, let me start off by checking with you. How do you feel about the investing landscape currently, considering the fact that we're not cheap, but we are probably one of the few games in town, in addition to maybe South Korea and a few others, which are showing that promise of growth, and the macros don't look all that bad.
So the environment's fairly robust still, right? And we are at a point in time where corporate utilization or capacity utilization is now very close to 90%, right? So the profitability growth of the broader market should be fairly healthy for this financial year also. So there are two parts of the market, two parts of the conversation. One is the economic condition and the corporate profitability. No arguments that we are probably having a Goldilocks period. The second is how do we participate it, because finding pockets of value in this marketplace, they don't exist. So if you're looking for value in this marketplace, my simple recommendation is don't, because it doesn't exist. So it's a market where you'll have to align with businesses where you think growth is there, and it's fairly obvious over the last into this 1 year where it will be. So I don't think you're going to have too much of disappointments coming up in this year. The problem remains is how valuations are and how they trade. So I'm fairly bullish as far as the economic conditions are concerned, and as far as where profitability is. I might be a little circumspect, on the other hand, on how to generate returns from this buoyant economy that's there.
Okay. Well, I have two or three follow-ups to that first answer itself, Kenneth. For the longest time we've spoken, you've told me about how one of the facets of investing would be to look at companies which survive an adverse cycle, are leaders of the pack, and buy them at the bottom of that cycle turning around. Now, I heard you say that if one wants to look for value, don't. So my question is, for new money that might be coming into the schemes right now, how difficult is it for you to put that money to work? Where is it, or how is it that you are therefore zeroing down upon where to invest?
So let's put it this way, it's very hard to find an industry which is struggling. Everyone is profitable, everyone is generating cash flows. Some of these industries may not be at the peak of their entire cycle, but they're still generating reasonable amount of cash flows. And I think any industry that is going through a corrective in this entire space, we are looking at them. I mean, to be frank, in the portfolio today, over the last couple of quarters, we haven't had a new inclusion into the portfolio for quite some time. So we stay with what you have because this is what you know. There will be some businesses that are outside your portfolios which are doing well, and where you could put them on the radar. But I think you will get opportunities maybe this year or maybe the next year sometime to buy them at a fairly comfortable valuation. So in terms of executing what we have today, very few spots where there is trouble. But wherever there is, it necessarily needs to be on the radar, because again, even those places are fairly well priced. They're not cheap. And wait for an opportunity. We've all seen multiple cycles, and there's never going to be a case where this market will not give you an opportunity to allocate fresh capital.
So that opportunity, Kenneth, comes in via a time correction or a price correction, or could be either, or would it come via an uptick in earnings that we might see in FY25? Because I also heard you say that the earnings cycle looks to be good for FY25.
FY25, we shouldn't have a problem. Like I said, most corporates that we engage with or have a conversation with, everyone's running at full steam, despite, so there is no challenge. And when you're having capacity utilization run at this level, profitability growth will start. And then you have the next capital creation cycle that will start, or capex cycle that will start. So the narrative is extremely strong.
Got it.
So there I don't doubt it at all.
Okay. So then where is the telltale sign and evidence of industries and captains of their industry or companies in that industry comfortable enough with the prospects to put up new capacities, Kenneth? We hear private capex in fits and droves, not across the board, but in select pockets. But what has impressed you the most in terms of companies which are putting up this capex based on the cycle view that you have of that particular sector?
I think everyone's doing it. Infrastructure is on a roll. In any industry which is linked to that business is doing reasonably well. We've got a very large exposure to pharmaceuticals, and that's businesses that are facing the international market. So basically manufacturing pharmaceuticals. And they have a very robust pipeline that is there. Plus profitability is also at its all-time high. And you've seen the back of capex out there. So that's the second place that we've seen. The chemical space, I think a lot of capex is already going on the ground. And in some cases, utilization levels have fallen off. And they've fallen off because new capacity is coming on. So I think over the course of the next 2, maybe the next 3 years, they could rebound with a fairly strong cycle that is there. The automotive cycle, I think they're more from the ancillary part rather than OEMs. You could get a select few that will break out into the international space and do reasonably well with a reasonably large workflow. So I think these are isolated cases that are there, but the one that's got the maximum amount of momentum in terms of headline numbers or sales numbers continues to remain infrastructure, which is a very domestic business and very linked to government spends. I think that's probably the biggest sweet spot the market has at this point in time.
Okay. Kenneth, the others we'll talk about on the other side of the break, but I'd love to dwell a bit on infrastructure since you kind of brought it up. I haven't usually seen you that constructive on infrastructure or that constructive on businesses which derive a large portion of their revenues from government contracts or where the ultimate paymaster is only the government. I mean, defense is that point. Maybe infrastructure may not exactly be that, but be that as it may. How tell us a bit about this. How do you view this infrastructure cycle? Why is it that you have that view? And what facets within this infrastructure could be the first amongst equals? Because there are many which feed into infrastructure and pure infrastructure creators as well. How do you play this cycle therefore?
If you cut across the value chain, there's the developer at the top end, and then there's a commodity basket at the bottom end, right? And companies are seeing profitability right through that entire value chain. So developers are bidding for larger projects, contractors are getting bigger pipelines of orders, and it's translating into a lot of commodity demand that's happening at the other extreme. And this is the workflow that is there at this point in time. So you will have to pick and choose where the sweet spot is to participate with this marketplace. So we've got a commodity basket, which we've spoken a couple of times in the last 1 year. We've got a few contractors, and the reason why we've got the contractors is basically they're now peaking at their margins, which are at their historical high. So we've come from distress about 2-3 years back to now peaking margins, which is at its all-time high, but the workflow is still there. So as long as you participate with the narrative, it's fine. I don't. I mean, if you ask me, am I putting a new position into play in the contracting business? No. In the commodity cycle, I think it still has probably some legs to go because you've got volume growths that are still fairly robust out there. And then the last part of it all is that the government in this cycle has been an extremely good client customer. Compared to the previous cycle, the working capital cycles ballooned. This time around, it is much more manageable. The risk that is also there on most of these companies earlier was very centric on state governments. Now, most of the companies have been able to distribute their risk across multiple projects, multiple governments, and the size of these opportunities are significantly larger. So that's the context as you lay it down. Obviously, the power market is extremely robust. That's where the developers are, and that's where all the capacity creation that is happening, which is also linked to infrastructure. So power capex is one of the largest legs of infrastructure. Is the largest piece of infrastructure creation on the ground. But when I put all of this in play, I basically isolated two places that are there. One is the contractors, and second is the commodity market, where we feel there's an element of safety as far as the valuations are concerned. But the other part of the market, which is capital goods to a very large extent, seem to be pricing something that I would not be able to quantify or justify by aligning with some of these businesses out there. They trade like they are consumer non-cyclical businesses.
Yeah, they do, and the valuations are hefty. You reckon, Kenneth, before we take that break, you reckon that there is a case for? One of the reasons that was thrown around was that their moat around the technologies that they give and niche capex would have led to a lot of business there. Those are one of the many reasons. You reckon there is a case for a correction in the valuation multiples of some of these?
So as long as the narrative remains strong, I don't think the valuations will correct.
Okay. Fair call. Kenneth, stay on. We need to slip into a quick commercial break. We come back and try and talk about some of the other aspects that Kenneth Andrade highlighted. Pharmaceuticals and globally exposed pharmaceuticals, we talk about that. Chemicals, and we're seeing that run coming in there. So try and probe a little bit about that, and a few others which are in news recently, maybe technology. Stay tuned, we'll be right back.
Brought to you by TCI Express, on-time delivery or money back.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call.
Back with Talking Point in conversation with Kenneth Andrade, founder and CIO, Old Bridge Mutual Fund. Kenneth, something that the market seems to have gotten a little bit excited about is a return of IT prospects. And while the market ignored what Accenture did in the quarter, maybe it focused on the generative AI deals that it clocked in. And since then, since that point, I think Indian IT too has been rewarded. I would love to understand, how do you think about IT, because the concerns apparently are still there. So is the market bottom fishing? Is the market preempting something else? And how are you thinking about it?
Okay, I try to be a little specific here because when I look at our individual portfolio, which has got an element of IT in it, right? And these are large IT companies that are there. So when I break up the portfolio and look at businesses that are over tilting towards the large cap part of the entire segment, and then there's obviously a mid cap and a small cap part of the segment. A lot of IT businesses trade significantly, large IT businesses trade significantly lower than most of the other mid caps and large caps. So you've got a very solid business out there, which has got visibility, mature visibility out there, trading lower than the marketplace itself. So that's one element of why I think this sector trend has re-emerged. Because if I have to put incremental amount of money that's coming into the system, and I mean I as in the industry has to put incremental amount of money into the system, they will look at opportunities which have not done very well, have an element of valuation comfort on a relative scale to the marketplace, and then look for the element of growth. Now, if you go back a couple of years till today, And if you look at all IT services businesses, they've all been talking about and they've all been building up a robust pipeline of order book, which has not resulted in the element of execution that everyone was waiting for. So that is around the corner. Whether it was to come last year, whether it will come this year, some part of it will come this year, or 2025-26 definitely it will come through. That gives the element of growth, and that's where I think we a majority of all the ideation is converging around that. So valuations first, and it's the large cap allocation which is there, fairly steady in terms of performance, and could get an element of growth because they've already booked a significant amount of orders. That is a pipeline that is already out there, and I think that's what's playing through in the sector having a revival just now.
Noted. Okay. So buying the valuation, in the same argument, since we're talking about export-oriented themes, this clarion call that the pain in the chemical space might ease at some point of time started coming in about 6 months ago. We're now starting to see select companies talk about prospects possibly looking better in the second half of the current financial. Agro, the argument is still out there in the open. I would love to understand again, how do you think about chemicals, considering that the Chinese situation probably still is not completely clear about whether they will dump, whether they won't, and what is the kind of growth that will come in there. So how does one approach chemicals?
So I don't have a crystal ball into the sector, but everyone loves to bottom fish at this point in time, and that's what or bottom fish in troubled water at this point in time. And I think I mean, we are also got a couple of businesses on the radar. But I'm not too sure that we are anywhere at the bottom of the cycle yet. And it probably take another 1 year before things become significantly clear, especially in the agrochemical space. There is reportedly some plant closures coming up in a couple of countries that are there, which is aiding this this conversation around the segment of the market bottoming and volumes will emerge. If that happens, yes, it will. But will they demonstrate returns like we've had in the previous cycle? Very unlikely. At best, they will just participate with the rest of the market, and that's my sense. So there is no significant valuation comfort despite this industry not doing very well. Volumes and capacity, I think both of them will exist for this industry. What it may not have, at least in the near term, is any real pricing power. Or I'm not very sure that prices are going to bounce back compared to where we left them off about 2 years back. So I think that's where it is. I mean, you will get moderated returns, but nothing significantly close to what we got in the previous cycle.
So you investing in this purely from a perspective that the downsides might be limited, Kenneth, or is your choice of stocks differentiated chemical businesses which might do well even if the larger bucket doesn't?
So we're at a juncture in the marketplace where everything is fairly discovered and where everything is fairly priced. Right? We're just looking at opportunities which have not done well till now or have moved sideways and probably finishing either a time correction or a price correction. And then the fundamentals of the business. Like I said, the time correction and the price correction is happening in a number of sectors, but the fundamentals are not really improving, or like I said, it would improve in 6 months, in 1 year, or in 2 years, in probably 2 years. But this may just be a place where you could allocate some capital to and watch it and continue to increase your exposure over the next couple of quarters or a year or two.
Kenneth, I want to wrap up with talking about a sector where you were amongst the early identifiers, and that is real estate. A lot of conversation about whether we are in the midst of the cycle or towards the end of the cycle, so on and so forth. You were invested, I don't know if you still are. but what's the argument around real estate?
I think it's already done quite a bit. And the way companies have access to capital today, which is basically raising a lot of equity, completely changes the fundamentals of the business right now. Because whenever businesses like this get incremental amount of capital, there is usually capital deployment into creating a land bank. Okay, so we're in the very early stages of an industry cycle actually topping out. I said it's a very early stage of an industry cycle actually topping out. Because if the industry, I think, has already raised about 15,000 odd crores or some such number that is there. A very large part of this number is now going to buy new land banks that are there, which was not the business model that has brought the industry to this level or to this to this juncture. So this is a flipping point wherein when you have new inventory coming in, the new inventory at new land bank prices, there is a price rise in real estate that will come through. That price rise will temper sales for a while. Okay, so volume will give way to price. In short, I think we are in the early stages of this industry topping out. While companies are getting capital today, the leverage cycle in some of these companies will start maybe in a year's time, which means more capital comes into play, and then we'll have to take it from there. But the best, I think, is behind us.
Best is behind us. Okay. Point well noted. Kenneth, as always, lovely talking to you. Out of time completely here, but great having some of your thoughts here, and look forward to talk to you more often.
Okay.
That's the view from Kenneth Andrade of Old Bridge Capital. And with that, it's a wrap on this edition of The Talking Point. Thanks so much for tuning in.
Brought to you by TCI Express, on-time delivery or money back.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Kotak Mahindra Bank is found facilitating the short selling in Hindenburg episode. Sebi issues show cause notice to Hindenburg and Mauritius-based foreign investor Kingdon Group, who made 183 crore rupees by shorting Adani Enterprises. Market ends lower amid volatility after hitting record highs in early trade. Most indices closed in the red. Prime Minister Modi is expected to respond to Rahul Gandhi's vote of thanks in the Lok Sabha today. The who's who of India's infrastructure sector are expected to attend the NDTV Infra Shakti Awards today. Discussions on a host of issues such as infra sustainability and resilience. Team India may depart from Barbados this evening. Prime Minister Mia Mottley says she expects the airport to become operational in the next 6 to 12 hours, ending the shutdown forced by a Category 4 hurricane. Good evening and welcome. You are watching NDTV Profit. I'm Nupur Talwar Suri and this is the reporter. Let's take a look at how the markets have performed today. The benchmarks ended lower amid volatility, erasing gains after hitting record highs. Samina joins us with a quick look at all the action that took place on D Street today.
Well, it was the markets taking a break today after a pretty solid run over the last couple of days. The Nifty has gone home flat as a pancake. The Nifty was down 18 points and the Sensex also went home flat. Broader markets underperformed the benchmark, with the mid-cap and the small-cap index both seeing cuts of about 0.5% each. The losses were led by Bank Nifty, which clearly seems to be in a peculiar spot where profit-taking emerged in today's day of trade, and banks across the board were selling pressure from the private sector banks to the PSU banks, barring HDFC Bank that we'll talk about in a minute. The Bank Nifty down about 0.7%. IT, like I said, had a good run. The expectation of the Fed moving with a rate cut on back of inflation data and growth in the US is what is giving impetus to IT stocks. 1% gains on the IT pack. Across the Nifty 50, the losers were largely made up of banks, and the gainers came in from the IT pack, with the likes of a Wipro, IT, LT and Mindtree doing quite well in today's session. That was really how the Nifty IT pack played out. You had a few losers, but the large sense of the market was largely positive. Across the broader markets, it was no real trend emerging. In fact, it was very selected gainers and losers, but again, like I said, no trend as such was identified in today's day of trade. Well, that's pretty much what the markets have done. All will depend upon what happens across world markets between now and tomorrow, but it seems like we could be headed for a little more consolidation over the next few days.
All right, Samina, thank you very much for that. Now, the web of conspiracies behind the Hindenburg hit job is now out in the open. A Sebi show cause notice sent to various entities has brought to light the fact that Kotak Mahindra set up an entity that shortened Adani Enterprises derivatives ahead of the Hindenburg report being made public. Take a look at what happened behind the scenes and how foreign entities made profits worth 183 crore rupees.
These three men are the key players in the Hindenburg hit job that caused Adani stocks to tank in January 2023. Market regulator Sebi has found that Uday Kotak-owned Kotak Mahindra International Limited helped a US-based investment advisor, Mark Kingdon, to set up a foreign portfolio investment entity. Hindenburg and Kingdon shorted Adani Group stocks before the report was released and made massive profits. The conspiracy spans several months starting from March 2022. In March 2022, a foreign portfolio investor is registered in the name of KIOF Class F, the K India Offshore Fund. In May 2022, Hindenburg Research and their client Kingdon Capital Management signed a research agreement. Now, according to this agreement, Hindenburg would share the reports with Kingdon Capital before making them public. And so in November 2022, Hindenburg shared a draft report of the Adani hit job with Kingdon Capital. Mark E. Kingdon owns 99% of Kingdon Capital. In December 2022, the M. Kingdon Offshore Master Fund is set up. This fund buys out KIOF Class F, the FPI registered with Sebi. Now comes the maze of companies that own KIOF Class F. Sebi unraveled the maze to find that Mark Kingdon is the ultimate owner of the FPI. In early January, Kotak Mahindra International Limited signed an investment advisory agreement with Kingdon Capital. Kotak Mahindra also advised Kingdon Capital on how to execute the derivative strategy, according to Sebi. They showed urgency in shorting futures of one stock, that of Adani Enterprises. The Sebi notice details how in January 2023, the master fund operated by Mark Kingdon transferred $40 million to the KIOF, which then converted $15 million to Indian rupees and put this into the trading account of KIOF Class F. A few days later, another $3 million were transferred. Days before the Hindenburg report was made public, the FPI activated futures and options and started shorting Adani Enterprises. 8.5 lakh shares of Adani Enterprises were shorted. On January 23rd, Hindenburg released its report, which caused Adani Enterprises stock to fall by 59%. Kingdom Capital then squared off between February 1st to February 22nd to make a huge 183 crore rupees or $22 million in profits. And Hindenburg got 25% of the profits made from this. Bureau Report, NDTV Profit.
Well, Kotak Mahindra International and K India Opportunities Fund has said that Hindenburg has never been a client of theirs. Vishwanath Nair joins us to share more details about this response. Hi, Rishi, tell us what they've said.
In a statement on Tuesday, Kotak Mahindra International Limited has stated that it has no linkages whatsoever with US-based short seller Hindenburg. In the statement, Kotak Mahindra International Limited as well as K India Opportunities Fund both have said that Hindenburg was neither a client nor an investor in the fund itself, and that they have never worked with Hindenburg in the past. In fact, they had taken an underwriting from their clients with regard to any representation of some other investor as part of their trades, and the clients had specifically given in writing that these funds that were used for investments was the client's fund and not somebody else's. This comes in the light of allegations by Hindenburg, the short seller, saying that Kotak Mahindra Bank had created a series of accounts which helped Mike Kingdom short sell against Adani Enterprises shares, specifically because they received the short seller's note much before the note was put out in public, and that helped them earn about 180 crores worth of profit. These details came out in Sebi's investigation in this matter, and Sebi has of course issued a show cause notice to Hindenburg. In their post on Monday, Hindenburg has claimed that Sebi has purposefully declined to identify Kotak Mahindra Bank or any of its group companies in the show cause notice, and that the show cause notice was therefore not valid. However, we still need to see what exactly comes out of this entire exercise. Sebi, on its part, is conducting its investigation. That's what we understand.
All right, thank you for that. Now, let's in fact look at some stock-specific news. Patanjali Foods rose to a record high after its board approved the acquisition of Patanjali Ayurved's entire non-food business for 1,100 crore rupees. Now, the non-food business company includes hair care, skin care, dental care and home care. As part of the deal, the company will also acquire Patanjali Ayurved's movable assets, immovable properties, assumed liabilities, contracts and license. The acquisition will likely increase the product portfolio of Patanjali Foods. However, the Sebi must approve the acquisition. In fact, Cesar Sen spoke to Sanjeev Thana of Patanjali Foods and began by asking about the funding plans and when the company expects to conclude the deal.
The deal will be entirely funded through the internal, sort of from the balance sheet itself. And we've got adequate cash on the books. We've got a lot of very good free cash flows to fund this acquisition. And in terms of the timelines for the approval, we require certain regulatory approvals and the shareholders' approval. So that process we will immediately begin hereafter. And I'm expecting that the deal should get consummated hopefully within 4 to 6 weeks' time, subject to, of course, all the regulatory and shareholder approvals.
Well, the Ministry of Civil Aviation has asked IIT Delhi's engineers to conduct an audit of Delhi's T1 collapse. Now, the IIT Delhi team has been given a month to submit their assessment about the incident. The T1 roof collapsed amidst heavy rainfall, leading to the death of one person and injuring 6 people. The Airport Authority of India will also conduct a three-part structural audit of all the airports under its jurisdiction. And now on to the budget jargon of today. Let's explore key government funds: the Consolidated Fund of India, the Contingency Fund, the public accounts. Here's a clear breakdown.
The Consolidated Fund of India is like the main bank account of the government. It receives all the money the government earns through taxes and loans. This fund is used to pay for all the government expenses like salaries, infrastructure, and services. Before using the money from this fund, the government needs approval from the Parliament. The audit of this fund is done by the Comptroller and Auditor General of India to check how the money is managed. The Contingency Fund of India is like an emergency savings account for the government. It starts with Rs 500 crores and is managed by the Finance Ministry. This fund is at the disposal of the President of India, who releases the funds on request of the Union Cabinet. However, approval from the Parliament is mandatory for these funds to be utilized. This fund is used for sudden and unexpected expenses that were not planned in the budget. The public accounts of India hold money that doesn't go into the consolidated fund. This includes savings from different government departments, special funds for things like defense and disaster management, and money earned from selling government assets. Unlike the consolidated fund, the government can take money from these accounts without needing Parliament's approval. Do you know the current corpus size of the Contingency Fund of India?
All right, we are now going to cut across to the Prime Minister's closing reply on what Rahul Gandhi had said yesterday.
एक मिनट बैठिए बैठिए प्लीज बैठिए एक मिनट बैठिए प्लीज प्लीज बैठिए बैठिए एक मिनट बैठिए 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 ऑनरेबल मेंबर्स माननीय प्रधानमंत्री जी बोलेंगे। मणिपुर के मैंने एक माननीय सदस्य को पहले ही बोलने का मौका दे दिया था।
उनकी पार्टी से 9 मेंबर बोले हैं, बताइए इनको 9 मेंबर बुलाए आपने।
आदरणीय सभापति जी, मैं राष्ट्रपति जी के भाषण के प्रति आभार व्यक्त करने के लिए उपस्थित हुआ हूं। आदरणीय सभापति जी, हमारे आदरणीय राष्ट्रपति जी ने विकसित भारत के संकल्प को अपने प्रवचन में विस्तार दिया है। आदरणीय राष्ट्रपति महोदया ने अहम विषय उठाए हैं। आदरणीय राष्ट्रपति जी ने हम सबका और देश का मार्गदर्शन किया है। इसके लिए मैं राष्ट्रपति जी का हृदय से आभार व्यक्त करता हूं। आदरणीय सभापति जी, कल और आज कई माननीय सदस्यों ने राष्ट्रपति जी के अभिभाषण पर अपने विचार व्यक्त किए हैं। मैं विशेष करके जो पहली बार सांसद बनकर के हमारे बीच आए हैं और उनमें से कुछ आदरणीय साथियों ने अपने जो विचार व्यक्त किए, संसद के सभी नियमों का पालन करते हुए किए। उनका व्यवहार ऐसा था जैसे एक अनुभवी सांसद का होता है और इसलिए प्रथम बार आने के बावजूद भी उन्होंने सदन की गरिमा को बढ़ाया है उन्होंने अपने विचारों से इस डिबेट को और अधिक मूल्यवान बनाया है। आदरणीय सभापति जी, देश ने एक सफल चुनाव अभियान को पार करते हुए विश्व को दिखा दिया है कि ये दुनिया का सबसे बड़ा चुनाव अभियान था। देश की जनता ने दुनिया के सबसे बड़े चुनाव अभियान में जनता ने हमें चुना है और आदरणीय सभापति जी, मैं कुछ लोगों की पीड़ा समझ सकता हूं कि लगातार झूठ चलाने के बावजूद भी उनका घोर पराजय हुआ और लोकतंत्र के
माननीय प्रतिपक्ष के नेता ये शोभा नहीं देता। आपको पर्याप्त समय पर्याप्त अवसर दिया है, ये शोभा नहीं देता। आप सदन में डायरेक्शन दो। माननीय नेता जब बोल रहे हो, जब खड़े हो, ये शोभा नहीं देता आपके लिए। ये उचित नहीं है संसदीय परंपराओं के अनुसार। ये तरीका ठीक नहीं है आपका। नो, ये गलत तरीका है आपका और ये तरीका इस तरीके से नहीं चलेगा बिल्कुल। नो, गलत तरीका है। नो, ऐसे संसद के अंदर गरिमा बना के रखें आप गरिमा को तोड़ना चाहते हैं। आप संसद मर्यादा पीठ पीछे नहीं करें। आपको गरिमा नहीं, सदन की डायरेक्शन देते आप बेल में आने के लिए लोगों को। ये प्रतिपक्ष के नेता है आप। नो, गलत तरीका आपका। माननीय प्रधानमंत्री जी, विश्व का सबसे बड़ा चुनाव अभियान और उसमें भारत की जनता ने हमें तीसरी बार देश की सेवा करने का मौका दिया है। ये अपने आप में लोकतांत्रिक विश्व के लिए बहुत ही महत्वपूर्ण घटना है, बहुत ही गौरवपूर्ण घटना है। आदरणीय सभापति जी, हमें हर कसौटी पर कसने के बाद देश की जनता ने ये जनादेश दिया है। जनता ने हमारे 10 साल के ट्रैक रिकॉर्ड को देखा है। जनता ने देखा है कि गरीबों के कल्याण के लिए हमने जिस समर्पण भाव से जन सेवा ही प्रभु सेवा इस मंत्र को चरितार्थ करते हुए हमने जो कार्य किया है, उसके कारण 10 साल में 25 करोड़ गरीब गरीबी से बाहर निकले। देश की आजादी के कालखंड में इतने कम समय में इतने लोगों को गरीबी से बाहर निकालने का ये सफल प्रयास इस चुनाव में हमारे लिए आशीर्वाद का कारण बना है। आदरणीय सभापति जी, हम 2014 में जब पहली बार जीत करके आए थे तो चुनाव के अभियान में भी हमने कहा था कि हमारा करप्शन के प्रति जीरो टॉलरेंस रहेगा। और आज मुझे गर्व है कि हमारे सरकार ने देश का सामान्य मानवी जो करप्शन के कारण पीड़ित है, देश को करप्शन ने दीमक की तरह खोखला कर दिया है। ऐसे में भ्रष्टाचार के प्रति हमारी जो जीरो टॉलरेंस नीति है, आज देश ने हमें उसके लिए आशीर्वाद दिया है। आदरणीय सभापति जी, आज दुनिया भर में भारत की साख बढ़ी है। आज विश्व में भारत का गौरव हो रहा है और भारत के तरफ देखने का नजरिया भी एक गौरवपूर्ण नजरिया हर भारतवासी अनुभव करता है। आदरणीय सभापति जी, देश की जनता ने देखा है कि हमारा एकमात्र लक्ष्य नेशन फर्स्ट है, भारत सर्वप्रथम है। हमारे हर नीति, हमारे हर निर्णय, हमारे हर कार्य का एक ही तराजू रहा है कि भारत प्रथम, और भारत की इस प्रथम की भावना के साथ देश में जो आवश्यक रिफॉर्म थे, उस रिफॉर्म को भी हमने लगातार जारी रखा है। 10 वर्ष में हमारी सरकार सबका साथ, सबका विकास, इस मंत्र को लेकर के लगातार देश के सभी लोगों का कल्याण करने का प्रयास करती रही है। आदरणीय सभापति जी, हम उस सिद्धांतों को समर्पित है जिसमें भारत के संविधान के स्पिरिट के अनुसार सर्वपंथ संभाव, उस विचार को सर्वोपरि रखते हुए हमने देश की सेवा करने का प्रयास किया। आदरणीय सभापति जी, इस देश ने लंबे अरसे तक तुष्टीकरण की राजनीति भी देखी। इस देश ने लंबे अरसे तक तुष्टीकरण का गवर्नेंस का मॉडल भी देखा। देश ने पहली बार सेक्युलरिज्म का एक पूरा हमने जो प्रयास किया, और वो हमने तुष्टीकरण नहीं, संतुष्टीकरण, और संतुष्टीकरण के विचार को लेकर के हम चले हैं। और जब हम संतुष्टीकरण की बात करते हैं तो इसका मतलब है कि हर योजना का सैचुरेशन, गवर्नेंस की
आखिरी व्यक्ति तक पहुंचने की हमारी जो संकल्पना है, इसको परिपूर्ण करना। और जब हम सैचुरेशन के सिद्धांत को लेकर चलते हैं, तब सैचुरेशन सच्चे अर्थ में सामाजिक न्याय होता है। सैचुरेशन सच्चे अर्थ में सेक्युलरिज्म होता है, और उसी को देश की जनता ने हमें तीसरी बार बिठा करके मोहर लगा दी है। आदरणीय सभापति जी, अपीजमेंट ने इस देश को तबाह करके रखा है, और इसलिए हमने जस्टिस टू ऑल, अपीजमेंट टू नन, इस सिद्धांत को लेकर के हम चले हैं। आदरणीय सभापति जी, 10 साल के हमारे कार्य को देखने परखने के बाद भारत की जनता ने हमारा समर्थन किया है। आदरणीय सभापति जी, हमें फिर एक बार 140 करोड़ देशवासियों की सेवा करने का मौका मिला है। आदरणीय सभापति जी, इस चुनाव ने इस बात को सिद्ध किया है कि भारत की जनता कितनी परिपक्व है, भारत की जनता कितने विवेकपूर्ण रूप से और कितने उच्च आदर्शों को लेकर के अपने विवेक का सद्बुद्धि से उपयोग करती है, और उसी का नतीजा है कि आज तीसरी बार हम आपके सामने, देश की जनता के सामने नम्रता पूर्वक सेवा करने के लिए उपस्थित हुए हैं। आदरणीय सभापति जी, देश की जनता ने हमारी नीतियों को देखा है, हमारी नियत, हमारी निष्ठा, उस पर देश की जनता ने भरोसा किया है। आदरणीय सभापति जी, इस चुनाव में हम जनता के बीच एक बड़े संकल्प के साथ देश की जनता के पास आशीर्वाद मांगने के लिए गए थे, और हमने आशीर्वाद मांगा था विकसित भारत के हमारे संकल्प के लिए। हमने विकसित भारत के निर्माण के लिए एक प्रतिबद्धता के साथ, एक शुभ निष्ठा के साथ, जन सामान्य का कल्याण करने के इरादे से हम गए थे। जनता ने विकसित भारत के संकल्प को 4 चांद लगा करके हमें फिर से एक बार विजयी बना करके देश की जनता की सेवा करने का मौका दिया है। आदरणीय सभापति जी, जब देश विकसित होता है तब कोटि कोटि जनों के सपने पूरे होते हैं। देश जब विकसित होता है तब कोटि कोटि जनों के संकल्प सिद्ध होते हैं। आदरणीय सभापति जी, जब देश विकसित होता है तब आने वाली पीढ़ियों के लिए भी एक मजबूत नींव उनके सपनों को पूरा करने के लिए तैयार हो जाती है। आदरणीय सभापति जी, विकसित भारत का सीधा सीधा लाभ हमारे देश के नागरिकों की गरिमा, हमारे देश के नागरिकों के क्वालिटी ऑफ लाइफ में सुधार, ये स्वाभाविक हमें विकसित भारत होने से देश के कोटि-कोटि जनों के भाग्य में आता है। आजादी के बाद मेरा देश का सामान्य नागरिक इन चीजों के लिए तरसता रहा है। आदरणीय सभापति जी, जब विकसित भारत होता है तब हमारे गांव की स्थिति, हमारे शहरों की स्थिति, उसमें भी बहुत बड़ा सुधार होता है। गांव के जीवन में गौरव भी होता है, गरिमा भी होती है और विकास के नए नए अवसर भी होते हैं। हमारे शहरों का विकास भी एक अवसर के रूप में विकसित भारत में उभरता है, तब दुनिया की विकास यात्रा में भारत के शहर भी बराबरी करेंगे। ये हमारा सपना है। आदरणीय सभापति जी, विकसित भारत का मतलब होता है कोटि-कोटि नागरिकों को कोटि-कोटि अवसर उपलब्ध होते हैं, अनेक अनेक अवसर उपलब्ध होते हैं और वो अपने कौशल्य, अपनी क्षमता और संसाधनों के अनुसार विकास की नई सीमाओं को प्राप्त कर सकता है। आदरणीय सभापति जी, आदरणीय सभापति जी, आदरणीय सभापति जी, मैं आज आपके माध्यम से देशवासियों को विश्वास दिलाता हूं, मैं देशवासियों को विश्वास दिलाता हूं कि विकसित भारत के जिस संकल्प को लेकर के हम चले हैं, उस संकल्प की पूर्ति के लिए हम भरसक प्रयास करेंगे, पूरी निष्ठा से करेंगे, पूरी ईमानदारी से करेंगे और हमारा समय का पल पल और हमारे शरीर का कण कण हम देशवासियों को विकसित भारत के सपने को पूरा करने के लगाएंगे। हमने देश की जनता को कहा था 24/7 फॉर 2047। आज मैं इस सदन में ही दोहराता हूं कि हम उस काम को अवश्य पूरा करेंगे। आदरणीय सभापति जी, 2014 के उन दिनों को याद कीजिए। उन 2014 के उन दिनों को याद करेंगे तो हमारे ध्यान में आएगा कि हमारे देश के लोगों ने उनका आत्मविश्वास खो चुका था। देश निराशा की गर्त में डूब चुका था। ऐसे समय 2014 के पहले देश ने जो सबसे बड़ा नुकसान भुगता था, जो सबसे बड़ी अमानत खोई थी, वो था देशवासियों का आत्मविश्वास। और जब विश्वास और आत्मविश्वास खो जाता है तब उस व्यक्ति को, उस समाज को, देश को खड़ा होना मुश्किल हो जाता है। और उस समय सामान्य मानवी के मुंह से यही निकलता था कि वो इस देश का कुछ हो नहीं सकता। उस समय हर जगह पे ये 7 शब्द सुनाई देते थे, इस देश का कुछ नहीं हो सकता। यही शब्द 2014 के पहले सुनाई देते थे। भारतीयों की हताशा के इन 7 शब्द एक प्रकार से पहचान बन गए थे। उस समय आए दिन अखबार खोलते थे तो घोटालों की खबरें ही पढ़ने को मिलती थी और सैकड़ों करोड़ के घोटाले, रोज नए घोटाले, घोटालों से स्पर्धा, ये घोटालेबाज लोगों के घोटाले, इसी का एक कालखंड था। और बेशर्मी के साथ सार्वजनिक रूप से स्वीकार भी कर लिया जाता था कि दिल्ली से 1 रुपया निकलता है तो 15 पैसा पहुंचता है। 1 रुपये में 85 पैसे का घोटाला। इस घोटालों की दुनिया ने देश को निराशा की गर्त में डुबो दिया था। पॉलिसी पैरालिसिस था, फ्रेजाइल 5 में पहुंच चुके थे। भाई भतीजावाद इतना फैला हुआ था कि जिसके लिए सामान्य नौजवान तो आशा छोड़ चुका था कि अगर कोई सिफारिश करने वाला नहीं है तो जिंदगी अटक जाएगी। ये स्थिति पैदा हुई थी। गरीब को घर लेना हो, हजारों रुपए की रिश्वत देनी पड़ती थी। आदरणीय सभापति जी, अरे गैस के कनेक्शन के लिए मेंबर पार्लियामेंट के यहाँ, सांसदों के यहाँ अच्छों को चक्कर काटने पड़ते थे और वो भी बिना कट के लिए गैस के कनेक्शन नहीं मिलते थे। आदरणीय सभापति जी, मुफ्त राशन भी पता नहीं कब बाजार में दुकान पे बोर्ड लटक जाए, हक का राशन नहीं मिलता था, उसके लिए भी रिश्वत देनी पड़ती थी। और हमारे ज्यादातर भारतीय भाई बहन इतने निराश हो चुके थे कि वो अपने भाग्य को दोष दे करके, अपने नसीब को दोष दे करके जिंदगी काटने के लिए मजबूर हो जाते थे। आदरणीय सभापति जी, वो एक वक्त था 2014 के पहले जब वो 7 शब्द हिंदुस्तान के जनमन में स्थिर हो चुके थे। निराशा की गर्त में डूबा हुआ समाज था। तब देश की जनता ने हमें सेवा करने के लिए चुना और वो पल देश के परिवर्तित युग का प्रारंभ हो चुका था। और 10 साल में मैं कहूंगा मेरी सरकार की अनेक सफलताएं हैं, अनेक सिद्धियां हैं, लेकिन एक सिद्धि जिसने हर सिद्धियों में भी जोर भर दिया, ताकत भर दी, वो थी देश निराशा की गर्त में से निकल करके आशा और विश्वास के साथ खड़ा हो गया। देश में आत्मविश्वास बुलंदी पर पहुंचा और उसके कारण वो सब वक्त का जो शब्द थे देश की युवा पीढ़ी की डिक्शनरी से निकलने लगे। धीरे धीरे देश के मन में स्थिर हो गया। जो 2014 से पहले कहते थे कुछ नहीं हो सकता, वो कहने लगे तब इस देश में सब कुछ हो सकता है, इस देश में सब कुछ संभव है। ये विश्वास जताने का काम किया हमने। जब हमने सबसे पहले तेज 5G रोल आउट हमने दिखाया, आज देश कहने लगा तीव्र गति से 5G का रोल आउट होना। देश गौरव से कहने लगा भारत कुछ भी कर सकता है। आदरणीय सभापति जी, वो एक जमाना था जब कोयले घोटाले में बड़ों बड़ों के हाथ काले हो चुके थे। आज कोयले का सर्वाधिक उत्पाद, सर्वाधिक प्रोडक्शन, आज कोल प्रोडक्शन के विक्रम हुए हैं और इसी के कारण देश अब कहने लगा है अब भारत कुछ भी कर सकता है। आदरणीय सभापति जी, वो एक समय था 2014 के पहले जब फोन बैंकिंग करके बड़े बड़े बैंक घोटाले किए जा रहे थे। अपनी पर्सनल प्रॉपर्टी की तरह बैंक का खजाना लूट लिया गया था। आदरणीय सभापति जी, 2014 के बाद नीतियों में परिवर्तन, निर्णयों में गति, निष्ठा, प्रामाणिकता की और उसी का परिणाम है दुनिया की अच्छी बैंकों में आज भारत की बैंकों का स्थान बन गया। आज भारत की बैंक सर्वाधिक मुनाफा करने वाली बैंक बन गई और लोगों की सेवा करने के लिए। आदरणीय सभापति जी, 2014 के पहले वो भी एक वक्त था कि जब आतंकी आकर के जी चाहे वहां, जब चाहे वहां हमला कर सकते थे। 2014 के बाद स्थिति ये बनी कि जब वहां उस समय 14 के पहले निर्दोष लोग मारे जाते थे, हिंदुस्तान के कोने कोने को टारगेट किया जाता था और सरकारें चुपचाप बैठी रहती थी, मुंह तक खोलने को तैयार नहीं थी। आज 2014 के बाद का हिंदुस्तान घर में घुसकर मारता है, सर्जिकल स्ट्राइक करता है, एयर स्ट्राइक करता है और आतंकवाद के आकाओं को भी सबक सिखाने का सामर्थ्य दिखा दिया है। आज आदरणीय सभापति जी, देश का एक एक नागरिक जानता है कि अपनी सुरक्षा के लिए भारत कुछ भी कर सकता है। आदरणीय सभापति जी, आर्टिकल 370 इसकी पूजा करने के वाले लोगों ने, वोट बैंक की राजनीति का हथियार बनाने वालों ने 370 को उसने जम्मू कश्मीर का जो हालात कर दिए थे, वहां के लोगों के अधिकार छीन लिए थे। भारत का संविधान जम्मू की कश्मीर की सीमा में प्रवेश नहीं कर सकता था और यहां संविधान सर पे रख करके नाचने वाले लोग संविधान को जम्मू कश्मीर में लागू करने का हौसला नहीं रखते, बाबा साहब अम्बेडकर का अपमान किया करते थे। और 370 का वो जमाना था, सेनाओं पर पत्थर चलते थे और लोग निराशा में डूब करके कहते थे अब तो जम्मू कश्मीर में कोई हो नहीं सकता है। आज आर्टिकल 370 की दीवार गिरी, पत्थरबाजी बंद है, लोकतंत्र मजबूत है और लोग बढ़ चढ़ करके भारत के संविधान में भरोसा करते हुए, भारत के तिरंगे झंडे पर भरोसा करते हुए, भारत के लोकतंत्र में भरोसा करते हुए बढ़ चढ़ करके मतदान करने के लिए आगे आ रहे हैं, ये साफ साफ दिखाई देता है। आदरणीय सभापति जी, 140 करोड़ देशवासियों में ये विश्वास पैदा होना, ये उम्मीद, और जब विश्वास जगता है तो विकास का वो ड्राइविंग फोर्स बन जाता है। इस विश्वास ने विकास का ड्राइविंग फोर्स का काम किया है। आदरणीय सभापति जी, ये विश्वास विकसित भारत संकल्प से सिद्धि का विश्वास है। आदरणीय सभापति जी, जब आजादी का जंग चल रहा था और जो भाव देश में था, जो जोश था, उत्साह था, उमंग था, जो विश्वास था कि आजादी लेके रहेंगे, आज देश के कोटि कोटि जनों में वो विश्वास पैदा हुआ है, जिस विश्वास के कारण आज विकसित भारत होना एक प्रकार से उसकी मजबूत नींव इस चुनाव में शिलान्यास हो चुका है। जो ललक आजादी के आंदोलन में थी, वही ललक विकसित भारत के इस सपने को साकार करने में है। आदरणीय सभापति जी, आज भारत के लक्ष्य बहुत विराट है और आज भारत को एक ऐसी स्थिति पे 10 साल में पहुंचा है कि हमें खुद से ही स्पर्धा करनी है, हमें ही अपने पुराने रिकॉर्ड तोड़ने हैं और नेक्स्ट लेवल पर हमें हमारी विकास की यात्रा को ले जाना है। 10 वर्षों में भारत विकास की जिस ऊंचाई पर पहुंचा है, वो हमारी प्रतिस्पर्धा का एक मार्ग बन चुका है, एक बेंचमार्क बन चुका है। पिछले 10 साल में हमने जो स्पीड पकड़ी है, अब हमारा मुकाबला उसी स्पीड को और ज्यादा स्पीड में ले जाने का है और मेरा विश्वास है देश की इच्छा को हम उसी गति से पूरा करेंगे। आदरणीय सभापति जी, हम हर सफलता को, हर सेक्टर को नेक्स्ट लेवल तक ले जाएंगे। आदरणीय सभापति जी, 10 सालों में भारत की इकोनॉमी को 10 साल के अल्पकाल में हम 10 नंबर से इकोनॉमी को 5 नंबर पे ले गए। अब हम नेक्स्ट लेवल पर जाने के लिए जिस गति से निकले हैं, अब हम देश की इकोनॉमी को नंबर 3 पर ले जाएंगे। आदरणीय सभापति जी, 10 सालों में हमने भारत को मोबाइल फोन का बड़ा मैन्युफैक्चरर बना दिया, भारत को मोबाइल फोन का बड़ा एक्सपोर्टर बना दिया। अब यही काम इस हमारे टेन्योर में सेमीकंडक्टर और अन्य सेक्टर्स में हम करने जा रहे हैं। दुनिया के महत्वपूर्ण कामों में जो चिप्स काम में आएगी, वो चिप्स मेरे भारत की मिट्टी में तैयार हुई होगी। मेरे भारत के नौजवानों की बुद्धि का परिणाम होगा, मेरे भारत के नौजवानों के परिश्रम का परिणाम होगा। ये विश्वास हमारे भीतर है। आदरणीय सभापति जी, हम आधुनिक भारत की तरफ भी जाएंगे, हम विकास की नई ऊंचाइयों को, लेकिन हमारी जड़ें जमीन से जुड़ी रहेगी, हमारे पैर देश के जन सामान्य की जिंदगी से जुड़े रहेंगे और हम 4 करोड़ गरीबों के घर बना चुके हैं। आने वाले इस टेन्योर में तेज गति से 3 करोड़ और घर बना करके इस देश में किसी को भी घर के बिना रहना ना पड़े, ये हम देखेंगे। आदरणीय सभापति जी, 10 साल में विमेन सेल्फ हेल्प ग्रुप में हमने देश की कोटि-कोटि बहनों को एंटरप्रेन्योर के क्षेत्र में एक बहुत सफलतापूर्वक हमने आगे बढ़े हैं। अब हमने उसको नेक्स्ट लेवल पे ले जाने वाले हैं। अब हमारे विमेन सेल्फ हेल्प ग्रुप में जो बहनें काम कर रही हैं, उनकी आर्थिक गतिविधि इतनी बढ़ाना चाहते हैं, उसका इतना विस्तार करना चाहते हैं कि हम बहुत कम समय में 3 करोड़ ऐसी बहनों को लखपति दीदी बनाने का संकल्प लेकर के चलने वाले हैं। आदरणीय सभापति जी, मैंने पहले भी कहा है, आज मैं फिर से दोहराया हूं, हमारी तीसरी टर्म में इसका मतलब है हम 3 गुना स्पीड से काम करेंगे। हमारी तीसरी टर्म का मतलब है हम 3 गुना शक्ति लगाएंगे। हमारी तीसरी टर्म का मतलब है हम देशवासियों को 3 गुना परिणाम ला करके देंगे।
अपने सदस्यगणों, नेता प्रतिपक्ष मान्य सदस्य, मैंने सबको मौका दिया, आपने 90 मिनट बोला, ये संसद में तरीका ठीक नहीं है। मैं आग्रह करूंगा, आप इस तरीके से संसद की मर्यादाओं को बनाए, उचित नहीं है। आप जाइए बेंच में से, बैठिए। आपको पर्याप्त समय, पर्याप्त अवसर दिया, आपको 90 मिनट बोलने दिया और समय पूरा दिया, आपकी सभी सदस्यों को बोलने का अवसर दिया, लेकिन आप जब सदन के नेता बोलते हैं, जिस तरीके का व्यवहार करते हैं, ये संसदीय परंपराओं के अनुरूप नहीं है और ये इतनी बड़ी पार्टी जो लेकर आप चल रहे हो, उसकी परंपराओं के अनुरूप भी नहीं है। ये 5 साल ऐसे चलने वाला नहीं है। माननीय प्रधानमंत्री जी।
आदरणीय सभापति जी, आदरणीय सभापति जी, एनडीए का तीसरी बार सरकार में आना एक ऐतिहासिक घटना है। आजादी के बाद ये सौभाग्य दूसरी बार इस देश में आया है और 60 साल के बाद आया है। इसका मतलब ये सिद्धि पाना कितना कठोर परिश्रम के बाद होता है, कितना अभूतपूर्व विश्वास संपादन होने के बाद होता है। ऐसे ही ये राजनीति के खेल से नहीं होता है, जनता जनार्दन की सेवा से प्राप्त आशीर्वाद से होता है। आदरणीय सभापति जी, जनता ने हमें स्थिरता और निरंतरता, इसके लिए जनादेश दिया है। लोकसभा चुनाव के साथ ही आदरणीय सभापति जी, लोगों की नजर से चीजें जरा ओझल हो गई। लोकसभा के चुनाव के साथ साथ हमारे देश में 4 राज्यों के बीच चुनाव हुए और आदरणीय सभापति जी, इन चारों ही राज्यों में एनडीए ने अभूतपूर्व सफलता प्राप्त की है। अभूतपूर्व सफलता प्राप्त। हमने शानदार विजय प्राप्त की। महाप्रभु जगन्नाथ जी की धरती उड़ीसा ने हमें भरपूर आशीर्वाद दिया है। आदरणीय सभापति जी, आंध्र प्रदेश एनडीए ने क्लीन स्वीप किया है। सूक्ष्मदर्शक यंत्र में भी ये नजर नहीं आते हैं। आदरणीय सभापति जी, अरुणाचल प्रदेश हम फिर एक बार सरकार बनाई है। सिक्किम में एनडीए ने फिर एक बार सरकार बनाई है। अभी 6 महीने पहले ही आदरणीय सभापति जी, आपका होम स्टेट राजस्थान, मध्य प्रदेश और छत्तीसगढ़ में हमने प्रचंड विजय पाया है। आदरणीय सभापति जी, हमें नए नए क्षेत्रों में जनता का प्यार मिल रहा है, जनता का आशीर्वाद मिल रहा है। आदरणीय सभापति जी, बीजेपी ने केरला में इस बार खाता खोला है और बड़े गर्व के साथ केरला से हमारे सांसद हमारे साथ बैठते हैं। तमिलनाडु में कई सीटों पर बीजेपी ने दमदार उपस्थिति दर्ज की है। कर्नाटक, यूपी और राजस्थान में पिछली बार की तुलना में बीजेपी का वोट परसेंट बढ़ा है। आने वाले समय में 3 राज्यों में चुनाव है। जिन राज्यों में चुनाव है उसमें से 3 की मैं बात करता हूं। महाराष्ट्र, हरियाणा और झारखंड, यहां चुनाव आ रहे हैं। आदरणीय सभापति जी, पिछली विधानसभा में इन 3 राज्यों में हमें जितने वोट मिले थे, इस लोकसभा चुनाव में इन 3 राज्यों में हमें उससे भी ज्यादा वोट मिले हैं। आदरणीय सभापति जी, पंजाब में भी हमारा भूतपूर्व प्रदर्शन रहा है और हमें बढ़त मिली है। जनता जनार्दन का भरपूर आशीर्वाद हमारे साथ है। आदरणीय सभापति जी, 24 के चुनाव में कांग्रेस के लिए भी इस देश की जनता ने जनादेश दिया है और इस देश की जनादेश है कि आप वहीं बैठिए, विपक्ष में ही बैठो और तर्क खत्म हो जाए तो चीखते रहो, चिल्लाते रहो। आदरणीय सभापति जी, कांग्रेस के इतिहास का ये पहला मौका है जब लगातार 3 बार कांग्रेस 100 का आंकड़ा पार नहीं कर पाई है। कांग्रेस के इतिहास में ये तीसरी सबसे बड़ी हार है। तीसरा सबसे खराब प्रदर्शन है। अच्छा होता कांग्रेस अपनी हार स्वीकार करती, जनता जनार्दन के आदेश को सर आंखों पर चढ़ाती, आत्ममंथन करती, लेकिन ये तो कुछ शीर्षासन करने में लगे हुए हैं। और कांग्रेस और उसकी इकोसिस्टम दिन रात बिजली जला करके हिंदुस्तान के नागरिकों के मन में ये प्रस्थापित करने की कोशिश कर रहे हैं कि उन्होंने हमें हरा दिया है। आदरणीय सभापति जी, ऐसा क्यों हो रहा है, मैं जरा अपने सामान्य जीवन के अनुभव से बताता हूं। कोई छोटा बच्चा साइकिल लेके निकला है और अगर वो बच्चा गिर जाता है, साइकिल से लुढ़क जाता है, रोने लगता है, तो कोई बड़ा व्यक्ति आकर के उसके पास पहुंच जाता है और उसको कहता है देखो चींटी मर गई, देखो चिड़िया उड़ गई, अरे देखो तुम तो बहुत बढ़िया साइकिल चलाते हो, अरे तुम तो गिरे नहीं हो। ऐसा करके उसका जरा मन ठीक करने के लिए प्रयास करते हैं, उसका ध्यान भटका करके उस बच्चे का मन बहला देते हैं। तो आजकल बच्चे का मन बहलाने का काम चल रहा है। कांग्रेस के लोग और उनका इकोसिस्टम आजकल ये मन बहलाने का काम कर रहा है। आदरणीय सभापति जी, 1984 उस चुनाव को याद कीजिए। उसके बाद इस देश में 10 लोकसभा के चुनाव हुए, 10 लोकसभा के चुनाव हुए। 84 के बाद 10 लोकसभा के चुनाव होने के बावजूद भी कांग्रेस 250 के आंकड़े को छू नहीं पाई है। इस बार किसी तरह 99 के चक्कर में फंसे गए हैं। आदरणीय सभापति जी, मुझे एक किस्सा याद आता है। घमंड में घूम रहा था और देश सबको दिखाता था, देखो कितने ज्यादा मार्क्स आए हैं। तो लोग भी जब 99 सुनते थे तो शाबाशी देते थे, बहुत उसको हौसला बुलंद करते थे। तो फिर उनके टीचर आए कि भैया किस बात की मिठाई बांट रहे हो, ये 100 में से 99 नहीं लाया, ये तो 543 में से लाया है। अब उस बालक बुद्धि को कौन समझाए कि तुमने फेल होने का वर्ल्ड रिकॉर्ड बना दिया है। कांग्रेस आदरणीय सभापति जी, कांग्रेस के नेताओं के बयानों में ये बयानबाजी ने शोले फिल्म को भी पीछे छोड़ दिया है। आप सबको शोले फिल्म की वो मौसी जी याद होगी। तीसरी बार तो हारे हैं, पर मौसी ये बात तो सही है, तीसरी बारी तो हारे हैं, पर मौसी मोरल विक्ट्री तो है ना। आदरणीय सभापति जी, 13 राज्यों में 0 सीटें आई हैं। अरे मौसी, 13 राज्यों में 0 सीटें आई हैं, पर हीरो तो है ना। आदरणीय सभापति जी, अरे पार्टी की लुटिया तो दुबई है। अरे मौसी, पार्टी अभी भी सांसें तो ले रही है। मैं कांग्रेस के लोगों को कहूंगा, जनादेश को फर्जी जीत के जश्न में मत दबाओ। जनादेश को फर्जी जीत के नशे में मत दबाओ, जश्न में मत दबाओ। ईमानदारी से देशवासियों के जनादेश को जरा समझने की कोशिश करो, उसे स्वीकार करो। आदरणीय सभापति जी, मुझे नहीं पता कि कांग्रेस के जो साथी दल है उन्होंने इस चुनाव का विश्लेषण किया है कि नहीं किया है। ये चुनाव इन साथियों के लिए भी एक संदेश है। आदरणीय सभापति जी, अब कांग्रेस पार्टी 2024 से एक परजीवी कांग्रेस पार्टी के रूप से जानी जाएगी। 2024 से जो कांग्रेस है वो परजीवी कांग्रेस है, और परजीवी वो होता है जो जिस शरीर पर उस शरीर के साथ रहता है, ये परजीवी उसी को ही खाता है। कांग्रेस भी जिस पार्टी के साथ गठबंधन करती है उसी के वोट खा जाती है और अपनी सहयोगी पार्टी की कीमत पर वो फलती फूलती है और इसलिए कांग्रेस परजीवी कांग्रेस बन चुकी है। मैं जब परजीवी कह रहा हूं तो तथ्यों के आधार पर कह रहा हूं। आदरणीय सभापति जी, मैं कुछ आंकड़े आपके माध्यम से सदन को और इस सदन के माध्यम से देश के सामने रखना चाहता हूं। जहां जहां भाजपा और कांग्रेस का सीधा मुकाबला था या जहां कांग्रेस मेजर पार्टी थी और साथी के पास 1-2-3 सीटें थी, वहां कांग्रेस का स्ट्राइक रेट सिर्फ और सिर्फ 26% है, 26% है। लेकिन जहां किसी का पल्लू पकड़ करके चलते थे, जहां वो जूनियर पार्टनर थे, किसी दल ने उनको कुछ दे दिया मौका, ऐसे राज्यों में कांग्रेस जहां जूनियर पार्टनर थी उनका स्ट्राइक रेट 50% है और कांग्रेस की 99 सीटों में से ज्यादातर सीटें उनके सहयोगियों ने उनको जिताया है और इसलिए मैं कहता हूं ये परजीवी कांग्रेस है। 16 राज्यों में जहां कांग्रेस अकेले लड़ी, वहां उसका वोट शेयर इस चुनाव में गिर चुका है। आदरणीय सभापति जी, गुजरात, छत्तीसगढ़ और मध्य प्रदेश, इन 3 राज्यों में जहां कांग्रेस अपने दम पर लड़ी और 64 में से 64 में से सिर्फ 2 सीट जीत पाई है, 64 में से 2। इसका साफ मतलब है कि इस चुनाव में कांग्रेस पूरी तरह परजीवी बन चुकी और अपने सहयोगी दलों के कंधे पर उन्होंने चढ़ करके ये सीटों का आंकड़ा बढ़ाया है। अगर कांग्रेस ने अपने सहयोगियों के जो वोट खाए हैं वो अगर न खाए होते तो लोकसभा में उनके लिए इतनी सीटें जीत पाना भी बहुत मुश्किल था। आदरणीय सभापति जी, ऐसे समय एक अवसर आया, देश ने विकास के रास्ते को चुना है, देश ने विकसित भारत के सपने को साकार करने का मन बना लिया है। तब भारत को एकजुट होकर समृद्धि का नया सफर तय करना है। ऐसे समय ये देश का दुर्भाग्य है कि हिंदुस्तान में 6 दशक तक राज करने वाली कांग्रेस पार्टी अराजकता फैलाने में जुटी हुई है। ये दक्षिण में जाकर उत्तर के लोगों के खिलाफ बोलते हैं, ये उत्तर में जाकर के पश्चिम के खिलाफ जहर उगलते हैं, पश्चिम के लोगों के खिलाफ बोलते हैं, महापुरुषों के खिलाफ बोलते हैं। इन्होंने भाषा के आधार पर बांटने की हर कोशिश की है। जिन नेताओं ने देश के हिस्से को भारत से अलग करने की वकालत की थी, उनको संसद की टिकट देने तक का दुर्भाग्य हमें देखना पड़ा, जो कांग्रेस पार्टी ने पाप किया। कांग्रेस पार्टी खुलेआम एक जाति को दूसरी जाति के खिलाफ लड़ाने के लिए रोज नई नैरेटिव कर रही है, नए तय अफवाहें फैला रही है। आदरणीय सभापति जी, देश के एक हिस्से के लोगों को हीन बताने की प्रवृत्ति का भी कांग्रेस के लोग बढ़ावा दे रहे हैं। आदरणीय सभापति जी, कांग्रेस देश में आर्थिक अराजकता फैलाने की दिशा में भी सोची समझी चाल चल रही है। चुनाव के दौरान जो बातें की गई, राज्यों में, उनके राज्यों में जिस प्रकार से आर्थिक कदम ये उठा रहे हैं, ये वो रास्ता आर्थिक अराजकता की तरफ देश को घसीटने वाला है। उनके राज्य देश पर आर्थिक बोझ बन जाए, ये खेल जानबूझ करके खेला जा रहा है। मंचों से साफ साफ घोषणा की गई, अगर इनके मन का परिणाम नहीं आया, 4 जून को देश में आग लगा दी जाएगी, लोग इकट्ठे होंगे, अराजकता फैलाएंगे। ये अधिकृत रूप से आह्वान किए गए, ये अराजकता फैलाना इनका मकसद है। भारत की लोकतांत्रिक प्रक्रिया को सवालों के घेरे में लाकर अराजकता फैलाने का प्रयास किया गया है। सीएए को लेकर जो अराजकता फैलाई गई, देश के लोगों में गुमराह करने का जो खेल खेला गया, पूरी इकोसिस्टम इस बात को बल देती रही ताकि उनके राजनीतिक मकसद पूरे हो। आदरणीय सभापति जी, देश को दंगों में झोंकने के भी कुत्सित प्रयास पूरे देश ने देखे हैं। आदरणीय सभापति जी, आजकल सिंपैथी गेन करने का एक नई ड्रामेबाजी शुरू की गई है, नया खेल खेला जा रहा है। मैं एक किस्सा सुनाता हूं। एक बच्चा स्कूल से आया और जोर जोर से रोने लगा और उसकी माँ भी डर गई, क्या हो गया, बहुत रोने लगा। और फिर कहने लगा माँ मुझे आज स्कूल में मारा गया, आज स्कूल में मुझे उसने मारा, आज स्कूल में मुझे इसने मारा, और जोरों जोरों से रोने लगा। माँ परेशान हो गई। उसने उसे पूछा कि बेटा बात क्या थी, लेकिन वो बता नहीं रहा था, बस रो रहा था, मुझे मारा मुझे मारा। बच्चा ये नहीं बता रहा था कि आज स्कूल में उस बच्चे ने किसी बच्चे को मां की गाली दी थी। उसने ये नहीं बताया किसी बच्चे की किताबें उसने फाड़ दी थी। उसने ये नहीं बताया कि उसने टीचर को चोर कहा था। उसने ये नहीं बताया कि किसी का टिफिन चुरा करके खा गया था। हमने कल सदन में यही बचकाना हरकत देखी है। कल यहां बालक बुद्धि का विलाप चल रहा था। मुझे मारा गया, मुझे इसने मारा, मुझे उसने मारा, मुझे यहां मारा, मुझे वहां मारा, ये चल रहा था। आदरणीय सभापति जी, सिंपैथी हासिल करने के लिए ये नया ड्रामा चलाया गया है, लेकिन देश ये सच्चाई जानते हैं कि ये हजारों करोड़ रुपए उसकी हेराफेरी के मामले में जमानत पर बाहर है। चोर बताने के मामले में सजा पा चुके हैं। इनको देश की सर्वोच्च अदालत पर गैर जिम्मेदाराना बयान देने के बाद माफी मांगनी पड़ी है। इन पर महान स्वातंत्र सेनानी वीर सावरकर जैसे महान व्यक्तित्व का अपमान करने का मुकदमा है। इन पर देश की सबसे बड़ी पार्टी के अध्यक्ष को हत्यारा कहने का मुकदमा चल रहा है। इन पर अनेक नेताओं, अधिकारियों, संस्थानों पर झूठ बोलने के गंभीर आरोप हैं और वो केस चल रहे हैं। आदरणीय सभापति जी, बालक बुद्धि में ना बोलने का ठिकाना होता है और न ही बालक बुद्धि में व्यवहार का कोई ठिकाना होता है। और जब ये बालक बुद्धि पूरी तरह सवार हो जाती है तो सदन में भी किसी के गले पड़ जाते हैं। ये बालक बुद्धि अपनी सीमाएं खो देती है तो सदन के अंदर बैठ करके आंखें मारते हैं, आंखें मारते हैं। इनकी सच्चाई आदरणीय सभापति जी अब पूरा देश समझ गया है। इसलिए तुमसे ना हो पाएगा।
बैठिए माननीय सदस्य, ये तरीका
आदरणीय अध्यक्ष जी, तुलसीदास जी कह गए हैं, अखिलेश जी, तुलसीदास जी कह गए हैं, जूठई लेना, जूठई देना, जूठई भोजन, जूठई चबेना। तुलसीदास जी ने कहा है, जूठई लेना, जूठई देना, जूठई भोजन, जूठई चबेना। कांग्रेस ने झूठ को राजनीति का हथियार बनाया। कांग्रेस के मुंह झूठ लग गया है। जैसे वो आदमखोर एनिमल होता है ना, जिसको लहू मुंह पे लग जाता है, वैसे आदरणीय सभापति जी, कांग्रेस के मुंह झूठ का खून लग गया है। देश ने कल 1 जुलाई को खटाखट दिवस भी मनाया है। जुलाई को लोग अपने बैंक अकाउंट चेक कर रहे थे कि 8,500 रुपए आए कि नहीं आए। ये झूठ नैरेटिव का परिणाम देखिए। इसी चुनाव में कांग्रेस ने देशवासियों को गुमराह किया। माताओं बहनों को हर महीने 8,500 रुपये देने का झूठ। इन माताओं के बहनों के दिलों को जो चोट लगी है ना, वो श्राप बन करके ये कांग्रेस को तबाह करने वाली है। आदरणीय सभापति जी, ईवीएम को लेकर झूठ, संविधान को लेकर झूठ, आरक्षण को लेकर झूठ, उससे पहले राफेल को लेकर झूठ, HAL को लेकर के झूठ, LIC को लेकर के झूठ, बैंकों को लेकर झूठ, कर्मचारियों को भी भड़काने के प्रयास हुए। हौसला तो इतना बढ़ गया कि कल सदन को भी गुमराह करने का प्रयास हुआ। कल अग्निवीर को लेकर सदन में झूठ बोला गया। कल यहां भरपूर असत्य बोला गया कि MSP नहीं दिया जा रहा। अध्यक्ष जी, संविधान की गरिमा से खिलवाड़ ये सदन का दुर्भाग्य है। और अनेक बार लोकसभा में जीत करके आए लोग सदन की गरिमा के साथ खिलवाड़ करें, ये शोभा नहीं देता है। आदरणीय सभापति जी, जो दल 60 साल तक यहां बैठा है, जो सरकार के कामों को जानता है, जिसके पास अनुभवी नेताओं की श्रृंखला है, वे जब अराजकता के इस रास्ते पर चले जाएं, झूठ के रास्ते को चुन ले, तब देश गंभीर संकट की तरफ जा रहा है, इसका सबूत मिल रहा है। आदरणीय सभापति जी, सदन की गरिमा से खिलवाड़, ये हमारे संविधान निर्माताओं का अपमान है, इस देश के महापुरुषों का अपमान है, देश के लिए, आजादी के लिए बलिदान देने वाले वीर सपूतों का अपमान है। और इसलिए आदरणीय सभापति जी, मैं जानता हूं आप बहुत सहृदयी हैं, आप उदार मन के मालिक हैं, आप संकट के समय भी हल्की फुल्की मीठी मुस्कान के साथ चीजों को झेल लेते हैं। लेकिन आदरणीय सभापति जी, अब जो हो रहा है, कल जो हुआ है, वो गंभीरता से लिए बिना संसदीय लोकतंत्र को हम रक्षित नहीं कर पाएंगे। आदरणीय सभापति जी, इन हरकतों को बालक बुद्धि कह करके, बालक बुद्धि मान करके हम नजरअंदाज नहीं करना चाहिए, कतई नजरअंदाज नहीं करना चाहिए। और मैं इसलिए कह रहा हूं कि इसके पीछे इरादे नेक नहीं है, इरादे गंभीर खतरे के हैं, और मैं देशवासियों को भी जगाना चाहता हूं। आदरणीय सभापति जी, इन लोगों का झूठ हमारे देश के नागरिकों की विवेक बुद्धि पर आशंका व्यक्त करता है। उनका झूठ देश के सामान्य विवेक बुद्धि पर एक तमाचा मारने की निर्लज्ज हरकत है। आदरणीय सभापति जी, ये हरकतें देश की महान परंपराओं पर तमाचा है। आदरणीय सभापति जी, इस सदन की गरिमा बचाने का बहुत बड़ी जिम्मेदारी आप पर है। सदन में शुरू हुई झूठ की परंपरा पर कठोर कार्रवाई करेंगे, ये देशवासियों की भी और इस सदन की भी अपेक्षा है। आदरणीय सभापति जी, कांग्रेस ने संविधान और आरक्षण पर भी हमेशा झूठ बोला। आज मैं 140 करोड़ देशवासियों के सामने सच्चाई रखना चाहता हूं, बड़ी नम्रता पूर्वक रखना चाहता हूं। देशवासियों ने भी इस सत्य को जानना बहुत जरूरी है। आदरणीय सभापति जी, आपातकाल इमरजेंसी का 50वां वर्ष है। इमरजेंसी सिर पर सिर्फ सत्ता के लोभ के खातिर, तानाशाही मानसिकता के कारण देश पर थोपा गया तानाशाही शासन था। सभी हदें पार कर चुके हैं। उसने अपने ही देशवासियों पर क्रूरता का पंजा फैलाया था और देश के ताने बाने को छिन्न विच्छिन्न करने का पाप किया था। आदरणीय सभापति जी, सरकारों को गिराना, मीडिया को दबाना, हर कारनामे में संविधान की भावना के खिलाफ, संविधान की धाराओं के खिलाफ, संविधान के एक एक शब्द के खिलाफ थे। ये वो लोग हैं जिन्होंने प्रारंभ से देश के दलितों के साथ, देश के पिछड़ों के साथ घोर अन्याय किया है। आदरणीय सभापति जी, और इसी कारण से बाबा साहब आम्बेडकर ने कांग्रेस की दलित विरोधी, पिछड़े विरोधी मानसिकता के कारण नेहरू जी की कैबिनेट से इस्तीफा दिया था। उन्होंने पर्दाफाश किया था कि कैसे नेहरू जी ने दलितों, पिछड़ों के साथ अन्याय किया और बाबा साहब आम्बेडकर ने कैबिनेट से इस्तीफा देते समय जो कारण बताए थे, वो कारण इनके चरित्र को दर्शाते हैं। बाबा साहब आम्बेडकर जी ने कहा था, मैं सरकार द्वारा अनुसूचित जातियों की उपेक्षा पर अपने अंदर उत्पन्न आक्रोश को रोक नहीं सका। ये बाबा साहब आम्बेडकर के शब्द हैं। अनुसूचित जातियों की उपेक्षा, इसने बाबा साहब आम्बेडकर को आक्रोशित कर दिया। बाबा साहब के सीधे हमले के बाद नेहरू जी ने बाबा साहब आम्बेडकर का राजनीतिक जीवन खत्म करने के लिए पूरी ताकत लगा दी। आदरणीय सभापति जी, पहले षड्यंत्र पूर्वक बाबा साहब आम्बेडकर को चुनाव में हरवाया गया। आदरणीय सभापति जी, हराया इतना ही नहीं, उन्होंने बाबा साहब आम्बेडकर के इस पराजय की, उसका जश्न मनाया, खुशी मनाई और खुशी उन्होंने व्यक्त की। आदरणीय सभापति जी, एक पत्र में ये लिखित है इस खुशी का। आदरणीय सभापति जी, बाबा साहब की तरह ही दलित नेता बाबू जगजीवन राम जी को भी उनका हक नहीं दिया गया। इमरजेंसी के बाद जगजीवन राम जी का पीएम बनने की संभावना थी। इंदिरा गांधी जी ने पक्का किया कि जगजीवन राम जी किसी भी हालत में पीएम न बने, और एक किताब में लिखा गया है कि किसी भी कीमत पर जगजीवन राम प्रधानमंत्री नहीं बनने चाहिए। अगर बन गए तो वो हटेंगे नहीं जिंदगी भर। ये इंदिरा जी गांधी का कोड उस किताब में है। कांग्रेस ने चौधरी चरण सिंह जी के साथ भी यही व्यवहार किया, उनको भी नहीं छोड़ा था। पिछड़ों के नेता कांग्रेस पार्टी के अध्यक्ष बिहार के सपूत सीताराम केसरी के साथ भी अपमानित व्यवहार करने का पाप इसी कांग्रेस ने किया। आदरणीय सभापति जी, कांग्रेस पार्टी प्रारंभ से ही आरक्षण की घोर विरोधी रही है। नेहरू जी ने तो मुख्यमंत्रियों को चिट्ठी लिख करके साफ साफ शब्दों में आरक्षण का विरोध किया था। कांग्रेस के एक प्रधानमंत्री श्रीमती इंदिरा गांधी जी ने मंडल कमीशन का रिपोर्ट ठंडे बक्से में सालों तक दबाए रखा था। आदरणीय सभापति जी, कांग्रेस पार्टी के तीसरे प्रधानमंत्री श्रीमान राजीव गांधी, और जब विपक्ष में थे उनका सबसे लंबा भाषण आरक्षण के खिलाफ था। वो आज भी संसद के रिकॉर्ड में उपलब्ध है। और इसलिए आदरणीय सभापति जी, मैं आज एक गंभीर विषय पर आपका और देशवासियों का ध्यान आकर्षित करना चाहता हूं। कल जो हुआ, इस देश के कोटि कोटि देशवासी आने वाली सदियों तक माफ नहीं करेंगे। आदरणीय सभापति जी, 131 साल पहले, 131 ईयर पहले स्वामी विवेकानंद जी ने शिकागो में कहा था, मुझे गर्व है कि मैं उस धर्म से आता हूं जिसने पूरी दुनिया को सहिष्णुता और वैश्विक स्वीकृति सिखाई है। 131 साल पहले हिंदू धर्म के लिए विवेकानंद जी ने अमेरिका के शिकागो में दुनिया के दिग्गजों के सामने कहा था। आदरणीय सभापति जी, हिंदू सहनशील है, हिंदू अपनत्व को लेकर के जीने वाला समूह है। इसी कारण भारत का लोकतंत्र, भारत की इतनी विविधताएं, उसका वैविध्य की विराटता आज उसी के कारण पनपी है और पनप रही है। आदरणीय सभापति जी, गंभीर बात है कि आज हिंदुओं पर झूठा आरोप लगाने की साजिश हो रही है, गंभीर षड्यंत्र हो रहा है। आदरणीय सभापति जी, आदरणीय सभापति जी, ये कहा गया हिंदू हिंसक होते हैं? ये है आपके संस्कार, ये है आपका चरित्र, ये है आपकी सोच। आदरणीय सभापति जी, ये देश शताब्दियों तक इसे भूलने वाला नहीं है। कुछ दिन पहले हिंदुओं में जो शक्ति की कल्पना है, उसके विनाश की घोषणा की गई थी। आप किस शक्ति की विनाश की बात करते हैं? ये देश सदियों से शक्ति का उपासक है। ये मेरा बंगाल मां दुर्गा की पूजा करता है, शक्ति की उपासना करता है। ये बंगाल मां काली की उपासना करता है, समर्पित भाव से करता है। आप उस शक्ति के विनाश की बातें करते हो। ये वो लोग हैं जिन्होंने हिंदू आतंकवाद ये शब्द गढ़ने की कोशिश की थी। इनके साथी हिंदू धर्म को उसकी तुलना डेंगू, मलेरिया ऐसे शब्दों से करें और ये लोग तालियां बजाएं, ये देश कभी माफ नहीं करेगा। आदरणीय सभापति जी, एक सोची समझी रणनीति के तहत इनका पूरा इकोसिस्टम, हिंदू परंपरा, हिंदू समाज, इस देश की संस्कृति, देश की विरासत, इसको नीचा दिखाना, उसे गाली देना, उसे अपमानित करना, हिंदुओं का मजाक उड़ाना, इसे फैशन बना दिया है और उसको संरक्षण देने का काम अपने राजनीतिक स्वार्थ के लिए ऐसे तत्व कर रहे हैं। आदरणीय सभापति जी, माननीय सदस्य प्लीज। आदरणीय सभापति जी, हम बचपन से सीखते हुए आए हैं, गांव का हो, शहर का हो, गरीब हो, अमीर हो, इस देश का हर बच्चा ये जानता है ईश्वर का हर रूप, आदरणीय सभापति जी, ईश्वर का हर रूप दर्शन के लिए होता है। ईश्वर का कोई भी रूप निजी स्वार्थ के लिए, प्रदर्शन के लिए नहीं होता है। जिसके दर्शन होते हैं उसके प्रदर्शन नहीं होते हैं। आदरणीय सभापति जी, हमारे देवी देवताओं का अपमान 140 करोड़ देशवासियों के दिलों को गहरी चोट पहुंचा रहा है। निजी राजनीतिक स्वार्थ के लिए ईश्वर के रूपों का इस प्रकार से खेल, आदरणीय सभापति जी, ये देश कैसे माफ कर सकता है? आदरणीय सभापति जी, सदन के कल के दृश्यों को देख करके अब हिंदू समाज को भी सोचना होगा, क्या ये अपमानजनक बयान संयोग है या कोई प्रयोग की तैयारी है? ये हिंदू समाज को सोचना पड़ेगा। आदरणीय सभापति जी, हमारी सेनाएं देश का अभिमान है। सारे देश को उनके साहस और हमारी सेना की वीरता पर गर्व है। और आज सारा देश देख रहा है हमारी सेनाएं, हमारा डिफेंस सेक्टर आजादी के बाद इतने सालों में जितना नहीं हुआ, इतने रिफॉर्म हो रहे हैं। हमारी सेना को आधुनिक बनाया जा रहा है। हर चुनौती को हमारी सेना मुंह तोड़ जवाब दे सके, इसलिए युद्ध के सामर्थ्य वाली सेना बनाने के लिए हम भरपूर प्रयास कर रहे हैं, रिफॉर्म कर रहे हैं, कदम उठा रहे हैं देश की सुरक्षा का मकसद लेकर के। बीते कुछ सालों में बहुत सारी चीजें बदली है। सीडीएस का पद बनने के बाद इंटीग्रेशन और सशक्त हुआ है। आदरणीय सभापति जी, हमारी सशस्त्र सेनाओं के बीच उनके सहयोग से जो लंबे समय से युद्ध शास्त्र के निष्णातों का मत था कि भारत में थिएटर कमांड जरूरी है, आज मैं संतोष के साथ कह सकता हूं कि सीडीएस व्यवस्था बनने के बाद देश में सुरक्षा के लिए जरूरी थिएटर कमांड की दिशा में प्रगति हो रही है। आदरणीय सभापति जी, आत्मनिर्भर भारत, उसमें हमारी सेना को आत्मनिर्भर बनाना, उसकी भी बहुत बड़ी महत्वपूर्ण भूमिका निभाई जा रही है। हमारी देश की सेना युवा होनी चाहिए। सेना दुश्मनों के दांत खट्टे करने के लिए होती है। हमें हमारे युवाओं पर भरोसा होना चाहिए। सेना में युवाओं की ताकत बढ़ानी चाहिए और इसलिए हम लगातार युद्ध योग्य सेना बनाने के लिए रिफॉर्म कर रहे हैं। समय पर रिफॉर्म न करने के कारण हमारी सेना का बहुत नुकसान हुआ है, लेकिन ये सार्वजनिक बातें कहने योग्य नहीं होने के कारण मैं मेरे मुंह को ताला लगा करके बैठा हूं। आदरणीय सभापति जी, देश की सुरक्षा एक गंभीर मसला होता है। आदरणीय सभापति जी, ऐसे रिफॉर्म्स का उद्देश्य किसी भी परिस्थिति में, अब युद्ध के रूप बदल रहे हैं, संसाधन बदल रहे हैं, शस्त्र बदल रहे हैं, टेक्निक बदल रही है। ऐसे में हमें हमारी सेनाओं को उसी चुनौतियों के अनुरूप तैयार करना, ये बहुत बड़ी जिम्मेवारी होती है, जिसको निभाने के लिए गालियां खा करके भी, झूठे आरोप सह करके भी, मुंह पर ताला लगा करके हम काम कर रहे हैं। ऐसे समय देश की सेना को आधुनिक बनाना, सशक्त बनाने के ऐसे समय कांग्रेस क्या कर रही है? ये झूठ फैला रहे हैं। डिफेंस रिफॉर्म्स के प्रयासों को कमजोर करने का षड्यंत्र कर रहे हैं। आदरणीय सभापति जी, दरअसल कांग्रेस के लोग कभी भी भारतीय सेनाओं को ताकतवर होते नहीं देख सकते। आदरणीय सभापति जी, कौन नहीं जानता कि नेहरू जी के समय देश की सेनाएं कितनी कमजोर होती थी। हमारी सेनाओं में कांग्रेस ने जो लाखों करोड़ों के घोटाले किए, वही तरीका था जिस तरीके ने देश की सेना को कमजोर किया है। ये देश की सेनाओं को कमजोर किया। जल हो, थल हो, नभ हो, सेना की हर आवश्यकता में इन्होंने देश आजाद हुआ तब से भ्रष्टाचार की परंपरा बनाई। जीप घोटाला हो, पनडुब्बी घोटाला हो, बोफोर्स घोटाला हो, इन सारे घोटालों ने देश की सेना की ताकत को बढ़ने से रोका है। वो भी एक वक्त था आदरणीय सभापति जी, कांग्रेस के जमाने में हमारी सेनाओं के पास बुलेट प्रूफ जैकेट भी नहीं हुआ करते थे। सत्ता में रहते हुए देश की सेना को तो बर्बाद किया ही किया, उसको कमजोर किया ही किया, लेकिन ये कारनामे विपक्ष में जाने के बाद भी चलते रहे। विपक्ष में जाने के बाद भी सेना को कमजोर करने के लगातार प्रयास होते रहे। जब ये कांग्रेस सरकार में थे तो फाइटर जेट नहीं लिए, और जब हमने कोशिश की तो कांग्रेस हर तरह की साजिश पर उतर आई। फाइटर जेट एयरफोर्स तक न पहुंच पाए, इसके लिए साजिशें की गई। और आदरणीय सभापति जी, ये बालक बुद्धि देखिए कि राफेल के छोटे छोटे खिलौने बना करके उड़ाने में मजा लेते थे, देश की सेना का मजाक उड़ाते थे। अध्यक्ष जी, कांग्रेस ऐसे हर कदम का, हर रिफॉर्म का विरोध करती है जो भारत की सेना को मजबूती दे, भारत की सेना को मजबूत बनाए।
माननीय सदस्यों, सभा की कार्रवाई माननीय प्रधानमंत्री जी के भाषण तक के लिए बढ़ाई जाती है और सभा की कार्रवाई, सारी कार्रवाई पूरे होने तक बढ़ाई जाती है।
आदरणीय सभापति जी, समय देने के लिए और समय का विस्तार करने के लिए मैं आपका हृदय से आभार व्यक्त करता हूं। आदरणीय सभापति जी, अब कांग्रेस के लोगों को ये पता चल गया है कि हमारे नौजवानों की ऊर्जा, हमारे सैनिकों का आत्मबल ही हमारे सशस्त्र बलों की सबसे बड़ी शक्ति है। और अब इस पर हमला करके और एक नया तरीका सेना में भर्ती को लेकर सरासर झूठ फैलाया जा रहा है, ताकि लोग, मेरे देश के नौजवान मेरे देश की रक्षा करने के लिए सेना में न जाए, उनको रोकने के लिए षड्यंत्र हो रहा है। आदरणीय सभापति जी, मैं इस सदन के माध्यम से जानना चाहता हूं, आखिर किसके लिए कांग्रेस हमारी सेनाओं को कमजोर करना चाहती है? किसके फायदे के लिए कांग्रेस वाले सेना के संबंध में इतना झूठ फैला रहे हैं? आदरणीय सभापति जी, वन रैंक वन पेंशन को लेकर के देश के शहीद जवानों को उनकी आंखों में धूल झोंकने का प्रयास किया गया। आदरणीय सभापति जी, हमारे देश में श्रीमती इंदिरा गांधी जी ने वन रैंक वन पेंशन की व्यवस्था को खत्म किया था। दशकों तक कांग्रेस ने इस वन रैंक वन पेंशन को लागू नहीं होने दिया और चुनाव जब आए तो 500 करोड़ रुपया दिखाकर निवृत्त सेना नायकों को मूर्ख बनाने की कोशिश भी की गई, लेकिन उनका इरादा था हो सके उतना वन रैंक वन पेंशन को टालते रहना। एनडीए सरकार ने वन रैंक वन पेंशन लागू की और आदरणीय सभापति जी, भारत के पास संसाधन कितने ही सीमित क्यों न हो, लेकिन उसके बावजूद भी, कोरोना की कठिन लड़ाई के बावजूद भी 1,20,000 करोड़ रुपए हमारे पूर्व सैनिकों को वन रैंक वन पेंशन के रूप में दिए गए। आदरणीय,
ये तरीका ठीक नहीं है। नो, ये गलत तरीका। प्लीज, माननीय सदस्य, ये तरीका ठीक नहीं है। आप संसदीय परंपराओं का पालन करें।
आदरणीय सभापति जी, आदरणीय राष्ट्रपति महोदय ने अपने उद्घोषण में पेपर लीक पर भी चिंता जताई है। मैं भी देश के हर विद्यार्थी को, देश के हर नौजवानों को कहूंगा कि सरकार ऐसी घटनाओं को रोकने के लिए अत्यंत गंभीर है और युद्ध स्तर पर हम अपनी जिम्मेवारियों को पूरा करने के लिए एक के बाद एक कदम उठा रहे हैं। युवाओं के भविष्य के साथ खिलवाड़ करने वालों को कतई छोड़ा नहीं जाएगा। नीट के मामले में पूरे देश में लगातार गिरफ्तारियां की जा रही है। केंद्र सरकार पहले ही एक कड़ा कानून बना चुकी है। परीक्षा कराने वाले पूरे सिस्टम को पुख्ता करने के लिए जरूरी कदम उठाए जा रहे हैं। आदरणीय सभापति जी, एनडीए सरकार ने बीते 10 वर्षों में विकास को अपना सबसे बड़ा संकल्प बनाया है। आज हमारे सामने भारत को दुनिया की तीसरी सबसे बड़ी इकोनॉमी बनाने का संकल्प है। आज हमारे सामने आजादी के इतने सालों के बाद पीने का शुद्ध पानी पहुंचाने के लिए हर जल पहुंचाने का हमारा संकल्प है। आदरणीय सभापति जी, गरीब को आवाज देना, ये हमारा संकल्प है। आदरणीय सभापति जी, भारत की विश्व में जैसे जैसे ताकत उभर रही है, हमारी सेनाओं को भी आत्मनिर्भर बनाने का हमारा दृढ़ संकल्प है। आदरणीय सभापति जी, ये युग हरित युग है, ये युग ग्रीन एरा है, और इसलिए दुनिया जो ग्लोबल वार्मिंग से लड़ाई लड़ रही है, उसको एक बहुत बड़ी ताकत देने का काम भारत ने बीड़ा उठाया है। हमने रिन्यूएबल एनर्जी का भारत पावर हाउस बने, उस दिशा में एक के बाद एक कदम उठाए हैं और उसको अचीव करने का हमारा संकल्प है। आदरणीय सभापति जी, भविष्य ग्रीन हाइड्रोजन से जुड़ा है, ई व्हीकल से जुड़ा हुआ है। भारत को ग्रीन हाइड्रोजन का हब बनाने के लिए भी हम पूरी तरह संकल्पबद्ध है। आदरणीय सभापति जी, 21वीं सदी आज भारत 21वीं सदी को भारत की सदी बनाने के लिए जिन संकल्पों को लेकर के हम चले हैं, उसमें इंफ्रास्ट्रक्चर की भी बहुत बड़ी भूमिका है। हमें आधुनिक इंफ्रास्ट्रक्चर बनाना है, हमें विश्व के सारे बेंचमार्क की बराबरी पे जाना है। आदरणीय सभापति जी, जितना निवेश भारत में इंफ्रास्ट्रक्चर के लिए हुआ है, वो इतना पहले कभी नहीं हुआ है, और जिसका लाभ आज देशवासी देख रहे हैं। देश में बहुत बड़े पैमाने पर रोजगार और स्वरोजगार के अवसर बन रहे हैं। उसको विस्तार हो, उसको एक नए रूप रंग मिले, आधुनिक भारत की आवश्यकताओं के अनुसार स्किल डेवलपमेंट हो, और उसके आधार पर इंडस्ट्री 4.0 में भी भारत लीडर के रूप में उभरे और हमारे नौजवानों का भविष्य भी संवरे, उस दिशा में हम काम कर रहे हैं। आदरणीय सभापति जी, एक स्टडी है कि पिछले 18 साल में, ये स्टडी बड़ा महत्वपूर्ण है, यह अध्ययन कहता है कि पिछले 18 साल में प्राइवेट सेक्टर में जॉब क्रिएशन में आज सबसे बड़ा रिकॉर्ड बना है। 18 साल में सबसे बड़ा रिकॉर्ड बना है। आदरणीय सभापति जी, आज भारत डिजिटल पेमेंट सिस्टम पूरी दुनिया में एक उदाहरण बना है। विश्व के लोग, मैं G20 समूह में जब भी गया, भारत की डिजिटल इंडिया मूवमेंट को लेकर के, डिजिटल पेमेंट को लेकर के विश्व के समृद्ध देशों को भी अचरज होता है और बड़ी जिज्ञासा के साथ हमें सवाल पूछते हैं। ये भारत की सफलता की बहुत बड़ी कहानी है।
माननीय सदस्य प्लीज, ये तरीका ठीक नहीं है। नो।
आदरणीय सभापति जी, जैसे जैसे भारत आगे बढ़ रहा है, स्वाभाविक है प्रतिस्पर्धा भी बढ़ रही है और चुनौतियां भी बढ़ रही है। जिन्हें भारत की प्रगति से दिक्कत है, जो भारत की प्रगति को चुनौती के रूप में देखते हैं, वो गलत हथकंडे भी अपना रहे हैं। ये ताकतें भारत की डेमोक्रेसी, डेमोग्राफी और डाइवर्सिटी पर हमला कर रही है। और ये चिंता सिर्फ मेरी नहीं है, ये चिंता सिर्फ सरकार की नहीं है, ये चिंता सिर्फ ट्रेजरी बेंच की नहीं है। आदरणीय सभापति जी, देश की जनता और माननीय सुप्रीम कोर्ट तक सबको इन बातों से चिंतित है। सुप्रीम कोर्ट ने जो कहा है वो कोर्ट मैं आज सदन के सामने रखना चाहता हूं। सुप्रीम कोर्ट का एक कोर्ट देश के करोड़ों करोड़ लोगों के लिए भी कैसे कैसे संकट आने की संभावनाएं दिख रही है, इसकी तरफ इशारा करता है। आदरणीय सभापति जी, सुप्रीम कोर्ट ने अपने एक जजमेंट में बड़ी गंभीरता पूर्वक कहा है, और मैं कोट पढ़ता हूं, ऐसा लगता है इस महान देश की प्रगति पर, ऐसा लगता है कि इस महान देश की प्रगति पर संदेह प्रकट करने, उसे कम करने और हर संभव मोर्चे पर उसे कमजोर करने का एक ठोस प्रयास किया जा रहा है। ये सुप्रीम कोर्ट की बात पढ़ रहा हूं। सुप्रीम कोर्ट आगे कह रही है, इस तरह के किसी भी प्रयत्न या प्रयास को आरंभ में ही रोक दिया जाना चाहिए। देश की सुप्रीम कोर्ट का एक कोर्ट है। आदरणीय सभापति जी, सुप्रीम कोर्ट ने जो भावना व्यक्त की है, इस पर हम यहाँ वाले या वहाँ वाले, सदन में है उन्होंने, सदन के बाहर है उन्होंने, सबको गंभीरता से विचार करने की आवश्यकता है। आदरणीय सभापति जी, भारत में भी कुछ लोग हैं जो ऐसी ताकतों की मदद कर रहे हैं। देशवासियों को ऐसी ताकतों से सतर्क रहने की जरूरत है। आदरणीय सभापति जी, 2014 में सरकार में आने के बाद देश के सामने एक बहुत बड़ी चुनौती कांग्रेस के साथ ही कांग्रेस का इकोसिस्टम भी रहा है। ये इकोसिस्टम से मिली खाद पानी, इसके दम पर एक कांग्रेस की मदद से ये इकोसिस्टम 70 साल तक फला फूला है। मैं आज सभापति जी इस इकोसिस्टम को चेतावनी देता हूं। मैं इस इकोसिस्टम को चेताना चाहता हूं। इकोसिस्टम की जो हरकतें हैं, जिस तरह इकोसिस्टम ने ठान लिया है कि देश की विकास यात्रा को रोक देंगे, देश की प्रगति को डिरेल कर देंगे। मैं आज इकोसिस्टम को बता देना चाहता हूं, उसकी हर साजिश का जवाब अब उसी की भाषा में मिलेगा। यह देश विरोधी साजिशों को कभी भी स्वीकार नहीं करेगा। आदरणीय सभापति जी, ये ऐसा कालखंड है जब दुनिया भारत की प्रगति को बहुत गंभीरता से ले रही है, हर बारीकी को नोटिस कर रही है। आदरणीय सभापति जी, अब चुनाव हो चुके हैं। 140 करोड़ देशवासियों ने 5 साल के लिए अपना निर्णय जनादेश दे दिया है। आवश्यक है कि विकसित भारत के निर्माण के लिए इस संकल्प को सिद्धि में बदलने के लिए इस सदन के सभी माननीय सदस्यों का योगदान होना चाहिए। मैं उन सबको निमंत्रित करता हूं कि विकसित भारत के संकल्प को पूर्ण करने के लिए आप भी जिम्मेवारी के साथ आगे आइए। देश हित के विषय पर हम साथ चले, मिलकर के चलें और देशवासियों की आशा आकांक्षाओं को पूरा करने में हम कोई कमी न रहने दें। आदरणीय सभापति जी, पॉजिटिव राजनीति भारत के इस कालखंड में बहुत आवश्यक है और मैं हमारे साथी पक्षों को भी कहना चाहूंगा, इंडी गठबंधन के पक्ष के लोगों को कहना चाहूंगा कि आप आइए मैदान में, गुड गवर्नेंस पर स्पर्धा करें। जहां जहां आपकी सरकारें हैं वो एनडीए की सरकारों के साथ गुड गवर्नेंस पर स्पर्धा करें, डिलीवरी में स्पर्धा करें, लोगों की आकांक्षा पूरी करने पर स्पर्धा करें। देश का भला होगा, आपका भी भला होगा। आदरणीय सभापति जी, आप अच्छे कामों के लिए एनडीए के साथ स्पर्धा करें। आप रिफॉर्म्स के मामले में हिम्मत करें। जहां जहां आपकी सरकारें हैं वो रिफॉर्म से कदम बढ़ाएं और वो विदेशी निवेश को आकर्षित करें। अपने अपने राज्यों में विदेशी निवेश ज्यादा आए, इसके लिए प्रयास करें। उनको ये अवसर है, उनके पास राज्यों में कुछ सरकारें हैं और इसके लिए वो भाजपा की सरकारों से स्पर्धा करें, एनडीए की सरकारों से स्पर्धा करें, सकारात्मक स्पर्धा करें। जिन लोगों को जहां सेवा करने का मौका मिला है वहां पे वे रोजगार के लिए स्पर्धा करें। कौन सरकार ज्यादा रोजगार देती है, उस स्पर्धा के लिए मैदान में आए, एक तंदुरुस्त स्पर्धा हो। साथ आदरणीय सभापति जी, हमारे यहाँ भी कहा है कि गहना कर्मणो गति ही, गहना कर्मणो गति है, यानी कर्म की गति गहन है। इसलिए आक्षेप, झूठ, फरेब, डिबेट ऐसी जीतने के बजाय कर्म से, कुशलता से, समर्पण भाव से, सेवा भाव से जरा लोगों के दिल जीतने के लिए कोशिश होनी चाहिए। आदरणीय सभापति जी, मैंने आदरणीय सभापति जी, इस समय चर्चा के बीच अभी मुझे एक दुखद खबर भी दी गई है। यूपी के हाथरस में जो भगदड़ हुई, उसमें अनेकों लोगों की दुखद मृत्यु होने की जानकारी आ रही है। जिन लोगों की इस हादसे में जान गई है, मैं उनके प्रति अपनी संवेदना व्यक्त करता हूं। मैं सभी घायलों के जल्द से जल्द ठीक होने की कामना करता हूं। राज्य सरकार की देखरेख में प्रशासन राहत और बचाव कार्य में जुटा हुआ है। केंद्र सरकार के वरिष्ठ उत्तर प्रदेश सरकार के लगातार संपर्क में है। मैं इस सदन के माध्यम से सभी को यह भरोसा देता हूं कि पीड़ितों की हर तरह से मदद की जाएगी। आदरणीय सभापति जी, आज एक लंबी चर्चा, और आपने देखा है, मैं पहली बार लोकसभा में प्रधानमंत्री के रूप में यहाँ सेवा के लिए आप लोगों ने अवसर दिया, तब भी मुझे ऐसा ही मुकाबला करना पड़ा था। 2019 में भी मुझे ऐसा ही मुकाबला करना पड़ा। मुझे राज्यसभा में भी ऐसा ही मुकाबला करना पड़ा, और इसलिए अब तो ये भी बड़ा मजबूत हो गया है। मेरा हौसला भी मजबूत है, मेरी आवाज भी मजबूत है, और मेरे संकल्प भी मजबूत है। आदरणीय सभापति जी, ये कितनी ही संख्या का दावा क्यों न करते हो, 2014 में जब हम आए राज्यसभा में, हमारी ताकत बहुत कम थी और चेयर का भी जरा झुकाव दूसरी तरफ था, लेकिन सीना तान करके देश की सेवा करने के संकल्प से हम डिगे नहीं। मैं देशवासियों को कहना चाहता हूं, आपने जो फैसला सुनाया है, आपने हमें सेवा करने का जो आदेश दिया है, ऐसी किसी रुकावटों से न मोदी डरने वाला है, न ये सरकार डरने वाली है। जिन संकल्पों को लेकर के हम खड़े हैं, उन संकल्पों को पूरा करके रहेंगे। आदरणीय सभापति जी, जो नए सांसद चुन के आए हैं, उनको मैं विशेष रूप से शुभकामनाएं देता हूं। आदरणीय सभापति जी, मैं मानता हूं कि बहुत कुछ सीखेंगे, समझेंगे और देश की लोगों की नजरों से गिरते हुए बचने का प्रयास भी करेंगे। इसलिए मैं उनको भी परमात्मा कुछ सद्बुद्धि दे, मैं बालक बुद्धि को भी सद्बुद्धि दे, इस अपेक्षा के साथ आदरणीय राष्ट्रपति महोदया का जो उद्बोधन है, उसके प्रति हृदय से आभार व्यक्त करता हूं। और आपको भी अध्यक्ष जी, आपने मुझे समय दिया, विस्तार से मुझे बात बताने का मौका दिया, और किसी का कोलाहल सत्य की आवाज को दबा नहीं सकता। सत्य ऐसे प्रयासों के भी दबता नहीं है, और झूठ को कोई जड़ें नहीं होती है। आदरणीय सभापति जी, जिन लोगों को अवसर नहीं दिया, वो उनकी पार्टी की जिम्मेवारी है, वो आगे से अपने सांसदों का ध्यान रखेंगे, ये मैं अपेक्षा करता हूं। आदरणीय सभापति जी, मैं इस सदन का भी धन्यवाद करते हुए मुझे बहुत आनंद आया आज, बहुत आनंद आया। सत्य की ताकत क्या होती है वो आज मैंने जी करके देखा है। सत्य का सामर्थ्य क्या होता है उसको मैंने आज उसका साक्षात्कार किया। और इसलिए सभापति जी, मैं आपका हृदय से आभार व्यक्त करता हूँ। बहुत बहुत धन्यवाद।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The good part of growth assets is that the more you have, the better your choices are, right? So nothing like money in the bank to sleep well at night, whether it's a medical emergency or that cruise you want to take. I think gone are the days where we think about a simple life in, a rural community. People want vibrant post-retirement lives with travel, with socializing with friends. Maybe you eat out a few times less, but should you see the Eiffel Tower while you can? I think you should. Asset allocation will change as you age, but certainly you need growth assets in your portfolio.
Kotak Mahindra International Limited found facilitating short selling in the Hindenburg episode. Sebi issues show cause notice to Hindenburg and Mauritius-based foreign investor Kingdon Group, who made 183 crore rupees by shorting Adani Enterprises. Market ends lower amid volatility after hitting record highs in early trade. Most indices close in the red. Prime Minister Modi launches a scathing attack on the Congress, calls them parasites who leech off their allies, calls Rahul Gandhi childish and accuses the opposition of spreading lies. Over 70 dead, including 3 children in Hathras. A religious event being held at the Mughalgarhi village resulted in a stampede that killed women and children. The who's who of India's infra sector attend the NDTV Infra Shakti Awards. Policymakers, industry leaders and influencers speak about sustainable infrastructure and resilience. Team India may depart from Barbados this evening. Prime Minister Mia Mottley says she expects the airport to become operational in the next 6 to 12 hours, ending the shutdown forced by a Category 4 hurricane. Good evening and welcome. You're watching NDTV Profit. This is The Reporter. I'm Nupur Talwar Suri, and let's begin by taking a look at how the markets have performed today. The benchmarks ended lower amid volatility, erasing gains after hitting record highs. Samina joins in with a quick wrap of all the action.
Well, it was the markets taking a break today after a pretty solid run over the last couple of days. The Nifty has gone home flat as a pancake. The Nifty was down 18 points and the Sensex also went home flat. Broader markets underperformed the benchmark, with the mid-cap and the small-cap index both seeing cuts of about 0.5% each. The losses were led by Bank Nifty, which clearly seems to be in a peculiar spot where profit-taking emerged in today's day of trade, and banks across the board were selling pressure from the private sector banks to the PSU banks, barring HDFC Bank that we'll talk about in a minute. The Bank Nifty down about 0.7%. IT, like I said, had a good run. The expectation of the Fed moving with a rate cut on back of inflation data and growth in the US is what is giving impetus to IT stocks. 1% gains on the IT pack. Across the Nifty 50, the losers were largely made up of banks, and the gainers came in from the IT pack, with the likes of a Wipro, IT, LT and Mindtree doing quite well in today's session. That was really how the Nifty IT pack played out. You had a few losers, but the large sense of the market was largely positive. Across the broader markets, it was no real trend emerging. In fact, it was very selected gainers and losers, but again, like I said, no trend as such was identified in today's day of trade. Well, that's pretty much what the markets have done. All will depend upon what happens across world markets between now and tomorrow, but it seems like we could be headed for a little more consolidation over the next few days.
Well, thanks for that, Samina. Now, the web of conspiracies behind the Hindenburg hit job is now out in the open. A Sebi show cause notice sent to various entities has brought to light the fact that Kotak Mahindra set up the entity that shorted Adani Enterprises derivatives ahead of the Hindenburg report being made public. Take a look at what happened behind the scenes and how foreign entities made profits worth 183 crore rupees.
These three men are the key players in the Hindenburg hit job that caused Adani stocks to tank in January 2023. Market regulator Sebi has found that Uday Kotak-owned Kotak Mahindra International Limited helped a US-based investment advisor, Mark Kingdon, to set up a foreign portfolio investment entity. Hindenburg and Kingdon shorted Adani Group stocks before the report was released and made massive profits. The conspiracy spans several months starting from March 2022. In March 2022, a foreign portfolio investor is registered in the name of KIOF Class F, the K India Offshore Fund. In May 2022, Hindenburg Research and their client Kingdon Capital Management signed a research agreement. Now, according to this agreement, Hindenburg would share the reports with Kingdon Capital before making them public. And so in November 2022, Hindenburg shared a draft report of the Adani hit job with Kingdon Capital. Mark E. Kingdon owns 99% of Kingdon Capital. In December 2022, the M. Kingdon Offshore Master Fund is set up. This fund buys out KIOF Class F, the FPI registered with Sebi. Now comes the maze of companies that own KIOF Class F. Sebi unraveled the maze to find that Mark Kingdon is the ultimate owner of the FPI. In early January, Kotak Mahindra International Limited signed an investment advisory agreement with Kingdon Capital. Kotak Mahindra also advised Kingdon Capital on how to execute the derivative strategy, according to Sebi. They showed urgency in shorting futures of one stock, that of Adani Enterprises. The Sebi notice details how in January 2023, the master fund operated by Mark Kingdon transferred $40 million to the KIOF, which then converted $15 million to Indian rupees and put this into the trading account of KIOF Class F. A few days later, another $3 million were transferred. Days before the Hindenburg report was made public, the FPI activated futures and options and started shorting Adani Enterprises. 8.5 lakh shares of Adani Enterprises were shorted. On January 23rd, Hindenburg released its report, which caused Adani Enterprises stock to fall by 59%. Kingdom Capital then squared off between February 1st to February 22nd to make a huge 183 crore rupees or $22 million in profits. And Hindenburg got 25% of the profits made from this. Bureau Report, NDTV Profit.
Well, Kotak Mahindra International and K India Opportunities Fund has said that Hindenburg has never been a client of theirs. Vishwanath Nair joins us to share more details about this response. Hi, Rishi, tell us what they've said so far.
In a statement on Tuesday, Kotak Mahindra International Limited has stated that it has no linkages whatsoever with US-based short seller Hindenburg. In the statement, Kotak Mahindra International Limited as well as K India Opportunities Fund both have said that Hindenburg was neither a client nor an investor in the fund itself, and that they have never worked with Hindenburg in the past. In fact, they had taken an underwriting from their clients with regard to any representation of some other investor as part of their trades, and the clients had specifically given in writing that these funds that were used for investments was the client's fund and not somebody else's. This comes in the light of allegations by Hindenburg, the short seller, saying that Kotak Mahindra Bank had created a series of accounts which helped Mike Kingdom short sell against Adani Enterprises shares, specifically because they received the short seller's note much before the note was put out in public, and that helped them earn about 180 crores worth of profit. These details came out in Sebi's investigation in this matter, and Sebi has of course issued a show cause notice to Hindenburg. In their post on Monday, Hindenburg has claimed that Sebi has purposefully declined to identify Kotak Mahindra Bank or any of its group companies in the show cause notice, and that the show cause notice was therefore not valid. However, we still need to see what exactly comes out of this entire exercise. Sebi, on its part, is conducting its investigation. That's what we understand.
Well, Prime Minister Modi took a jibe at the opposition in the Lok Sabha today, saying that some of them were hurt because they lost for a third time. He also said that 25 crore people were brought out of poverty in the last 10 years. The opposition chanted slogans of "We want justice" and "Justice for Manipur" throughout his address. He added that before 2014, corruption was eating away at the country like termite. He was responding to the motion of thanks to the President's address. Here's him talking about policy saturation being true secularism.
इस देश ने लंबे अरसे तक तुष्टीकरण का गवर्नेंस का मॉडल भी देखा। देश ने पहली बार सेक्युलरिज्म का एक पूरा हमने जो प्रयास किया, और वो हमने तुष्टीकरण नहीं, संतुष्टिकरण और संतुष्टिकरण के विचार को लेकर के हम चले हैं। और जब हम संतुष्टिकरण की बात करते हैं तो इसका मतलब है कि हर योजना का सैचुरेशन, गवर्नेंस की आखिरी व्यक्ति तक पहुंचने की हमारी जो संकल्पना है, इसको परिपूर्ण करना। और जब हम सैचुरेशन के सिद्धांत को लेकर चलते हैं, तब सैचुरेशन सच्चे अर्थ में सामाजिक न्याय होता है। सैचुरेशन सच्चे अर्थ में सेक्युलरिज्म होता है, और उसी को देश की जनता ने हमें तीसरी बार बिठा करके मोहर लगा दी है।
Well, Prime Minister Modi launched a scathing attack on the Congress today in the Lok Sabha, taking a jibe at the Congress for failing to win 100 seats for the third time. He called the party parasites that feed off their allies.
अब कांग्रेस पार्टी 2024 से एक परजीवी कांग्रेस पार्टी के रूप से जानी जाएगी। 2024 से जो कांग्रेस है वो परजीवी कांग्रेस है, और परजीवी वो होता है जो जिस शरीर पर उस शरीर के साथ रहता है, ये परजीवी उसी को ही खाता है। कांग्रेस भी जिस पार्टी के साथ गठबंधन करती है, उसी के वोट खा जाती है और अपनी सहयोगी पार्टी की कीमत पर वो फलती फूलती है और इसलिए कांग्रेस परजीवी कांग्रेस बन चुकी है।
Now, earlier today in the Lok Sabha, Akhilesh Yadav attacked the government while speaking on the Agniveer scheme. He claimed that the Agniveer scheme will be scrapped if India Alliance comes to power.
राष्ट्रपति जी के अभिभाषण में अग्निवीर को लेकर के जो चिंता विपक्ष की थी और देश के नौजवानों की थी, वो चिंता वैसी की वैसी बनी है। अध्यक्ष महोदय, मैं ये कहना चाहता हूँ, मैं खुद मिलिट्री स्कूल से पढ़ा हूँ। मेरे साथ के बहुत बड़े पैमाने पे लोग फौज में, मैंने समय समय पे जो मेरे साथ पढ़े जो सीनियर थे, उनसे भी जानकारी हासिल की है। बड़े बड़े ऑफिसर से मैंने पूछा है, वो शायद आपको न बता पाएँ, लेकिन दबी जुबान में उन्होंने कहा है कि देश की सुरक्षा के साथ अग्निवीर जैसी व्यवस्था लागू करने से समझौता हो रहा है। अध्यक्ष महोदय, किसी भी देश की सबसे बड़ी प्राथमिकता अगर कोई है तो वो देश की सीमाओं की सुरक्षा है। अग्निवीर जैसी व्यवस्था से कभी संभव नहीं है। अध्यक्ष महोदय, हम अग्निवीर व्यवस्था को कभी स्वीकार नहीं कर सकते हैं। आज नहीं कल, कल नहीं बाद में, जब कभी भी सत्ता में इंडिया गठबंधन आएगा, अग्निवीर व्यवस्था हमेशा हमेशा के लिए खत्म हो जाएगी।
Well, he also raised the issue of paper leaks in Parliament, alleging that the government is not in favor of providing jobs to the youth.
अभी जब 4 जून को रिजल्ट आया, उसके बाद जो बात उठी है, देश की सबसे प्रेस्टिजियस परीक्षा, उसका भी पेपर लीक हो गया। और आखिरकार ये पेपर लीक हो क्यों रहा है? सच्चाई तो ये है कि ये सरकार पेपर लीक इसलिए करा रही है कि सरकार नौकरी नहीं देना चाहती, रोजगार नहीं देना चाहती, उन नौजवानों का भविष्य नहीं बनने देना चाहती।
Well, the leader of the opposition, Rahul Gandhi, has written a letter to the Prime Minister asking for a debate on the NEET issue. He pointed out that the request for a debate was denied in both the Lok Sabha and the Rajya Sabha on the 28th of June. Gandhi said that the Speaker, Om Birla, has assured the opposition that he would discuss the matter with the government. He also said that students deserved answers and requested the Prime Minister to lead the debate. Well, the Prime Minister, in fact, responded to the NEET issue by stating that no culprit would be spared. He said that no one should play with the future of students.
पेपर लीक पर भी चिंता जताई है। मैं भी देश के हर विद्यार्थी को, देश के हर नौजवानों को कहूंगा कि सरकार ऐसी घटनाओं को रोकने के लिए अत्यंत गंभीर है और युद्ध स्तर पर हम अपनी जिम्मेवारियों को पूरा करने के लिए एक के बाद एक कदम उठा रहे हैं। युवाओं के भविष्य के साथ खिलवाड़ करने वालों को कतई छोड़ा नहीं जाएगा। नीट के मामले में पूरे देश में लगातार गिरफ्तारियां की जा रही है। केंद्र सरकार पहले ही एक कड़ा कानून बना चुकी है। परीक्षा कराने वाले पूरे सिस्टम को पुख्ता करने के लिए जरूरी कदम उठाए जा रहे हैं।
Well, distressing news coming in from Uttar Pradesh's Hathras district. Over 70 people have died so far after a major stampede occurred at a religious event. According to the police, the dead bodies have been recovered. Uttar Pradesh's Chief Minister Yogi Adityanath has expressed condolences to the bereaved families. He's also directed the district administration officials to speed up their relief work at the site. The UP Chief Minister has given instructions to investigate the causes of the incident under the leadership of the ADG Agra and the Commissioner of Aligarh. You are watching NDTV Profit. We slip into a very short break. On the other side, we bring you more news, and we'll be getting you details on the worsening floods in Assam and Gujarat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
The first investment you should make is something that is not at all discussed and is not at all sexy. It's not mutual funds, it's not stocks.
Welcome back. The NDTV Infrashakti Awards 2024 ceremony is being held in Delhi. These awards recognize several infrastructure initiatives illuminating India's true growth story. While speaking at this event, Adani Port CEO Ashwini Gupta said that along with India, the company is also focusing on others. Let's in fact cut across to the award ceremony now to hear Pranav Adani speak.
Administrators and captains of industry and my dear friends, good evening. It is an honor and a privilege to address such a distinguished audience at the NDTV Infrashakti Awards 2024, an event where we celebrate the transformative power of infrastructure in our nation's development. First of all, congratulations to all the winners. Your presence here is a proud recognition of the work that you do and of the great contributions several generations of India's infrastructure creators have made to the growth and development of our nation. Ladies and gentlemen, human history, whether ancient or modern history shows us beyond doubt that infrastructure is the fundamental key to all the progress. It is the foundation on which every developed and developing society is built, and it is the foundation that enables economic growth, improves quality of life, and ensures sustainable development. As our Honorable Prime Minister, Shri Narendra Bhai Modi ji reminded us, robust infrastructure is often recognized as the primary growth engine for a developing nation. India's progress is directly influenced by how strong the backbone of the country's infrastructure is. Here, the understated point is that in any country, the development of sustainable infrastructure is inseparably tied to how the government approaches this vital sector. In India, the government's focus on infrastructure development is very clear. And this is evident in its decision to raise the infra funding by a 16% to over 11 lakh crore rupees in this financial year. Also significant is the fact that the annual spending on national infrastructure has tripled in the last 5 years. However, creating infrastructure is far from easy. And as a member of the Adani Group, which has infrastructure creation at its core, let me tell you that creating sustainable infrastructure is even more difficult. Even at its fundamental level, whether in India or abroad, the infrastructure journey is full of challenges. Let me illustrate my point with 2 examples. One, in India, the most well-known example is the USBRL, the Udhampur-Srinagar-Baramulla rail project in Jammu and Kashmir, which was launched some 30 years ago by the then Prime Minister, P.V. Narasimha Rao. Years have passed, but very little happened. And here, I must give full credit to the current central government. In less than a decade, over 60% of this incredibly challenging project has been completed, and work on the remaining section is progressing at a very fast pace. This is, by any measure, an amazing achievement, as it is one of the most difficult railway projects globally. Another example that highlights the challenges in infrastructure creation is the high-speed train line between San Francisco and Los Angeles. This was first proposed in the year 2008. 16 years later, the Americans have spent close to $10 billion. That's 80,000 crores rupees, in excess of that, but not even a single track has been laid. I cited these examples as cautionary tales. Infrastructure development, by its very nature, is ambitious. One has to be prepared for unexpected setbacks, from ballooning cost to all kind of interference. Complexity and unpredictability are inherent in mega infrastructure projects. Such experiences underscore the need for robust planning, transparent execution, and resilience in the face of challenges. Perhaps that is why very few entrepreneurs have dared to take on the challenges of infrastructure development. Our chairman, Shri Gautam Bhai Adani, once recollected that he took up infrastructure development as a responsibility after seeing on one of his travels abroad how much India was lagging behind the world in sustainable, high-quality infrastructure. And although he knew it would not be easy, he was determined to stay the course. In the late 1990s, when he decided to build ports, terminals, and power plants, he already knew what lay ahead. One of the advertisements from 1998 had this line in it: "We know it will mean taking on giant odds, facing huge challenges, and solving immense problems. Yet we went ahead because we knew what we were up against and we were ready." At the Adani Group, we learned our lessons early. Our own 3-decade infrastructure journey has taught us a lot. And let me summarize 3 of the most important lessons for the benefit of all. First, it is important to be aligned with national policies and priorities. A perfect illustration would be the PM Gati Shakti scheme, the National Integrated Master Plan that lays the foundation for India's overall infrastructure development. It broadly prioritizes India's needs in 7 sectors, namely roads, railways, airports, ports, mass transport systems, waterways, and logistic infrastructure. To us, the sensible way forward is to be aligned with these national priorities. If we build what India needs, we can better navigate the complexities and, as a result, build faster, build bigger, and build more efficiently. Second, we must have a strong talent bench in place with the technical expertise and competencies to manage and execute large and complex projects. The third lesson is that infrastructure creation requires long-term vision to anticipate both domestic and global trends. In our case, Shri Gautam Adani saw very early on that the world would need to phase down thermal power. And as a part of energy transition, and that is why we decided to get into renewables, not only as an alternative, but also as an equitable way to stay on course for the global energy transition. Today, that long-term vision has made us India's largest private producer of both thermal and green energy. Our drive to create sustainable infrastructure has also led us to become the nation's leading ports and logistic company. Alongside thermal generation, we are also the largest private operator and transmitter and distributor of electricity. We are also the largest private producer in transmission, distribution of electricity, plus also the green energy generation. And we are working our way towards becoming the world's #1 in renewable. One of the projects at our renewable site we are also executing is in Khavda, the Khavda Renewable Energy Park, which will generate in excess of 30 gigawatts of clean power from solar to wind. The installation, a modern monument to energy sustainability, covers several hundred square kilometers and is the world's largest renewable energy project. And we are humbled by this opportunity to build this massive symbol of national pride and sustainable infrastructure. Another massive challenge we have taken on is the redevelopment of Dharavi. It is the largest urban regeneration project in the world. To us, Dharavi project is not just about building hundreds of thousands of new homes. To us, this project is about restoring dignity of living. It is about fulfilling 1 million aspirations, and it is about providing a vastly improved quality of life. In Dharavi, our approach reflects our dedication to inclusive growth and our belief that to benefit society, infrastructure should outlast the present and be sustainable in the long run. NDTV's Infrastructure Awards is a positive advance in this direction. These awards recognize the multifaceted aspects of sustainable infrastructure development. By honoring these trailblazers, we not only acknowledge their diverse contribution, but also inspire future generations to become change makers capable of building a resilient and prosperous nation. I congratulate NDTV and the InfraVision Foundation for institutionalizing the Infrastructure Awards and for organizing this national event. I see this as a vital platform that calls attention to the vastly understated importance of infrastructure in taking India forward. Thank you for the opportunity to speak before you today. We look forward to continuing our humble contribution to help the country achieve even greater heights. Thank you. Jai Hind.
Thank you. Go.
Ladies and gentlemen, it's now time for the NDTV Infra Shakti Awards to be given out. But before that, we get to the Jury Awards and the People's Choice Award. We start with the NDTV Special Awards. The first of them is for Infrastructure Financier. Now, we all know infrastructure is the heart of the economy and of growth. And rapid infrastructure development is one of the ways in which a country can take advantage.
All right, so those are the NDTV Infra Shakti Awards that we were bringing to you live. Moving on, Nykaa and Mamaearth's competitor Purple has raised 1,000 crore rupees in a funding round led by Abu Dhabi's Sovereign Wealth Fund. Rishabh joins in with more details on this fundraise. Rishabh, tell us more, please.
A direct-to-consumer retailer of beauty products, Purple, has raised a massive funding round today. That's about 1,000 crores or about $120 million in funding that it has raised. Now, the lead investor is the Abu Dhabi Investment Authority, which is the sovereign wealth fund of the Abu Dhabi government. Apart from that, there were other investors in this round, which was a combination of primary and secondary shares. Purple has claimed that its gross merchandise volume, or the total value of the products that it has sold, has grown about 4 times in the last 3 years, and that growth has majorly come from markets that are Tier 2 and Tier 3 India, as well as other micro markets. So that is not the top 8 cities that most companies, most unicorns rather, target, but rather the Tier 2 and Tier 3 cities which come under Bharat and not India. We're also seeing that Purple has said that it is now operationally profitable and it will continue to scale its offline presence. That means it will continue to scale its omni-channel coverage, and that will be done while improving profitability. Now, this segment is very, very hot in the sense that there is already Nykaa, there is already Mamaearth. 2 of them are listed, and also there are other well-funded organizations like Sugar Cosmetics and a bunch of other new upstarts that are sort of trying to dominate different segments of this category, be it healthcare, be it hair, be it face washes, be it moisturizers. There are multiple small segments within this beauty and personal care space. So it'll be interesting to see how Purple sort of navigates this in the coming years.
All right, Aviation Academy BAA Training is planning to invest in India. Rishabh also spoke to the global CEO of BAA Training about the reason behind this move.
India just recently became the 3rd biggest domestic market after USA and China. In India, aviation market is growing and growing quite significantly. And at the same time, aviation market here is facing a pilot shortage, and more sensitive topic, it comes to the high-quality pilot, right? So BAA Training is here to support local Indian aviation market by providing the high-quality pilots.
Super. Marius, we've seen the sort of bumper orders that a lot of Indian airlines have made, right? Akasa Air has ordered a bunch of planes, Indigo, and with Air India, with the new branding coming under the Tata Group. What's the sort of demand that you're seeing for your programs, given that these airlines are ordering what they are?
Yes, so the significant orders are being placed already by the airlines, as you are saying. So If we take into the numbers, so roughly in the upcoming 5 years, an average of 2,000 pilots per year will be needed, the new ones, the new license holders. And if we take the average of the, let's say, last 5-6 years, so it's less than 1,000 of new pilots where, let's say, came to the local market. So we're building a capacity in general to train up to 1,000 students per year in our flight training organization. And I think that a significant part will be covered with an Indian cadet program.
Now, for budget jargon today, let's explore key government funds, the Consolidated Fund of India, the Contingency Fund and public accounts. Here's a clear breakdown.
The Consolidated Fund of India is like the main bank account of the government. It receives all the money the government earns through taxes and loans. This fund is used to pay for all the government expenses like salaries, infrastructure and services. Before using the money from this fund, the government needs approval from the Parliament. The audit of this fund is done by the Comptroller and Auditor General of India to check how the money is managed. The Contingency Fund of India is like an emergency savings account for the government. It starts with Rs 500 crores and is managed by the Finance Ministry. This fund is at the disposal of the President of India, who releases the funds on request of the Union Cabinet. However, approval from the Parliament is mandatory for these funds to be utilized. This fund is used for sudden and unexpected expenses that were not planned in the budget. The public accounts of India hold money that doesn't go into the consolidated fund. This includes savings from different government departments, special funds for things like defense and disaster management, and money earned from selling government assets. Unlike the Consolidated Fund, the government can take money from these accounts without needing Parliament's approval. Do you know the current corpus size of the Contingency Fund of India? The current corpus of the Contingency Fund of India, as approved by the Parliament, currently stands at Rs 30,000 crores. As we await the Union Budget, we'll find out if the government adjusts where it spends its money. Bureau Report, NDTV Profit.
There is no respite for people living in Assam. Over 6 lakh people in 19 districts are still grappling with the flood situation. According to an official bulletin, the situation might worsen as the IMD has forecast moderate to heavy rain in the state over the next 4 days. At least 8 rivers are flowing above the danger mark. Now, the Brahmaputra has breached its highest flood level in Jorhat district as per the official bulletin. Emergency response personnel, including the NDRF, the SDRF, the Army, the Air Force and local administration are engaged in rescue operation. The Chief Minister Himanta Biswa Sarma also visited the affected areas and the relief camps. Not just Assam, in fact, Gujarat too is experiencing a flood-like situation following heavy rainfall. There has been significant disruption and damage across the state. In Valsad, severe flooding led to the closure of 2 main underpasses. The city received around 3.45 inches of rain in just 2 hours. The police is on high alert and have put up barricades to prevent access to the waterlogged areas. A US court has sentenced Rishi Shah, an Indian-American businessman and a former billionaire, to 7.5 years in prison for committing a $1 billion fraud. Now, several high-profile investors fell prey to the scheme. Malika Mishra has this detailed report.
An Indian-American's fraud shook top US investors. We're talking about a fraud scheme of 8,300 crore rupees. And the man behind this is Rishi Shah, the co-founder of Outcome Health and a former billionaire. Shah is now sentenced to 7.5 years in prison by a US court. Top-notch investors like Goldman Sachs Group, Google parent Alphabet, and Illinois Governor J.B. Pritzker's venture capital firm have fallen prey to this fraud. Now let's understand what happened. Outcome Health, originally known as Context Media Health, was founded in 2006 for medical advertising. The company set up television screens in doctors' clinics and played advertisements targeting patients. The business boomed by the mid-2010s, attracting many high-profile investors. And soon, Shah became very well known in Chicago's corporate circles. But it was found that Shah, along with his co-founder Shraddha Agarwal and his chief financial officer Brad Purdy, was engaged in a scheme scheme of monumental fraud against investors, clients, and lenders by misrepresenting the operational and financial health of the company. They misrepresented the reach and network size of the business and fabricated data to cover up the shortfall. But this facade began to crumble in 2017 when the Wall Street Journal exposed these fraudulent activities, and Shah was convicted in April 2023. Cut to present day, while Shah has been sentenced to 7.5 years of jail, Shraddha Agarwal has been given a 3-year sentence in a halfway house, not exactly jail, but something similar to a correctional center, and Brad Purdy has been given 2 years in prison. Apart from this, the Securities and Exchange Commission of the US has filed a civil action against all 3 of them and former Chief Growth Officer Ashik Desai. Now, Shah also gave a public apology where he said that he was ashamed and embarrassed by the misconduct that brought down the entire company.
Well, time for a very short break. On the other side, we bring you news and updates, so stay with us.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome to an exclusive conversation with Jahangir Aziz, MD and Head Emerging Market Economics Research at JP Morgan. Good evening, Mr. Aziz. Thank you very much for staying up for us on a sunny New York evening, but of course talking economics. To begin with, Jahangir, near perfect inflation data from the US, soft growth, start of a new quarter, which will also see a lot of political activity take place in the West. We started the year with talking about 3 rate cuts. I think that has been expected and moderated down to maybe 2. Do you even think a single rate cut is possible over the next 6 months from the Federal Reserve?
So our baseline is that we have 1 rate cut this year, which is in November. But I think the data, particularly in the core inflation that you talked about in the last 2 prints, that has softened and is heading in the right direction in the sense that it is building confidence with the Fed that the disinflation will take them to their inflation target of 2% in the future. Clearly not now, but in the future. So I think they are getting more confident. At the same time, if you look at the labor market, which is their dual mandate, which is to keep full employment, that is doing remarkably well in the sense that you have the best of all worlds. You have very strong employment growth. We are expecting this Friday another 200,000 for the last month. But it's happening with the rising participation rate, helped a lot by immigration, which has kept unemployment rate at that 4% level and wage growth around that 0.2, 0.3 level. So I think the boxes that the Fed require to start the rate cutting cycle, I think are being ticked. The market now is looking at a September rate cut. I think if the data flows in that direction, that could well be a probability. But our baseline is that we are going to have 1 rate cut in November this year, and then 4 in 2025, another 4 in 2026.
Jahangir, do you feel like that 1 rate cut would at best be a token rate cut, or will it have a material impact in the way the Fed on the economy and, of course, flows are impacted? Because I still remember December last year, we were so optimistic and it was almost a given that the Fed would move with 3 rate cuts, and none of that's happened. And I feel like the same verbatim is once again playing out.
So I think, last time when we had these, in fact, the market was actually looking at even 5 rate cuts for 2024. I think there was a lot of enthusiasm given there was a very steep disinflation that was taking place. If you recall, we had about 3 quarters in which growth surprised you on the upside and inflation basically fell very sharply. And I think the first 3 months of this year was a rude shock in the sense that you did not get that disinflation. And I think that's when the market changed its views. But I think that, the same drivers more or less remain in the sense that goods inflation is the one that drove the disinflation back in the second half of 23, based on which we all got overexcited about, rate cuts. I think that goods disinflation part has ended. It was a reflection of the normalization from the post-pandemic disruptions. That more or less has come to an end. But services inflation, even back then, was sticky and remains sticky. There's very little that has happened to service inflation. So I think that, your concerns that are we getting into the place where, we are going to get excited about another rate cut, et cetera, not happen. Look, that well could happen. In fact, our view is that you will get rate cuts, but it's going to be a very shallow and prolonged rate cutting cycle in the sense that you are not going to get the kind of disinflation that you saw in the second half of last year. You're going to get very sticky disinflation going through. And that's because services inflation, which is where most of the inflation dynamics in the US right now remains, because goods inflation is basically flatlining at zero, is going to remain sticky and most likely for a prolonged period of time. So we are not looking for a very, very large, enthusiastic, deep, early rate cutting cycle. We are looking at a shallow rate cutting cycle that gets prolonged well into 2026.
Jahangir, just moving away very quickly from the US to what we've already seen in Europe, because that seems to be another bloc that's going through its own problems. ECB defied the US and moved with the rate cut in its last meet. What are your thoughts on that, and what do you think are the major risk factors for central banks globally?
So I think, our ECB basically had telegraphed that they were going to cut rates for 3 months back, right? So they had to cut rates. We expect one more rate cut in the remainder of the year. If you look at other central banks in Europe, the Swiss National Bank has cut rates. We are expecting the Bank of England to start rate cutting in August. But I think if you look at other developed market banks, I'm not talking about Bank of Japan, where the next move is going to be a rate hike. But all of them are pointing to this very shallow rate cutting cycle. This is not, even the Europeans are not enthusiastically cutting rates. The only people who had enthusiastically cut rates were the emerging markets in Latin America and in Central Europe, who had taken rates to astronomical highs back in 21 and in 22. But beyond them, almost all the rate cuts that we are looking at in terms of central banks are essentially much more shallow and prolonged rate cutting cycle, because the same dynamics holds, which is that goods inflation has come down, has brought down inflation from its high, but service inflation remains sticky, and it remains sticky almost in all of developed market world. In terms of the risks, I think the real risk is that, this very, very sticky inflation is going to make the rate cutting cycle very shallow. I don't think the benchmark for rate hikes is high in any of these developed market central banks. But I think that, for them to be able to cut rates deep enough, I think they really need to see, the service inflation, particularly, to be less sticky. And that, unfortunately, is, driven by very tight labor markets almost everywhere, and that seems to be the challenge at this point in time.
Right. Jahangir, let's move focus to Asia and emerging markets. With China's economy slowing, most people believe that India could be the fastest growing Asian economy. For good reason, right? Investments as a share of GDP in India is starting to rise. It seems like all stars are aligned for private capex also to start igniting. Do you feel like we are in a relatively better spot as compared to our peers?
So we are in a relatively better spot compared to our peers. The question is, what peers are you talking about? If you're comparing to Brazil and others, obviously you're in a much better spot, right? Look, China is clearly going through its troubles, and those are troubles of pretty much China-made, much more than, driven by global factors, etc. But if you turn to India, I mean, look, we keep talking about private sector investment picking up. Private sector investment, gapped down back in 2000 and just after the GFC in 2012 to around 12% of GDP. It's gone up and it's gone down a bit every year, but it's just very minor volatility. It almost remains stagnant at 12% of GDP. So at this point in time, I think we need to sort of step back from looking at cyclical reason as to why private sector investment has essentially remained at 12% of GDP. It has gone through bad banking sector crisis, and then good banking sector situations after the cleanup in the banking sector. So that is also doesn't seem to be the reason as to why private sector investment has remained stuck at 12%. We really need to step back and ask ourselves: is this driven by structural factors? And rather than keep looking for cyclical reasons as to, well, tomorrow it's going to go up or it's gone down this quarter because of this and reason. We've gone through this for 12 straight years, 15 straight years. And I think the time has come for us to step back and say, is it structurally, what is structurally going on with the Indian private sector that it just doesn't seem...
Years almost to the day.
Yes, and he has helmed it at a time which has been most challenging, from COVID-19 to a live conflict in Ukraine, Russia. And so every time there has been a discussion around petroleum, you have often said that cess is used for infrastructure development. Since we are at the Infra Awards, I want to highlight that aspect because in Parliament, you spoke about the number of highways that are built because of that cess. So could you elaborate on that idea?
Let me summarize the situation as I see it. I mean, before I joined or was associated with the Ministry of Petroleum and Natural Gas, my understanding of how the energy sector operates was very preliminary. And I was under the impression that our public